now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both. Option trades today, every Tuesday and Thursday. Back.
It is back.
That's right.
It is back. So
Back by popular demand, weather permitting.
Look, you know, the type of morning that it is,
No,
I'm
it's
going to just be frank here with America. Your girl is down bad, and she's drinking a Diet Coke at 6:45 this morning.
Why not?
Why not?
No, I didn't. I'm just exhausted.
Oh, come on. You're too young to be exhausted. Too young, too beautiful, too vivacious, too nice.
But this Diet Coke is hitting.
Because somebody is hitting the Woodford's reserve that was underneath there. I think somebody tapped into that. I think it's all gone.
Because I was going to say, this Diet Coke and a little Woodford. The news may not happen. How are you double bats doing today?
Doing good. I think we're doing good. You doing good?
Yeah. Great.
Yeah. You played pickleball last night?
I did.
How you like that?
I love it.
Oh, okay.
Are you in a league, or is it just sort of individuals and then they match you up when you're there, or?
So you can't. So they have like ranked play, but this is open play. So you just kind of sign up and you go with people that are like around your level.
Okay. What's your level?
4-0.
What's the scale?
It goes up to like 4-0 is like the upper tier.
Oh, you're in the
upper
upper
tier.
echelon.
Of like normal
It
people.
goes to 104.
No, 4-0 is like
upper.
normal upper tier.
Okay.
Like when you get to like 6s, that's like pro level, like 6, 7.
Okay, so it's not that many levels.
No, but they go like half levels. So you can do like 3, 5.
But you're not
So that's how you
nationally
match up
ranked.
teams and stuff like that to make it fair.
Yeah,
I'm a 3, you're a 4.
Oh, like
but
a
they-
handicap.
Yeah, but the group, the people that I play with are all 4.
Got
So
it.
you play with everybody you're supposed
3.5, 4, 4.5.
Yeah.
Like in that range.
Yeah.
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 Because I'm probably subjective. I mean, there's not
so
like
no,
a,
there are-
there's not like a guy that comes out and says,
No, there are
4.
ranked. So you do ranked play. So like there are ranked tournaments that
cool.
you can play in to get your score. So you play against other people. So like if you're a 3-5 and I'm a 3-5 and I beat you, I move up and you go down.
Got
to
it.
3-4 and I might be a 3-6.
Got it,
Like
got it.
you can play in those.
What's
ranked.
the average lifespan of a 4's knees? Playing pickleball.
It's not the knees that are the problem. It's the lower back.
Lower back.
It's the lower back.
I thought it was like the ankles. That's like the foot and the ankle people
he grabs
on
those
TikTok.
fine.
I think
All
it's
right.
everything. I've never tried to play, but I like the idea of pickleball. Do you play doubles with your girlfriend?
No.
Oh,
No.
because that would be, and then you could wear matching outfits.
Oh, I actually get not happy when there are people that shouldn't be playing in where I'm playing. Like,
so that
no,
side of
this-
you comes out.
Well, this is just like this is a
It's
competitive.
a nasty side.
It's a competitive-
It's a little bitchy. It's a little bitchy, I think.
Like when you play it at a higher level, you want to compete.
Are you
like I don't
hearing
wanna
yourself right now?
I don't enjoy.
So you're
playing
not from the
whooping.
school of we're all here just to have fun.
Well, no, those people have their own
League.
leagues
Oh,
that
so
they
now it's
can
those
play.
Fun league.
people.
Yeah, so like if you
You got
are
a
not
fun vacuum league.
well, no, if you're not good, you play in the lower level. If
So
you're-
now it's those people.
yeah, it's those people.
Oh, wow.
Yes, exactly.
Wow.
Yes. So
Wow.
You're a
I
pickleball.
had no idea he was like this.
You're a pickleball supremacist.
I am in some ways. Yeah. Well, they got their own time. They can. play
I
there.
would like to learn how to play.
Yeah.
It's good exercise.
It is really good.
I just didn't know it was that. I didn't know it was that
Yeah.
serious. Did you know it was that cutthroat?
I had, I knew there were, because I got invited to play and got shut down by the wife. But
Beth plays in a league, and then Beth was in like a walking boot.
yeah. And now there's another thing, padel. Padel, have you heard of that yet?
Oh, paddle or paddle. Yeah, P-A-D. You're right. I don't know how to pronounce it.
Yeah,
Paddle.
it's like with walls or gates.
Beth does that.
Yeah.
She does paddle. This is like another one, like Like, you know,
It goes dun 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 dun.
Right.
She
This
does
is like,
paddle,
hold
but
'em,
this is
or whatever.
padel.
This is padel. Yeah,
And I
yeah.
do puddle.
Right. Maybe glass walls or something, or chains or
That's
something.
what Beth does.
Isn't that squash?
I don't know, man. Don't ask me. I don't know. You can hit it from outside the wall too or something. I don't know.
From outside the wall? Where are you?
That's what I heard. I don't know, man. Don't quote me. I don't know. I don't know what I'm talking about. All I know is my wife was at like a helping with a charity outing, and she was at a golf course, and she was the hole-in-one girl. Like she had a watch.
Oh, nice.
To make
Somebody
sure.
hit one?
No, she said a couple of people. One person she said got within. Yeah, I don't know if she knows what 6 inches is, but like 6 inches.
Well, just,
It's like that big, right? It's like that
No, it was about
big. Tiny.
6 inches like this. Yes.
No.
But she's like, I noticed like there were like some couples play. We should learn how to do that. She goes, I think I'm going to take up golf. I go, I don't golf. I go once a year. Now you're going to take it up. So we had that conversation.
Oh, that's nice, though. I think that could be like fun. Okay.
The character building, a bonding experience.
Yeah, I don't know if that's where, no.
Because you only got couple more years before Vinny's out of the house, and there's just the two of you idiots staring at each other.
Yeah,
That's a problem.
yeah,
Yeah.
that's gonna be tough.
Yeah.
That'd be a problem.
Yeah.
Like I thought my parents were gonna murder each other in retirement.
You're also assuming that Vinny leaves the house. That
True,
is
that he's
that is
allowed to
very
leave.
questionable.
You're right. You know what?
I
You know
mean,
what, Nick? You were right. I was remiss in,
Yeah.
No,
in
if
that
he's
assumption.
allowed to leave the house.
That too, but I mean the Zoomers are fully they're fine with being in the basement until 35.
Oh,
Like,
sure.
that is-
Like some
What are they,
there's-
Zoomers, they call them?
Isn't
The
it?
Zoomers, yeah, they call
the
them Zoomers.
Yeah.
Like
No,
some weird statistic, like 70% of Zoomers like have had their parents like be in an interview, like a job interview, and I was like, that statistic.
Like Step Brothers,
I
where
was like, that statistic is diabolical.
That's a bad one.
Yep.
I might even draw the line there.
I
Job interview, wow.
don't know. What'd you get up to last night? You feeling better? And
Yeah, no, everything's good.
Did you get in the sauna? Okay.
Sauna's living large. Got a speaker for it now.
Wow.
Game changer, real nice.
No, it's more like John Mayer and the.
I was gonna say Michael Bublé.
Yes.
I was gonna say
Yes.
Michael Bublé.
Ooh.
Yes, little Barry White, John Mayer.
Wow.
yeah,
Okay.
yeah.
Hey, stream the new Taylor Swift album on Friday. She needs the streams.
I
Hey,
don't-
there's a
yeah.
song. There's a song called Wood. We don't know what it's about,
Oh.
but we think it's spicy.
Oh, we know what it's about.
Did you watch any Monday Night Football last night? What happened? The Jets are bad.
You're the football betting guy.
I didn't watch a ton of it.
I saw one highlight of Justin Fields. It looked awesome. He
Yeah,
had like a 40-yard run in, but then the Jets lost.
Yeah, the
still?
Jets lost,
So
yeah.
the Jets 0-4.
Yeah.
That's bad.
Yeah, losing to
Bad.
Dolphins.
That's
I
Bears
think didn't like
territory.
Tariq Hill like really hurt his.
Yeah, not good.
Not good.
Oh,
Scary.
really?
Yeah.
Yeah,
like
bad.
foot the other way.
Yeah.
Oh no.
Like a real bad one to look at and watch. I would imagine.
Are you
probably
squeamish
done.
like that? You're not counting.
No. But it's sad. I mean,
Yeah, it is sad.
these are like
Yeah.
top tier competitors, and it's just you see one of those injuries, and they're like screwed. I mean, he's probably done,
Sure.
which is
I mean, it's not like hopping over a fence and like
Yeah, it's not like
I'm
they-
sure it's not as bad as that.
hey, really.
You know what I mean? Because this really hurts a little bit when I go like this. You know what I mean?
You are a true professional.
Thank
to be
you.
able to still perform with
Didn't miss a day.
Didn't miss a day with
Didn't miss a
that.
day. Didn't miss the show. Didn't miss a minute.
Yeah. Back in the day, when I would mess up my fingers, he would say, "Don't worry about it. You got 9 others. It's fine. It's fine. No
Rub some
problem.
dirt
No
on it."
problem. You don't need cash. You got 9 others."
It is the truth.
And
Or
now
I'd-
he's like, oh.
Or I'd punch him in the arm, and he go, what'd you do that for? He goes, I say, you forgot all about the pain in your finger now.
Yeah.
See, because you're good.
That's not effective parenting.
Yeah.
So I did the same thing to Vinny, because Vinny.
He cried.
What's that?
Did he cry?
When he
No, when he
fractured
punched
his
him.
wrist. No, he didn't cry. I punched him. No, he cried. I mean, it was so. Truth be told, I've only cracked my head. This was the first bone that I ever.
You've never
Oh, that's
broken a
why you're
bone
so brain
before?
damaged.
No. Yes. No, I've never broken any of the bone except for my fingers, like little fingers
Sure,
and stuff.
yeah,
Nothing made. This is the first one I've ever done. And it was painful. You know, no lie, it was painful.
Yes, it hurts.
And Vinny kept going because when he would be walking around, I would like slap his arm and stuff like that. You know what I mean? And he would go, "You see, now you feel a little bit sad, right?" Because he would say, "Dad, I think my wrist is really bad. Like, rub some dirt on it, you'll be fine. You know, you sissy Mary crybaby." That. Sure enough, it was fractured, and
Sure.
now I have a fracture. I know how I feel, so I apologize to all past, present, and maybe even future children that I might have if I treated you wrongly when you broke a bone. So it's very painful. And BS to any football player who says they played with a broken leg. He played the whole.
That adrenaline dump, is real. That's what got you.
It's impossible.
No, but that's what got you back up over the fence. Is that probably that adrenaline. So I'm just saying.
All right, I'll give you that, but possibly. I mean, it is painful, and this is a small one. It is painful.
Sure. Oh, so you do admit it's a small one.
Oh, whoa.
I'm gonna have some more Diet Coke.
Damn.
Get her some more.
All right, some good times all around. I don't know what I'm doing. Hey, we got a good show for you today on this wonderful, terrific Tuesday here at Tasty Live at the top of the 8 o'clock hour. We got an options jive, scale up without the blow up.
Ooh.
Oh, I like that title though.
Yeah.
We have a new title master.
How to get bigger in your account, I'm assuming, without blowing out.
Yes.
Yes.
It's gonna come down to size, but we'll figure that out for you
great.
again.
Yes.
And then with double the options jive today at 8:40, then we're going to have the pop paradox, low delta, high risk. Do you like low delta?
Yeah.
Okay.
Well, everybody always thinks like a low delta. You don't have
That
a
much
lot of
chance.
delta to trade. How bad can it be? It's not. It's $100 away. How bad can it be? Kind
Sure.
of thing, and then
Yeah.
it gets bad.
Yeah.
And you have no juice to make up for it.
Yep.
And then we also have a market measures at 9 o'clock, an updated look at zero DTE management.
Beautiful.
Or DTE management. I'm not sure if there's supposed to be a zero.
Yeah, we're
there.
looking at we're confirming or maybe widening out our management, like our 21-day
Okay.
entry at 45. Like we're just
45.
looking
Okay,
at
so
like
it
the
is
data.
DTE, my bad.
We're updating it to the last couple of years, so we get
Beautiful.
more data.
And then we're going to
Make it a
have...
little more relevant.
Yes,
Good.
current.
We're going to
Current.
have an assorted array of guests at 9:20 from Live from the Trade Desk
Yes,
today.
yes. Q again. We might do calls.
Good.
It happens.
All right, gonna see what happens. And then at 10 a.m., Liz and Jenny live from the floor of the SIBO, one of the only few trading programs, I think the only one that's live from a trading
Believe so.
floor.
I believe
Yeah,
so.
and it's always electric when the ladies are live.
And then the ladies, full takeover on
Yeah, ladies
Friday.
full takeover Friday. I don't want to say too much, but it's going to be a show.
Well,
for
you
the
got to tell
ages.
everybody to tune in for.
For the ages, you got to tune in. It won't be traumatic like last week's show.
That's right. I'll be in LA.
Yeah, Bat's just going to LA.
I was
It's
going
gonna
to
be
LA.
fine, everybody.
I was going to LA.
You're just going to LA.
You signed up already. You're fine. If you haven't, it's going to be in LA.
Anyway, that's our run of show for today. I got a lot of news. Are you ready for it?
Ready? Let's go.
Yeah.
Bring it on.
Maybe with my theme music. Let's go.
Our leading
In
story,
today's
breaking
headlines.
news, coming across the wire. Our leading story, top story, just in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a, excuse me, so sorry.
Oh.
Today is a terrific Tuesday. It is September the 30th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
This is it. The end of the month, right?
Yeah, this was
Yeah.
gonna just get into. I was gonna ask you first if there were any earnings.
Nike.
Nike. Yeah.
Nike
Yes,
usually
Nike.
ends the season.
Yeah,
for everybody.
that's
We
it.
start up another couple of weeks after that.
But
You
it's
also
the
have
end
the-
of the quarter.
Yes, end of the quarter.
Right, so let's get into that. Who is it Katie McGarrigle? Because I'm rooting for her.
Yeah, Katie she's, I mean, it's a low probability, but she's on the dance floor.
We're 6,700. You talked
Who's
about
the
that.
closest employee?
Katie.
Oh, Katie
Katie's the
is, okay.
closest. Mike is in there to the upside, but a little bit
Okay.
far. But
Who's this Tom guy? He sucks.
You're right. You're right there too.
Yeah, no, I'm right there. Yeah.
I mean, 150 points off.
Yeah, 64.26.
Yeah.
I mean, it's a nice guess. I mean, that's what they all are, right?
But a real life viewer though could win some actual
They will win.
cold hard cash today. So stay tuned for last call, right?
Last call.
Because,
We'll do it at the last call.
Last call. We will announce a winner. Speaking of the S&P 500, it's about to enter its strongest quarter of the year historically, but October can be a super volatile month for stocks. So how do you balance the potential, and I know you're going to hate this, Santa Claus rally-in-ish at the end of the quarter, but with the maybe sort of crashiness of October at the beginning?
Classic flop and pop.
Oh, there you go.
Is it from yesteryear?
Yes.
The flop and pop. Market usually flops a little bit, this and then pops for the end of the year.
Yeah.
I mean, listen, you got to trade the here and now. Volatility just under 18 has caught a little bit of a bid the last couple of days, which I think we talked about on Sunday night show, which is one of the things that we got right, I think. We talked about Bitcoin getting a little bit weak. It was strong yesterday. It's weak again today. But volatility's telling you, shut down, end of quarter, October, doesn't matter. Looks like business as usual.
Some people in the chat are saying we haven't had enough I don't cares yet. I'm still
So you're going to give one of the first
So
ones?
I would like to give my very first I don't care.
Okay.
Who cares? Nobody cares.
But nobody cares. So
Because
what?
I don't know, like the news of this is like it's like
changes,
but it's every month you have. I mean, we were just talking about like last month. We were talking about September seasonality being super
of
weak,
course.
and we're at all.
And sometimes it is.
and sometimes it is,
not.
and sometimes it's not. And it's like this is just like the automated news cycle of like, oh, it's September. We've got to talk about September seasonality, and then
Here's my September facts here.
yeah, like it's like. Of course, obviously, there's
This is my
markets
pumpkin spice volatility, though. Now.
markets can go down sometimes, but I don't care.
Hey, let's
That's
look
three
at
I
the
don't
dollar,
care
though.
for you.
Let's look at the dollar, though. The dollar soft yesterday. Is a possible U.S. shutdown and jobs report delay hurt sentiment. Dollar a little bit on its back foot in trading. Let's talk at the dollar.
Yeah, euro up
yen.
the last 3 days, up small today, tiny.
Yeah, Japanese yen has been strong as well. That was one that we took advantage of. We did a short put spread there, and I was
Bigger
trading-
3 days than even the euros had. Yes, 100%.
Yeah, I mean,
100%.
but it was at a price extreme, or at least for the last year or so. But we traded that via the FX products as well as the futures. So took the FX products off yesterday. Still long the Japanese yen via put spread in the.
You put that through the file page?
Of course. Well, the FX stuff isn't on the file page.
Oh, not yet. Right. Oh.
It's a little bit of a kerfuffle.
Kerfuffle. It is not a currency, but let's check in on gold. What are the metals doing this morning?
Gold down $16 doesn't give you the whole story. I
Yeah.
mean, it is 38, just under 38.
It got up to
$40.
almost 3,900.
It did.
3,900.
99.20, I guess. But
Right.
yes.
What do you?
Which was $60 higher than where it is right now.
Yeah.
What do you do in there? What is there to do?
You pray.
One way or the other.
You run.
Yes.
You pray and run. Those
Pray and spray.
Yeah.
That's what you do.
Spray and pray. Newmont Mining named their first female CEO. So yay, NEM.
NEM. It always reminds me of like the Wizard of Oz. NEM.
NEM.
It too is at highs, although it's off its highs. It's down about $1 this morning. Closed at 84.56. It's closer to 83.56 right now. But again, on its highs. IV rank of 41 is pretty good. It does have earnings October 22nd.
Paul Atkins, the chair of the SEC, said yesterday the regulator is fast-tracking President Trump's push to scrap quarterly earnings reports, raising transparency concerns around potentially major shifts for U.S. companies. So this looks like, one, that this is going to happen, and two, sooner rather than later. What does this mean?
I mean,
So what are they going to do?
So instead of having earnings every
quarter.
3 months,
it would
every
be
quarter,
like,
it's
they do in
twice
Europe,
a year.
like in
Twice a year.
Eurostock, twice a
Yeah,
year.
like what Europe does. So for traders, though, who like the juice of having
Yeah.
at least something every 3 months, it only goes to twice a year.
Yeah, I don't know if I
am
like
not an earnings fiend.
Sure,
Like
right.
I don't like trading
Right.
earnings. To me, this seems like a no-brainer. It seems great to me. Having
Going
been
to take some
involved
volatility out of the market.
would take some of the uncertainty of these stocks for earnings out of it.
Yeah, and
Well,
these
what
sectors
happens?
and stuff like.
You know what? They'll be more liquid. I think they'll actually get more liquid, Nick. It's almost like how they talked about how day trading is going to make so much volatility for the market, and it never came
Sure.
to
Sure.
fruition. It came the other way. I actually, me personally, from my style of trading, I actually like this. You might like the
other
volatility
side
more.
of the coin, though, Nikki, that people are saying is that it means that companies can be less transparent because maybe they could hide that they're going to slow down hiring, or they're not going to spend on capex, or things are not going good,
Yeah.
with their guidance, their forward-looking guidance, because they don't have
I
to
don't buy
say
it.
it.
Yeah, I mean, earnings are so fluffy anyway.
They are.
I don't really care about that. I think I care more about like the volatility aspect.
Sure.
And just these are binary events that provide opportunities, and so I don't know. I'd rather have them quarterly.
We will see what happens. The agency could release a proposal by the end of this year or in 2026. So we will see what happens, but it looks like it's on the fast track. Here's a blast from the past. Wealthfront, the company that is probably most famously known for being the first robo-advisor. Remember that trend? They're going public. And that is part of a wave of fintech firms that are going public. They had $88 billion in assets on its platform and served 1.3 million customers, according to their latest filing.
More importantly,
Color me shocked.
More importantly, how long before this person's worth $3.8 million, starting with $260,000? They're really taking a lot of liberty here.
Yeah.
What is this, a 20% return every year? I mean, that would be an underperformance, I guess. Yeah.
Why do they lose it all on the way to
It
retirement?
follows.
They start taking it out.
Is that the distribution?
That's the distribution.
so
Taking it out.
so this is like a life to death.
That's right.
Sure.
No,
Yes.
it's like
So like by the time
retiring at 59, or this
Retiring
person.
at 59.
Yeah,
not
That's
bad.
pretty
so
good.
by the time they die in 2074,
$4 million.
They're gonna have 40 grand, 400 grand to
They're
pass
still
on
going to be
the
working at
kids.
McDonald's. There's no doubt
Yeah.
about it.
Their
Nice.
ticker, though, would be WLTH, Wolf. Wolf. But they do follow other companies like Chime and Klarna. So KLAR. I don't know if you guys have been trading Klarna or Chime. I think it's like CHYM.
No, haven't traded it.
Yeah, I traded Chime one time.
Okay. YM, I think.
It has earnings
Why?
November 6th.
Yeah.
Chime Financial. November option. It's okay.
What
It's a
about
twice-
Klarna?
What's the symbol?
KLAR.
KLAR. $38 stock. Good Ivy rank.
I might have did
I
something.
mean, some of the Klarna is one of the few that I've seen that IPO'd higher than where it's trading right now.
Yeah.
Yeah,
Some
right,
of,
it IPO'd
some of
more-
these are IPO at 40, open at 200.
Yeah.
It's like-
Right. This one opened at 40-ish and is now down to 30-ish.
Yeah.
Yeah, 38 and change. Yeah, you might have did something. It's
Yeah.
hard when there's not a lot of.
No weeklies.
Yeah.
no,
Yeah.
like
All right. Well, I'm doing my best. Well, keep listening. I got other
You're
stuff.
allowed to do your best.
Yeah.
That's what
Hey,
we want.
I am obsessed with the pipeline of Fortune 30 under 30 and then just straight to prison. And we have a new entry. Yesterday, startup founder Charlie Javis was sentenced to 7 years because she defrauded JP Morgan for $175 million. She made this app called Frank, and she said that
Oh, yeah.
engagement and signups were massive.
It was like 100
She just-
million or
right,
something.
But she was just making up people's names and email addresses. Again, not the most sophisticated scam, but my girl, she tried it, and it worked for a time. She got named to
Fool
the
JP
Forbes.
Morgan.
Yeah,
Yeah.
Fool JP Morgan got named to the Forbes 30 for 30 list.
A lot of people.
So but she is going from she's going from 30 under 30 to getting out when she's 40. So thank you. I wrote that joke. But she joins Sam Bankman-Fried, Elizabeth Holmes, and CZ, the guy that founded Binance, as previously featured in Forbes 30 under 30, and then straight to jail.
I don't get these people. They're probably
don't put that pressure on people to be great by I'm saying Forbes like that because they're gonna cut corners.
I put pressure on him. Look at him. I mean, for crying out loud.
Look at this.
I mean, he's fine. He's fine. I mean, you know, he didn't get to the lofty goals I had expected. I mean, he kind of stopped when he got out of architecture school or engineering. I mean, you know, whatever. It's okay.
You know, I was born into this servitude.
But really, I mean,
This is my birthright was to serve
What time should I pick you up?
Yeah. Yes, sir.
I don't understand these people because they're really bright, probably. I mean,
yeah, of course.
Why don't they do something like why they can't go this straight and narrow? Why do they have to take the shortcut? I just don't understand.
Because that's what I'm saying is the undue pressure.
It's not the freaking pressure. Come on.
Yeah.
It's not. What are you gonna blame it on the parents now? Give them too much
why
pressure.
grind
Every
it?
parent wants their child to
Why
do
grind in this stuffy room when you could just take $100 million from J.P. Morgan? What do you mean? These people are this
good gig if you get. You gotta get out.
Yeah.
Yeah.
Even the Cayman Islands.
Yeah. Half of them it works out fine.
Anyway, I hope that she goes to the same prison where
Elizabeth Holmes.
Where Elizabeth Holmes is now,
so
because also Jen Shah is also at that prison.
Oh, she's still, is that the
Yeah,
housewife?
the Real Housewife. Yes.
She's still in prison.
Yes, I want them to do a podcast. But anyway, yep, she going to jail.
Jen Shaw, I forgot about her.
Yes,
She must have done some
scammer.
bad thing.
I love scammer housewives. Like that is just chef's kiss. Hey, the California governor Gavin Newsom has signed a landmark AI safety bill. The reason I'm mentioning it is because it's the first in the nation, and the nation's largest AI and tech companies would be impacted by it because they are based in California. The governor signed SB 53. It requires new transparency requirements on large AI companies. The state legislature 2 weeks ago passed the state legislature. It requires large AI labs, so that includes OpenAI, Anthropic, Meta, and Google, to be transparent about safety protocols, and it just, I don't know, does regulation. What are your thoughts on first AI bill?
I hope it's pro-business so that California doesn't lose any more businesses. That's what I hope. I don't know anything about it, so I really can't comment.
You don't
I just
hope that
it's
it's
good for business.
pro,
Usually,
like not destroying humanity?
usually,
Hey, you're
as long as
you're
Meta
ready for the
stays-
robot.
Yeah,
You're
I
ready
do,
for.
I do love
you-
robots.
I mean, come on.
I still
This
think
is
there
the
should be
first.
guidelines. I still think there should be guidelines.
usually these
You
regulations
You want to make sure you
are not
control
good.
your robot.
But I hope this is good. I have no idea about it. Google's unchanged. I don't know. Google's not too far off its highs, so it doesn't seem to bother Google at the moment.
Yeah.
Well, here's something that is.
I don't care, I guess, is what I'm supposed
There
to say.
you go. That's our second. I don't care. We've been waiting for your I don't
I had
care.
Just
one day of
don't
grace.
care.
I had 1 day of grace. Well, you might care about this because this is interesting. KeyBank Capital Markets reportedly estimates that Oracle will have to borrow at least $25 billion a year to fund its AI fantasy, much like your friend who you cannot figure out is affording all of those vacations on Instagram. Oracle's got to fake it till they make it. I was surprised by this number. Were you?
The number. I mean, we throw out $100 billion here, $50 billion here, $500 billion here, building new plant here. The number. This goes to the earnings fluffiness of like these numbers and these projections and these timeframes are so far out in time and so exaggerated that like.
AI might not be around anymore.
Yeah,
They'll just
we
use
might
it
have
for
a new
porn.
thing, or like who knows?
Or Vinny will be doing another picture.
Yeah,
It'll be free.
it's just-
I mean, that kind of thing.
Short term, I'm sure stocks move on and they do move on these sort of
Down
headlines,
$2
but it's
this morning.
It's
yeah.
hard to like.
But I think coupled with the story that I did yesterday, that this massive, be it fake or real, infusion into AI, data centers or deals or sectors or, nuclear power plants or whatever is propping up our economy so much. But what if what we're propping up our economy on is all these smoke and mirrors? These companies don't even have this money.
Are they gonna
and it's all
put
gonna
this-
come
But what if it's
crashing
not?
down.
But what if it's not?
Are they going to put this AI in the cloud? Because when I was growing up, everything was in the cloud.
It
They
is
put
in
this
the
AI
cloud.
in the
That's why there's a cloud on the
Might be a nice
screen.
place for it to stay.
Oh, how's the Ivy and Oracle?
61 and
Still
high.
high.
Pretty good. That's still really
Oracle,
high.
Oracle's high. Mark was high.
Alibaba stock rallied yesterday after analysts raised targets on the stock, upgrading it on its AI news. What is Alibaba's AI news? It doesn't matter. It just says AI news. What are you doing in Baba?
It's good. It's
You guys
good.
don't care.
Baba's up $2. It's a bucker right now with the market slightly lower.
Yeah,
this morning.
the China stocks have been really strong.
How
Very
is
strong.
IV in there? Is Baba tradable right now? You put it
Yeah.
on your radar?
33 IV rank. Baba was in beginning of September was around $130. It's over $180 right now. It doesn't have earnings till November 21st, which is expiration in November, which makes it tradable for me. And markets are good in there. You may have did something with Baba.
Finally,
Yeah.
after 76 I don't cares.
I care. I care, Baba. So good for you.
Baba brand. In other AI news, Anthropic is launching Claude Sonnet 4.5, its latest AI model that's more of a colleague. So then it hits on you awkwardly at happy hour. No, Anthropic announced Claude Sonnet, the latest AI model. The model's better at coding, using computers, and meeting practical business needs. The Amazon-backed startup is valued at $183 billion. Be so for real.
Again, this goes to, it's just like 100 billion here, 100
Sure.
billion there. Like
Sure.
numbers have gotten just
I know.
Don't care.
big.
It's just, it is.
Yeah, I don't care.
There you go.
Hey, this is interesting.
I did get roasted for saying that I liked Claude. Like when I was asked, I forget,
Really?
was it Tom that asked what my favorite one was? I don't
It
think.
might have been. It might have been.
I don't know if he would.
Tom who?
I don't think he would ask me like
Tom who?
my favorite.
He
thing.
doesn't care, yeah.
But I said I like Claude.
I think it was me.
Was it
I
you?
think it
Yeah,
was
when we
me, yeah.
hosted.
Oh.
Yeah.
And people in the chat were like, Claude, what are you?
What is it?
It's a.
It's just like a chat GPT
a chat-
variant. So
yeah.
there's Gemini, there's
Yeah.
Claude,
But it's more like
chat GPT.
it's more coding. I mean,
Yeah,
like
I
a lot
had
of
it-
people
I
use
had-
it for coding.
So I had a charge hit my my credit card for $20, and it said Chat GPT something
Sure.
like that. So I knew
That's
it was,
Vinny.
Right, I knew it was Vinny. So I go when we were driving up to Mitch, I go, "What's this $20 charge I got for Chat GPT? I thought we talked about this. You know, you can do your own work and everything else like that." And he just kind of looked at me and went like this. And I go, "You take care of that right now." And he goes, "Well, my free trial must have ended." I go, "Yeah, your free trial ended. You take care of that." So he took it off. So now he's doing his own work.
There you
Yeah.
go.
Tough life that kid's got. My God.
It's a hard knock
Daddy's
life.
credit card
It's a hard knock
on
life.
file.
This is an interesting. So OpenAI, I'll do the setup first. OpenAI announced yesterday they are partnering with several websites for instant checkout. But on that news, Etsy stock surged 16%. OpenAI says they're going to partner with Etsy as well as Shopify to support single item purchases from U.S. Etsy sellers on sort of just streamline the future. Streamlined features for checkout, and then Street liked it.
Have you ever? had
And
an
that's good
Etsy
for
account?
$2
Yeah,
billion.
I buy stuff on Etsy all the time.
But have you ever had? I should have rephrased it.
Oh,
you
have I ever been an Etsy seller?
Yeah.
No.
I
I
see
am
that.
crafty. Yeah.
I know, I can
just
see
don't.
that.
I don't have the time to put into to knit hats
Yeah.
and like scarves, which is what I would do, or sew stuff. Like it takes a lot of
Yeah.
time to do it
Sure.
at the level that you could sell it, and I don't have that kind of.
Well, Etsy went up
Probably-
$10 yesterday from 64.
You could probably do some like custom Taylor Swift sort of
there's
like
so
fan
much-
page.
there's so much
I mean, I
stuff
know
there.
there's probably
like a
100.
glam
there's
T-shirt
so much
or
stuff.
something.
Yeah,
like
like
that.
t-shirt, like a bedazzled t-shirt.
Dazzled, that was
and,
what
like-
I
Yeah,
before.
there's so much
Yeah.
stuff. But I bought stuff on Etsy. Like the desk in my house, this beautiful artist in Michigan. He's got this cool, I don't know, he had an Etsy
Yeah.
site, and I bought a custom desk. You give him the measurement, and he builds it to
Very cool.
the spec. And yeah, super happy with it.
Well, Etsy had a big day yesterday. It's down $2 today. It was up $10 yesterday, so $2 is not that bad.
Etsy also announced yesterday they're going to move their stock listing to the New York Stock Exchange from the NASDAQ.
Not going to mean it.
I was like, I don't understand why someone would do that. I was going to ask you.
I think
It's
it's fees.
What's that?
Is it the
Fees.
fees?
Yeah,
Like it's just like
somebody makes a better deal and
Okay.
it means nothing to you, me, or anything.
and not fees for retail. It's fees
No.
for listing and holding shares on the exchange.
Trading set to begin October 13th. So they're going to cease listing on the NASDAQ on October 10th. So just as an FYI.
Yeah.
In other OpenAI news, they're going to reportedly release a TikTok-like social app, but all of the clips will just be AI slop. I literally hate everything about. I'm not joking. So, you like the idea of TikTok where you're scrolling, you see funny clips,
Brain rot.
reels, right? But then everything on this OpenAI app is all just made with AI. So then you get your boomer parents asking you, "Is this real?" And you're like, "No, no, no, mom, no, dad.
No,
Not real. So
Things are moving fast.
things are happening fast. Hey, Snapchat is capping free memory storage. Memories are priceless, but Snapchat says, hold up, wait a minute, we can put a price on them. After nearly a decade of serving as a digital time capsule for moments, Snapchat says, run me a check. They're now putting a price on their memories feature, so you get 5 gigabytes for free, and then if not, you're gonna need to pay either $1.99 a month or $3.99 a month. If you get Snapchat Platinum, you get 5 terabytes, but it's $15.99 a month.
Take a guess at Snapchat's market cap. Don't look. Trades at $8.40.
$6 billion.
14.
Wow.
I mean, it's a massive company.
Yeah.
It's gone. The stock's gone nowhere it's traded at $10 for as long as I can
Because
remember.
every single one of their innovations that is driving social right now got stolen by Meta.
It's still worth $14 billion. It's
I know.
twice what Etsy is.
I know, but that's
2.5
crazy.
times Etsy.
That's great. But we never
Crazy.
talk about Snapchat.
I know.
I literally talk about it maybe
Right.
3 times a year.
Yeah.
How are the markets in there?
$8 stock. You're probably gonna, either love it and buy it, and if you
Yeah,
hate
Yeah,
it,
sure.
you're probably
Just
not
flat out,
going
yeah.
to trade
Commit.
it. November options, there's 40 cents to be had on one side or the other. If you're looking to sell something, I would probably be looking to do.
I know
I guess from
somebody.
the long side of synthetic long stock.
I know somebody that would be jumping to sell those 7 strike puts at 36 cents. He would say they're free money.
Free money.
It's free money. So we might have to do that as an homage.
YOLO. Do it as, yes, an homage.
Nice.
Instead of pouring some out on the ground for your homies.
Yes.
You YOLO
Yes.
some cheap calls in Snapchat.
Puts.
Cheap puts in
Puts.
Snapchat. My bad. Hey, this is interesting. Shares of pot companies rose yesterday after President Trump advocated the potential benefits of the use of CBD in senior health care in a social media post. Tilray doubled yesterday.
I mean,
I know.
from what,
it's
$1
a little bit
to
of
$2?
clickbait. Yeah, it was a little
Yeah,
bit
there
of
you
clickbait,
go.
but
Yeah.
I'm not wrong.
No, you're not wrong. I mean, it went from just over $1 to just under $2, but you are right. It was a 40-cent stock in July, so
Yeah.
major return here. This is where percentages don't matter. Like when you say, it's up
Yeah.
300%, not
Yeah.
that
And
big
people
of a
have been
deal.
buying it since it was 200.
Yeah.
Yeah, I mean, that
Tilray
was the
was.
original.
It's just so crazy.
Not the original.
But I mean,
That
as
was one
long
of the-
as soon as the scheduling of how the federal government schedules or classifies cannabis, as soon as that changes, everything changes. But it's such an onerous system in terms of paying and how the companies can manage their money and how it's scheduled and being able to even do research, with cannabis and health studies. It's such.
I'm not starting my day right. I got a lot of grinds in my coffee.
Aww.
You feel bad? I can feel the love from
sorry.
you guys. I really can.
But anyway, U.S. shares. Canopy Growth was up. Tilray was up. Kronos was up. and Aurora-
MSOS is one of the MSOS and MJ are the two ETFs.
The ETFs, yeah.
You have
Trade
to.
them? I haven't traded them.
I have traded them on and off. I mean, they're
Be you bored?
yes. MSOS is at $5. I think I did a cover call in there. There's not a ton to do, but the biggest issue with these is that they're the ETFs, because of all the scheduling and it's not really fully legal.
Right, sure.
And so these are all the US based companies that are in these ETFs are all
in Toronto,
swaps.
yeah.
Well, no, a lot of the stocks are Toronto. Tilray is a
Right.
Toronto-based
Yes.
company. But the US-based companies, they don't trade on public markets. They're on the OTC market. So MSOS has swaps to get exposure to those US-based companies. And there's a ton of drag that comes with swaps. You have a lot of fees, a lot of liquidity issues. So you don't have clean exposure to U.S.-based cannabis companies now, even with this ETF.
You could say they're skunk ETFs.
Yeah, they are skunk. It's mid.
It's mid.
Yeah.
It's mid.
Hey, good news. Ford and GM are launching programs to extend the use of a $7,500 EV lease credit. That expires today. So if you want an EV, today's your last day. But Ford and GM are racing to sign up car dealers for programs that would effectively extend that tax credit through like dealer incentives and programs on that side on leases of electric vehicles. Not sure what Ford and GM are doing.
Ford's hanging out at $12. It's relatively high for Ford. General Motors is hanging out at $61. High for General Motors, too.
Okay.
I mean, these have languished much lower. I guess Tesla's the one you really want to look at and really look to trade. That's the most liquid one. It's down about $1.50 or so to $4.41, but it's relatively high, too. Really rallying from around $3.50 to $4.50 in the last month.
Amazon stock got upgraded yesterday, and the analyst said it's not on hopes for massive AI growth. It's actually on the back of getting your groceries really fast. What? Yeah, Amazon's e-commerce business is set to benefit massively from their expansion into online grocery delivery led by a same-day delivery initiative. And then HSBC lifted their Amazon price target to $260 from $256. The buy rating.
What do you think about that?
I mean, Amazon, if you're looking for one that looks cheap compared to the rest of the Mag 7, it has not. I mean, we're still off all-time highs. You got 10% to the upside to get back to
All-time highs, right? Yeah.
Yeah,
Like 222, it was 240. Every other stock I talked about is $1 off of its high.
Yeah, for the last year, we're not even at highs. I mean, Google is 50 points, $50 above highs. I mean, Apple just got back there. You look at NVIDIA and Meta, all these
Surprising,
stocks.
Amazon has a weak correlation to the overall market, meaning the S&P 500.
And you guys talked about that yesterday.
Tesla just caught up. Tesla caught up in a week or a month or whatever it's been.
Apple was another one that was a lagger, caught up. Sure.
So maybe this is your spot. And you get all those amazing upgrades from, these amazing analysts as after the the last 50 points, it's now an upgrade.
Now it's an upgrade. Now it's a buy. Hey, I literally forgot this company existed, and sad to report, Beyond Meat, their stock sunk to an all-time low after they launched a convertible debt exchange offer. So sad. Shares of Beyond Meat slumped to a record low after the maker of plant-based meat launched an exchange offer for convertible bonds to cut more than $800 million in debt. The stock was last down 32%. Good Lord.
Burn it with fire.
I literally forgot that they existed. I forgot that you existed.
This was another hype. I mean, yes, it's so classic sometimes. I mean, listen, I guess it's pretty random too, but it seems to work more than not. These hyped up stocks kind of sell off really bad. This one's now flirting with, I'm sure, bankruptcy soon, $1.82.
Sure. Oh, it's going to get delisted. Yeah, that's crazy. So RIP Beyond Meat. Hey, guess what?
Ever since that picture of it, remember that one picture of the Beyond Meat sausage?
Oh, the scrunched up sausage.
I think you can. I think the high in Beyond Meat
was
right.
probably right there.
It was right there.
Yeah.
Nikki, this
Picture's
kind
worth
of
1,000 words.
harkens back to our childhood because I remember this and being obsessed with this.
Oh, you and Nick are the same age now?
Yeah, he's
Okay, go
older
ahead.
than me actually.
Yeah.
But do you remember McDonald's Monopoly?
Of course.
Of course, right? Yeah, like you always trying to get your parents to take you to McDonald's and you collect all the
you get
things
the little sticker,
No, I never knew anyone that won anything more than like a hash brown.
Yeah. Well, don't they release like how many they?
Right. Well, McDonald's Monopoly is back,
Nice.
but it's updated for 2025, and I hate it already.
It's inflation adjusted.
No, it's going to be mainly digital, and you have to have the app, and then you have to play in the app, and so it's less I was like, I kind of hate it.
Because now they have to track your movement.
Right, you have to be a McDonald's rewards member, and then so MBAs ruin everything.
There's some good perks being part of the app, though. Like these, I mean,
Yeah.
I don't have them, but I hear people talk about, ooh, I got a free burger today. That kind of thing.
Who are these people?
I don't know. Like Vinny.
It said that.
Dad, I saved you.
Oh,
a
that's
burger.
another thing that the credit card is on. Oh, yeah. Vinny also has my credit card hooked up to his daily lunch.
He really likes a Baja
Oh, and
Blast.
Roblox?
But that's Taco Bell.
Taco Bell, yeah.
Like Roblox. I'm sure he also has like a cologne subscription.
Oh, of course, of
Like
course.
Smell Max
Well,
of
you
the
gotta
month.
have the sty.
Yeah, the Smell Max
Right.
boxes.
Yeah.
Yes.
Right.
What's McDonald's as a stock doing?
It's mid. 302, been as high as around 330, been low as around 280, sitting at 300, 3 and change.
You're not gonna hodl it.
No, not gonna yodel it.
Hodl.
Total.
Whatever. Yodel, hodl.
Hey, this is interesting. Debuting at Dodgers postseason games, the Dubai funnel cake, taking a page from the viral Dubai chocolate trend. This funnel cake is drizzled in a cacophony of chocolate and pistachio and other things. I can't find Dubai on a map, but it's in everything now.
It's getting a
Definitely
little,
jumped the shark.
Yeah.
getting a little overplayed. I think
Yeah.
we've beaten that dead horse.
I've never even had the Dubai chocolate. I didn't know Shake Shack had the Dubai shake. I haven't had that.
Well, it went down from like $22 a bar when Vinny was buying it. Now you can,
When Vinny got his first box delivery straight
you can
from
get it
Dubai.
at Jewel now.
Yeah.
$6 or something.
Yeah.
It was $500. Yeah.
Yeah, it's definitely.
But Vinny needed the gold flakes on it, so he wanted to see if they came out the other way.
Yeah.
This is a great video. I did not see this happen live. I was not actively watching college football on Saturday. And yes, I know I'm a day late. This is Tuesday, but then I found this in my email. I was like, oh, yeah, I wanted to show this. So as you know, they do College Game Day. And Pat McAfee, who we love, by the way, you know Pat McAfee, Swiftie? So we ride for Pat McAfee. So
Okay.
he loves my girl Tay. So we love you, Pat. And so did you know he's giving away? It's his own money. I didn't know that. It's his own money that he's giving away to these kids.
I'm sure he'll be okay. I think his
I know.
ESPN contract was like 50
Sure.
million, so I'm sure.
It's just a wild ride.
his lawyer.
It's a wild ride for a kicker. That's all.
Yes,
I'm just saying
yes.
his arc is amazing,
He's great,
and
yeah.
I do.
Good personality.
He's just a genuinely like a golden retriever of a man. I love
Yes.
this. So they were at Penn State over the weekend. College Game Day was. I don't know if you watched this. I think this is the greatest thing that's ever happened. We talk about Monte Carlo scenarios all the time, but this kid playing 4D chess. Watch this.
Won the raffle, and you said, I don't want to kick because I suck at kicking. Is that accurate?
More or less.
How did you land on my man here? What are your hopes in him?
I was looking around, I saw my man, he said he plays soccer, and I was like, this is my guy right here, my guy Carson. I have faith in him, so I know he's gonna get it done.
Have you ever kicked a ball before?
Not football, soccer.
Hopefully you're terrible at this. It's $100,000. Are you guys splitting that 50-50?
Yes, sir.
So we'll make it $300,000. $150,000 for both of you. Okay?
That's
You
pretty
only
sweet.
get one kick, though.
Drilled it. So they're brothers for life now. And he runs to Kurt, gets the dad hug, starts crying.
Get
That's
Richard
amazing.
Bear.
It has been an expensive year. out here
He
at the
knew it right there.
Pickleball.
He picked it.
I mean, he drilled it.
Buddy, 300,000.
Give that kid a
150 to you,
contract.
150 to you.
See, this brings America together. Like, why can't we all just...
Roar! Thank you. Goodbye. You won the
Look, dude.
That's awesome.
That
That's
was
awesome.
That's a great-
Pat's
that's a
awesome.
great
Those
way.
kids
Yeah.
are awesome. I was crying. It's fine.
His father's a hedge fund manager for J.P. Morgan. $2.7 million a quarter.
No, his name's Carson. Oh, good job, Carson. Anyway, Pat, what's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with your emails confirm and send. Let's Tasty Live.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son. You know what that means. Time for a little more Tasty Live with Confirm and Send. Before we do get to your viewer emails, let's take a look at what the market's doing. Even the S&Ps were down around 10 handles this morning.
Cancel crash.
Cancel crash. They're down 3.5. The NASDAQ actually turned green by about 6 or 7 handles. Russell down 5. I guess that's the weakest of the group, but a very small move across the board. Let's call it all unchanged. You mentioned on Sunday 6,700 where we're going to hang out. We are hanging out around 6,700. The expected move on the E-mini S&Ps for today is 23 handles, a little bit higher than it's been, representing that volatility that's up at 1781, higher than it's been as of late. Let's get back to some of these movers here. Bonds are up 2 ticks, 116.29. Bitcoin, after trading and flirting with 116,000, it's the higher end of its most recent range, I guess. I mean, I guess it's more mid-range, 120 to 110. It's sitting at 114,000, down just about $1,300, a 1% move. Ethereum doing the same, down around $30. You see the charts are pretty similar to each other in the magnitude of their moves. Oil down $1.20 back to 62. It too has been in a pretty tight channel from around 61-ish to up to at a high end around 65-ish.
Big 2-day move though.
Big 2-day move.
$3,
yes.
$4.
Big 4-day move prior to this big 2-day move, taking back all of the last 4 days. You're 100% right, correct. Gold has actually had a lot of movement pre-market. Ivy rank of 38 in gold has been expanding. Flirted with 3,900. I know Frankie in the chat room was getting his 3,900 hat ready. He had to take that.
He's got his shovel. He's going to the backyard.
He's going to the backyard.
to grab a couple coins to liquidate. For the, you know.
Well, he wants to buy lunch. He has to take a whole coin.
Lunch and maybe a new snowmobile for the winter coming up or something like that. No, he's Snowbird. He's in.
Yeah. You kidding me? He's big dog. Silver down 64 cents. A bigger move on a percent basis. 1 1/3 move in silver. That's all I got. We'll take a look at some of the markets before the opening bell in about a half an hour, 35 minutes from now. But right now, confirm and send. Go.
Very nice. Let's do it.
Let's do it. Is right.
First slide, please. How were option priced before the creation of the VIX? Great question.
I'm glad you're asking it to me because I actually had 2 price options before there was VIX, the market maker on the floor, and something stayed consistent. Like we all had the spot price. That was easy to see.
Yeah.
It's where it was trading right now. We had the strike price. We all knew that. So all the market makers would get the same thing. We had time to expiration. There would be a little bit of, in your model, a little bit different. Some people would take out the weekend. Some people would keep in the weekend. They would use trading days as opposed to calendar days. So some people get a little bit of different pricing from that when you factor in spot price and strike price. And then the implied volatility, we all got wrong. Like I would have one implied volatility, somebody else would have another.
But you'd probably be higher than you'd probably be a lot higher than
what happened was, what has happened was, we would all yell out a bid. Let's say, because the market was wide, let's say.
And by how wide? So we're talking like.
Even dollar options would be, let's say, sometimes 50 cents wide, especially to start out. So we'd say $1.50, and all my pricing would make it worth $1.25. So I'd say $1.50.
Yep.
And somebody else who used a different variable before the VIX, remember, a different variable, maybe a lower implied volatility, as you said, maybe somebody who had a better interest rate than I had, would say they were worth one and an eighth. We traded in teenies and eighths, $6.25, $12.50 kind of thing. So he might say the order's a quarter because he wanted to sell them. So now the market's 1 to 1.25 just between the two of us, because I said 1 to 1.5. I was the best bid. He said the order's 1.25. Now it's 1 to 1.25. I think they're worth 1.5. So I would look at him. I'm like, "You're really at a quarter?" And he would face me and say, "Yeah, I'm really at a quarter," because he had his sheets worth and I had. And then the broker would come in and say, "I'm an eighth bid." And that would be kind of his fair value, closer to my bid. And we'd say, well, an eighth a quarter. And, the quarter offer is going to go away if we trade on the offer kind of thing. So it wasn't as standardized. Now with VIX, you can really standardize it. There's not that many discrepancies in the pricing. But that was a very kind of high overlay of how we would get to the option pricing.
And a lot of the pricing was probably affected by your positions in
100%.
whatever. So
100%.
If you had a lot of.
If I made a good buy on an option just a moment ago on a call option,
you might move your price to try and get.
I would move my price a little on something else a little bit lower, or even on that price. I would say, I got 20. If I just bought them at $6 and the market was 6 to 1.5, I would say I got 20 at a quarter, and the broker might have a not held order. So he says, "I'll buy your 20 at a quarter. Anybody else at a quarter, I'm quarter bid." And then he would wait. If the market moved a little bit, he'd go bat. I'm a half bid now.
Because you want to spread off.
Of course, I'm going to spread off everything immediately. If not,
you're not keeping. Big risk.
So it really was supply and demand, but the big factor was implied volatility and interest rates if you're doing further dated options.
Very nice.
Next question, please. I often hear people talk about leveraged ETFs or inverted ETFs. What is the appeal of these? Why buy an inverted ETF versus just selling the regular? Or why trade a leveraged ETF versus more shares of a normal one? It has to be a reason.
These are short term, like when you look at and buy an inverse ETF, not really inverted, but an inverse ETF like an SQQ or one of these.
Be inverse. You're correct.
Typo. Yeah, no, I know. It's same thing, but where you're long the product, but it's short
the market.
The market.
Or the ABC stock, sure.
So those move in percentages. So they're not moving. It's moving based on the move in the market as a whole. And so these have, they're short-term trading vehicles. They're leveraged. I mean, you're getting 3x whatever the percentage move is, which is a lot.
Yeah.
So trading these as a short-term hedge is why people use these. I think people,
or even just a short-term trade, not as a hedge. Just
hedge or trade. Yeah.
Sure.
I say that in the realm of most people being long.
Yeah.
Like if you're looking to be hedged for a week into some sort of event or whatever, you look at one of these products. The problem is that I think a lot of people hold on to these a little too long and don't take this as
because it doesn't work immediately. And you said a percentage basis. It doesn't have to exactly be 3 times. It does not have to be 3 times on a percentage basis. There's rolls involved. And
yes.
Futures. That's how they get the leverage on this. I would say, I'm going to add one other thing. Everything you said was correct. I would say the one other thing that people would use it is some people either can't afford to sell something short, especially a stock, or can't restricted in their account. Well, not a Tasty Trade, right? No. Tasty Trade you could do. Well, not stock. You could do options. Yeah. If you did an inverse ETF, you could buy that ETF and benefit from a down move. That would probably be the biggest reason or use for it.
Yes.
Next question, please.
All right. So are you surprised how much activity there is in the 0-day option, SPX options? Do you think when these first came out, they would account for so many trades?
I knew they would be wildly popular because when I was standing in the pit and trading expiration day, which was only quarterly, by the way, was my busiest day of the year. I tried to make my nut for the month on expiration. Like that was, to me, was bell to bell. I never left the pit to go to the bathroom. I mean, today was the day to shine. So I knew it was going to be popular. I didn't know it was going to be this popular. I mean, I think it's something like 60% of the option volume is the 0-day options. I never, ever thought it was going to get like that. No. So I would say great move by the exchanges to finally list them. I know people were trying, Tom, a lot of us were trying to get them to do this for years prior. I'm sure they're kicking themselves that they didn't do it sooner. But I think all things come when they can handle it. You know what I mean? I think it was more of probably a programming issue or something like that for them. So good for them. No, I didn't think it was going to be as popular as I thought it'd be popular.
Yeah. I mean, I think it's just a function of the notional value and the amount these things can move. I mean, when you're looking at, buying one share of Apple at $250 or buying a SPX 0-day call, I know obviously the Apple share has a lot less risk, but they're the same value and one can 5X and, the other might go up 50 cents a day. It's, instant gratification. You gotta get it.
Yeah. Yep.
Next one, please.
If you were to bucket your trades comparing individual underlines versus ETFs, what percentage of your trades are ETFs? I find I lean into these a lot more because even in low volatility, I'm okay selling premium in them because of their liquidity.
I would say probably like, I don't know if I include futures in that, just because futures are.
I think you have to include everything you have in there.
Yeah. I would probably say like 80-20, mostly in single name equities. But I think that's a reflection of like account size. So if you're trading in a larger size account, you're probably putting a lot more into these ETFs just because you need to deploy that capital.
Right.
And for me, I'm more in single name equities just as getting higher vol and whatnot because of the limited capital.
Yeah, I totally agree. I think that 80-20 is a pretty good split up. But you are right. Whoever wrote this, during earnings season or something like that, I will go into more ETFs or try to go into more ETFs. Problem is just not that many that are that interesting to me. Once you get past the SPYs and the Qs, I know you've got some gold ETFs, which everybody knows how good I am as a gold trader. You got some bond ETFs like TLT, which, by the way, has a dividend public service announcement. If you have any in-the-money calls, about a 40-ish cent dividend, maybe a little bit less, check it out. You might want to do something there. I gravitate towards the ETF, so I think that's a good thing. But no, 80-20, I like it. Next question, please.
How do you decide what strategy to use? As an example, I couldn't tell you the last time I used a calendar or diagonal spread. Shame on you. I just don't know why I would, and I'm wondering if my decision making could use some fine tuning.
Yeah, probably could use some fine tuning. I know Nick uses a lot of diagonal spreads, which are directional in nature, selling premium as a kicker towards it. Calendar spreads I'm less fond of. They're more you really got to pick the strike. They're a much harder trade, slow moving. You pick up pennies if if you're very diligent with it. Harder trade for me. Diagonal, that has delta to it. Again, you got to pick direction, which makes it a difficult trade because direction is 50-50 shot, but you've got that kicker of added theta decay on it, which
in the short term, so it's not as directional.
You've used them a lot during as dynamic plays for earnings and stuff like that. So I think that's a great place for them. So I think your decision making needs a little bit of fine tuning. You don't have to go crazy or overboard, but diagonals would definitely have a place.
Yeah. It's worth understanding and knowing how to trade those and when they fit your assumption. I mean, I think you do a couple diagonal and calendar trades. I mean, you got volatility relatively low still.
Right.
You know, try it out. See.
Give it a shot.
Yeah, give it a shot. Got to diversify. Why
do it more
not
than
add
once.
it to the
Let's try it. Next question, please. You want to go? Was it me?
Sure. I can go for you.
The market seems totally unfazed by a government shutdown. VIX, VVIX, SKU are all at meh. Or as the Zoomers would say, mid levels. I'm no political scholar, but isn't this kind of a big deal? And the government shutdown is like tonight, right? Isn't it? Like, don't they have to do something by night or something?
Well, we'll see if it happens. We'll have some research for you tomorrow. We just had one of the boys come in and chat us about that. But I in the words of Mr. Sosnoff, I don't care.
Fair enough. I do care.
Yes.
Not about anything that's going on with the government. I mean, I would hate for government employees not to get their paychecks and everything else like that, or whatever happens with that. But volatility, from what I see at 18, is just a tick off of its lows.
Not as spooky as you think.
Not as spooky as the headlines are going to make you, at least in our silly world.
Yeah.
You know what I mean?
Right now. That can change.
Sure.
Tomorrow can change.
Sure.
But it's telling you, I mean, like, if to that, the other side of that coin is like volatility is telling you that I'm sure they're going to work something out today.
As they always do. Now, this is no great place to be, but just like a trade that goes wrong, it's not what today is not the problem. It's what you did in the past. That's the problem. You know, government's got to get its act together and have some sort of budget, I guess. Anyway. Well, that's the last one for our viewer emails, and I appreciate them. Even the S&Ps are down 8.25. Nasdaq's down just about 19. Russell's down around 6. Nasdaq turned green for a quick second. It's down 18. Really, pretty much an unchanged market here. Volatility up 13 cents. Bonds just flipped over a little bit. They're down 116.26. We'll take a quick 90-second break and come back. We've got a nice option jive for you next. We're back in 90 seconds. tastylive.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
It's option jive. That's right, Nick. It is time for an option jive. We got E-mini S&P's down 8 1/4. All that means nothing right now. Option jive. Scale up without the blow up. What's the gossip?
I give that like a C.
C?
But that was good. I mean, it was good for 8 in the morning. It was perfect. But yeah, that's a good one. I mean,
I'll take a C. I'll take a C.
Yeah, that's a Batista passing.
It's a little better than Vinny got in chemistry last week. Yes.
Chemistry is tough. That's tough.
Chemistry is tough.
There's a lot going on.
Yeah, a lot going on.
Yeah.
Yeah.
Scaling up without the blow up. Talk about it.
Let's do it.
Common question. So it's a common question from new traders. How can I scale up with undefined risk strategies, which are naked positions, while keeping risk controlled and protecting my account and, of course, not blowing up the account? So,
yeah, listen, we all want to open the doors the next day. I mean, that everything in trading, the profits take care of themselves. You know, nobody ever asked me, how can I help you with your losses? Like, you know, if I have a gain, everybody had their hand in my pocket. You know? So you want to be able to open the door.
And those are the easy ones.
Those are the
you have lots of them. You take them off, you move on. Everybody remembers the losing trades. Nobody, thinks about all the winning trades that they've had. So for undefined risk strategies, there are two choices to scale up. So you can trade more, which is increasing the number of contracts, or trade bigger, increasing the potential reward or risk. So does one of these choices make more sense than the other? So we're talking about making the position bigger, as in delta-wise, or scaling up, adding contracts to the position. So those are the two common questions we get. We get this all the time. So we're going to take a look. So for the next slide here, the study that we're looking at, we first compare two strangle strategies that generate the same average P&L, or just about the same, according to the buying power used, but one with more contracts and further out of the money strikes. So what we're looking at here is using two 16 delta strangles versus one 30 delta strangle. They'll have about the same average P&L. We're going to take a look at kind of the risk and reward of those two positions, being that they're kind of similar average P&L to buying power.
We've done this type of look at size before, but I've never seen it like this, which is a pretty good snapshot of just showing you how efficient pricing is. Like there's no advantage. Like if you went to a 50 delta option, you could probably do two 30s and four 16s. You get pretty close to the same thing as you go further out of the money. It's just the option pricing, but that's a nice way of showing it on the screen. I'm sorry, next.
No, it's all good.
Slide, please.
So looking at these two strategies, the small delta strategy does yield a greater average P&L, return on capital, and a higher success rate. You would expect it. It's a higher probability trade. And so like when you're having a higher probability trade, you're going to have better wins and win percentages just because the probabilities play out. But obviously the caveat is that we're going to be looking at, the drawdowns, which are also a part of it. Because we get that question all the time, is like, why wouldn't I just sell 10 of these 5 delta puts and make the same amount as the one, 30 or 40 delta put? And, and it's so far out of the money, it's never going to be tested, blah, 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 blah.
It looks beautiful.
It's free money. Why isn't this free money? Or paycheck trade. Those are the worst ones. Those emails, I'm like, you got to, there's no income trade. Right. Okay. If there was an income trade, we'd all be doing it. The free money.
A couple of times a day.
Yeah, a couple times a day, 2, 3, 4 times a day. There's always risk, and we're going to get into that here. So obviously, your average P&L, you're going to have a bigger position with 16 delta from risk perspective, because you have 2 contracts on, you're going to have a higher average P&L, slightly higher return on capital, but not by a ton. And your win rate is obviously going to be higher. Again, when you're in the 60 to 80 range, I almost keep that bucket is kind of the same to me. I mean, obviously 80% is higher than 65, but it's kind of, it'll be explained in the next slide of why that's kind of the same realm. So getting to the next one here, when you test for the past 10 years, it has a higher notional value and a less efficient use of capital. So of course, when you're doing 2 contracts of a 16 delta, your exposure is a lot greater than 1 contract. And you are further out of the money, but when you have those sort of tail events, it's going to be a much, much bigger position. And so you have to keep that in your mind here. And that kind of comes into play on this next slide when we're looking at these 2 puts. So we're looking at puts now. We compare 2 puts. They use the same amount.
That's where you think you're going to blow up, right? Although in this market that
it's mostly to the upside.
Been to the upside. Puts, sell all you want.
Puts are schmutz.
They never come. Maybe one day they come a little.
Yeah, like you're down 7 points today.
Yeah.
Scary.
Right. I joke, but really over time it's puts, but really now it's been calls. But continue.
Yes. So we're comparing 2 puts that use the same amount of buying power. The average buying power of a 50 delta SPY put is about twice that of a 15 delta SPY put. So we're looking at 2 15 delta puts versus 1 50 delta put. You'll see you're obviously using similar capital, but your risk is going to be way, way different. And we'll see that on this next slide here. So if we go to this slide, so looking at the tail risk here, I mean, your average P&L comes out to be sort of the same. I mean, you're slightly higher on the at-the-money put, but there's a lot more juice there than that 15 delta put. The big problem comes into play, and why we always talk about, moving closer rather than adding contracts, especially when you're doing like spread trades. I know we're not talking about spread trades here. We're looking at naked positions. But when you're doing, 10 $1 wide put spreads versus 1 $10 wide put spread, this is the reason, is that your max loss and your tail risk is much, much higher when you're adding those contracts. So using 2 contracts of the 15 delta puts actually generates bigger losses and a lower average P&L. And that's because the tail is so much fatter with more contracts versus the lesser contract higher delta position. Even though the higher delta position is way closer at the money, looks like it has a higher risk and it has a lower pop, but the actual risk is lesser just because of that tail.
You never realize how big small really is when we talk about it, because look at this. I mean, almost $16,500, almost $17,000 versus just about $10,000. That's the difference between blowing up your account and staying mechanical and keeping your size in check. And I know it's so easy to click another contract, especially if you have the buying power, but it's usually not the right thing to do.
Yes, and things work until they don't.
Yes.
There's a lot, if you've been doing this for the last couple months, it's been easy, right? You just sell the 2 puts, you take them off, no problem.
Sell another one.
Yeah, sell another one. You do, I'm going to do 3 or 4 now instead of 1 or 2. 5 or 6 comes along, and then all of a sudden you have a move, and this,
all of a sudden you're an investor.
A long-term investor.
Long-term investor.
Well, we had this, there were a lot of people that reached out in April that were doing this in like the minis and NASDAQ, stuff like that, in the futures, which have even more leverage. And you look at the buying power and you sell these 5 delta ES puts and they use, $2,000 in buying power or $1,500 in buying power. And I got portfolio margin and, blah, 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 blah. And then you have these moves and, futures are different because you have a lot more exposure to changes in volatility, but things get really big to what you're saying. And so, it's not always about squeezing the most, it's not like maximizing returns. You got to kind of,
you got to look at the other side of the coin.
You got to look at the other side of the coin.
What's my risk here?
Although it's been, an easy trade for a couple months, you got to keep in mind the other side of the coin and being, going to what you said at the beginning of keeping the doors open and being able to open the doors the next day.
And it's so funny, you mentioned April. So if you started doing this after April by, leaning a little bit long or just selling puts and calls or more puts than calls, you're like, these guys don't know what they talk about. Every time we go down by 2% or 1% even, you sell another put and you maximize your return and you get to take it off in 72 hours for a gain, that kind of thing. If you started prior to April and you were doing this for a couple of months, you lost all of your profits and some.
Yeah.
And you're shy to sell puts again. You know
Well,
what I
and
mean?
you
Like,
learn
it
a
makes
little
it-
bit. You understand that. I mean, it was the same thing for COVID. I mean, COVID was, everybody was a genius for years and years and years. And then all of a sudden, you get wiped by that sort of move. And it's a different game. And I think that's, it obviously stinks in the moment. But if you have been keeping size in check, throughout your trading career, it's a great learning experience because, you're not as, I'm not as scared of down moves as I once was. I know what I'm going to do.
Yeah.
And I know how to trade through it.
Sure. You're going to watch your deltas is what you're going to do.
Yeah.
That's
and
what we all do.
You need it. You need to go through that, though, to really, do that moving forward.
Yep. Last one, I think, is the takeaways.
Yes, let's do it. All right. So when scaling, an options trader should consider increasing the position's risk or reward before increasing the number of contracts. So you should look to get more delta in the same amount of contracts versus upping the contracts, especially when you're dealing with tail options, especially with the tail options. So if we decide to trade more contracts, we're subject to greater notional risk, higher volatility, and greater tail risk. Again, if you're looking at those 2 deltas, 3 deltas, 5 deltas, even like a 10 delta option, move your strike up to the 20 delta and don't, 3 or 4 extra contracts.
Very
don't
good.
want the tail risk.
Very good. Good job out of you. We're going to take a quick 90-second break and come back. We got more Tasty Live at the opening bell. E-mini S&Ps are down 750. NASDAQ down 14. Russell down 6. And the Dow down 59. Volatility up by 11 cents. We'll be back in 90 seconds. Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nicky, we are back, son. We got about 3.5 minutes before the market opens. Even the S&Ps are down $7.75. NASDAQ is down 17. Russell's down 5, and the Dow's down 58. Unchanged market in your eyes? I mean, it's subjective. Obviously, they're all down small, but it's an unchanged market in my eyes. Would you agree?
Yes, for sure. And it was interesting to see vol get bid into the close yesterday, and it stayed bid throughout the overnight session. We were in like the 18 handle.
Yeah, 1787 right now, but yeah, you're 100% correct.
So that was kind of interesting. I mean, bonds have been strong the last 2 sessions. Gold kind of giving it up a little bit. Bitcoin, which
is gold really giving it up down $11?
No, from the highs. I'm saying it's down. Yeah. It's a red day here.
Sure.
But Bitcoin has also been kind of the risk on sentiment on the last couple months at least.
Monster day yesterday.
Monster day.
Yeah, it's an upside move. They are flirted with going under 109, rallied up to almost 116 or so. Sitting at 114. It's 114,000 right now. Oil down 95 cents. A big 2-day move you pointed out earlier in the day, going from around 65-ish under just around 62.03. It sits at 62.50 right now. Silver with a decent sized move, also to the downside, down 81 cents off of its highs. Nat gas catching a bid, up almost 5 cents to 3.31. Pool closing.
Oh, no. Well, natty gas bill goes down then.
And the gas bill goes down, right. 2 weeks from yesterday. And it's been like 80-something degrees in Chicago.
Yeah, it has been a nice week.
So no real big gas.
To my friend Pablo in the on Twitter and in the chat, his 3-day rule. So I got long the micro crude contract yesterday.
You did?
On last call.
Okay.
So you're having a nice move today, lower too. So it's going against me. Pablo usually puts a 3-day rule on my futures trades. Yes.
Because you get the direction wrong for 72 hours or so.
Yeah, and then you get the move. So you're nearing the 3-day, like we're there.
In that window.
Yeah, we're in that window. You might be interested here. Oil volatility a little bit.
You get another trip down to 62 or something like
that.
You might want to. Yeah. If you're playing that.
If you're playing that game. That's the 3-day rule.
If you're playing that 3-day rule.
But oil volatility higher. You've had a nice pullback. Might be an interesting point to get.
Yeah, or if you want to play it smaller, go to the option side, right? And,
Yes.
And maybe even
MCL is pretty small though.
MCL is the proper sizing, I think, for most people. It's like represented to 100 shares of stock, where /CL is like 1,000 shares of stock,
Yes.
probably out of most people's typical trades. But if you go to the option side and you put on a spread, you're back down to that smaller size again, maybe something there. Naked options in oil are big.
Yes.
I mean, 50 cents is $500. $5 is $5,000. So
Yes.
So alone, they're big.
Grow some teeth.
Yeah. In conjunction with something else, making a vertical spread or something like that, makes it a lot more enjoyable. For going back to the piece we just did on the option jive about size, just another way how one contract is not always equal, depending on what product you're trading.
How's a put spread?
You just sold a put
oil
spread
futures
in oil.
48 days out.
Nice.
November 17th, 58.56.
48 days out in November.
The Z contract.
Yep. You sold the 58 puts, just about a 25-ish.
Kind of the low of the year.
That would be kind of near the low of the day, right?
About a 25-ish delta, kind of cookie cutter spot.
Yep. Perfect.
Yeah.
Let's see what else is moving in this market here. I'm just going to go to the high option volume list. You go to any list that you like to see. On the downside, leading us a little bit lower, MSTR down almost $5 after rallying yesterday. That's MicroStrategies. Meta down 4. Coin rally yesterday, down today, down 2 and change. Etsy, Vanetta talked about this morning, down 260. Microsoft down 2 and change. Google down just about $2. BMNR in there down $1.60 or so. UNH down $1 and change. Starbucks after trading, I don't know, Starbucks ever rallied? It rallied yesterday a little bit.
Stuck at 80 to 85 for eternity.
Ivy rank of 32 and earnings coming October 29th. Let's see what's trying to bring us to the green side. CRWV, you know it as CoreWeave, up $11. That's a big, almost 10% move in CoreWeave. PDD in these Chinese stocks seem to be a little bit higher, up 3. BABA up $1 and change. AVGO up $1 and change. TSM, Palantir up $1. Kind of a non-event-ish opening so far. Volatility up 11 cents going into all of this government shutdown noise. Right now, the market's saying, I don't really care.
I sold the snap puts in honor
of
the great one. 41 cents.
Snap down well, up 5 cents now. Great sale.
Should I take them off? I could get 2 pennies out of them. A little scoopy.
You could if you wanted to. You sold those puts at 41 cents.
What else is moving
in
here?
honor of the great one, his name will be forever on our lips, never mentioned here again.
I mean, we can name the studio after him.
Yeah. Since he never did name the studio. Yeah. We have the naming rights available for a small nominal fee.
Yeah. It could be a sponsorship.
That at tastylive.com. Yeah. Be happy to help you. Russell up $1 now. Even the S&P's down 6 and change. You think we're in a holding pattern for the rest? You talked about 67.
You want to do an SPX?
We could look at an SPX zero trade. It's a little bit early, but I don't mind it. The expected move was around $23. Let's take a look at the E-mini S&Ps for a quick second. Yeah, still $23. Let's look at SPX. You'll see here that it's the same 22-ish dollars. If you're going to do that, it would be the quarterly options. It's going to be a lot of volume in the quarterly options. You'll see here the open interest is in the thousands. On a 0 day, you ask, how could that be if today is the day? That's because these options were available all quarter long, right?
Yeah.
Awesome. Sure. If you're looking to do something around the 20-ish deltas, maybe a little bit long, maybe go to the 6620s and go, maybe $15 wide.
Oh, I was looking at the 6625. I mean, it's right around the 20 delta.
Either one.
15 points wide.
Either one.
6680, 6695.
6680, 6695. See, the 80s are $2.30. That's what I would go down to the 20s myself, but it's entirely up to you.
Oh, you want to do them Okay, so you want to do it like price.
Yeah, it doesn't matter. It's 6 of one, half dozen of another. We're both waiting for the same thing. We both want them either move the calls down one or leave the puts up one.
So you wanted to like 66.25, 66.75.
Sure.
And you do it at $4.40 or 50 cents. Let's see if I
Which one you doing? 66.20?
Yeah.
$15
I have
wide?
the 25.
It looks like 410 to me. 415 mid price, 410, $4.
I have the 66.25, 66.10.
You went 25. Got it.
Yeah. 66.75, 66.90.
6 of one, half dozen of another.
I'm looking at 4.45. All right. So we're in.
Very good. And we'll take a look at that when as it moves.
You want to put it like a GTC for?
You certainly could. I mean, if I'm doing the show, I probably would look to do something like that. Yeah.
So what do you want to do it at? 10, 15%?
15 to 20%. Yeah.
All right. So let's say you want to say $100.
Sure.
A little bit higher.
Sure.
All right. So we're going to put this in at 345, just the GTC to close this out.
Very good. Very good. And you may have to move a strike up or down. You did it very early on the day, so we'll see what happens there.
E-minis down 11. Crap.
Trading about 10 handles off of their lows, about 10-ish handles off of their highs. This is where they were when I woke up this morning.
Mm-hmm.
Not too much going on.
Yeah, not too much.
My friend. We can get to an option jive if you like. Bonds unchanged, 116.27. Everything's pretty much right where it was. Maybe the Nasdaq getting a little bit weaker here, or maybe the weakest of the group, down almost 70 on the Nasdaq. Let's see what's moving the Nasdaq stocks to the downside here. Meta down 8, Netflix down 7, Tesla down 3 or 4, Microsoft down 3 or 4. Kind of the opposite of what we saw yesterday. All right, let's take a quick 90-second break. You did your SPX trade, which was nice. And we'll come back with more Tasty Live with an option jive next. It's Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this Tasty Live site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
It's option jive.
Nikki, we are back, son. You know what that means? Time for some more Tasty Live with an option jive. Even the S&P is down 10. Russell and the Dow just turned green. We really have an unchanged market. NASDAQ. Choppy.
You got some big moves. Like Amazon just dropped like
Amazon
$3 after. Didn't they get their nice little upgrade?
The
hell?
They did get a nice little upgrade. What the hell? Right. Down $2.34. Amazon traded as high as $2.22 and as low as right where it is right now.
Yeah. Google taking a little bit of a breather too. It's down $4 and change.
Google off its highs the last week or so from around 250. Google traded as high as 240-ish and change, 243 actually. Down to 239. You are correct, son. Good job out of you.
Choppy. A little rotation, dispersion.
Okay.
Like that? You like that vocab word for you?
I do.
Dispersion?
I do. I like all your words. All your vocabulary is wonderful.
Oh, thank you. God, I could feel that. I felt that, really.
I know you did.
Good stuff. All right. So you want to do it? Yeah.
Yes, I'm ready.
Option jive.
Option jive it is.
The Pop Paradox. Had some great names today.
We have a new name generator.
Yes, ChatGPT. Low delta, high risk. Do it. All right. So there's always a trade-off with different option strategies, and usually a good mix of less risky and more risky positions is optimal for a portfolio. Of course, you have to have a little bit of both, right?
Yes.
Defined risk, undefined risk, futures, currencies, crypto. You got to have a little bit of everything.
You want a little bit of everything, don't you?
Of course. Often we judge a trading position by its delta, so lower delta strategies tend to have higher pop. And while this looks attractive at first, they come with their own risks, as we talked about in the last segment. This study will take a look at high probability option strategies and risk-reward trade-offs present with the different deltas. So we're looking at different delta strategies and seeing, risks.
Mm-hmm. Comes with risk.
Of course. Next slide, please. So the study is looking at a SPY strangle from 2013 to present. Strangles managed at 21 days till expiration, comparing the risk-reward trade-off at different deltas. We sold extremely high probability strangles and compared the success to potential losses and discussed the pros and cons of trading with low delta trading strategies, including buying power expansion and volatility risk. So we're looking at those tail options, those paycheck trades, those income trades.
Yeah. The ones that, how can this hurt me?
How could they? It's a 98 pop. Why
Right,
not?
right.
What gives?
What gives?
What gives? Well, we're going to show you what gives.
Where's the gimme and the gotcha?
Yeah, the gimme. There's always a gimme and a gotcha. Next slide, please. So looking at the neutral strangles with deltas of 40, 30, 20, and 10, you're going to see your win percentage here matches what you would expect. It's right around the probabilities that you set up when you sell 30 delta put. It's about a 60 to 70% pop, and so on and so forth. When you sell the 10 delta put, or call or 10 delta options, it's about an 84% probability of success. You can see your median P&L. Of course, they are all positive there, but we're going to be looking at kind of the risks associated. So increasing the delta increases the pot by increasing, we talk about further out.
The profit and losses, right?
Yes. Increases the pop and also increases the profit and losses. What happens when we push the deltas to the extreme to increase the pop as much as possible? What do you think, Scott?
Oh, this is the tail risk. This is going to be eat like a bird and poop like an elephant. Option Jeff.
Well said.
I don't know if it was well said, but I've said it before.
Eloquent, really beautiful.
Thank you. I don't have
beautiful.
the same vocabulary that you do.
No, I don't either. That's the problem. I think we might get ourselves in trouble here in the next couple weeks.
We just read the slides.
Yeah, we tried.
Read the slide, monkey.
We tried. Next slide, please. All right, so we're looking at SPY 5 and 2 delta strangles. This scares you. You ever do any of these trades? A 2 delta strangle, would that even come to your...
Never been on my radar, although I had a office mate back in the day who lived on the options under $1. I mean, he lived for them. I mean, that was
in size?
Size. Thousands. Sell them. Thousands. And very successful for a long time. And then you get the day after the 87 crash. You know, not even the day of. It was the day after. He was able to absorb the crash itself, but the following day he just could not stay in the position and bankrupt him.
It's a tough
Leon, a wonderful man. Nice guy.
Brutal.
Yes.
Gotta be careful.
Yes.
Median P&L.
He had this thing, if the option went over $1, it came back under $1, it would never go over $1 again.
Oh, that was like
that was his research, his thing. That's correct.
Decreasing the delta by a large amount does indeed.
Until they went to $100.
Until they went to 10, not 100, but it's probably 5, 6.
No, they went to like $40.
What was it during the 87 crash? Like that was when?
Yeah, like the 87 crash, and then the day after he adjusted on one side,
some of those
rallied the other side, and it was.
The options were all goofy. It was stuff was at trading at
just
parity.
couldn't find an offer.
Yeah, you could. Yeah,
you know,
scary.
Very.
Decreasing the delta by a large amount does indeed create a high probability trade, as you can see here. However, the P&L reduces by a large amount as well. These small increments over time can be wiped out with sudden outlier moves. So, of course, the tail risk is huge on these sort of options, just as we just explained. Not thinking about a 1987 style crash, but
sure, and
any
87
sort of
seems so far away. I mean, so it's going to be.
It was. I mean, dinosaurs were around.
Right. I mean, it's an irrelevant story, but you've had other moves like that.
COVID, April.
COVID, April, 8. Yeah, sure, all of it. Yeah.
You've had big moves.
Sure.
Next slide here. So we're looking at a couple distributions here. So not only is the credit less for lower delta strategies, there also exists buying power expansion risk. So you can see with the 50 delta puts, and this kind of parlays into what we were talking about earlier this morning, 50 delta puts have relatively narrow buying power expansion ranges. Your risk is much more accounted for on those closer at the money positions versus those tail options, which you get a lot of leverage, and that is an effect of both the price of the underlying and volatility. Of course, time comes into play too. But typically, when you have those tail options, the biggest risk, or at least the one that is far less accounted for by traders, is the change in volatility and that explosion in the margin requirement on those positions. When you look at 5 delta put in a portfolio margin account and it uses $500 in buying power,
right?
You're not accounting for that to go to $5,000 or $7,000, which is what you'll use with an at the money, put one contract.
That's right.
And so when you're doing 10 of those, and now all of a sudden your $5,000 goes to $50,000 or more in buying power, that's where you get into the problem. So when you're looking at the 50 delta puts, they have a relatively narrow range of buying power expansion, and that is because it's all kind of priced in. The risk is more priced in on those options versus those tail options. Even on the $10, $20 down move, your buying power is on entry accounting for that.
Yep.
That's baked into it. When you look at the 5 delta puts,
they have the widest potential buying power range expansion. So you can see these go from 1x to 3.5x. And that's a lot because you're not accounting for the change in size. When you look at that 1x, like one contract to one contract, you say, okay, I can deal with that. But nobody's doing 1 5 delta to 150 delta. They're doing 10 5 deltas to 150 delta. And so when you're looking at those as the same buying power, and then all of a sudden you hit a tail event, and now your margin.
Even in a portfolio margin account, it's going to start to grow teeth, and it's going to bite because all the margin goes up across the board.
And this is even more so the case with futures, which is what we touched on earlier today. These futures positions, you get way more leverage, and the volatility component in span margining is a lot bigger than a lot of people understand. So you got to be, you can't be looking at just equal buying power or equal credits. That's another thing that can catch you.
It's not an optimal way of looking at things. I know it's going to work until it doesn't, and everybody's always the sky is falling, sky is falling. This is not a sky is falling kind of story here. This will happen at some point, and you will have the potential to not be able to open the door. And if that's the position you're putting yourself into on entry, it's just not worth it. I'm telling you, it's just not worth it.
Yeah. And this is also why we talk about keeping money on the sidelines, because you have to understand that at some point you're going to have even the 50 deltas, and if you move that to say a 30 delta, and let's say it 2x's your buying power requirement, which includes the risk, you have to have the capital to hold that position, because if you get squeezed out, you can't come back from that.
Can't come back.
So got to keep the doors open.
Can't come back, won't come back.
It's a cool slide.
Yes.
Good thing for people to understand. Next slide, please. Looking at the statistics in the table overall, we can see that the lower delta, the greater the buying power expansion. Even the buying power starting out was lower. So you, of course, have lesser margin requirements with these far out of the money tail options, but they can get big. So you have to keep that in mind. From a buying power perspective, it gets up to 3.4x on those 5 deltas versus the 50 delta, which is only is just under 2x. So there's a lot of leverage baked into those tail options, and it's always comes down to your sizing.
It always comes down to sizing. It's never been anything else. But yes, you are right. Size is key.
Yes. Next slide here too. We got this one and then the takeaways. So although strategies with large delta, such as a straddle, yield higher P&L per contract, they also exhibit greater volatility in average P&L. Of course, out of the money is going to have a lesser variance other than
you start out with less from the beginning, right?
It's a higher probability trade. I mean, this is intuitive that you're going to have a better win rate, and your average P&L volatility is going to be a lot less because you're further out of the money, and that's.
Look at the win ratio; it's almost 20% greater than the straddle, and that's what we've always kind of preached here, to put yourself in a winning position more times than not. 63% is still great. I mean, I like to be over 68%, but 63 is close enough. But it's the losses that you have to worry about. And plus, when you look at a position that's a straddle, one option is always going to be in the money. I mean, unless you get really, really lucky.
Yes.
Look at the average volatility, though. Half as much, even more than half as much as the straddle. That's another thing. When you're looking at your P&L and jump around, like I don't look at my P&L pretty much intraday. Like I keep my P&L bar hidden because
but you know where you're at.
I know where I'm at. I know.
That's another thing that comes into play with sizing and your positions. With the E-minis down 10, what your positions are looking like.
Sure. But I don't like to see the numbers changing. It influences me. Sometimes I do it because of, if I'm watching it that attentively, I'm doing it because of the P&L and not because of,
But that's a new trader thing. I get the emails all the time. This one is now down 10 cents. Like it was up 10 cents yesterday. And it's like, you got to let things move and play out.
Like you've been there before.
Yeah.
Like I would tell you when you'd walk into the end zone after, carrying the football in there, pat somebody on the butt, turn around and get back in for the next play or get to the sidelines, do your thing. There's no time for high fives.
Yeah, well, I usually like to mouth off to the other team.
Usually you're about 20 yards down there, cheap shot and something.
Yeah, I was pushing somebody over, starting fights or something.
Uh-huh.
Last slide, please. Let's do the takeaway. So takeaways, even though the lower delta trades may look attractive at first due to the higher pop, they end up having much lower credits and that big tail risk. So although further out-of-the-money options require less initial buying power, they have an increased likelihood of expansion. So risk should be monitored closely. This is very intuitive. On the other hand, strategies with a large delta yield higher P&L per contract, but also exhibit greater P&L volatility. This is why we usually keep our deltas in that 16 to 30 delta range. It basically is telling you that, trading at the one standard deviation or right around that is really where you should be. You shouldn't be looking at more contracts at the 5 delta, and you shouldn't be, trying to, get the best bang for your buck with the 50 delta. It's somewhere in the middle, which I think
from our research, the optimal strikes is really what you're looking for, right? And I think that's where you want to land.
It's a risk reward. It's P&L volatility. You want all those things to work for you.
Let's take a quick break, but before we do, let's take a look at the market. Even the S&P's down around $16, about as low as they've been so far this morning. NASDAQ down 111, Russell down 4, Dow down 23, kind of the opposite of what you saw yesterday. Volatility only up 10 cents, really hasn't percolated or moved that much, although it has been bid over the last 2 days. You can see it is 1784. Bonds up 5 ticks over 117. Bitcoin hanging out at 114,000. Ethereum down 50, actually off of its lows they were making just a moment ago. Oil down 74 cents. And gold, can't keep a good Goldie down $1.90. Some of the movers that we have here, Netflix down $19, hurting.
That stock, it's been dead. It hasn't gone anywhere.
No, it hasn't really gone anywhere. It's been going sideways. Ivy rank of 32 in there, and it has earnings coming October 21st. Let's see what else is moving the market. Meta down 13, Etsy down 6 after being down only 2 or 3 on the opening. Tesla down 5, Oracle down 4, Amazon you mentioned a moment ago, and Google down around 370. To the upside, there must be something. CoreWeave up $16.
Yeah.
Hood up another $4 to 140. Can't keep a good hood down. TSM up $2.80. The Chinese stock's doing good. PDD up $2.60, and Baba up around $1 and change. Son, that's all I have for right now. Are you ready to take a quick 90-second break and come back? We got a market measure next.
Yeah, let's do it.
Dow's bucking up 30. Russell's up 10.
Yeah, if you got some trade ideas, throw them in the YouTube chat. I could use some.
Love to
some
see
pointers. I'm looking at it's the new flavor of the day. Your CoreWeave is up 16.
Yes.
Yesterday it was Aklo.
Yeah.
It's hard
to. AppLovin, remember Apple?
Yeah. I'm already in Netflix. I saw the put spread in Netflix. We're searching. There's not a ton. I mean, it's like these just high flyers.
We haven't gone anywhere. There's been a rotation of stocks each day. You are correct, and we end up nowhere. Wrapped around 6,700 where we are in the S&Ps. We'll take a quick 90-second break and come back. We got more Tasty Live immediately following these messages from. We don't have a sponsor. Boo-hoo. Market measure next.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Having trouble understanding what your trader buddies are saying? Here's what it means when they say catch a bid. The term catch a bid is in reference to the stock's price action. The bid price is the price at which you can sell a stock at. When a stock continues to go down, so do bids, meaning the price at which you'd be selling the stock is continuing to go much lower. If you miss it, you can't catch a bid.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nikki, we are back, son, and we do have sponsors. I just got tongue-tied. You know this market measure is sponsored by the CBOE, and
You don't get your paycheck today.
We do have CBO. I think they direct deposit. I don't even know, to be honest. There's CBOT too, by the way. So I haven't checked.
CBOE.
No, CBOE. No, direct deposit. I don't know if they pulled it back.
Oh yeah. They got people watching.
They got people.
No doubt.
No doubt.
Yes.
No doubt.
Yes.
The walls have ears.
Oh yeah, for sure.
We do have two sponsors, CBOE and the CBOT.
Yeah.
They actually come out with us, which, by the way,
CME too.
And the CME, yeah. Well, when I said CBOT, I meant CME. So there, I misspoke a third time. So I apologize.
Jesus.
I'm going to LA, and I'm bringing a buddy with me.
Very nice.
This weekend, if we could put up that art card, please. The Fonda Theater in Los Angeles, California. That's this Friday, October 3rd. Doors are open at 8. You can still sign on if you like. tastylive.com/events. Sign on for our other events there too. I'm going to bring my buddy Tom.
Old ball and chain.
The old ball and chain. Listen, John, since he's not here anymore, I mean, could we make it Tony Batista and Tom Sosnoff instead of Tom Sosnoff and Tony Batista on the screen there, please? I would appreciate that if we can. Absolutely. Thank you, John.
Yeah.
Thank you, John, if we can get that taken care of. Because I'm already starting to say Tom who. But I would love to see you. You want to see him, want to see me, please come out. Doors open at 8. We do mingle with the folks for an hour before and an hour after, just about an hour after before they kick us out. Love, love, love to see you. Please come out and visit us. Help support us. Help support the CBOE who sponsors this and the CME too. So please come out. Love to have you. Even the S&P is down 2. Can't keep a good sprue doggy down. NASDAQ only down 30. Just cut their losses by 2/3. We'll see what's going on with the overall market after we do this market measure.
I think I'm gonna do something in
Meta. Your 0 day has been about a 40-ish cent profit.
Yeah.
Basically unchanged right now. Meta is down $12. Meta's been on a free fall for the last 2 weeks or so.
It's down about $50, $60 from the highest.
Yeah, that's a pretty good.
Oh, I thought you were being like joking.
No.
It's had a decent, a 10% down move.
Yeah, I mean, the
7%,
expected
8%.
move for all of November is $80. I mean, and it's moved 50-ish bucks already, like you said. Yeah, no, I'm not poo-pooing it at all.
What do you think about like a
It
wide,
does have earnings coming October 29th
about a wide put spread around
in November.
Yeah,
sure.
I'm thinking like the 650, 625.
650, 620.
415.
25. Pop is just about 80%,
Yeah, it's
79%.
selling about a 20 delta for the short option.
20, yeah, sure. Definitely works. Definitely something that I would look to do. I mean, you're just playing a little bit, puts you getting a little pumped up. You're trying not to use a lot of buying power. I mean,
Yeah.
Max profits, whatever you sell it for, obviously, the width of the strikes.
Ivy rank at near 30.
Yeah.
I mean, it's not, it's down.
I don't hate it.
Not at highs. You know, I was looking at like doing an iron condor and Apple, and it's just not as interesting.
Mm-hmm.
I mean, I don't know. All right, we're in.
Got filled a couple of pennies around mid-price, so good there.
Cool.
Very nice. Nice.
Beautiful. Option jive. Should we do it?
Sure.
Awesome. Option jive.
Do it.
Oh, I'm sorry. Market measure. Duh.
That's okay. I'm not going to correct
You're messing up with CBOE.
I'm not
like,
going to correct you. I'm not going to correct you.
Market measure.
Too fragile.
Sponsored by the CBOE. An updated look at days till expiration management. So let's check out what the boys came with today. So closing trades based on days till expiration, this is obviously a core part of our trading strategy, rather than P&L targets, is key for retail options sellers. Avoiding trades near expiration reduces exposure to adverse market movements. At Tasty, we've traditionally opened trades at 45 days till expiration and closed at 21 days. These cutoffs have been effective, but they aren't magic, and they were established years ago. Ooh.
Mm-hmm.
With fresh data available, it's time to explore how other days till expiration based entry and exit rules have performed over the past 12 years to identify potential refinements to that strategy. Of course, everything is a guideline. We have all these rails that we try to stick by and give us these mechanics. Let's see if there's any wiggle room here. So getting on to the study here. So we're using 12 months or 12 years of options data in SPY. Considered selling the 20 delta strangle for every monthly expiration using a variety of days till expiration based entry and exit rules. These rules were analyzed with the three metrics here. So we're looking at the win percentage, what fraction of the trades made at least a penny. So that is our win percentage. The mean P&L. So we're looking at the net profit or loss divided by the number of the trades, and the conditional value at risk, which is our CVAR. We have that in the platform as well, which is the mean result from the worst 5% of the outcomes. So you're looking at those tail events, the mean of those tail events, according to each one of these trade setups that we're looking at. All trades were assumed to exercise at the mid price. Of course, this is another factor that you have to account for in any back testing. SPY, much easier just because it is penny-wide markets for the most part across the board. So, no, not too much.
On something else that's going to have much wider markets, it would be a little bit more difficult. This is pretty much spot on.
Next slide here. So we're looking at entering at 60 days till expiration. We're looking at exiting at 42 days, 35 days, 28 days, and 21 days. You can see win percentage is very much right around that 21-day mark. So the data holds true to what we've been looking at over all these years. Of course, there are trades where you might be able to get out at 28 days or 35 days, but when we're talking about mechanics, that 21-day mark is generally where things start to work or not, right? I mean, we use that as kind of our time to roll, manage trades, roll down, roll up if you need to. Doing something at that 21-day mark is just kind of the standard mechanic here. You can see it in the average P&L. Of course, you do have some variation in your CVARs here as well. You're going to have a bigger CVAR as you get closer to expiration, just because there's less value in those options. The bigger swings as you get closer to expiration. Not a shock to see there.
Yeah, do something is what they're looking at here.
It's a do something study. That's exactly what it is.
Mm-hmm. You mean the S&P's down 11?
They've been chopping around. I mean, we're sitting at the 6,700 mark. That's the spot. Where's our SPX trade?
Around 390 or something like that.
Okay, so we're on our way, 40, 50 cents. That'll be our 10%, but I made the executive decision of 20%. Greedy. Next slide here. So here we're looking at entering at 45 days, exiting 35, 28 days, 21 days, and then 14 days. So, we get that question all the time of like, why not just hold this another week? It's so far out of the money, blah, blah, blah. In most cases, it will add to the P&L. The average P&L does increase when you get to that 14-day mark. But of course, your tail risk also increases. You see your CVAR goes from $2,400 to $3,400 in that 1 week time frame. Compared to like going from 35 days to 21 days, where you have 2 weeks of time, you get that extra $1,000 of potential tail risk. Your next $1,000 of tail risk is only a week in time. And I imagine if we did this to 7 days, you'd probably have another $1,000 of tail risk. So it goes to all the studies that we've looked at today of just, it's not always about like maximizing the profit. I think people get caught up in that idea of maximizing the profit.
Very much.
I get that email all the time of, how do I make the most out of this trade? It's a trade that's winning. I want to make more on it. A lot of times it's about managing a risk, and we've kind of outlined that through all three of our segments today. So you can see here, yes, your P&L, your average P&L does increase as you get closer to expiration, 14 days. Exiting here, your win rate actually goes down slightly, which isn't a surprise either because you have that higher tail risk. So, your P&L, your average P&L would be a lot higher if you didn't have that tail risk.
Yeah, it doesn't seem like the market's worried about the government shutdown, but our research team is worried about tail risk and everything else like that with all the studies that we've done here today. So I guess they're reiterating some of the mechanics here, which I think you should heed the warning. I mean, it's volatility is low. These tails trade cheap relative. Button up your risk. Take a little bit off the table to button up your risk. I think that's really what they're saying here, and get into the mechanics of when to look to exit trades here. You can see that the CVAR just increases, but it's 6 of one, half dozen of another, right? I mean, it does seem like that 21-day time frame does have a nice sweet spot to it.
Yes, for sure.
Volatility 1780, basically unchanged, up a nickel.
Yeah, doesn't seem like we're going to have a big move in either direction today.
No, it seems like we're in a holding pattern. You're right, chopping around so far. Subject to change, of course. Bonds are up 11, 117.06. So for the bond scoopy.
That's probably the move in gold too. You have gold up $14 here on that move.
Yep, after being down around 14, 15 bucks. It's
bonds rallying, rates coming down, gold getting big.
What's supposed to happen? So the bond move lower for the emails that were out there was an opportunity, right?
Yeah.
Like, why aren't they going higher? Everybody said, everybody knows. Fed watch tools there. We're talking about it. News is talking about it. They're reducing. Why aren't they going higher? Well, now you got it. It's amazing how the market kind of rights itself all the time. But that was an opportunity, right?
Yes.
I think you just got the takeaways.
So wait, we go back to the last.
Did we do the 6?
Yeah, no, we didn't do.
Sorry.
Yeah, so this is looking at 30 days. So we enter at 30 days, now managing at 21 days, 14 days, 7 days, and then no management. So we're basically moving the, everything kind of forward here with this one. So you can see your win percentage, of course, it gets better as you get closer to that like 7-day mark. But you can see your average P&L here. You really got it. If you're putting these trades on at 30 days, you're holding them a lot longer to get to a positive P&L. It's another thing that people ask about all the time is why start at 45 days or 50 days or 55 days if you're, the November expiration right now is what? 52 days out.
Yep.
Why start there? Why not just go to the October 17-day or a 30-day expiration? It's because you have to hold these positions a lot longer. I mean, even though they're shorter dated positions, to get that premium, you have to hold them basically till the last week or so
to
make any money on it. And that same, 21 days comes with a lot
higher tail risk. When you look at the tail risk on these trades versus the 45-day entry or the what was that other one? 60-day entry. The tail risk is a lot bigger on these trades. So not only do you have to wait longer to make the a similar amount on these trades, you also have a lot more tail risk that comes into play over a longer duration in that trade.
Yep. Good job.
Last slide here. So takeaways, as expected, days till expiration based management does little to affect the rate of winners, but has a significant impact on the profitability and the risk. Of course, it comes into play because of that tail risk. The earlier trades were exited, the less painful the bad losers were. So it's always about flattening out and tightening up that P&L volatility in both directions. Never looking for the super high upside. You don't want the super risky stuff. You want to be right in the middle so that you can chug along.
That's correct.
And stay in the game. So for trades started at 45 days, closing around the 21-day mark continued to provide traders with a good balance of risk and reward. Over the past 12 years, however, better results were had using somewhat longer dated options, still held to around that halfway mark. So even thinking about going to that 60-day mark for your opening trades, that's still okay. It's somewhere in that 40 to 60-day range is kind of the sweet spot. So simple days till expiration-based management remains an effective and integral part of the retail trader's mechanical arsenal, but the specifics of implementation are up to you.
It is up to you, but we do the research for you.
Yes.
And then you make it your own.
Yes.
Right?
And it doesn't have to be every trade. It doesn't have to be 45 days. You could put on the 0-day trade. You could put on the 30-day trade. You could, you want to sell puts in the October expiration. Like that's all going to affect and give you a more dynamic portfolio. Like not everything, because if you were just trading at 45 days, you get 10 of those entries a year. You trade 10 times a year. You got to have some flexibility and variation to your positions, and you'll have your own thoughts and directional assumptions about trades, and
be like water.
Like water. From
Bruce Lee.
Yeah, Bruce Lee.
Bruce Lee said it. Be like water.
Oh, that wasn't Karate Kid.
No, Bruce Lee was like the original. I forgot who I was talking to.
I know Bruce Lee.
Those
not that young. Old. I'm Unk.
We're gonna be fluid, just change in size. Doesn't matter, fit into anything.
Yes.
Kind of thing. Make it your own. Yes. Even the S&P's down 6, cancel crash. NASDAQ down 58, Russell down 7, Dow up 16. Dow was one of the weakest yesterday. It's one of the strongest. You get really this, like you said it earlier today, it's just chopping around rotation of stocks. Oil down 91 cents. Gold up $20 now. We'll take a quick 90-second break. What are we coming back with? We got a plethora of people, maybe even be able to take some calls. But what do we got coming up next?
Well, it's live from the trade desk, but it's live from all the trade desks.
Oh, all the trade desks that we have here at Tasty.
Tasty Trade, Tasty Crypto, Tasty FX.
Awesome.
A whole gang.
Awesome. We'll be back in 90 seconds with the gang. It was Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see a star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some life taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
James Blakeway, Carthage College. Number 25, my percentage profit target for straddles and big lizards.
Tracy Aljo, Ohio University. Number 21, because that's how many people have asked me if Tom's hair is real. It's real, ladies.
Katie McGarrigle, University of Illinois. Number 44, because I like to trade underlines with an IV rank higher than 44.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple. Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with, well, you just closed your 0-day SPX trade. Good job out of you. Got filled at 345.
I actually didn't close it. I put a GTC in. So I just let it sit, and then all of a sudden I got a little ding. Little dopamine. Poof, just pop right to the...
How's that make you feel?
It's great. $100 in my pocket. I'd take you out to lunch today. Could have lunch. You know what we got? Taco Tuesday.
We do have Taco
We have Taco Tuesday. So I'm hoping it's 5 Rabanitos. Thank you, John, for the Taco Tuesday. I'm hoping it's 5 Rabanitos, but my gut is telling me it's the habanero grill one, which is like just not good. You got to stay away from the steak.
I abstain.
It's not good.
I abstain.
It's a little dry and just like.
Yeah.
I also did 2 new trades.
What'd you do?
I saw a strangle in Uber. Somebody in the YouTube chat. Let me shout you out. Let me give you.
Uber down $2.30. Ivy rank at 31 as earnings coming October 30th. What'd you do? I'm assuming in November, right?
Yeah. So I went to November. I did
85 put. It looks like, and the 110 call, kind of standard.
Slightly
delta.
Short delta.
Yeah, 6 is short delta. Yeah, you are correct.
You got some call skew there because you got with the stock at 97. If you look at the 85 puts, it's about an 18 delta, which is about $12 out of the money. You go to the 110 calls, which is about $12, $13 out of the money. It's $25.
Call skew.
So you have a little bit of call skew here. So lean slightly short delta. Did that at 375. Closed out the SPX trade, and then I sold a put in PayPal.
Oh, PayPal.
I took one off in October. This was a trade that I had on in my
266. You could do it even better now.
I had this trade on with my ex-wife.
You have this trade on with your ex-wife?
And I closed out of it yesterday.
Ex-work wife?
My ex-work wife. Now Gumata.
Now
Gumata. I'm trying to work in like maybe a once a week with him, so it's like true Gumata fashion. I'm trying to get like a little.
So you had a positive October trade. Let's go back to that.
With him.
And now you're doing in November.
And now I'm going to November. I sold the 65 strike puts, kind of near the lows. Stock is down. Had a nice rally the other day.
Down
IV rank of 44.
$1.40, yeah.
So I figure I dabble in something.
Good. Well, enough about you.
Who cares about me?
What do we have from trades from the research team? No. Trade desk.
Did it.
You gonna give it to him?
Come on. Thank you.
Glenn? No. Quentin, what's up, my man?
Tony, what is going on?
I figured I was gonna get one wrong. I get two wrong, make it even.
It's all right.
Good.
Okay, what's going on, fellas? Good morning. Good morning.
Nothing. Everything's good. But I do hear that it's somebody's birthday, but we don't do birthday shout outs, but I'm gonna let you do it.
Thank you. Okay, yes, it's my dad's birthday, Mark the Trainer.
Mark
the Trainer.
Old time viewer, been around. Actually,
yeah.
You were a teenager.
Even before, I think I was coming here since I was like 10.
I think I met Quentin at one of the live shows, like early.
Probably. It was like one of the first ones, I think, probably like in Chicago.
Yeah, it was the Chicago one, I think.
Yeah. And then also, he is now eligible for Social Security.
Shout out, Mark.
Welcome to the group, Mark. Welcome to the group. Welcome to the group.
He's going to take that. He's going to buy some more BITO, maybe some NVIDIA. I know those are the two things.
Yeah, that's what we'll get into today, some dividend risk. But before that, we'll talk about top 20 symbols going through the system and their IVRs. We've got at number 1, NVIDIA with 8%. CoreWeave, is that frequent on this list, CoreWeave?
It's been kind of in play.
Yeah, especially number 2.
It's up almost $20 to $18 right now.
So. CoreWeave at 18%. Then we've got Tesla 26%, Robinhood 30%, big move in Robinhood yesterday, surprising. And you've got Amazon at 30%, Meta 31%, SoFi 30%, Oracle 58%, Google with an L 41%, GLD 39%. Apple 19%, Intel 48%, Palantir 28%, Oklo 36%, Micron 25%, TLT, which we'll get into as well, at a 10%, Netflix 34%, iBit 33%, AMD 29%, and SLV 52%.
Good job out of you.
Thank you very much.
Anything pop out to you in that list?
No, it's the usual suspects. I actually was looking at Hood. It seems to be like a
I'm just slinging them.
Oh, I could see this. I know you're trading Amazon. You're trading Nike.
I'm trying to I want to get some positions on. We didn't. I sold a put in Nike. Did a strangle in Amazon. I mean, you gotta get something.
It's all on the file. It's all on the file page under your picture.
Yes, we're working on that. I think
it's amazing how long it takes to get a picture up here.
Yeah,
but I get it. The wheels are. They turn slow.
Hey, listen. A lot of moving pieces here.
You should have your picture and then like really small in the corner. You could put like my picture, like really small.
I actually have a special request in for a bat type logo, but to incorporate a cherry in some fashion.
Oh, there you go. That's nice.
I'm leaving it to the design team to incorporate that, and we could just call it.
Now I understand why it's taken so long. But
the whole point to having the bats though is that so that I can give you half the blame. That ties you to me. It's like I'm, an anchor tied to you.
It's right, and rightfully so.
Yes.
Hood's usually like a little bit of a crypto play here too. Usually, Hood's kind of got a lot of crypto. I think a lot of crypto exposure to a lot of crypto trading. It's up today with crypto lower today. Up around another $3 or $4. So it's up $2.90 right now. A lot of call skew in there too. I was actually looking at a small October trade, maybe even for my option trades today. But you wanted to talk about. Dividend risk.
Yeah.
TLT.
Let's talk about some dividend risk. So when we talk about dividend risk and early assignment, it's always the short calls that could get assigned early, just because the people who are long those calls may want to receive the dividend. And then the way you can tell if you're going to get assigned early most of the time is if the short call that you have, that strike, if you look at the put side and the value of the put is less than the dividend, then there's high likelihood that you're going to get early assignment. So something to keep in mind if you want to keep those shares that you have, or if you're looking to get assigned, want to get out of the stock, then you're good to go.
That's a back of the envelope, quick way of looking at it. I mean, that goes back to the floor traders. I don't think anybody really talked about that until we got on the show. Everybody would talk about dividend risk and then look at the reversal conversion to try to figure out if they had dividend risk, and it was so easy as a floor trader to just look at the put, because you have put parity. And if that put, as you just explained, is less than the dividend, like TLT, just for argument's sake.
And I can, go on.
Sure, go ahead. No, you put it up.
Well, I was just, go on with your thought. Yes.
It's good, though, that you're interrupting me in the middle of my sentence.
You should be used to it by now.
I am.
Nothing's changing for you, buddy.
Coming from you at this point, but sure. Let's just say, for argument's sake, that TLT has a 40-ish dividend, and you were still in October, you weren't staying mechanical, or you had a deep in the money option or spread that you kept on for whatever it would be. Somewhere around these 88 calls, they're probably going to be an exercise. There's something for you to do. And if you look here, there are tens of thousands on each line that can try to look to capture that dividend. Doesn't mean that they're all going to do it. And doesn't mean that maybe the dividend is going to be less. In an ETF, they don't tell you what the dividend is.
And that's what I was going to go to here. So one of the things that you can do in the weeklies with the dividends, the dividend coming up, it goes ex-dividend Thursday, right? Or
TLT?
Yeah.
Would be tomorrow, Wednesday. It goes X today. It goes X tomorrow, so you have to do something.
For the first, because
if it's going to go X tomorrow, you want to manage it today.
Right.
So if you look at...
X is just Latin for without, so it goes without dividend.
Look at you, all right.
A gentleman and a scholar. Amazing, really.
He told me that because he's a Latin major. He really did, like a long time ago.
So if you look at the weekly expirations, one of the ways that you can kind of identify what the amount of the dividend
expected dividend
might be, or around that number. If you go, and I'm gonna just pull up my platform here so you can see this. So if you go and put a synthetic stock position on, which is just a long call, short put at the same strike. So it's going to be a long stock position. You'll see your delta it should be 100. It's a little bit higher than that because there is some extrinsic value here. So I'm using the October 3rd expiration, which is the end of the week here, which incorporates that dividend. You'll see this position trades. It should trade at parity. So this is a long stock position because you're long the call, short the put, 100 deltas. It should have no extrinsic value. You'll see that with penny-wide markets or just about penny-wide markets, you'll see your extrinsic value on this position is about 23, 24, 25 cents. And this is a trade that should have no extrinsic value. It's a zero extrinsic value trade. If there was, this is an ARB opportunity unless there's something coming, which is a dividend, which is what you have to price in. Because you could go in and be long this stock position, long the call, short the put, and then sell stock where we are right now, and you just capture 25 cents. We know that you can't just capture $25 of free money, and that's because there's the dividend coming. You would be exercised on the short option. You'd have nothing. You'd just be carrying all that buying power.
Right, which means it's a little bit more than 25 cents because it's going to be cost to carry for a couple of days and everything else like that.
Yeah, so probably going to be coming in
30-ish cents. That's correct.
And you could do that for any of the ETFs if you're wondering about the dividends, but that's why.
Yeah, and then something I also want to mention is when you're getting assigned early, like on a call spread that you have, you'll actually wind up owing the dividend, whatever that amount may be as well. So that's something you always want to be careful of.
Right.
Yes.
Now, stock is disseminated. Like you can look on the Tasty Trade platform and see
it'll
what the dividend is. So like, if it's Apple or something like
those
that.
Those are declared. I mean, like
those are declared dividends, right?
Yes.
ETFs, it's some formula, and don't quote me on what the formula is.
Really, when SPY goes ex-dividend, it's the dividend of 500 different companies.
Yes.
And that could be a big one. Like this is a 40-cent one, or whatever, 30-ish cents. And
yeah, typically like SPY's like $1.50, could be $1.70.
Right.
Sometimes,
You have a vertical spread on that's a max profit, let's say you were long it, you're just keeping it on, you don't want to take it off even though it's zero to take it off, but you got a nickel left to make or something like that. And then all of a sudden you find yourself subject to paying a $160 dividend.
Yeah.
And
if you have long call spreads that are in the money,
yes,
just close them and take the money and run.
That would be the prudent thing to do, son. You can do whatever you want, but that would be the prudent thing to do, in my opinion.
Yes. You just take the money and run it. Move on to the next trade.
Yes. Very nice.
Good stuff.
Good job, Glenn. Good, Glenn. Quinn. Quinn. I'm staring at him.
Didn't you write?
I did write it down, and I told you if I wrote it down, then it is what it is. But I've
only known you for more than half of my life. It's fine.
I know.
Yeah, that's true.
Do you believe that?
I know, right?
Yeah, you get bells and whistles, and I get the wah-wah.
Yeah. I mean,
We know where their
performance based.
We know where their bread is buttered now.
Yeah. Performance based.
That is wild. I know you.
Yeah, I know, because I'm 24 now, and I've known you since I was 10. Yeah.
That's crazy.
Incredible. Time flies.
Time flies when you're having fun. All right, Nikki, you do it. Who's next?
No, you know who is next. Here you
Quentin.
You,
Glenn. That's right. Glenn, my man, what's up?
Gwenton, maybe, perchance?
Perhaps.
Combined.
Sabroso Taco Bar today.
Oh.
You're wondering. What do you mean? No, this place got refried beans.
It is.
Big refried beans.
Sabroso's better than habanero.
If the beans weren't good to begin with, why do you want to refry them?
If they're good when you fry them,
Yeah.
why not refry them?
Everything is good fried. Come on.
Twice fried.
Yeah. That's okay. So it's not too bad. With my new Showtime, I get lunch now.
You really are moving up.
That's right, because your show used to come on between 11 and 12. Yeah. Lunch is served here at 10:30.
I was actually talking about it with Jamal yesterday.
You're gonna get it'll almost be warm for you.
Oh yeah, I'm first in line.
And pick of the litter.
Yeah. It's great. Jamal was like, the biggest change for me is, my body was really used to eating at 11.
It's the scariest thing.
And now he's like, I'm a little like famished at 12 when we get off the show, like I'm a little hungry. So he has to do a little adjustment there.
Yeah, I think never in my life have I craved ribs at 10:30 in the morning. And once you do, it's a real look in the mirror.
It's a horrible place to be.
No,
Glenn, it's horrible.
Oh man,
it really is wild when Dr. Data walks back and it'll be like, "Oh, lunch is here," and it's like, look at my watch, it's like 10:30. It's like, it's crazy. But ribs at 11 o'clock are quite delicious.
They are.
It's a good spot. Yeah.
It's a horrible place to be. It really is.
You got to skip breakfast though.
It's no way to go through life.
It's basically a brunch. It's like Anyway, what are you looking at today, Glenn?
Got an interesting dollar story today. A bit in the rumor mill this morning.
Ooh.
We've got.
You tapped in. You got some inside sources.
I got my ear to the ground.
Go.
But yeah, we've got, as you know, FX markets trade 24/5. So early morning was pretty interesting. We had overnight in the European session, just looking at euro dollar, we had the euro climb above 117.5 and then get chopped all the way down near 117 even on a Fed speaker, Fed Collins. And then that got bought up and all the way back to 117.5 now after we had some shaky consumer confidence data released at 9 a.m. Eastern. And so now the dollar's hurting. Biggest
Dollar
candle.
basket gave up basically the whole move that it's had in the last 2 days. Or at the end of last week. Dollar is basically all reversed.
Yeah, so dollar's still cheap. Dollar yen, we're now trading below 148. But where I want to look is the commodity currency space. Looking at it, if you could pull up your platform.
Yes, I will. What do you want to look at, like Aussie dollar?
Yeah, let's start with Aussie dollar because they had an interest rate decision, the Reserve Bank of Australia last night, and the winner from that rate hold seems to be the Australian dollar. Now we're looking at 4 consecutive up days, looking at the daily chart, and back above 66 cents here. So this one presents a bit of a good trading range. If you zoom in there, you'll see that, now we've had...
Like less than 1 day?
No, keep it on 1 day. And then just highlight the last candle, the daily candle. So I pulled a couple numbers just on daily price changes. And so right now we're looking at, that says 35 pips that this market's moved already today. In the past month, looking at the past month of price data, the daily standard deviation of price changes in that pair is around 25. So if you start thinking about what an outsized move is, that market's really trending right now. And then I know you like to get a little bit crazier with these non-dollar crosses.
What are you saying about me?
You're always looking for new opportunities, and with 80 plus currency pairs, opportunities abound.
Okay, so
I can't wait to get these on the follow page because you've actually been trading them pretty good because they're small products. They're.
Let me tell you, if it takes me a week to get a picture for the follow page, for me to get this integrated, I can't make any promises. I'm hoping.
Change is
I'm hoping.
son.
You know what I've been
Change is
asking him
coming.
for? A freaking column that tells you which one is which.
That would be nice.
One day.
In the works.
Change is a coming, son.
Yes.
The winds are blowing. Change is a coming. Seasons are changing.
I cut you off. What do you got for me? You got a fun.
That's okay.
You said I was crazy.
I didn't. I said you like to get crazy. Is that so different?
You get crazy too. I've seen you out and about.
I don't know about
I
that.
know. You look like a nice boy right there. I know you get a little.
He does look nice and
Anyway.
He's a Northwestern guy. You know, smart, handsome. I know you.
Pull up the Australian dollar, New Zealand dollar pair.
We used to say still water runs real deep. You know what I mean? That's
I like that.
Okay.
Spooky.
Water runs real deep. Like me, I'm like a raging river. I'm just gonna mouth off.
Yeah, you know what you're gonna get.
You know what you're gonna get.
Yeah.
Right. I'm gonna be hot. I'm gonna be cold. I'm gonna
Yeah.
run hot and cold. You?
Hard
the
to
water
read.
runs real deep.
All right.
You never know. There's something down there.
Intellectual over there.
Aussie New Zealand dollar. What are you thinking here? What do we got?
Look at that daily.
Oh,
chart.
that's an extreme.
So this one really been churning. If you zoom out there, just scroll out. This is a high we haven't seen since 2023, I believe. And this is a runaway market right now. New Zealand dollar getting hurt across the board. Similar exposure. These are historically highly correlated currencies. But New Zealand dollar, in terms of employment, not doing so hot. Growth, not doing so hot.
Is there some of the metals baked into that too? Like, because Aussie dollar has a big gold exposure. You're having gold going nuts.
Exactly. While a New Zealand dollar historically is more correlated to softer commodities, which have had their own kind of supply chain issues and whatnot. But yeah, this one's running away. So if you're a trend follower, I mean, maybe there's still time to get on board, but we are approaching the last.
I know you can't look at that and get long.
I can't look at that.
Well, no, that's what I do. Is I like to I have Glenn come on and he points because I'm not looking at this.
Right.
He gives me this and I'm like, well, I'm gonna add a little bit on the short side here. You got to be contrarian into this sort of thing.
Well, now you have a little bit of.
But he scares me because he's so smart. He's like this thing, commodities, softs, golds, this, that.
Yeah, if you say enough words, anybody would believe you. But no, we are back to that 2023 high. We are approaching those levels. So if you're a believer in resistance levels, we are nearing uncharted territory there. And then last interesting market, back to dollar Swiss franc. That one's getting absolutely pounded in the last hour because I haven't read too much into it, but the Swiss National Bank is now having to do some more engagement in the Forex markets. Too much demand for the Swiss franc right now. They're having to go to some open markets. So Swiss franc picking up a lot of momentum there, back below 79.5. So interesting markets. Still got that government shutdown looming. And with that,
what would that move the effect on the dollar? You think that
historically it would be dollar weaker. But now you're talking about what's already priced in and maybe a small blip. If it gets resolved within the week, then that would actually still bolster the dollar versus if it's...
That kind of happened with Powell, where it was
exactly.
Like the weakening of the dollar happened 4 months prior, and Powell comes out and says we're cutting rates and dollar skyrockets.
But what you don't get...
Skyrocket, but it was up.
You don't get as many Super Bowls for me if the government shuts down. Things like non-farm payrolls cease. Some data starts to slow down.
Do you get like days off for that then? Because is that like an unofficial day off? I think so.
I think it should be.
I think
that's
so
not
too.
ridiculous.
Look over here.
Nothing to do here. No numbers to report.
Yeah.
Maybe
But then the rest of the world still has their numbers, so you gotta.
Yeah. No, I think I'll take it upon myself, actually, to call up and ask people if they have jobs. Come up with my own little employment rate and tweet.
I mean, that one might be more consistent than the one that the government puts out. I saw something that was like, the revisions are like 56% or something. Yeah. It's like unbelievable. Like it's like way past any sort of.
You could guess better.
Yeah, you could just throw a dart at the wall and pick.
Quick, we need a number.
Yeah, that's
first of the month already.
Yeah, like damn, we're here already.
50,000.
It's like
that's too even. 51.
Exactly right.
I'm gonna do something in the Aussie dollar too, but I'm gonna use the futures. and just do an iron condor in there.
Awesome.
And play into that. Because it's kind of mid-range. I mean, it's had a rally, but, we were kind of in the lower end of where it's been trading. I pull up the platform here. And these are the futures. You can also get these on the Tasty FX charts as well. But we're kind of mid-range here. It's having a little bit of a move higher, but they get like 20, 30-ish delta on either side. 65, 67 half.
Okie dokie. Good job out of you.
Point wide.
Even the S&P's down 3. They were just down 14 just a moment ago.
Choppy.
Yeah, choppy. All right, we're going to let you go. Glenn, good stuff out of you.
Thank you, Glenn.
Who's our next person?
There's my Aussie.
I got to use this hand. Ryan, what's up, my man?
What's up? How are you?
Good. Should I call you Daddy?
Yeah, please do.
Ooh, Daddy's
Daddy's back, day 2.
Yeah, we've had a lot of Omaha's today. I think we're not long for this place.
Well, yeah, maybe. Scary. Those who don't know.
Daddy in like the 4-week-old newborn way, not the other way.
Yeah, not the other way.
Do you still give out cigars? Like, do they still do that?
I think they do. I didn't, which means I need to. But I think that's still a thing.
Don't come with no, bubblegum cigars or anything like that. Don't do that.
Well, I used to like those. Those were fun. The bubblegum cigars. Those were fun. Disgusting chalk. They were
always old.
Yeah, they were always old because nobody buys them.
Nobody buys them.
The cigarette ones that were even worse. Those were literal chalk.
Right.
Like I think those were made in
my day.
Yeah, your day, and then they were,
As a kid, though, you felt so cool when you had a pack of those Katie cigarettes or those bubble.
The first one, because you could actually puff it because it had all the whatever.
Sugar. It's like powdered sugar.
Was it sugar?
Yeah, powdered sugar.
Like the preservative or whatever. Yeah. So you could actually puff it one time and make this little smoke, and then you just chew it and break your
done
jaw.
with it.
Yeah.
Well, what do you got for us, my man? Crypto.
Got some crypto updates, guys. Product updates to kick it off here.
Sweet.
You asked. We answered. So we've had a ton of feedback, customer support requests, whatever you want to call it. A lot of people have been asking for the ability to transfer more assets, XRP being probably the most popular request that we've received. So we are in the process of launching that this week. We're going to support XRP transfers. If you have XRP, if you want to bring it into the brokerage, you can do that. You want to withdraw it, you're going to be able to do that as well. So that's been a very popular request. XLM is another token that we're going to start to support transfers around, and continuing to work through a number of others, HBAR, Hedera being one. They're all different, so there's some technical kind of implementation kind of issues that you have to work with at times, so it took us a little bit longer with XRP specifically, but it's here to go now. So that's update
today, as
number
of
one.
today.
Well, this week.
This week.
Give me a day or two. Yeah, I don't have the exact date. We're still working through some testing today. And then once
Can you put a picture up on the follow page? If you get that done in a day or two, maybe you can get a picture up on the follow page for us?
I'll see what I can do.
All right.
I might be able to help out in a couple different areas.
All right.
All right.
Good. We'd love to have
But,
See, that's what
yeah,
you gotta do. Ask, son. Just ask. Whoever you're asking.
I got, in the words of the former, I got no yank. I got no yank.
Got no yank.
All right?
Good.
I'm trying.
I'll try for you. I promise. So XRP transfers coming soon. XLM transfers coming soon. And we got some more tokens that we're adding to the list here. So if you're familiar with these logos, you know what they are. If you aren't, I will tell you. Basic Attention Token, that's BAT, B-A-T.
Oh, well, you got to get some of that.
I got my own.
That is not your own, meme coin pump and dump. You're not going to be dumping
I'd
anybody.
be surprised. It might be. Might be.
Well, I don't think you got that in you. You might know a couple things in Latin. I don't think you know how to program a token.
I think I know one thing in Latin. But yeah.
It's easy, Tony. I'll show you how to do it.
All right, thank you.
BAT token, the Uniswap token, which I'm very excited about. That is a DeFi governance utility token for the Uniswap protocol, which I think a lot of people are familiar with. That's one where you look at this maybe from the investment perspective. Real revenue, the biggest decentralized exchange in DeFi. So very excited to be able to offer this. And I think, again, when you look at the shifting regulatory environment here in the US as well as globally, Uniswap could certainly benefit from that, in my opinion. And then additionally, Ethereum Layer 2 scaling solution, blockchain network Arbitrum, ARB is the symbol. So these are the next three. As everybody knows, if they've been following us, we're going to continue to add more product. That's the goal. If you have a request for a token that you'd like to see on the platform, shoot us an email either at tastytrade or support@tastycrypto.com. We'll do our best to get it on the list and get it in the platform. So new tokens coming as early as tomorrow. Again, a lot of it just depends on the software update, the technical deployment here this evening. So if everything goes smoothly, you should see this in the next day or so, and we'll let everybody know. But transfer support for XRP, XLM, new tokens, and I've got a couple of the biggest movers here today if you guys want to take a look.
Yeah.
3 of them for you. One was on the list yesterday as one of the largest upside movers. As you know, it's volatile, but Avalanche, that's done very well over the last month, over the last 3 months. It's been an outlier here recently in terms of performance. Taking a dip here. As you guys also know, it moves quickly, so I don't think we're down as much, about 1 3/4%. So recovering a little bit here, as you mentioned earlier, with the S&P bouncing as well. But below $30, Doge taking a little bit of a dip, down 2%. And then the other side of this, at the time, the only token that we tracked that was up here on the list, Aptos, that's another blockchain network, a layer 1. That's up about 1%, though it's been, it's been a poor or underperformer over the last couple of months here relative to many of the other tokens that we track.
Bitcoin down $500 here, but was super strong yesterday. Ethereum back to 4,100. So certainly participated in the risk-on sentiment.
Yes. All's
back.
good.
Yeah, all's back.
No worries.
Good. Awesome.
We're going to take a quick break. Great job out of you, my friend. We're going to take a quick 90-second break and come back. We've got Liz and Jenny next. Even the S&P's down 7.
Live from the SIBO.
Live from the SIBO.
I believe so.
We'll take a quick 90-second break. Peace.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock, and short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock, like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
running snow leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. Gee. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune. 10-hour battery life.
Hi, my name is Liz Deerking. The beautiful brunette next to me is...
What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on.
No, you're wrong.
I'm Hold on.
She's wrong, I'm right.
High school party. High school kind of.
Yeah, because it wasn't high school.
I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our lives.
For the rest of our lives. The same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together.
Yep.
Everybody, and welcome to the Liz and Jenny Show. My name is Jenny Andrews. This beautiful blonde next to me is Liz Deerking. It is a pretty busy Tuesday here in the middle of the SPX pit.
Jolts. It was 9 a.m. today, ladies and gentlemen, 9 a.m.
You're not going to believe this, but at 9 a.m. I couldn't push that button fast enough to sell my put spread in SPX, and then Liz is like, jolts.
It is never a dull moment here on the Liz and Jenny Show.
Sold that put spread and Smooths went right down.
Yep, down. They did.
Right down.
Hey, that's okay. Spoons are only down 2.
They're only
Cancel
down 2.
crash.
They're only down 2 now. I think when I sold my put spread, they were down 4. But I closed it for a scratch because I panicked.
So it's been, okay, let's talk about this morning. It's been a slow rumble on the floor. Nothing crazy, but a slow rumble, don't you think? There's not.
Yeah, but
you don't hear the big orders, but you hear like just a lot of turkey gobbling.
Turkey gobbling, that's an actual thing that goes on down here. I think they think someone sounds like a turkey, so if he laughs like a turkey, then the whole crowd starts laughing,
Yes.
like making
so
this
if you hear
turkey
that,
noise.
That's what that means. If there's turkey gobbling, that means someone has somewhere done something and they're making fun of him.
And so, I don't know how much trading's going on, but there was a lot of turkey gobbling going on.
Some administrative stuff real quick. So this is a last minute shift. We will not be live from the SIBO floor. I will be having the show on tomorrow with Thomas Preston, TP, the infamous TP. So if you have any questions, comments, concerns, ship them to me. He's already sending me ideas on things he wants to talk about. So I'll be remote with our resident Texan tomorrow because you have a golf tournament.
You know what he's going to love tomorrow? He's going to love Jacob's SPX study. That's right up his alley. So TP, if you're watching, you've got Jacob's SPX study that's going to be coming in hot. I don't know if you're on teams. It comes in around 3 a.m. 2 a.m., 3
You know what,
a.m.
though? But he's so smart. We could surprise him with it. We could surprise him with what it is, and he can answer all the questions about it. So he's top notch. But if you have any questions for TP, send them to me via email or put them on Twitter. We will try to go to Twitter. Sometimes I got to wrangle him in.
Yeah. So when we have TP on, I may have, let's say I have 5 or 6 questions I want to ask him. Usually I get to one or two because he has a lot to say. And viewers love him. Viewers love him. I'm not going to be golfing myself, but it is my daughter's last golf event of the season.
You got to go. You got to go support the girl.
Oh, yeah, it's conference. And she tees off at 9 a.m., and I don't want to miss it. So luckily, TP was free, and we will miss the boys here in the SPX pit. But
I loved it because I came in this morning. She's like, okay, so here's the deal. Don't get on the train tomorrow because you're doing the show with TP. I already called him. I was like, great. You're making my job so easy.
Well, I didn't want to miss it. Again, she took a year off of high school dance and switched to the golf team.
Yeah.
Yeah.
Was she going back to dance? No. She didn't take just a year off.
No, she took this year off. I mean, it will come up. Like, would you ever go back next year? It's a possibility.
Oh, it is?
I mean, maybe.
Oh. Okay.
I don't know. She's having fun on golf, though. She's having fun. We'll see how conference goes tomorrow.
Yeah.
Life skill.
Hopefully she brings, it's a life sport.
Yeah. Life sport. Like, and I've said that to her before. Like, you're not going to be 50 years old and dancing unless you're, I should say, like 35 years old and dancing unless you're. We've got this lovely lady over here, and she is still dancing.
Oh, she's belly dancing.
She's like a professional.
It's my friend Anita. We're talking
Anita.
about.
She's a professional belly dancer.
She's a professional belly dancer. One day we're gonna have her on.
And we could maybe have her do like a belly dance right here.
I don't know that she would do it right here with these knuckleheads behind her.
Yeah, we'd have to film from a different location, but yeah, she's amazing.
No, she is. I've been friends with her for years and years and years. I love Anita.
Oh,
Jeff got a haircut.
Jeff, walk this way. Walk this way.
Jeff got a haircut, ladies and gentlemen.
Yeah, Frank, your little nephew. Oh, there he is. He waved. Frank, you got to wave from your nephew. Today's going to be a crazy Tuesday. We have a lot to do.
Well, and it's like 175 degrees down here.
It is. And you can't take your jacket off.
No, I know.
Jacket must stay on.
It says there's floor officials walking by, and Jeff's one of them who says jackets are required between 10 and 11 a.m.
Oh, now they're required all the time now. Do you know that?
I don't know that that's officially done yet.
Well,
they don't know that yet.
Shh. I'll be quiet. We have a busy show. Number one, we're taking live tweets. Send us tweets. Include the hashtag LIZJNY.
Or pound sign if you're my age. Oh, we got a big order.
Well, I'm trying to... what has been going on? December 6,000 puts, December 6,000 calls, 4,800, December 6,000 puts, and what did I say?
We can jump into the SIBO's most active.
Yeah, we will.
Most active. So
we'll
take a look at that. Do you want to jump into the platform while we are?
Let's finish our run of show. We're taking live tweets, and we have our option jive. We have an option jive that the research team put together.
Yes, it's a recap of last week, which is great.
And a look ahead to what's coming up this week.
We've got Nike earnings.
Too bad I didn't see Jolts on there. I might not have sold my puts for. Frank, your calendar, I didn't hit more. I didn't see the Jolts. How did I miss it?
I don't know how you missed it. I knew Jolts was at 9 a.m.
Oh, the SPOOs are only down 175.
I mean, NASDAQ's green, so it is an interesting day. All right, let's pop into the platform, take a look around, because we've got a lot to cover today.
I want to talk about the movers and the shakers, okay? We've got a handful. I'm going to type in the symbol, and we're going to talk about it. Hood has been a mover and a shaker. It is only up $2 now. It was up $4 or $5.
Yeah.
On the heels of a big run yesterday.
Correct. So Hood's a mover and a shaker. And then to the counterbalance, because forever give me there's a gotcha in my account, Jenny. I'm long Hood and I'm long DraftKings.
DraftKings down 8%. We had a downside ratio spread in DraftKings. We changed it to a long call spread, I think.
What is the news?
I don't know what the news is. Maybe. So I'm not doing well in my fantasy draft. Not at all. Not at all. I mean, I was almost in last place this week, and I had Jamal do my picks this week. I got 10.
Do not throw Jamal under the bus.
Jamal,
I've got your back. I know you're not around us right now, but she's trying to throw you under the bus for the picks. She's in last place because of her.
No,
you pick responsibly.
No, I just was in the office and I said, I'm not doing well in my fantasy league. Maybe Jamal can turn things around. I let him do my picks, and I told him, Jamal, if I win this week, I'm going to give you some money. And just so you know, Jamal, I got 10th place. Wasn't pretty.
Are you 10 out of 10?
No, 14. 10 out of 14.
Still pretty bad. But at least you were in 10 out of 10.
Thanks a lot, Jamal. Okay, so DraftKings, I don't know what's going on in there.
So there is no, like in our news on here, if you go to the news thing, there's no, the last news was 8:21.
No news is good news.
News is good news. Hold on.
What was that? The Gary Gnu. What was Gary Gnu from?
You come up with the weirdest references. I don't know who Gary Gnu is.
Jack, have you ever heard of Gary Gnu?
Nope.
Gary Gnu. If anyone is old enough to have ever heard of Gary Gnu, please tweet us. Include the hashtag LIZJNY. I guarantee he's a thing. Gary, there's no news like. There's something. He was a newscaster. Gary Gnu.
He was not a newscaster. He was a Muppet.
No,
he's a Muppet.
He wasn't on the Muppets. He was not on the Muppets.
Okay, I'm gonna.
He was on the Great Space Coaster.
Cartoon character. I'm going to tweet Gary Gnu right now.
From another era. From another era. Okay.
No GNUs is good GNUs. He's a Muppet.
But he's not from the Muppets.
Okay.
Okay, DraftKings. You know what else was on the move? EA. EA shot up, skyrocketed yesterday from 170 to now it's $230 move in EA. That was a big one.
They were taken over they're being bought by somebody.
They are?
EA is, yes.
I didn't hear the news. I just saw the move.
So this is from AI, but it says NBC Universal Agreement. DraftKings announces a multi-year advertising collaboration with NBC.
It's taking them down. It's not good. Not looking good. Not good news for DraftKings.
Yeah.
What's the news in EA? Vanetta had it. Vanetta had news in EA.
No, they're being taken. There's like a deal. They're
going private.
Taken private.
Okay.
It's a $55 billion buyout.
Okay, so then now is it done? Is this the price and it's set and it's done? I don't know.
All I know is $55 billion buyout.
And yesterday, as I'm preparing for our Disney cruise over Christmas break, I ordered everything I need on Etsy. So all of my Etsy cruise orders I put in yesterday, and then...
Did you get the right ship this time? Last time you ordered from Etsy, you got them in the wrong ship.
Okay, so I got all my Etsy orders in yesterday, and did you see the move? Look at that Etsy move.
It's because she's the only one ordering from Etsy.
No, there's got to be. I can't be the only one in the world ordering off Etsy. What was the Etsy news? That Etsy went from 64 to 76 yesterday.
So OpenAI will let users shop directly in ChatGPT, sending these two stocks surging. OpenAI and Etsy.
I don't know. I mean, that's kind of like...
When did I become a news reporter? Anything else you want to ask me? I can Google it.
Yeah, what else was moving yesterday?
So I went Gary Gnu, DraftKings,
Etsy, EA.
Anything else? Anything else I can do for you?
No, that's all.
That's all for today?
That's all, I guess. It was, as much as it was up yesterday, it's almost down today. So, wah, 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 wah. That's all.
Yes. Okay.
Are you ready? What did you want to do? You wanted to do something.
Is there anything we need to manage in our account? I'd like to put some trades on. I know Nike has earnings today. It's the only thing that I know has earnings. We don't have a Nike position.
Our DraftKings, I looked at this is defined risk. We have a call spread. Our diagonal, long the no 42. This is all out of the money. It's only $1.49 left in it. I don't know that we need to mess with DraftKings unless we're going to just sell puts in there, which we could.
It's a diagonal. Is there anything left in the short call? We should buy that back.
So the 17-day short.
This is very similar to when you put on a zebra. You can reestablish a diagonal
and put more money into it.
Or you just buy back that call and call it a day.
I mean, honestly, in 17 days, if it's 47.5, do I need to waste the 9 cents?
Famous last words.
Okay, so I do want to.
And you could sell it for 5. The bid is 5.
So now this is out of the money. That's a fact. We could, move this in the money. We could if we wanted to. If we were really bullish DraftKings, we could.
So sometimes I will, good or bad, you can reestablish a diagonal, but then you're putting more money into it. How would you go through this?
If I wanted to put more money into DraftKings, I would just sell that 37.5 put.
For $644. You'd close everything and not keep the long call.
No, I'd leave it. Because I'm going to get, enough to cover that call on my put.
If it doesn't go down, then you're long. This is the stupid. You're long. I'm not saying you're stupid.
Okay, so
I'm just saying, but you could. That's number one. Number two is reestablish. So here you're putting $644 more in. What would happen if you reestablish?
So I just want to show you. We've been long DraftKings since 40 something.
Yeah.
So this started with a downside ratio spread, and it was at the 47. 40 and a half. So we got long DraftKings at 47. So that's
I get it. I just want to show how you reestablish a diagonal. Like if you're going to close that, because there's nothing wrong with adding the put, but you might want to. Let's see how much it is.
So you would reestablish a diagonal,
closing the whole thing.
Mm-hmm. Oh, hold on. So close this, and then the new one.
Where's earnings?
So
go to the 31 day.
So go to the 31-day.
And sell the 42 for...
Okay.
Okay. And then buy in the earnings cycle the 40 or the 37.
So we'll have 37, 42. So we'll have 250, 350, 450 max profit that diagonal can be worth. We're paying $1.30 for it, and we already paid $3.40. So, like, best case scenario, we lock in a 50-cent loss. Best case scenario, if that diagonal makes full profit.
And you keep, because it went down. So when you put a bullish trade on and it goes down, you're trying to lose less. Now, you can sell the put with it, but I would reestablish the diagonal and sell the put.
Reestablish the diagonal and sell the put.
Yeah, because otherwise you're just leaving an out-of-the-money option that you think is going to... Now, if you leave that out-of-the-money option, you are playing for a huge rising like a phoenix from the ashes move, which is great. I'm fine with that, too. It's weird that a deal in DraftKings brought it down.
I want to see what...
Isn't it?
I want to see our order chains and see how much we're down in DraftKings. We're down $389 in DraftKings.
I would trade that for my P&L in DraftKings. I would.
Yeah, but okay, so thinking of TP in my mind, like, oh, I'm trying to make back, turn all my red to green for the end of the year, which isn't the right way to think about. I'm not saying TP's wrong, but like, there's got to be.
I'll tell them tomorrow.
You've got to just chip away at it slowly, right? There's a few things we could do. We could do a synthetic covered strangle.
I don't think this requires this much of our time because it is
10:14.
10:14.
She's always in a rush here.
Well,
You're always in a rush here.
I want to make sure we get to Twitter because we didn't. The last time we were here, we only got to like 2 tweets and we didn't get to.
I'm just going to let you know, it's Tuesday. We don't have what's your assumption. We don't have Jacob's study.
But do you think that a position like this requires this much thinking?
I would put a little bit of thought into it.
I don't think it requires it. I think you reestablish and sell a put.
You know, with the 30 rank, I'm not a huge fan of diagonals. I'd rather sell puts.
I said sell the put too. I said reestablish, but I wouldn't leave that long call because it's got a 30 rank. If you're going to sell the put, sell the put.
And I would maybe do a synthetic strangle where I sell an in the money put as a synthetic covered call and sell an out of the money put as an extra oomph.
I'm in, but that's use $1,200 instead of the $6.
Yeah. I'll do the I will.
I have no problem. I just don't think. I think that it should be easier than something goes wrong.
I just don't like the diagonal that's so tight and we have really no profit potential.
Then close the diagonal because the one thing I don't want to do is leave the extrinsic value on the table and sell the put. We'll close it. That's a happy medium.
Here's something that I think is something that people need to do. It's helpful. You close out your position that you don't want,
and you put a new one.
And you put a new one on as if that didn't exist.
So this, yes. If we were going to enter into this, I don't know that I would sell the put through the earnings cycle. I might do in the nearer term one.
Doing the 31 day?
Yeah.
In the 31 day. So when I suggested synthetic covered strangle, that would be like a covered call, and then an extra out of the money put, maybe a 30 delta. So there you have 2 puts for $4 using $1,300.
Yeah, I knew it would be around that. Like I said, I'm fine with this. It's got a 30 rank. You're before earnings. You're taking an extrinsic value. Then it can go. So what?
I mean, I don't hate DraftKings at this 38
level. What you did by selling the puts is you would like leaving that one long call. It's got to go up by so much just so you don't lose money. I don't like leaving the call.
Yeah, I get that. I just want more profit potential than $100 bucks.
But I would you could reestablish if you wanted to, and then sell the put, or you do this and the put. So you got.
Because here we can make $377 if it goes up.
Break even in this is just above 37.
And that would turn our red to.
If you take full profit.
Yeah. Yeah.
There's no way we'd take full profit.
Oh, there goes Doc Hollywood. Can we go to full shot?
What?
Yeah, we'll go to full shot. You can wave.
Yeah, we got. See, there he is. Look at that handsome devil. Just right in that middle camera.
Right in the middle one. Peace, guys.
Maybe next week if there's something.
Doing a great job. Next week.
Next week we can have Ayla on.
We pay him to say that every single time he walks by. Your check's in the mail.
All right, I'm going to sell 2 puts.
Do it.
After the big move down in DraftKings, and not in a day, over the course of, this has been going on since August 27th. Down, 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 down. Let's just get a little more aggressive.
Yeah. So you know what saved me in DraftKings? Germany.
Oh.
Germany saved me because I put I collared everything out.
Yeah.
Germany saved my life.
Well, at least you don't have it, but I don't know. Your DraftKings position was pretty big, though.
Mm-hmm.
So
as I said, I would gladly change my P&L for this month.
Anyway, now we have a synthetic covered strangle, and if you go to the analysis page, just because I want to stay on this trade as long as possible.
As long as humanly possible. We're going to see if we can do 30 minutes on DraftKings.
If you go to the curve view and look at the analysis of this. This is what a covered strangle would look like if you were long stock, short and out of the money call, and short and out of the money put. There you go. That's it.
Yeah, that is Synthetics 101 if you were long stock and have a covered strangle, which I do occasionally in DraftKings.
Yeah.
I sometimes do.
Yeah.
Right now I don't.
Yeah.
Right now I actually had the buffer on over my stock.
Oh, the buffer.
Which worked out well.
It helped.
Yeah.
It helped.
Yeah.
Yeah, it saved you a little bit.
Because I had the collar on, switched it to the buffer when we got back from Germany.
Congratulations. Congratulations on your management.
You want to know why I did? Because of someone that we met.
Yeah, I know who.
I know who too.
All right, so here's our DraftKings position now. DraftKings skyrockets. We have a little bit of profit potential.
Yes,
$380.
That's correct.
Okay. All right, and I'm going to push this out into the follow page. Our
Nothing
activity
else got filled, did it?
today, all symbols. No, so we closed our losing diagonal. We placed it, and honestly, this is a common scenario. Put on a
bullish trade.
You put on a diagonal when vol's low. Stock drops, so that diagonal didn't work out, but now vol's higher. Switch it to just premium selling.
Yes.
There we go. We're in. Okay. Now we have risk. We have risk of 200 shares in DraftKings because we have 2 short puts. What's next?
I'm just pushing those out to make sure it did. You can check my work.
If anyone wants to follow anyone on the follow page, you hit these people down here, follow, and you can see. Here's our DraftKings. Closed one, and it says sold custom. I think that those
It's
in the
because
money
you got
put,
2.
out of the money put should be called synthetic covered call.
I think synthetic covered strangle.
Yeah, synthetic covered strangle.
Yeah.
Not custom. We'll have to talk to someone about that.
Yeah.
All right.
We'll have to speak to somebody about that later.
What did so we've got trades. Oh, that's closing. New trade in Baba today. Sold ratio spread.
So Bob, and that was Mikey or Nick?
And Capital One Financial, another new trade. So we got, it's kind of cool. You can see everyone popping in here. Fazi's doing a traded Reddit. Jamal's doing SPX.
Wait, Jamal is not a closing position, and he bought an SPX strangle. And a quarter end a month.
Bought a strangle.
Hit it. I want to see what he did. Just click Jamal, yeah.
Bought this strangle in case we get a 50 handle move in either direction at the end of the month here.
Oh.
Jamal, let's see, it strikes 66.05, 66.75.
Let's take a look at it. Hit duplicate trade. We're not going to, we agree.
I agree. There's risk. This is what he paid for it, $310.
So he's looking for a $50 handle, $50 move on each side.
And it's trading for like $260 right now.
And a quarter end a month. It's not a bad move, Jamal.
But so here's my end a quarter end a month trade at 258, 257, 258, buying out of the money call, just out of the money call.
Now, but it could go either way. That's what I'm saying. He's playing for some type of wrapping up of the end of quarter, end of month.
Now, when SPOOs were down after the JOLTS report and they fell a little bit, he could have sold out that put and taken profit on that put, I bet.
Yeah.
Yeah. So
maybe. You can kind of ping-pong it around. SPOOs are down 11.75.
So I don't know. Interesting. Yeah, like that's maybe doesn't follow tasty mechanics, but that's okay. As long as you know why you're doing a trade.
Nothing we have in here follows.
We break the rules all the time. I mean, I don't want to say all the time, but we do break the rules as long as you know why you're doing it.
Wait a minute. Is his in...
It was the zero DTE.
I was going to say, because we have our 17-day in.
No, it's the 0 DTE.
Okay.
And we just have an SPX, this upside broken butterfly. So 66.50, 67.80. Do you see end of quarter? So all of our predictions? Do you see all of our predictions for end of quarter, the third quarter?
Did you see them?
I saw them today. So SPX is 66.50. I think mine was. Ours were very close. Ours were just like 100 points apart. I think, when did we make these? Beginning of the year?
Yeah. So go to right there.
Okay, I think ours were like.
Who's winning?
5,500 and 5,600.
5,500? We went down?
Yeah, I think so.
I went up.
You think so?
I know I did.
Or maybe they were 6,100.
Okay.
Maybe it was 6,100. Ours were very close. Ours were like less than 100 points apart. But we weren't close to being. The only one close right now is Katie McGurgle.
Is she bullish then, huh?
Yeah, who thought?
Good for her.
Who thought January 1st that would be that high? Okay.
So do you want to, speaking of Katie, Nick, and Mike, do you want to go to the Tasty Live site and show, because Tom Sosnoff and Tony Batista are hitting the road this week?
Sure. Yes.
On Friday, and we will be doing the morning show on Friday. So this at Work by 11, they'll be in LA. So if you are in the LA area, I mean, I don't know if it's
and Glenn's going to be there.
Yeah.
If you're a big fan of Glenn, Glenn's going to be there.
I'm a big fan of Glenn.
I'm a big fan of Glenn. He's great. So he's going to do platform demos. Tom and Tony are going to do the At Work by 11 show Friday in LA. We're on air in the morning, bright and early.
Yep, we'll be live with Vanetta for the first hour, and then I think we have a myriad of guests that are coming in.
Yeah. It's going to be busy. So that is Friday. There are other tours. We still have Mike and Friends in Dallas and Dr. Jim in Detroit. Oh, he's going to Detroit.
Dr.
Detroit.
And Mikey, I know you know what that is.
And then we've got Tom and Bat in Charlotte, Mike and his whiteboard in San Diego, and Tom and Tony in Austin. That will be Tom's final show, so get your tickets if you want to see him on the road.
And then I think the last one is Dr. Jim, and that's it, right?
Dr. Jim in Tampa. Oh, right in his hometown.
Right in his hometown.
He goes from hometown to hometown because he's from Detroit, and then he lives in Tampa.
Oh, yes, he does.
All right, I'm going to pop in.
Did I tell you the last time he was in, he's like, oh, I'm finally ready to take my kids to Orlando. Can I use your house? I was like, we just sold it. I was like, I'm so sorry. I was telling him for years to take his kids to Disney.
Oh, that would have been helpful. But you can rent a house in your neighborhood. He could rent a house.
You can. But I mean, I would have given it to him.
I know.
But he lives there. He lives right by there.
You're nicer than me. Do you know how many times Anton would be like, hey, can I use your Disney points? Sorry,
Points?
Anton. Yeah.
That's a big ask.
Anton wanted to go.
Wanted your points?
Wanted to my Disney timeshare.
Yeah.
Yeah.
Wow. It's a big ask.
Well, what I couldn't explain is that you have to. It's hard to book last minute. You have to know.
You have to know
well in advance. Well in advance. It's not like, oh, can you book me a Grand Floridian this weekend? No, Anton.
No.
All right.
Do you want to take a look at Nike while we are trading stuff, because Nike has earnings.
Okay, and then I'll come back to Twitter.
Oh, sorry, I didn't realize you were in it.
Nike has earnings. Yeah, you're in charge. You just tell me what to do. I'll start
listening. Nike has earnings, and the only reason I'm saying that is because there's a TV over there, and they were just saying Nike has earnings, and there's 20 people say buy, 18 people say hold, and 2 people say sell. Has Nike finally bottomed? Was the headline I just read.
Well, so it shot up back in the end of June, and now it's come back down in the last month. 54 rank. I don't mind selling puts in Nike.
I don't either.
We've got a $5
expected
move. We could do a Jade Lizard too.
How do you feel the buffers do? How do you? I like after earnings trades.
After earnings buffers
in the very very near time. You could do.
We could check a buffer.
That's a great Jade Lizard candidate though.
64 put, 74.75 call spread for $1.09.
It's got a 54 rank, which is pretty good.
So this looks like. I'll go to the analysis and show everyone what this trade would look like. Here you can make. Where did it go? Where's the analysis page? Curve view? Here we go. Okay. Here you can make $110 if it stays in this range this week. If it goes up, we got just $10 over that $100 wide call spread. And then to the downside, our break even's 62 and change.
This is a high probability trade because what we're saying is, and Nike has a 54 rank, so earnings implied volatility is typically overstated versus understated, and that's what you're playing for here.
Yeah, so if Nike stays right here, we'll make $110. If it goes down, our risk is getting long at 63. Now, if we look at the buffer, we'll have more profit potential.
If it goes up.
Let's see, 69. Our break even on that Jade Lizard was 63. I'll move our break even to 65.
Okay.
And then, so basically here, and I'll walk through how I came up with this. Bought the at the money put and created a long put spread. We're paying $1.83. Find a call that's worth $1.83, and then cross over and sell that put. So here we have $300 in profit potential if Nike goes up, but our risk is not until 65.
So I sort of like the buffer trade after earnings in the very near term. If it goes up and it's going to continue its move, I like to put that on for one day. I kind of like the Jade Lizard here.
I like the Jade Lizard because we get a little more room to be wrong, but we make $100 if it doesn't move at all. The buffer trade, the only way we make $300 on the buffer trade is if Nike goes up. But like if Nike skyrockets on the G Lizard, we don't make anything. So I will say, when you have the put skew here for earnings, if you have put skew,
is there put skew? I don't know. I can't tell.
Let me change this to implied volatility.
Because sometimes you see call skew on earnings, depending.
Oh yeah, there's not put skew. There's not.
No.
There's not. So when
there's call skew,
then people think it's going up. Maybe we don't want to cap
that's what
our
I'm saying.
upside.
It just said. I mean, the headline. That's what made me think about it. Is because the TV's right next to where the screws are.
Maybe we don't want to cap our upside.
But just because the call skew's there doesn't mean it's going in one direction.
No, I know.
That's not where the risk is going. It's just
that's
more buyers and sellers.
More buyers and sellers of calls than puts.
More buyers than sellers.
So if we put on the Jade Lizard and it goes up, we won't make anything.
So I'm okay with this on earnings because worst case scenario is the same. You're long.
Yeah, we're long at
65
or 63, whatever.
Yeah.
$300 profit potential versus 100.
Ship it. And this is going to be an overnight.
If
it goes down, I can almost guarantee you we'll switch this trade.
Or we could just sell the 65 for $1.
Then if it goes up, you get it.
If it goes down a little, we still make 100.
Sure, do that. Let's not get fancy dancy.
65 put for $1.15. That way, if it goes up, we'll still make money instead of capping ourselves. Sometimes on earnings, I don't like capping myself with that call spread.
No, I kind of agree.
Nike. But, do you still see people wearing Nikes?
I got a cool pair of Nikes.
Do you?
Yeah. Coolest shoes I own.
Oh, the ones that don't fit?
No.
Oh.
I asked one of my kids what a cool shoe was, and they gave me one, and I ordered it. Maybe I'll wear them one day.
Oh. Well, so the kids are still buying them. Yeah. All right. So we've got that in. Let me push that to the follow page.
So Mikey's coming in with...
he knows Gary Gnu, I bet.
He thinks you watch some really weird stuff.
Let me see.
No, you got to go top down. Yeah, there you go.
Oh, yeah, the Great Space Coaster.
Jenny watched some crazy shows when she was having her kids on... she was having her kids are on the bus to school wine time.
Come on. The Great Space Coaster. It was a good show.
I don't know that I've ever seen this. This is a Muppet.
But they weren't the Muppets. They weren't the Muppets, though. They
There's
really...
a pink bird that looks like Big Bird.
I mean, they were puppets, but they weren't the Jim Henson Muppets.
But this is not something that, like, most people know what it is.
I watched it every day.
I know you did.
And there he is, right in the middle. Gary Gnu.
It's so funny. Keep scrolling down. He's like, I got you, boo.
Yeah, Gary Gnu from the Great Space Coaster.
That's what I said. You're like, he's a newscaster. I was like, he's not a newscaster. He's
no Gnus is good Gnus with Gary Gnu. Thanks, Mikey. Thank you. I appreciate it. Gary Gnu from Great Space Coaster. Love it. Love it. Thank you. You know what else I love? Look, I'm going to go from the first to the second. So here we've got Eric coming up with this Iron Condor and the zero DTE.
So he's got 7.
7 here, 7 here.
About $3.95 on one and $3.05 on the other. Okay, so that tracks.
But then look what he turned it into. He's turned it into this.
Cool.
So now,
decapitated condor.
He's got a lot, big win range here, big win range here. He just doesn't want a big move. So Jamal's playing for a big move.
So he put
Eric's
a reverse butterfly in the middle of my condor tranches. I like it.
Oh, I like it.
I like it. This is creativity at its finest. I love it.
Yeah.
Eric.
Right.
Yeah.
Very good. Good luck.
I mean, when you look at that, I know it sounds bad, but I'm not saying he can't lose, but it looks like he can't lose.
I mean, he's got he's got a lot of room. He has a lot of room. Spruce down 11. Sounds like there's a lot going on, but we're not really moving much.
We're not moving much at all.
Feb 51.25 puts. No 51.50 puts. Huh.
Okay, we
all
also... Oh, there's Jackie.
Yeah, Jackie. Another win on his put spread. Victorious.
Victorious. I love it. $330 of gain or
done for the day.
So, done for the day. Good job.
Nice. Good job, Jackie. And this is where I went wrong. When I saw Frank's calendar, I didn't hit show more to see the JOLTS report at 9.
Hit show more. Let's see it. Is it right underneath?
Well, then it kind of messes up my screen.
Oh.
I'll just leave it. I just imagine that right below that it says JOLTS report, 9 a.m.
Well, it was 10 a.m. New York time.
Yes, 9 a.m. our time.
Yes.
Right at the SPX SPX trade time.
Yes.
Okay, So that's good. Here's Jack Tucker. 3 tranches, collected $17,000 in premium. Crazy.
Do you have like an overwhelming vinegar smell right now?
Yeah.
What just happened?
Someone's trying to I have no idea.
I got like lightheaded and I was like, what is that? There's like an overwhelming vinegar smell right now.
Maybe someone's cleaning? Why don't you tell the story? For our newer viewers, tell the story how your water broke on the trading floor.
My water broke on the trading floor.
Yeah, we can go to live. We can go to the full shot.
So yeah, that is true. My water broke on the trading floor. Now the trading floor there used to be papers everywhere. Papers.
And it was all rubber. So now we have like this synthetic wood. Yeah, maybe it's real wood. I don't know. But it used to be rubber.
Don't wood shame. They were like green rubber circles.
Yes. Green rubber circles all over.
Yes.
That's the floor that we walked on.
And my water legitimately broke on the trading floor, and that's how I found that they never cleaned the floor except using anything but a leaf blower. Because that's how they would get all the papers off every night.
They would just blow everything.
That's why. Can you imagine how much dust must have been in that place every night?
Well, I will say, on the floor, wasn't it like no food on the floor?
No food on the floor, no drink on the floor.
Yeah.
You couldn't even have a bottle of water.
Yeah, so no food, no drinks, because that's how they saved in cleaning. They just came through with the leaf blower. They knew if no one had food or drinks, there was no problem until Liz's water broke.
And then they needed to use the vinegar. So I don't think that situation happened here right now, because I don't know that anybody's water could break right here. But yes, somebody's cleaning something.
So... And that was in the IBM pit. Mm-hmm. Liz is in the middle of a trade.
There was 468 stocks in my pit at that point.
But you're in the middle of a trade.
Yeah, and it was funny because Jeff was golfing with the broker that I remember. I checked the trade with him. I looked. Jeff,
Frank's nephew,
was just golfing with Scott, and he's like, "Oh yeah," he told me the story because I remember being like, "Scott, look at me, Scott, look at me." And he's like, "Okay, what?" Like I checked my trade twice, and I was like, he didn't even work with me. I was like, "You have to take this box and bring it back to my firm. My water just broke." And he took it, and I just walked off the floor.
And box meant computer back then,
yeah.
But we called it a box.
We called it a box. Yes. Take this box back to my thing.
And then as Liz is leaving,
I'm going down the escalator, and all I heard is he screamed, "Liz's water broke!" And then they're like, "Where is she?"
And she's trying to go, and couldn't even make a phone call because everyone was calling her cell phone.
Yeah.
Couldn't even call the doctor.
That was back in the day. It was 2000. It was Annabelle, so 2008, smack dab in the middle of the financial crisis, if you will. And AIG was in my crowd too, but yes. So smack dab in the middle of the financial crisis, my water broke, and I couldn't call anyone because I had a flip phone.
Did you? Yeah, that makes sense. That makes sense.
Yeah, I had a
no.
I didn't have an iPhone.
I think our phones weren't flip phones. They were like Blackberries at that point.
I still think I had a red flip phone.
No, because I think in the 90s we got, I think early 2000s we transitioned from flip phones to some Blackberries.
I bought you your first iPhone because you were flip phone Jenny for a long time.
I had a hard time getting rid of the flip phone, but they're back. They're back. Look, I was ahead of the game. They're back.
It's pretty funny. All right, before we get away from us, do you want to jump into the study?
Sure. Okay. Back to the platform. This is an option drive from the research team. Weekly recap of the previous week. A look ahead to what we have coming up this week.
And we appreciate Kai for doing this for us.
Now, this is what I find interesting. Indices decline, marking their first losing week in 4. So last week was the first losing week in 4. Is this week going to be a losing week too?
I don't know with this. Well, you never know. I mean, we saw what the SPX. Does he have the SPX move in here?
Maybe. Yeah, I don't know.
You can see what it's supposed to be because, I mean, I don't know. And I don't know. We're not saying end of month, end of quarter is going to be a huge move. But we've seen it. There's some rebalancing of things that happen end of month,
I've done that trade so many times and they were winners twice. So I will say I've done that trade end of month, end of quarter probably at least the last 4 times. And two were winners and the other ones were losers.
So
half
the
50% of the time.
makes the market go down too in the last couple minutes because there's lots of shuffling around that has to do. So I don't know.
We'll see. And then the core PC inflation came in at 2.9%, and NVIDIA announced plans to invest $100 million in OpenAI. That was the big headlines from last week.
Those were the big headlines from last week. Government shutdown today.
Today, deadline.
Yep.
So well, that moved the market.
That's what I'm saying. So you don't know. But the government shutdown, the deadline is today. What time?
I don't know.
You know what I mean? I don't know.
I'm sure there's a time that the
meetings.
meetings.
There's been lots of government shutdowns in our lifetime, but I don't know what time they.
No, but I don't think it ever really shuts down. Nothing.
It's shut down before,
but nothing ever.
It's
there's never. It's never
non-essential stuff gets, and then he's doing it differently. Supposedly, they're not furloughing the employees.
Okay.
So I don't know. We'll see.
We'll see what happens.
But so if the shutdown happens, we will not get these numbers.
Then tomorrow you see we have. Oh, then we won't get these
then
numbers.
You do not get the numbers. That's the one thing that does happen. So you will not get the jobs report.
The PMI tomorrow.
Yes. If the government shuts down, you do not get the numbers. And I do know this because I heard, the one time the government shut down, we're supposed to get the jobs report on October 4th, whatever that was, and it didn't come out until like the 20th.
Oh, okay. So we've got PMI tomorrow, PMI Tuesday, the manufacturing, and then services Friday, jobs report Friday, but we'll see. If there's a shutdown, then they won't be coming.
Yep. True.
That was good. That was valuable information.
Thank you.
In fact, people are waiting for these numbers, and then...
Well, that's just it. I did hear that if that shuts down, the numbers get delayed.
Okay.
And I don't know if all of them do, but I know that some of them will.
All right.
So we just sit there and don't have any numbers. Just like,
so we'll see.
What are we going to do without numbers?
We'll see what tomorrow brings. Here you go. You were talking about...
No, I was looking for SPX move.
The move.
For the week.
So you see, week of 9/15, everything was up. Week of the 22nd,
everything was down.
Everything was down. And then this week, how are we starting on the week? If we go to SPX and look at the chart.
I mean, yesterday was up.
No. 2 days. We're Tuesday, so we got 2 down days.
Wow.
Although
yesterday was up.
Yeah.
Yeah, yesterday was
right. Where did we?
Hey, look at that. Nothing.
And then today, so we'll see. We'll see what happens the rest of the week.
Yeah.
Okay. Here it is.
There we go. This is what I was looking for.
A week of the 22nd, plus or minus $70. This week, up plus or minus 78. But we've got quite a few numbers coming out this week.
Yeah, if they come out.
If they come out.
Right. So Ian, would you expect it with the numbers coming out? Would you have expected a bigger move than that? VIX last week, because it was down 15.5. This week's 15.3. I'm just tell you where the VIX is right now.
Here, we'll jump in and take a look. 1650. Well, this morning I felt like it was a little bit of shakeup. SPOOs were down 2, and then all of a sudden they were down 12.
Yeah.
Now they're down 16. So VIX is up 36 cents. I mean, maybe the market's a little shaky.
I mean, are you surprised that it started the week at 15?
Yeah.
Did it?
That's what. Every time we look at this option drive, I question.
Wait, did it start the week at 15?
So where did it close on Friday? So basically, that's it. On Friday, it closed at 15.29. So he's not making it up.
Kai's not making it up.
He's not making it up. It closed at 15.29 on Friday. He rounded up.
Okay. All right. We'd like 2 decimals, please, Kai.
Major assets, IVR. All I look at on this is this week, what arrows are green, who had a spike in IVR, and look for potential trades.
And we were talking about this yesterday with Dan the Crypto Man. Look at gold IVR, and it's up because gold has been on a tear. But even though it's been up, IVR is up. So gold is a unique animal where the pendulum swings both ways in the IVR.
Yeah, and Bitcoin IVR is up, and crude oil. That's something that we don't have a position on right now.
Natural
crude oil
gas is down 33%. Oh, that's the IVR is down 33%. But yeah.
So crude oil, IVR's 26. We've got a down move. I don't mind selling puts, getting back in with puts in.
Can you zoom out so I can look at like this, like a normal chart?
Hold on.
Okay.
There you go. So you see
it
this.
It still looks like a big move. I just wanted to see it in, this
We've been in and out of micro crude puts. I don't care if we sell a put spread in CL or naked puts in micro crude.
Let's take a look at micro. I like micro crude.
I like the naked puts better than the put spread. MCL, $62. We've had this down move today and yesterday.
I thought you can sell the 61 or 60 put for a decent premium.
So we would go here. We would go to the 48 day.
Yeah, I'm not going with 16 day.
So closest to 45. So go with the 48 day. And you said the 61?
You can go 60 or 61 is what I was saying from that chart.
Yeah, so $2.26 on the 61 or $1.85 on the 60.
I kind of like $1.85 on the 60.
I mean, or we could do a Jade Lizard in microcrude and get really far.
You really could, because you can go all the way to 70 cents. See what you can get on the call spread, though. There might be some skew in it.
Okay, so if I go to about the expected move, maybe I bring it in a little bit, 67, 68. Nah, it's not worth it.
Puts.
Just sell a put for $1.
I mean, I think we find that all the time in MCL. I think every time we get into MCL, we're like, oh, it's a good Jade Lizard candidate.
I know. So do we want, the 22 delta is about $100.
Go all the way to 57 with a put? Do it.
for $100.
Yeah.
Or do we want to get a little more aggressive and sell the 30 Delta for 144?
Well, I like a round strike. So either go take it up one to the 59.
Oh, the 59. Yeah, let's get $1.50.
No reason except I just like round strikes.
Yeah, let's get $1.50. So when we manage it 50%, we're getting $75.
Sounds like a plan.
So 153 using $900.
Perfect.
Not bad. And this is the micro. So this is not CL. This is a very small nugget of it. All right, and Bitcoin and gold, we kind of looked at those yesterday.
We looked at those yesterday.
And speaking of, here we have, again, gold reached all-time highs. Silver's performance is even stronger. They're both continuing to rally.
So they're both at all-time highs, but silver has taken the charge last week, meaning that it's up a lot higher.
And for a while, silver wasn't running up like gold. So anyone who was saying like silver needs to catch up, that's been a good trade.
It's been running up. You can see it, but just not as fast as gold.
But now it has. Now it's really shot up. So anyone who got long silver thinking it would follow the lead of gold, that was a good trade.
Yeah.
Yeah.
Yeah, that's interesting because a lot of those miners have been real strong too. A lot of them. The silver and gold
I felt
miners.
the pain. I had to buy junior ring, Lily's junior ring, and it was all gold, and they're not cheap.
Are you sad you sold all your gold when they came to your door?
I wish I would have held on to 2000. I think I sold all my gold in 2005. If I would have held on to it, or somewhere in the 2006, somewhere in that 2000.
You did it before your daughter was born?
Yeah, or maybe I wouldn't have sold it. Maybe I wouldn't have sold my Sweet 16 necklace. I should have held on to it until 2025.
Where was gold in 2005?
I mean, it had to be around that time.
No. I think we were on the show.
No, I was living in my New Lenox house.
Oh, yeah, I think we were on the show.
I don't think so.
I don't know.
I don't know. I don't know. Let's see. I'm gonna look up. I'm just gonna go to GLD, right?
Yeah. I'm gonna go back to 2005.
And go back 20 years. 20 years will take me just to 2005.
Yeah. That'll take you. Just go all the way.
It has to be a time where we had a run up.
You sold it at 46.
No, it had to be a run up, and it was summer. I bet it was this. This is 2006. Yeah. Okay, that makes a lot more sense. So, because gold had a crazy run up, and it was summer, or like just around summer, because the guy came to my door and he said, "I'm paying this much cash for gold. Do you have any gold?" And I was like, "Well, actually,
that guy's loaded right now."
I've got quite a bit. So, 2006. That makes total sense.
Yeah, that makes sense. Yeah, you sold it at 72.
What was I going to do? I had a whole box of jewelry from, boyfriends in high school and college. What was I going to do with it?
But it's like the gold back then. I'll never forget when Annabelle was in, what grade was she in? She must have been in 7th grade. This guy literally went to his mom's, went into his mom's jewelry box and gave her like a gold, remember those like thick ones that are like this thick?
Yeah, the chains.
And it was like heavy. I was like, you can't buy these anymore. And he put it in like a random bag and gave it to her. And I was like, what the heck?
Oh my gosh. Yeah, that go. So, yeah, I mean, don't you remember we all wore, even though I have like zero Irish in me, we all wore those clotter rings. Clotter rings. We all had Sweet 16 necklaces.
Well, because all of our friends are Irish.
Yes.
All of them, except for us too.
Except for us. We all, and then even just rings. I don't know. I had a lot of gold.
Yeah.
Had a whole bag for the guy.
Here's your.
I like cleaning out my house.
I don't know where all my gold is.
I'm going to become a minimalist.
I like it. I'm a minimalist.
Yeah, you are. I'm going to get rid of everything.
We threw out everything. Okay.
Okay.
Back in it steady. We're almost done.
They're busy. Crew's busy. Lots going on. So here you can see this gold-silver ratio dropped to 82 because silver's had just that, that real push recently.
Yes. Gold has pushed higher, but silver has pushed higher. So
you can see if you look at the silver chart, and I don't go back to 2000, and if you look at silver here, and I'm just going to go to today, right? Just look at in the last couple of weeks, silver has had this crazy run in the last 2 weeks.
Yeah, and I mean, gold is up too, but not as high, and that's what.
So I guess the trade would be if you wanted to now, short silver, long gold. If you think that's going to kind of come back in the line a little bit.
I don't know. What do you think about those?
I mean, I'd be okay with shorting silver. I don't mind. We can throw in a pair and watch it. Short silver or long gold.
We've done this before, multiple times.
You know, if I go to the pairs trader.
And the problem is that the way to do it. Oh, look, we've already got it pulled up.
Oh yeah, I was looking at it. So, let's say we did 1 by 9, short 9 shares of silver. I'm just trying to do notional to notional, right? So like, let me get out my calculator because I don't feel like doing the math. Calculator.
42 times 9.
Yeah, 42 times 9 is $378 in silver.
So you're actually a little heavy in silver than you are in gold.
I can do 8, right?
Yeah.
Let me sell 8. Whoops. Hold on. Sell 8 silver and buy 1 gold. So 42 times 8 is 336.
That's.
I mean, that's fine.
I mean, you're a little heavier, a little less heavy in gold.
So I sell 8 shares of SLV to every 1 share I buy of GLD, and I could scale this as big or as little as I want.
So the problem is this is gonna. How much is this? It's gonna be like.
It's not gonna use that much.
It's gonna be like $300.
Yeah, $300. $344.
Yeah.
And we watch it.
Sure. Sure.
I mean,
press it.
Send that.
That's notional to notional. That's the right thing to do with those. If you're using silver, if you're using GLD and SLV.
And so when I push this out on the pair, and I'm going to push out silver to the follow feed and push out gold.
And push out Nike. I don't think you did that either.
Now that is a pairs trade. It's not like I'm just selling silver or just buying gold. That's a pairs trade.
That is a pairs trade.
So make sure, I don't know if you can make a note of that. I saw Jamal was adding notes to his follow page.
Our notes are the show.
Yeah. Why did you do this? Tune in, and we'll explain. No, and so basically, we got into that pair thinking we'll pop back up like this.
We'll keep an eye on that. Silver and gold are easy.
Yeah.
We know if there's 1 share of GLD in there, there's some shares of silver somewhere.
Yeah. Okay. And then here, biggest S&P movers. So
Intel was the big guy. Yes, Intel and EA.
Intel and EA. I usually look at the downside and see what's the big mover to the downside and see if there's anything I want to sell puts in.
CarMax was earnings, I think.
Yeah, that had a big move down.
What happened in Freeport McMoran?
Yeah, weird, right? I'll take a look. FCX? Because what is that, copper?
No, that's, it's a bunch of stuff, isn't it?
I don't know. I mean,
copper's up.
I thought it was
the copper mining in mine, COPX, has been up.
Yeah, look at that. But that's like an individual company. It's not like, oh, it's just a metal.
I don't know. That's crazy. And it's got a decent rank.
Huh. Maybe that's a place to sell some puts. Let's see what kind of buying power. 34 put, $340.
That's got a good Jade Lizard written in there.
It does. A 70-cent put and 42.43 call spread.
Yeah, that's
97 cents?
Yeah, ship it. And put a GTC in for 50%.
Okay. All right, I'm working that Jade Lizard in Freeport McMoran. And Moderna, I want to see mRNA. That was down. I don't mind puts in Moderna either.
Oh, it's only a $24 stock?
Yeah.
I did not know that. I did not see that coming.
I'll hop in with Moderna puts every once in a while. So it's not a bad Jade Lizard candidate either, but...
How much capital does that hold up?
No, it's $500.
So it's more than normal margin, but that's not bad.
Not really. 20% of 20. I mean, 400 would be regular margin.
Yeah, that's what I'm saying.
So I guess,
a little bit more than normal margin. But yeah.
What do you think?
Sure, ship it. I like putting on trades.
Was there like a put slayer? Back in the...
No, we had our midnight put seller. We had our earnings slayer.
I'm mixing them. All right, I'm going to push those out too.
Yeah.
Well, I don't think I'm filled yet. So of this list, so we saw this list was down. Moderna, we sold puts. FCX, we sold puts. Now, maybe we should have looked at the news, but we just assume news is priced into the stock.
Oh, especially this is last week's.
Yeah.
Like, news is priced in.
And Nike, we already got our Nike trade in.
I still think Carnival was sneaky.
On a Monday. And Liz never likes Monday morning earnings reports.
I don't. I think there's something, because it's never been on a Monday before, so why would they be like, I got an idea?
I got an idea. We're going to announce these on Monday morning. Is it down again?
Yeah.
The crazy thing was the bounce up.
Yeah. It's weird.
And is Royal Caribbean down again today?
Probably, I think. I mean, Royal Caribbean's so high.
And Liz only has the stock when she's got a cruise pending.
Yeah,
you don't have any cruises pending, do you?
No pending. I mean, I have one in like 3 years. I booked it like. Jenny, I will let you know the dates. It's after my daughter goes to college, 6 months after after she comes back from Christmas break.
Yeah, everyone's going. All right, I'll put it on the calendar.
Not everybody, just Dan and I. So it's like
I'll put it on the calendar.
As soon as they release the itineraries, it's like 2.5 years.
Okay.
So don't worry about it yet.
Why don't you go like right after she leaves for college?
What if she needs me?
That makes sense. Wait till she settles in.
Yeah.
When she goes back after Christmas break.
Yeah, then I'm out of here.
That makes sense. Makes sense. Are you doing a world tour?
No. No.
Yeah.
No, just the Caribbean.
All right. Well, maybe you'll see my parents. They're the frequent cruisers now.
They are frequent cruisers.
All right,
okay,
I'm still working that Moderna.
What else did you push everything through?
Did we get? I think we got through. We got through all of the option jive. I want to make sure we get through. I had to get one final look at the Great Space Coaster. Brings back wonderful memories.
That guy, that's like super creepy.
What's creepy?
Go back to the.
Which guy? Which one? Which one? Which one?
The white.
This
the
one?
white face with the rainbow top. What was that guy's name?
I don't know. Okay, Fazia.
I love Fazia.
Getting long Oklo by selling an October big lizard. I like it, Fazia. We did an iron condor in Oklo yesterday. Big lizard, 70, 110, 115. It's a nice credit, 1175. No risk to the upside, downside break even 100. I do like that trade. I'm going to pull it up.
We should pull it up. Did she push it out? Go see if we can see it. Like if she already did it.
Oh, on the follow page. So then it makes it really easy. Fazia. Here's Reddit. Let's take a look.
She might not have done it yet. Maybe she's just giving us a trade.
Oh, here. It's right here.
That's what I'm saying.
So
I also, just take everybody else off.
Yeah, remove us. I don't want
You just put us on.
I just want Fazia. Okay, here we go. Oklo. I love that she's doing a big lizard.
And I love that it says big lizard. I also believe that TP and his cherry bomb did Oklo this morning as well.
Did he?
I believe so.
Well, I mentioned this yesterday. There's a lot of juice in those options.
There is a lot of juice in those options.
So she's got 110 to 115, $5 white call spread. And I'm going to pull this up on the analysis page. And I'll get rid of what we have. So we have... And she's in October.
What do we have?
So we have this iron condor.
Okay, remove that.
Remove our iron condor. And here's the big lizard. It always looks great on paper.
The big lizard always looks good. Now you can do a big lizard with a fat tail because you're collecting so much premium.
She does. The 70. She's long the 70.
Oh yeah, because Oklo, it's expensive.
It's expensive. Yeah. It's expensive. So I hope it works out for you, Fazia. If we didn't have our iron condor, maybe we'd put this in. So we have just the 95, 85, 140. We have $5 white iron condor. And I'll put in a GTC for 50%.
We should have GTCs in for all this stuff because the market is moving around.
Okay. I never lost my stock. I bought all my short calls back.
Oh, good.
And now I'm just selling like small size and strangles.
Meaning not
like my full, not my full stock. Because I was so mad when it blew through my calls.
You were so mad. It was so funny.
I know. Because this is a lifer. This is going to be one of my lifers. Well,
because it's your brother. It kind of reminds you of your brother.
Yeah, and I just, you know what? Here's the thing. My son's in engineering school. His friends, he's in the engineering fraternity. Our other friend's daughter is in another engineering school. And if you ask every one of those engineers, I've asked these kids, what would you rather buy right now? Would you rather buy quantum computing stocks or nuclear stocks? Every single one of them, hands down, says nuclear.
Well, because quantum computing is still so far away.
That's what they say.
Even Jensen Huang said it.
So,
he's the one who said it.
So, you go ask engineering college students, and they are all like, nuclear is the way of the future.
Yeah, I get it.
So, it's a life for
your brother's in a good spot. 27 years waiting.
Hey, he's been in that job since 1995.
That's what I said. I know that.
And since 1995, he's been worried about losing his job. He finally has job security.
Job security.
Fine.
All right, Jenny, we're out of time. We got to everything. I'm very proud of you.
Did we get to everything?
I think so.
Okay. All right.
Wait, can you see if, let's jump in the platform real quick and make sure that, is there anything, do we want to cancel or replace some of this stuff?
All right, Moderna's still working. I'm going to go down to 91 cents, see if we get filled. And
it's still working.
I'm not going to chase that.
No, I wouldn't chase that.
Okay, so that just filled. Anything else that's working?
Oh,
micro crude.
Yeah, but that's 6 cents away. Do you want to cancel or replace it to 6 cents? No.
Well, I kind of liked after the micro crude move.
I didn't mind it.
Yeah, so, but I know, I see what you're saying.
I didn't mind it.
Then maybe we'll wait. Let's look at micro crude tomorrow.
Okay.
I'll leave the working order in. Okay. So then activity, Moderna will get pushed out, and FCX we were filled. Did you get that?
I did.
Did you?
I did.
Okay.
Yes.
So the only thing we're still working now is micro crude, and the other ones are closing orders.
Yes.
All right, that's it. You're done.
I want to make sure that I get everything.
We're done. We're done for the day.
I just want to make sure that I'm not lying to you.
Thank you, everyone, for watching. Liz, thank you for doing the show.
So I don't have FCX.
With TP tomorrow. Well, we'll get that pushed out.
Okay.
I'll be on the golf course.
Yes, you will. Hopefully you come back with a tan. Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. She'll see you tomorrow.
Yeah, so push FCX out.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
What's up, everyone? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal and Thomas, as it is Thomas Tuesdays. And our government's about to take a little siesta, it appears. We're going to be talking about...
They deserve it.
Yeah. We're going to be talking about that today for our futures content. But if you want to join us on the YouTube channel, we're streaming live there. Just pop over to the Tasty Live channel. I've got the Money Match promo from Tasty Trade pinned to the top of the YouTube chat. I will throw in the Tasty Live newsletters link as well, as it is Cherry Picks Tuesday. So go sign up for that. But yeah, as foretold, market well within expectations, only down 8. It's been a sideways chop day. What are you guys making of it?
I'm a little surprised, honestly. I thought, I know this is somewhat of a quiet week. We're really waiting on the non-farm payroll for Friday, right? But I thought, end of the month, right? Like I thought a little end of the month flows would kick in. And, we still got time. Maybe that happens. But it doesn't really look like it. What do you think?
Yeah, I think we're waiting for the numbers this week. It doesn't make sense to take too much risk. It doesn't make sense to, unload everything. So kind of a holding pattern right here, and then we have this government shutdown at midnight, so
oh yeah,
we'll see.
Yeah, I think that actually surprisingly might be preventing some end of the month flow type action in a way, maybe.
Yeah, it's been a slow, even when you look at the platform, like these numbers are not ticking very quickly, which tells you all you need to know. But yeah, to your point, SPX, 1 day implied move for tomorrow, 33 points. The next day, only 44 points. And then Friday, you're looking at 60 points. So there's definitely more implied volatility priced into October 3rd. And it's really just a matter of whether we get any volatility from there. But I've been throwing on 0-day iron condors, kind of playing for this sideways chop. The weekend one worked out. The one from yesterday to today worked out. I'll do the same for today to tomorrow, given that tomorrow we don't have anything really lined up for, in terms of market moving economic data. Thursday, jobless claims. Friday, unemployment report. So maybe those are clearly the days that are being priced in terms of more volatility. Quick rundown before we get to this slides. We've got E-minis down 5 points, NASDAQ down 22, Dow and Russell down a little bit. Bitcoin selling off from the big rally we saw yesterday. The futures product held its ground. It was up 5K basically all day while the rest of the market kind of chopped around. But when it comes to other products moving, gold cannot be stopped. Another 15 points to the upside. Crude oil selling off closer to 62.5. 2 days in a row of pretty big selling there. But everything else is kind of within 1%. There's only a handful of products that are outside of that. If we exclude Ethereum, Bitcoin, silver actually going the opposite direction of gold.
Yeah, this is a little unusual, right? That's a little bit weird. I don't know if that's a tell or if it's just a blip on the map. I will say when I see gold, I continually think of the Kylo Ren gif of him just saying more, because that's literally what we're seeing from gold every day. And I'm not going to lie, it's pretty awesome. It's pretty awesome.
It's crazy. Good question from the chat. Will there even be a jobs number Friday if the government shut down?
That's a good question. I mean,
do they have to report?
So it depends if the BLS determines. It's up to each chief or head of the department to say what's essential, what's non-essential, what's going to continue. So it really depends, I think, on what the BLS chief says happens. I mean, if it's a bad number, maybe they say we don't really.
Yeah. You know what? That's actually probably one of the most interesting things we're gonna probably discuss today. If there is no number, does that mean Friday is a sell? Does that mean you can do, an iron condor for that day and we're not gonna move and it's gonna get pushed? Like, does that happen? That's actually probably one of the more interesting trades.
Yeah. Basically playing for taking the implied volatility of a number that doesn't come out, and then it's just more chop. Could certainly happen.
Yeah, I actually don't remember what it was. What the well, I know what the move was, but I don't remember what the IVX was to start the week. But as we get closer to that date and or closer to tomorrow, if this thing continues to drop, that'll be interesting, honestly. Like, I mean, right now it says 14. What if by tomorrow midday it's like dropping to 12 or something, right? Like, that's kind of fascinating.
Yeah, it looks like some people in the YouTube chat saying there will not be. They've said that economic data will be held.
I mean, that's the rumor, but I don't know. Do you guys work in the government? I mean, how you guys know that? What the hell?
I mean, I guess it makes sense because, like, EIA reports don't come out during government shutdowns, everything. I mean, there's nothing to say they can say it's essential and release it anyways, but generally it looks like it doesn't come out.
I'm trying to remember when in 2018 did they, because it was for 35 days. I actually can't remember. I don't know if they...
35 or 36.
Right?
One of the longest.
Did they come up with numbers then? I can't remember.
I think they held it. I think they held data.
But, well, the jobs number's always been important, but it wasn't as important in 2018 as it is right now, I would say.
So, I mean, if the BLS number doesn't come out, does the ADP number command more attention? Because that's all we'll have to go off of.
Well, from a tradable standpoint, you could just throw on a 3-day iron condor right now and play for government shutdown, play for no number happening, and just sideways chop the rest of the week. 6,600 and 6,700 would be right inside the expected move for the 3-day cycle. So that's an SPX. So basically just straddling the 100-point markers. Definitely an interesting idea.
Mm-hmm.
But yes, let's just pop over the slides. We're talking about it. We've got some data. We've got some interesting talking points for the pending government shutdown. What assets tend to perform well during such a thing?
Yeah, so thought this was very topical, first government shutdown in quite a few years. And it looks like, we'll go to the first slide. These are some of the headlines that if you're going to Google or trading this morning, this is what you're seeing. Congress has less than 24 hours to avert shutdown. So that's tonight. Tonight at midnight is the shutdown. Then J.D. Vance, we're headed to a shutdown. So it looks like that's the expectation now that we are going to shut down. So ran some data, looked back as far as I could on the assets that gave price data. We'll go to the next slide. S&P 500. So the 35-day shutdown that we talked about last time, this graph, the longer the shutdown, the farther to the right of the chart it is. So you see that 2019 shutdown, it went from December to January, 35 days. The S&P actually did really, really well during it, about around 9%. So really good performance there. You look at some other shutdowns, 2013, the market performed well. 1978, those were shutdowns that lasted 2 to 3 weeks. You go back farther, 1976, 1979, 77, the market kind of went down a little bit. And then you get, further back, 1982, it went up a little bit, 84, up a little bit, 81, about unchanged, 2018, unchanged, and then 1990, you get a little dip. But generally, you could view this chart as kind of a linear regression. So generally, the price goes up more than it goes down during a shutdown. And the longer you go, it seems like that helps. It makes sense. The market has more time to do what it does. So if you're in a bull market, maybe after the first week you're brushing off the shutdown, it becomes kind of lame news, and the market just keeps on doing what it's done. We'll go to the next slide. We'll look at gold. So gold, kind of, your traditional hedge against uncertainty. And you would think that it performs very well, but what happens is it kind of does perform good enough to hedge uncertainty, but it doesn't give us something like the 2019 shutdown in the S&P 500. So let's go to slide 3. We could see those numbers. That 1.8% on the right, that was 2019. So 35 days, you got 1.8%. The shutdown before that, 2018, it was only a 3-day shutdown, but you got 0.6%. And then there was only 4 years or 4 shutdowns where gold actually dropped. And the biggest drop was 2013, 1.3%. But if you look at most of them, I mean, you're getting some lift in gold prices. So 1990, you get 1.4%. 1979, you got 2.1%. 1977, 1.2%. So really, gold it looks like it performs pretty well. The average return over those 13 events is 0.5% higher. The average duration, it's pretty short. It's like 5 or 6 days, because most shutdowns are 1, 2, or 3 days. They're pretty quick. They resolve. Let's go to the next chart. We'll look at silver. And silver, there was less data that I could collect, so I couldn't see these shutdowns from the 70s and 80s. But if we go to the chart, what we see is silver performs really well during a government shutdown. So slide 4, the last one, 2019, you got 6.8% over the 35 days. That's a pretty substantial increase. Back to the 2018 one, you got the 3-day, you were nearly unchanged on that. Then you go 2013, you were up 3.6%, and then the 95-96 shutdown, that was 3 weeks, you got 4.5%. So what it looks like is silver is probably, between gold and silver usually does a little better than gold during these shutdowns. So, you take it all on net, and I mean, I think how you look at the equity market is it's largely don't pay attention to the shutdown, right? The market could keep doing what it's doing. At the same time, we're at a point now where the market direction is really hinging on this rate cut outlook and things like this. And like we talked about, we're not going to get a BLS report. We're not going to get, things like weekly jobless claims, housing market data, et cetera. So you're going to be flying a little blind in terms of data here. But, the Fed also bases their expected rate cuts or rate hikes on this data as well. So it's not like they magically get what we're not getting. Everyone's going to be pretty much, left with a blind spot in the economy. And, I would assume that you just, the narrative that exists before a shutdown continues, because the expectation is the shutdown, it's going to get resolved usually within a few days. And even if it's not, 2-3 weeks seems to be the max pain point that Congress can really tolerate for these shutdowns. But as we see, S&P 500 generally does well during it, and silver does very well, and gold also does quite well too. So, I took the drop in silver today as a buying opportunity, and I went ahead and sold a put vertical spread. So I did it only in the 28-day because I wanted a shorter duration just to get through this, what I'm believing will be maybe a few days or a week at most for this shutdown. So I sold the 45 and the 45.25. I'm also, I'm long gold. I was already long gold from last week with the long call spread. So long gold, long silver, and I actually, Mikey, I put on an iron condor, 1-day iron condor in the ES following your move, because I think, we'll probably just, for the rest of the week at least, just bounce around in this range.
Yeah, especially with apparently no data, lack of volatility in general. I think it makes a lot of sense from a market narrative standpoint that we might just see this the rest of the week. But yes, I like the silver trade, especially silver down today. I think it makes for a more interesting entry point. You say you do the 45 or 46 with the short?
With silver, I did the 28-day.
And then the strike was 45 or 46?
It was 45 and 45.25.
Got it.
And then for gold, I'm in the 55-day out contract with the call spread at 37.90, 3800. So I was right at the money when I bought that, and probably almost in a position to roll it right here. Once maybe in another week, get some of those days off.
Yeah, I'm gonna join you here in that same put spread.
I am too, actually. I'm gonna do 45, 44 in the orders, just because I feel like 45 is an inflection point in silver. I'm gonna go tad lower, but I like that.
But yeah, 28 days, $500 ish max profit with this small, the most narrow spread here, 45, 25, 45, or anywhere in there, you're gonna get a similar price point. But I like it as an entry point today just because silver's down 1%. Just gives you more premium. It allows you to go further down the strike plane if you want to, et cetera, et cetera.
It's not giving me the immediate feel. That means it's a good trade.
That is true. So yeah, speaking of rate cut probabilities and the potential change of the government shutdown relative to it, there's an increasing probability. So yesterday, it was 89% that we would get a 25 basis point cut on the October 29th decision day. Now it's 96.7%. So almost 10 percentage points higher from yesterday. And then December, yesterday, another 25 basis point cut to bring us to 350, 375. That was 66%. Now it's almost 76%. So to your point, they're basically pricing in, even if this thing lasts for 3 weeks or 4 weeks, they're just going to continue on the narrative that was already discussed and laid out as we see increasing probabilities for these 25 basis point cuts in the next two decisions.
Yeah, no, I mean, if you look at the balance of risk for a shutdown, if anything, it's going to slightly maybe hurt the economy. So if anything, maybe juice those rate cuts up just a little bit, because the Office of Budget Management or whatever it is for the White House is saying they're going to do more layoffs if the government does shut down. I think that's kind of just political talk to
furloughs, right?
Pressure, pressure. Well, I think they're going farther than furloughs because a lot of people are furloughed during the shutdown if you're not essential. But I think they're saying they're going to do actual layoffs. I'm not sure if that's. I think that's a little political talk to try to get the Dems to the side because they need I think they need 7 or 8 votes in the Senate, somewhere around there. And the Democrats are saying we want some kind of subsidies for the ACA scrap that were cut in the tax and spending bill earlier this year. I don't think they'd get that, so I think right now it's, they're at the impasse that they're at. But, this will be a day-to-day thing that you see headlines on as we're shut down, meetings, and, just watch how the market reacts to the headlines on it.
While I don't think, like you said, like as far as equities, I mean, it doesn't really matter a whole lot, and I kind of agree with that. The funny part is I think if we hear a headline like, they've already fixed it, I think markets move higher. Yeah. I'm pretty for sure.
Yeah, I mean,
look at the jitterness we're seeing right now. Market just started jittering around here.
Yeah, I mean, when we have these low periods of volatility, it doesn't even matter what the narrative is or what's happening behind the scenes. When the market is such low implied volatility with a steep contango, you're almost always going to get up and to the right from a general direction standpoint. So, yeah, I think what we discussed here, there's ultimately nothing priced in terms of surprises. Market's not reacting to the shutdown today. It's not pricing in anything for tomorrow or the next day, which leads us to these kind of 0-day iron condor, 1-day iron condors and SPX. Getting long silver, we just joined Thomas, silver down 0.86%, almost 1%. So yeah, let's take a shot here. See if we can get a little bounce.
And the moment you started talking about that trade, silver has bounced a little bit. I haven't been able to get filled. It sucks. I'm staying.
Next time I'll give you the slides before the show.
I know, right? You got the whole crowd to jump in, Thomas.
Yeah. What about Natty Gas? Natty Gas, the leader in the CME futures watch list here, up almost 2%. Anything to make of it?
Yeah, this one's killing me because I had a short put spread on at 3, and we dipped a little bit under it. I had like 2 days left, so I just closed it with a small loss. I've been trying to get long Natty Gas for a while. You know, we're putting in like this double bottom pattern right here, which is encouraging if you're trying to get long. But after double bottoms, what happens if it comes back down and breaks? That's usually when you get the down move. If you clear the resistance from in between the bottoms, it's this like technical chart trading. So if you clear like 3.4, 3.45, then you get the extension of the rally. So if anything, I'm looking at getting long here. I wanted to wait for the next little pullback. So, you know, there's decent volatility in there. I might put on another short put spread, but I'm definitely going to be looking at getting on the longer side now that we're going into what they call withdrawal season, where the inventory is generally, you know, it's hot, people have their furnaces on, and now inventories are starting to drop.
There you have it. Yeah, we've been trading this kind of in and out, but crude oil, another one, second red day in a row. I actually caught a bid from this morning. I wish I would have seen that because I've been trying to get in around 61, 60-ish, but it bounced from the low today, which was...
Before we leave that gas, I got a question for Tom because he definitely would know. Well, what's the deal with the Widowmaker spread these days? Doesn't seem to be that much of a big deal anymore. Doesn't seem to be that much of a big spread between.
I haven't seen too much on that. I think the spread between the November and December right now, or the current contract, and January, which one is it, is the one you look at for trying to get a picture of how inventories are going to react at the start of the season. The Widowmaker, I haven't seen many people talking about it, but you know, it's always one you could be monitoring. But I haven't been paying much attention to that.
Yeah, I was just curious because I mean that's always been the thing. I haven't like the last 2 years. I haven't noticed a big difference between Feb, March, but like right now there's a big difference between Nov and D's and Jan and Feb. But then like the traditional Widowmaker, just not a big difference. I was like, did that change? Something happened? I was curious.
Yeah. I mean the current contracts in contango versus pretty much the entire curve here. So, you know, there's not much a move towards backwardation forming quickly. But once you start to see that between some of these spreads, like, you know, the December and January, that might be an indication that some bullish sentiment's building. But, yeah, we're still in pretty decent contango here.
Cool. Just curious.
Yeah, it's... I mean, it's been kind of at the bottom of the range for the last 2 months, but would love to see some craziness in there. Need it. We need some volatility. But yeah, crude oil, I'll be looking to get in there around 62 if we can get back down there. But love trading this. It's been two-sided action for the last like 5 years. So see if we can get some more premium out of there. But yeah, other than that, ags, anything you want to touch on there? They're just getting hammered, specifically wheat.
Yeah, I mean, it's been some pain there. And, you know, these record yields that they're harvesting now for soybeans, corn, things like that. China still isn't coming to the table, so there's really no movement on that. Farmers have been waiting, you know, months and months, hoping that the administration part of the trade deal will be for China to make some big bulk purchases of these products, and that still hasn't happened. So, you know, wheat is challenging, you know, the lows we had from last week. corn has definitely given up some of its gains from August and earlier in September. We're dropping into August levels right now on corn. It's just the bears are kind of taking control here. And, we won't get a WASD either if the government's shut down. So it's just, we'll be flying blind there. Too.
What date is that supposed to be?
The WASD is usually like the 11th, 12th, or 13th of the month. So August, hopefully we'll be back in business by then. But yeah, this harvest all through the Corn Belt, it's looking like they're getting pretty good yields, and that's kind of what the USDA was projecting all year.
Yeah, I was playing golf this weekend with a random person. They filled the foursome, and I kept joking about how hot it was. I was like, it's that damn corn sweat. He finally was like, okay, what is this corn sweat? And I was like, let me tell you. And I had to explain the whole thing. But yeah, all three of these products kind of moving in tandem to the downside. All three of them over 1%. Soybeans 0.94, we'll call it 1%. But soybeans, corn, wheat, all making moves to the downside. I think there's definitely some interesting trades there, specifically with wheat at the lows that we've seen all year. So you take a stand. I'm already in it. I've got the 560, 580 call diagonal spread, November, October. So that one is currently a loser here. But 52 days, 30-point expected move. Maybe we get a little outside that to the upside if we recover here, but not looking great so far.
Yeah, soybeans is my biggest pain point in my portfolio right now. I had a put spread for 10.10, 10.30, and that's just blown through it. So not feeling good about that.
Lovely.
Yeah, these are ugly right now. I mean, wow. What can you say? The soybeans doesn't seem to have the vol the rest of them have, but maybe I could be convinced to do something in here. We'll see.
Even for just like a quick pullback, like if any of these revert to levels that we're seeing yesterday, it's still a nice trade. Like these are all getting pretty hammered here.
I mean, essentially you're saying this is kind of a seasonal thing and this isn't going to change probably anytime soon?
Yeah, I mean, there's Brazil's had a really good harvest with soybeans and other things, and China's not buying any U.S. products, so global ending stocks are kind of bloated. It's been a really good harvest year for the U.S. too, so there's going to be all this product stored that is going to soak up demand for quite a while. At the same time, when global economic activity drops a little bit, which is kind of what's happening, then you see less overall demand for U.S. exports, and we produce a lot more than we consume here. So you need that export market to really lift these prices.
Makes sense.
Just not happening.
Craziness. Well, thank you for the analysis. We are all long silver now.
Love it.
45.25 is my short put spread. Got in at 485. So it's just under a risk one to make one proposition, but seeing a little bounce, like Jamal said, already, which is nice.
Yeah, I still haven't gotten filled. I mean, this is it's ridiculous.
All right, popping over to the YouTube chat now. If you want to join us there, just pop over to Tasty Live. You can throw in your trade ideas, questions, all on the right-hand side chat. I saw something. Okay, so based on this, shutting down tends to be good for markets. Yeah, generally speaking. I think there could be differences. Like if we were in a high vol environment and the government shut down, maybe not. But for the most part, based on the numbers that we're seeing, and especially in the volatility environment we have now, status quo is kind of the idea. You can still see some shock movements in either direction, but we're to expect the similar drift that we've seen over the last couple months.
Yeah, and I mean, right now, government shutdown looks like 99% likely to happen. So if you were expecting a negative reaction, like a really big one to occur, it would probably be right now, leading up to it. It's not going to be all of a sudden overnight you wake up, you know, what happened is what you expected, and then the market sells off. I mean, that's possible, but kind of don't see it.
I tend to agree. I think, again, I just think there's an opportunity for like end of the month flows on a day like this. But at the same time, I think with that looming, maybe at the end of the day, people are like, oh my God, this is not going to happen. And this is not going to happen. And then like 25 and then 30 points down. And then, you know, like I could see that possibility too. We'll see though.
Yeah, some people in the YouTube chat also saying, like, if the government shuts down, should I buy some put spreads just in case something happens? You could if you think the market's going to sell off, but I would say just looking right now at the 99% probability that the government's shutting down, and then you look at tomorrow's implied volatility, there's nothing crazy that's projected. I think that is what I would look at. If we were to see a 20% IV for tomorrow and a 60-point expected move for tomorrow, that would make me lean more towards a short position.
Agreed.
But the market, as it stands, is basically ignoring the shutdown altogether. And you can see that with the VIX, which is up a little bit, but we're still at 16. And if you look at the VIX futures, they're actually down today. And we have steep contango between all three contracts that remain for the rest of the year. So I'm not projecting anything. I'm going to play for the opposite. I'm going to play for inside moves for the rest of the week, most likely, especially with October 2nd and 3rd. Looks like they're pricing in a little bit more premium, but we're not going to get numbers if the government shuts down. And if that is correct, the market has no number to react to. So I think it could be a sharp trade, but still trading small, keeping risk defined. So if it's a blowout loser, it's not going to matter.
Got somebody here asking about a TTD strangle. I paid attention to that name, actually.
I haven't heard that one in a while.
TTD. TTD. I like the idea. I don't know where you guys land on. So I'm one of the few around here who kind of trades earnings for moves, right? Like, and not in big ways. I think I shouldn't say that. You do too. You do diagonals and stuff. I do calendar calls. I typically don't sell many earnings at all. And I really don't like selling in this scenario where it's already a month out and it's an area where it has earnings, because you know earnings are going to build up. Historically, I know for Tasty, it doesn't really matter, right? Like, we just kind of sell whatever we see where IVR is high. I'm just curious where you guys land.
Yeah, in terms of selling premium, I think you can do it if you're just taking risk on one side. So if you're just selling a put or just selling a call, that's fine, because your delta move, if you get it, is going to pay you where it's not going to matter as much with the lack of volatility contraction like Jamal is saying. If you have risk on both sides, like if you sell a November strangle right now in TTD, you're just holding intrinsic value risk and you're not getting paid on this until earnings come out, because you can see there's a big jump in implied volatility from October to the end of October. It goes from 55-ish to 72%. So that tells you that the market is pricing in a binary event, which you see here, not confirmed yet. We're not seeing the bell in either direction, which is what you would see if it was confirmed, but projected to be in the November 7th weekly cycle based on the IV jump from 57% to 72. So if you sold this strangle, regardless of your strikes, this premium is going to stay bid until you get much closer to expiration. And you can still get paid a little bit on it. Like, you can make 50 cents, 40 cents, but you're putting up $1,000 in buying power. You have unlimited risk to make 40, 50 cents. I'm not really on board with that. But if you were bullish in a market like this, where we're at the bottom, and let's say you want to go to November and sell a put at 45 or 50 or whatever, and you want to get that extra premium that is priced in for earnings, that's a different story. Because if you get a 5-point rally, this 330 premium turns into $1.60. You can make $100, $150, whatever. So I think you have to be careful with risk on both sides, where you're playing for volatility contraction that's not going to happen until earnings. If you're directional, it's totally fine if you're comfortable with that risk.
Yeah, I couldn't have said it better myself. Exactly. That's kind of exactly how I feel. But yeah, I mean, you're just holding that position for a while, and meanwhile, we all know that it's building. Our volatility is going to build a little bit each day into those earnings. So the only time I'd say it's different is if you have a huge market event like April, right, where we dropped huge volatility. Even if you have earnings coming up, there's volatility on top of that volatility, and I think then you can kind of sell regardless of what's going on in that particular expiration. But in a normal time like this, pass. You know.
Yeah, you're kind of locking up capital. I mean, waiting for an event. So I mean, not a huge fan.
Yeah, and you know, don't get me wrong. If you want to do this for earnings, fine, but just wait until early November, or even once it's confirmed, look at it the same day. You can make your strikes equidistant. You can go to the delta you want, but throwing it on now, I think, is especially in a product that already has high implied volatility, 76%. In the November cycle, I think it's going to be a lot of risk for a lot of waiting until that happens.
Exactly. If you love it now, you'll definitely love it then.
Yeah, because the price will not be that different.
It really won't. But man, this thing has had some huge moves recently on earnings. It's not been good.
It's been crazy. Huge gaps. Saw a question on GLD asking if you, Jamal, are looking at calendar spreads.
Calendar spreads, GLD. No, so I'm out of GLD and silver right now. I have just literally been long. Honestly, the way I've expressed my opinion mostly in gold this year was GC options. When gold made its, I would say, the beginning of the month, and it made the big move there, I had a GC call spread. It was upside call spread. It ended up getting to the point where the notional value of the call spread was about basically 10% of my portfolio, and I was like, okay, I got to size down. And so I rolled some of those profits into GLD, and I basically did a zebra, which was fairly cheap using GLD options. That was the main way I like to play it. Look, I don't the reason is because, I mean, again, you see these moves of gold and silver, and that's exactly the way I play it. I play it for those type of moves, and you get rewarded in that way. It's basically kind of binary. You're either wrong or you're not. And the calendar call spreads, guys, I really like doing those for earnings because, again, they're upside on earnings. I'm looking for the vol crush along with the move, right? And so long as it doesn't completely take all of my options in the money, they usually work out pretty well. So that's why I like doing those for earnings. But for something like gold, for something like silver, in this particular environment, it's been call spreads. It's been zebras.
Yeah, I really like zebras in SLV, GLD, but and it's really because when you look at this product, all a zebra is just a stock rental position. It's the same as buying 100 shares and buying a put contract that protects your risk below the strike price. However, with a zebra, you're using all calls or all puts. You're paying the debit that's significantly less than if you were to buy 100 shares. So if you were to just get rid of all extrinsic value here in the October cycle, gold's a $353, GLD is a $353 product. That's 35 grand in risk and about 15, 16 grand in buying power requirement if you were to buy 100 shares in a margin account. Here, you're putting up a tenth of that, $1,500. You still have the 100 delta or close to it. And when you look at the risk profile, you're looking at basically up and to the right equivalent to shares, and you have this kind of stop loss embedded because you have this defined risk spread. So anytime a product that has 20% IV, anytime you look at a product that has 20% IV or less, you're going to be getting a ton of leverage by way of lack of debit paid here to get 100 deltas in that product because it's just cheap all around, relatively speaking. So, yeah, love the zebras. And to Jamal's point, when you do calendar spreads for earnings, you have that really high implied volatility in the weekly cycle that you're selling, so you can make money on both legs. You can get the move in your longer term option, you can get the full crush in your short, but with GLD lacking that binary event, you don't really have that much premium relative to the cost. If you were to like sell October and buy November, if you just look at the cost here, you're reducing cost by 20%, 30%, which isn't terrible. But if this was an earnings trade, it would be 50%.
Mm-hmm. SLV is number 8 in total options trade today, the whole entire market. They trade this thing heavy in here, man.
So we got the short put spread in there. But yeah, SLV is even more digestible than GLD at a $42 price point. And you can get into these zebras whether you're going to October or November for pennies on the dollar. $200 to get 100 deltas in silver. That's 5% of the notional value of the stock price. It's really, really low. Is Vecchio coming back? Yes, Vecchio is tending to his newborn child, which is why he is out.
What's the kid's name? I don't even remember. Yeah, I didn't think so. You know why? Because dudes don't remember dudes' kids' names in general. It just doesn't happen.
So Nick was single at a point in time, and someone was like, "Oh, I want to set him up with this girl," and this girl's like, "Before we go on a date, I need you to know these questions. Who did he vote for? Does he want kids?" And something else. I'm like, how am I supposed to know that? I've only known for 10 years. We don't talk about this.
Exactly. Thank you. Jesus Christ. You know how often my wife gets on me about like, oh, what is this? Your friend, what does he work? What does he do? I was like, I don't know. I don't ask these questions. Dudes don't ask these questions to dudes.
Or you go golfing for like 6 hours with your buddies, and then you get home and they're like, so how's everyone doing? They're like, they're good.
Yeah. They're fine. They're good. Yeah. Well, that's good.
Yeah, I know the name. I don't know if he announced it. If he wants us to.
You know why? Because dudes don't tell the other dudes the name of their kids. It just doesn't happen. That's why. And even if they do, dudes don't listen to other dudes that tell the other dudes the name of their kids.
With IV low, would you look to buy far out of the money puts in case the shutdown's legit? So this was the question we answered earlier, but I think we come back to this because just from a hedge perspective. So like if you have a bullish portfolio, now is the cheapest time to buy hedges to the downside, whether it's a naked put or diagonal spread or put calendar, simply because market's near all-time highs, volatility is low, and you're looking at sub 20% IV in SPY. QQQ is more expensive, but you're still at 20% there. So depending on the market, I mean, if you wanted to inventory short delta with a long put contract, going farther out in time is what I would do. But yeah, I mean, it's totally like if you're buying a diagonal spread, like a long-term diagonal spread, or even a naked option, you're not playing for this thing to go in the money and hold it all the way to expiration. You're just playing for 1 day or 2 days in a row of big selling, and that's when you take it off. Like the market, the way the market's moving now is we see V bottoms all the time. The only time we see sustained downside moves is when we see a seismic shift in the volatility structure, and we haven't seen that. Even into the move a couple weeks ago, or last week, I guess, we had this 2-day sell-off that bottomed out and it got bought up. Volatility basically didn't move into these 3 days. So we kind of ignored it as a signal for more to come. But yeah, when the market's at highs, when volatility is low, if you're trying to throw on some downside hedges to hedge your bullish portfolio, haven't had much of a cheaper time to do it.
It's actually true. I was looking at the skew index just now, and you can see that that's kind of turning to the downside. I mean, if there's anything, and I don't think it's as much of a factor maybe over the last couple of trading days. I would say early last week it was a huge factor, but I feel like the upside skew in the market is kind of calming down some. We obviously know that was a big thing, especially with names of a certain ilk. But now it's you're right. I think it's kind of cheap to do downside if you're so inclined. If you want to buy puts, this is a cheap time to do it. And this is also when you get lulled into doing it, and the market ends up bouncing. And yeah, exactly. But it's there. It's definitely there to be had if you want.
I mean, Nvidia's making a break above its topside range from August right now. So I'm wondering if that's going to hold really low IV.
I'm long this thing long term. I'm always rooting for this name. I mean, seriously. Well, this is on top of the little bit of a core weave move, right? Like some of that today. I mean, the AI thing's not going anywhere, guys. I mean, let's be real.
Yeah, and I was talking about this with Overtime, but I think the most important audio clip that I heard was with the Zuck, the one only Zuck, saying he's more than willing to overspend like $100 billion to make sure that Meta is at the forefront of AI, which tells you everything you need to know.
Right.
If they're willing to overspend to make sure that because that's how big of an opportunity they see that this is, it's just more narrative of, regardless of what product you're looking at, I think you're going to see a lot of growth in this sector. And it's still early, very, very much like crypto. It's still early. Like, we don't really know. We can visualize now, like, how this might play into our everyday lives, but we may have no idea.
This Corey name is kind of fascinating to me, and I really don't fawn over names too often, but this one's really interesting. And you know what's funny? I was just looking up the background. I think it was just a few days ago, I was talking about, it was during First Call, and we were talking about, the Ion Qs of the world and the cloud computing names and how they all move as a group, and we've seen different names move as a group. And I mentioned in 2017, like the crypto names, right? When everybody was saying they had crypto in their name, these guys did that. Yeah. So if you look them up in 2017, they were a crypto company. That's literally what they were. They even had it in their name. They changed their name. Now they do AI stuff. Boom, company comes out public, and this is where it is now. So kind of interesting.
Yeah, and this has been a fun one. I mean, sub 100% IV, but we've been trading this. I think I did a butterfly in here. Yeah, or no, diagonal spread. But I've been doing butterflies in here. When you have this 100% IV and you get these high flyers that are up 16, 17 points, down 17 points day to day, 10% moves day to day, you can get into pretty wide butterflies that aren't that expensive. And some of these I was able to get a wider debit portion than the credit portion. So doing, like, just an example, like a 140, 130, and then buying risk here to just define the risk. And you can see, you could do like a 10 by 5 and see at expiration, here we go. No downside risk, $700 in max profit to the downside, $300 debit. That's at expiration, you have $300 of risk, but near term, if you look at the Theo, you can see it's not going to come into play unless you get a seismic rip to the upside. So these have been kind of fun. I think these are reserved for these super high IV products that do move a lot, but 17 days to go, if you get a weak pass and a downside move, this will be a nice trade. Speaking of downside moves, Oracle, crapping the bed, heading back to the original move post-earnings release at 273. Yeah, this one was kind of crazy. All of a sudden, Oracle was a meme stock for a couple weeks. Coming back down to reality here at 276. But, yeah, I mean, this gap up was nuts. Sold off, regained it. Now we've sold off below the bottom of it. Do we think we are seeing a gap fill to the downside back to 240 to 230-ish?
That seemed if this were what's Oracle's market cap? I mean, if this were a smaller market cap name, I would say 100% for sure without question. Because it's Oracle, I don't know if it completely fills it. I would. I mean, I might be talking my book a little bit too. I am short strangling here, but I don't know. That's what I'm playing for. That's the reason why I am a short strangling here, right? Because it is Oracle. If this were some much more smaller market cap name, I'd be a lot more nervous with Oracle. I know it's had a huge move recently, but it's pulling off some of that move, and I think it starts to calm down. But that's just what I think.
Yeah, I have I put on a call calendar spread there last week. So 5 days in, it's not moving that dramatically given the size of this downside move, and the 320 short call sold that for $700 of raw value. It's still trading for 260. So I've captured more than 50%, but I'm surprised to see this still elevated at 260. I would have expected to see that come in way more given the fact that it's 50 points out of the money with 2 weeks to go. But that's just the nature of the implied volatility here. 25-point expected move in either direction, which is almost 10% of the stock price over the next 2 weeks. So there's still plenty of implied volatility here, but I would say given the moves that we're seeing, the realized volatility is outpacing that, at least right now.
Yep.
So that basically opens the book for anything. If you want to take a directional stance with a debit trade, if you want to sell this implied volatility thinking what kind of channel and get that volatility across, you could do that. But yeah, it'll be interesting to see what happens here.
Yeah, I mean, I think if you look like a good comparison is looking at Oracle and looking at Oklo. And I actually have strangles on in both of them, and the Oklo one has worked out better. And honestly, I'm probably, even though it's just 30 IVR, it's still above 30. I'm going to close the Oklo today. That one has given me money. That one's worked out. But this is a much smaller cap name, and this downfall could be a hell of a lot harder than Oracle. So I'm closing this one today. I've been skating on the edge. I've been thinking about it some nights. I mean, some nights at home, sitting on the couch, like, damn, I should have closed that Oklo today. I was definitely thinking about it last night, and I was like, oh, I should have closed that one. I'm going to wake up tomorrow. It's going to be down $20. It's only down $5. I think I'm lucky. I've skated long enough, especially with this, government shutdown / NFP. Like, I'm gonna close this and maybe another strangle. But I'm fine with the Oracle strangle. I think that's going to be okay. This is a massive name. It was a massive move recently. There's no question about it. But, I mean, to say, Oracle's not a meme stock, bro. Like, it's a $784 billion stock.
Yeah. Yeah, Oklo finally came back down a little bit, channeling there. Still a lot of IV. You could see this IV coming even more.
I'm not going to push it, though.
Is 30.
I'm not going to push it. No, I think I've skated long enough. I'm not going to push it.
I mean,
and it has
this
the earnings.
One's gone bonkers this year. It's pretty crazy.
Yeah. I mean, it's tripled in price since June. No, more than tripled.
Crazy.
Tripled now from the sell-off.
Yeah.
Craziness. Question for the Corn Man. When is moon time from the one and only Stock Messiah? Next year?
Yeah, I don't know. This one's hard just because the export market's not there. I think moon time is when they make a deal and Trump says China's agreed to buy how many ever 1,000 metric tons of corn, and they come back into the market. That'll alleviate a lot of fear, and I think that's your best chance for a big moon move.
Yeah, that would certainly help.
That would be wild, right? A copper-like move in corn? Wow.
That'd be insane. Corn? Does an at-the-money back ratio put on the put side make sense for Oracle here? If you want to be bearish, you could. So a zebra in Oracle, it's still going to be pretty costly. You have to put up like $3,000 in buying power to get rid of most extrinsic value. So not a cheap trade by all means, but I think I would just go, if I was bearish Oracle, I would just do a diagonal spread as opposed to a zebra. Because you can see there's a vol, there's still a higher vol in October relative to November. You could just do like an at the money, like long the 270 in November, short the 260 or 250 even, or 255 in October, and you're gonna get a downside risk profile that's nice, close to risk one to make one, especially if you go 20 points wide or 15 points wide. But yeah, I think it's fine if you're bearish. Way to define risk and get that cheaper than a zebra setup.
Zebra. Sort of like cheaper to keeper. Cheaper than a zebra.
Cheaper than a zebra. Should make a bump.
Cheaper than a zebra. Ooh,
yeah. Let's see. Open. Upside trade. Open door.
This is like a robo? I mean, I don't want to say robo, but it's a what am I? Help me out here. What is it again? Open. It's a mortgage company, right? Like something like that. Like it does mortgages or whatever.
Yeah, residential real estate.
Right. Yeah. So this one took off in the wake of the Fed meeting and stuff like that, coming into it, and it's kind of slowed down. It's kind of gotten quiet.
Yeah, I mean, this is just another meme stock in my mind. But yeah, if you want to take a shot, you certainly could. I mean, implied volatility here, it's an $8 stock. Implied volatility for November's plus or minus 3 points. The The nice thing about these stocks is if it does move in an aggressive way, you will likely see implied volatility increase. So I like upside plays here, calendar spreads, straight up long calls, diagonal spreads, but gotta be willing to lose it all, because this thing could just drop back down to 4 and you'd be done. But.
Well said. In the long-term account, I'm actually long the 10s, the 11s, and the 12s in October.
Yeah.
But it's pretty cheap. I mean, cheap like as far as like premium. It's not a ton of premium for me.
Mm-hmm. A couple minutes left here. Any final thoughts before we hit the road here? Ethereum, Bitcoin selling off. The ags are the biggest movers to the downside in the futures world. Silver is moving in the opposite direction of gold, which is interesting. We got long silver from this show, a couple short put spreads. Oh, Nike earnings after the close.
Oh, yeah.
Let's hit on that real quick. So Nike, implied volatility of 5 points, plus or minus for the next 3 days. $70 stock price. So not too shabby in terms of implied volatility. It's like 8%-ish. Do we do something here? Do we dare buy the dip in Nike?
It is quite the task. I mean, we talk about gap fills. I mean, it's sitting right there, right? I know it's just below, but it is sitting right there. What's the good that Nike could say?
Not much. I mean, Nike sources almost everything from overseas that they're getting tariffed heavily. You saw this rally that could not sustain. We've had, I want to say, like 20 red days versus 4 green days in the last month and a half. And to your point, Jamal, if you get a sell-off here, I think you could see a big gap down, considering the gap up that we're kind of sitting at that range. We're like literally at the bottom of this gap fill. I'm going to place a downside trade.
You going downside?
I'm going down.
Really?
Going down.
I don't know. I don't have an opinion. I haven't thought about it yet.
It's just so cheap.
I'm curious what the whole just sentiment is, though. Like, is it really? It's probably it's negative sentiment, right?
It can't be positive.
It can't.
And the thing I like about when you're close to this gap level, you get that like liquidity zone that is gone,
Exactly.
so you can make a really quick move through it if you get a negative earnings report.
Yeah, I agree. I think it's going quick one way or the other. I just don't know what I feel yet.
Yeah, I'm gonna buy the December put, 70 strike put.
Nice.
December is pretty far out, but it's only $500 if you buy the at the money 70 strike. And I'm gonna go actually further than the 65. So the 65 is a dollar premium. I want to go a little bit further out, give up some of that premium to get more profit potential. So I'm gonna sell the 63 for 60 cents in the weekly cycle. So total package is $500. And if we get a downside move, this can appreciate to like a $250-ish winner.
I like that, Mikey. I like that.
Yeah. $500, downside move, instantly filled. Oh, God.
You know what that means.
Yeah.
You know what to do.
We'll see what happens. But that's it. It's 12 o'clock. Thanks for tuning in, everyone. If you want to shoot us a note on Twitter, I'm at Trader Mikey B. Jamal's at Jamal Chandler. Thomas is at FX Westwater. Stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What is going on, everybody, and welcome back to Risk and Reward. Today's Tuesday. We got a pretty choppy market. We had some rips to the highs and now some sell-offs down to the lows for the day. So we'll talk all about that. We're going to continue our conversation into futures. We're going to touch on a little bit of psychology, and then we're going to get into some of the charts on some of the trades that we took today. Some of the losses, some of the wins, talk all about it, and some of the new positions that we have on for the day. But how are we doing so far, guys?
I'm doing good. Yeah, lots of interesting stuff today. We had all kinds of movers. We got Wolf Speed. I know is kind of the talk of the town right now. Flying. Capital One died for no reason. I have a trade on that one that we'll get into here in a little bit. But yeah, holistically feeling good. Got my comfy work shirt on, which is always good. The second this thing is clean, I wear it.
That color always hits though.
It's nice. I don't love the fit like around the arms, but it's nice. I like it. Buy some Tasty Trade merch. This wasn't supposed to be propaganda, but it is.
No, I like the color. It really stands out. It's like a nice deep. I'm a little colorblind. It's like a red orange ish.
It's not like it could be redder is the thing. Like it's not like overbearingly crazy red. It's just like very red, but not too red. You know what I'm saying? So it's kind of how I like the portfolio to look.
100%.
Very red, but not too red.
Not too red. I like that.
That's how it's looking today, I'll tell you what.
Oh, I like that. What's going on, guys? Bob Salamikos, Sunflower RC. No, we're excited to be here, right, guys? We're always looking forward to being here during noon and seeing what's going on in the markets. As we head into that, it's a pretty unique time slot, so shout out to Chris for letting us fill in for the time being. But we can just jump into some of the slides. I know we're getting into some of the futures products. Gus is wearing a red shirt to support the Reds. Let's go. Is that true?
I cannot say that is true, but I will be breaking out my Cincinnati Reds apparel tomorrow, probably. Whether that game, regardless, it's going to be lose and we go home, or win and we advance. So that's the big day. That's when I'll break out the red stuff. But the Reds have been on my mind all day. Shout out to anybody from Detroit or Cleveland. I know that game is first pitch right about now. Good luck to both of you. May the better team win. Detroit better not lose that Scooble game, though. It's bad news if they do. Hey, anyway, tell us about being rule governed.
Well, you tried to brush over Cincinnati. We got to touch on Cincinnati for a quick second. Cincinnati had a game this last weekend. They played, who was it? The Broncos, Denver Broncos, right?
You're talking Cincinnati football.
Cincinnati football now. Now, since the Cincinnati Bengals, we got our first dub. Look, I just got to relish in this just a little bit because we've been struggling, and that might be one of our only wins for the season.
Man, the Broncos are good this year. They're going to be good.
You think so?
Yeah.
You believe in Bo Nix?
Oh, yeah. I believe in Bo Nix. I think they might have the best defense in the NFL. Broncos going to be good.
Yo.
Yeah.
Coming from Gus, I feel really good about this season. Honestly, like coming
that's not a hot take. I'm far from the only person in the world saying this. People are high on the Broncos.
All right.
Yeah. Broncos looking good. Bengals, our season is over. We should trade for Jameis Winston and just have some fun. Is my take.
So let's call it wraps. No, I mean, as we get into today, it's going to be a continuation off of all the futures conversations we've been having over the last couple weeks. And today we're going to talk a little bit about being rule governed, because this is going to play into some of the topics when we get into the charts here in a little bit. And this is a quote from one of my favorite books called The Daily Trading Coach. And again, this topic is...
This is why you had that book open?
It is.
Oh my gosh. Errol, I didn't ask because I didn't want to interrupt your workflow. Errol whipped out a book, a real paper book today while he was writing these slides, and I was like, man, this guy's getting deep. He whipped out a book. Anyway, go on.
Yeah. One of my favorite books. Not endorsed, whatever, but I'm telling you, I think trading psychology honestly can be applied to almost every realm. So that's why I find it fascinating. But becoming rule governed, one of the major goals of coaching yourself is to turn positive trading behaviors into habit patterns. Again, this is going to relate to what we're getting into today. But this is crucially important. Because you don't want to... I'm sorry, I lost my line. You don't want to have to think and make yourself do the right things each time opportunity occurs. Rather, you want to do the right things automatically. Effort and energy you spend thinking about what to do and trying to make yourself do is taken away from the market themselves. When you can do the right things automatically, your concentration can be wholly focused on what you're doing. This is essential if you're going to be sensitive to subtle market shifts in supply and demand. We talk a lot about supply and demand really in terms of what value looks like, but it really is supply and demand. That's what makes up a market. That's what moves any type of market for that matter. Now, rules are the bridge between new behavior patterns and acquired habits. Children are not born with a developed sense of ethics and responsibility. They're taught by rules, by parents, and teachers that are eventually internalized. Some of the internalization occurs by observing role models over time. Much of its results from turning the desired behaviors into explicit rules that can be rehearsed. Such mental rehearsal allows people to keep old behavioral patterns in check and make conscious efforts to engage in new ones. So I mean, just right off the bat, you can kind of see how many realms this kind of can translate into, right?
No, yeah, absolutely. I mean, I think, well, yeah, I mean, there's all types of directions we can go. If you just hone in on the one sentence, children are not born with a developed sense of ethics and responsibility. That's a whole 4-hour conversation we can have there.
But what's interesting, though, on that point is some people don't recognize, I do think your environment that you grow up in and how you're conditioned and kind of quote-unquote programmed has a lot to do with your responses to situations in everyday life, and I think has a lot to do with people's responses even in the market. I think based off of people's certain experiences in life, they view risk differently. Risk feels differently, which will change the whole.
Certainly. I mean, something I was an econ major, so to delve into some economics, something you talk about all the time is risk propensity and how much risk propensity different people have, and that will cause them to do different things with their money and in their economic life. But we all do have inherently different senses of risk propensity. I find myself to be a pretty risk-seeking individual, as I think most of us would probably say here, as we're all traders. But there's plenty of people who are very risk-averse, and I mean, there's risk-averse, won't trade options. There's risk-averse, won't trade, only invest. There's risk-averse, won't invest, only CDs. Like, you can go very deep into risk aversion as it pertains. Jared, did I do my homework and listen to some TLC? This is what made me laugh in the middle of that.
I'm gonna skip this one.
I did. I listened to No Scrubs, and I realized I had definitely heard it before. And then I also listened to Creep, not to be confused with Creep by Radiohead. I was kind of like, is this? It's not. I didn't really think that. I knew that Creep was by Radiohead, but I was like, is this a cover or what's going on? Different song. And then Waterfalls. So yeah, I did get my TLC is in the dome.
I didn't get any TLC.
I cannot say I loved them. But I did. I gave it. I listened to their 3 top songs.
I'm actually gonna
gave it its fair chance.
Hey, look.
And some never developed them. That's true too. Somebody said FAFO algorithm educates you quickly. That's also true.
I'm gonna listen to some TLC. Is there any top songs you listen to, or did you just?
Why are you asking me? I mean, ask the people.
You did your homework, so
I just listened to their top 3 by plays on YouTube. If production wants to chime in right now, or if chat wants to tell us the TLC songs we should be listening to, I would be open to that.
There we go. Another reminder. TLC.
You sent a reminder on your phone?
TLC listen party. There we go. You're invited. Everybody's invited. TLC listen party.
It was so funny last night. I was sitting on my couch for like 15 minutes until the first Monday Night Football game was about to start, and I was like, just kind of bored, like looking for something to do with myself until the game started, and I was like, oh, let me listen to some TLC. This is the window.
Yeah.
And it killed the time.
This is the time for some TLC. No, we can go ahead and jump to the next slide here.
Oh.
Chasing Waterfalls. That sounds like a very popular song. It just rings a bell.
I think that's different.
Okay. If that was the song title of TLC, maybe it's not.
Am I tripping? Anyways, we'll circle back on the TLC topic.
Cool. I know we need to talk about some J. Cole. All right, let's get some real music in the house. No, I'm just kidding. Live market application. Wanted to bring this slide back up. We already went over it over the last couple weeks. This really speaks to what the whole market's purpose is.
I'm totally tripping. It is the same song.
It is the same?
Yes.
Okay. Now, AMT explains that the market is always constantly seeking fair value, so I wanted to bring this visual up so that we can tie in some of these concepts once we get back into the charts. We took a few trades today. Some of them were around balance. Some of them were imbalance type, directional type moves that we were looking to capture. And today we took 6 scalps. So let's think of the why behind each trade. And we can go ahead and jump over to the TradingView platform over here so we can see some of these charts. But I think those visual concepts kind of like dumb it down a lot. Like visually, you might look at something and be like, it can't be this simple. And you're 100% right. It isn't that simple. So I want to take those ideas and, again, apply them to real live applications, like today, for example. Now, let me catch back up on some of this water and we'll
Errol needs a blow. Yeah, I was surprised to unless I just missed them. I didn't see your morning 10 trades in the follow page like I usually do.
Oh no, it wasn't 10. I think it was 6. I think it might have been 5 or 6. No, but we got all the ones from yesterday up, all the ones from today up. And let's just go back to the whole idea, just even getting into the week, because some of the trades idea played out into some of the same levels that we were looking at from yesterday. So just starting yesterday, this was one of the main value areas we were looking at. We talked about how we get this. If I zoom out over here, I think we have, something looks like it's on the charts. Yeah, let me clean that up. Go read it the 5-minute. So here come Monday morning, we get a breakout into the lower level of this into the lower end of value up here. We consolidate for a little bit, and the market trades back down to the next level of value. And this is when we were live and we were talking about, okay, we traded down to the next level of value. Now we were in a position of, is the market, or how long is the market going to trade within this level of value? And whenever the market leaves this level of value, are we going to go and seek a level of value to the upside, or are we going to go and seek another level to the downside? So with that being said, we got a lot of response off this value area high yesterday, so I was comfortable getting in with a short. I don't like to swing futures contracts at all, but this is a position where I was like, you know what, I'll take a very small trade. It'll be one contract, and I'm going to put my stop loss in. So you can see overnight, we came back, it stopped me out. But this was a level that we were really fond of, I guess you could say. We sell off, come back. During the open, we break out to the value area high. We look to get short. So we got a couple shorts on. We're getting a lot of selling opportunity, and this is what the mean reversion type trades is going to look like. Because if we know that this is going to be our level of value, anything that's going too far outside of that is going to be our mean, right? So we're looking to catch the trade opportunities when we're extended away from the mean, because we believe we're in a state of balance. So it's kind of like that rubber band effect, and you can keep trading that rubber band effect until it snaps.
Yes, and everybody recall the 67, 95, 99 rule that we showed off the other day with the standard deviations in a normal distribution, which is kind of what we're alluding to here. When you find yourself in the 10% tail of the distribution, you should take trades that are going to pull you back towards the other 90%.
Exactly. And it's like when you take because look, if you think about it too, it can be pretty nerve-wracking. Like these are straight green, 10 consecutive green candles. It's like, how do you just get short like that? Like, how do you have the confidence to get short into strength like that? And it's because we're just trading the data, right? We know that 68 point whatever percent, we know that 70% of the trading activity is going to occur within the value area. So we can trade the value area until proven otherwise. Same exact thought process, right? Like we talked about before.
Yeah, and I mean, yes, and to that point, I mean, the until proven otherwise mantra that I keep throwing around with the broader market and why I'm so deeply long just for months and months and months now applies absolutely in the micro here. It's the exact same situation, just where I'm taught my until proven otherwise might be 10 months, yours might be 10 minutes.
But you are leaning on you're leaning on the statistics, that upwards drift, right?
Yes, so absolutely.
It's leaning in your favor.
Yeah, and when I'm proven otherwise, when there is some type of sell-off in the broader S&P 500 that looks like this, but on a daily chart, that's proven otherwise, and I would reposition accordingly.
Exactly, and you would just have to manage your position.
Yeah,
because I've gotten a comment before. Someone was like, "Yeah, what if it doesn't work? Well, what if the next time it doesn't work?" Well, dang, just like every other strategy, I guess I got to manage the position, right? And that's why it's so important to make sure you're sized in proportionally to your trades, because it doesn't matter if you have a 99% conviction on this trade. If you oversize, and that's the one trade, it's going to blow everything, and it'll be a snowball effect.
Absolutely, and you're never, ever, ever going to win all or even close to all of your trades. Yeah. If you could win all your trades, if I could win all my trades, I'd be on a beach somewhere right now. It's like
100%.
So, and all of us would. You'd be Warren Buffett more or less. So yeah, I mean, there's no one, and he loses trades too. So there's just no one. You're never gonna win every single trade, and knowing when to roll, when to just cut your losses, the best way to attack these things is an incredibly vital skill.
Good point.
And goes back to the emotional quote that we were looking at earlier as well. It needs to be systematic. You can't be saying, "Oh, should I exit? Is this the time to exit?" Which is something I absolutely do all the time. I will add, but
oh wow, you're human, bro. Just like we're all human.
Yeah, exactly. But in a perfect world, you would have your everything so outlined at the time of entering the trade that it is never a question whether you exit. It is simply, have I hit the point to exit yet or not?
Right. 100%.
Where are the emojis?
Where are the emojis? You came just in time, Grumpy Mike.
Flip a coin. Heads go long, tails go short. It's easy. If you just do that with defined risk trades that are like 70% pop, it'd probably be okay.
Hey, you could do that. You can bang that out. What was I going to get? Oh, yeah. So I remember a few years ago, it might have been like 5 years ago now. I remember Terrell, my brother, he had asked me, he goes, "I wonder if there's a way you could get like win every trade." And I was like, bro, that language right there, right off the bat, shows a huge lack of understanding of the market, right, and how the market goes. Because I mean, I remember thinking that just when I first got into the market, like, I wonder if there's a way. And it's like the idea of having the ability to get direction right in the market, I think, is just the wrong way to even look at the market and what the objective here is.
Well, and it's so funny because the risk and reward trade-off is just so, but it like works out like that because there are trades that will win 99% of the time, but the 1% of the time it loses, it's going to hurt you bad. 100%. It's going to hurt you pretty much bad enough that it cancels out the other 99. Yeah. So it's, you know, there are ways that you could win that often, but it's in order to win that often, your losses are going to have to be proportionate to that. I mean, in a perfect world, to me, I would like to just win 52% of my trades and have all of them be exactly equal size. I mean, that's like perfect. That's what you got to do. But obviously, we don't live in a perfect world. I'm here for the emoji, says Mike. Can we give Mike an emoji? What do we got going on down here? Can we get like a basketball hoop at the bottom of where we are right now?
Absolutely. Absolutely. Of course. You sit down here?
I was just saying, like, so that the current share price is like falling into the,
a basketball hoop.
Yeah, like a hoop.
Say less. What a good idea. What a good idea, because it's a bucket. That's green.
Yeah, and if it rims out, you know.
Yo, I don't know if I can actually find the.
Is there a basketball hoop? I actually don't know that there is.
I could have swore there was. I could have swore.
If its heads go long and tails go short, when do you sell a strangle? Mike said, when you can't find the coin. I got hosed on Wolf. The bankruptcy share split sucks. Hopefully there will be a better payback in the future. Yeah, Wolf. Let me tell you guys, I am pissed about Wolf because maybe 3 months ago, I read a very compelling article about Wolfspeed that said it was a very likely short squeeze candidate. And so it was at like $1.30, and I bought $5 calls that expired at the end of August, and they expired worthless. And now here we are. I wish I didn't even know.
I
wish no one told me that Wolf even did this, because now I have to live with the fact that I exited a month before this happened. I would be bag holding $5 calls right now that were like 30 cents.
30 cents, bro.
It was something like that.
30 cents.
I had like 5 of them. I was like, oh, it's cheap. I'll load a few of these, and if it blows up, I'll be rich. And I was right, just on the wrong timeline. You hear short squeeze, which that's not even what happened. Ultimately, that's not even what wound up happening.
That being said, I can't find I was even looking for the magnet. I can't even find the magnet. So for the finish line, I just got a flag.
All right.
That's gonna represent when we're gonna be looking to get out of this trade. But first, let's go ahead and touch on some of these trades so we know the logic behind them. So overnight, we were swinging a micro, took a short up here, managed the risk over here, which.
Yeah, exactly, Anthony. That's what I was alluding to there at the end. Yeah, as it's not even, my thesis wasn't even correct. It still would have been validated so hard had I had another month on those contracts. But it didn't even wind up being the short squeeze or any short squeeze that made it fly up.
Bob makes such a good point. If you're right at the wrong time, then you are wrong 1,000%. And I think
Google Glass.
Perfect example. Wait, real quick. Google Glass came back around, right?
Yeah, they're partnering with Warby Parker now, and they're making ones that actually look like glasses,
so
to compete with Meta glasses. But it's not you don't look like a spy kid.
They're learning from their mistakes.
They are. Okay. They are. I also, this is sort of a little tangent, I guess, but did you know that Snapchat has AR glasses?
I had no idea.
Snapchat spectacles?
I had no idea, but it doesn't surprise me to the slightest.
They have had these things like since before everybody. Like they launched in 2015 or 2016 or something, and they've just been around. They're on Gen 5 right now. And what horrible marketing by Snapchat. How do I not know that product exists? How did you beat Meta to the punch by 6 years and just lose? What the heck? They've always looked kind of funky. Like they're not perfect glasses looking the way the Meta glasses are, but yeah, Snapchat spectacles are a thing that exists that I was not.
You seen the reviews from them? They got good feedback?
Yeah, actually. I was reading some Reddit threads, and people like them. They say that they're bulky and they're ugly, which both things are true. But the functionality apparently is pretty strong, and actually went down a whole Reddit rabbit hole of people who use them to program their own AR games. I guess they're very conducive to that. But yeah, Snapchat spectacles, product that exists. I still have the original Google Glass I got from work. Scott, that's cool as fuck. Apologies. I got a reverse. Wait, what? Oh, it's basically a reverse split. Yeah. The bankruptcy shares. I know there was all kinds of back end issues to people who were short Wolf as well. It's like they got assigned like negative a bunch of shares or something like that. I don't know exactly what the situation was there. But if anybody was short Wolf and got assigned the old shares, I think that's what it was. I don't know. If anybody has any clarity on this situation that I'm talking about, drop it in the chat because I know the baseline. I derailed the show, said Mike with the emojis. A little bit. Oh, you're drawing it in now?
Oh, yeah.
There we go. That's beautiful.
We're actually almost at the profit target. I'm not even going to lie. We got so lucky.
Is that your profit target? Is the finish line?
It is.
Okay. Yeah. Nice.
I'm actually a little bit torn right now. So the whole idea was I really did want to swing short on this opportunity. And the reason for that is because this is a very interesting level. And I'm curious to see if you guys agree. But I'm going to take this fixed range volume profile. I'm going to take it from this high that we put in. Whoops. Let me restart that. Take this fixed range volume profile. I'm going to put it here. And you can see where most of this trading activity occurred. Right, and you can see where the point of control is. The point of control is going to be the high volume node that had the most trading activity that occurred at that price level. So the high volume node, that's the highest out of all of them, will be the POC, not the people of color, but the point of control. And that's why these price levels are really attractive. And that's how we had a good understanding that something was going to happen here. So it's like the short is working out really well, but it was more so we knew something would probably happen, so we were prepared to take the loss. But that's really the whole reason for that. And the reason why points like this are important is because if that's where the most trading activity occurred, that's the only area, or that's that price range where big money banks, institutions, they need a ton of liquidity to fill their orders. And that's the only opportunity where they're going to be able to do that. Because if they're trading in areas where there's low volume, they're just not going to be able to fill all of their orders, or they're going to move price a lot, or they're going to get a bad fill on their average order entry. So that's why those prices were a little bit more attractive, because if some type of large sum of money was going to influence, I would say influence price in some manner, it would be at those price levels where they actually have the ability to even influence price. Not to say that they will, but we can gauge where they would be most likely to do so. So it was helpful to think about it in that way.
Yeah, absolutely.
Now, we're going to put in a, this is why it's a very mentally difficult spot here now that we're thinking about live, because we were targeting this level to get short off of. That's why we targeted this level not once, not twice, not 3 times, but literally 4 times. We got 3 short opportunities today, which all sold off very heavily from that level. We took a couple other trades that were paper cuts that dug into the profit of those trades a little bit. But what's difficult right now is because I have a little bit more of a bias to seeing a little bit more downside, like maybe down to these levels, it's a difficult spot to be in because we've already caught what? Our entry was 24,841. We've already caught over 100 points, but we believe there's still more room to the downside. The thing that we want to now avoid in a position like this is the market retracing back to our levels, either getting stopped out and then going back down there, because if that happens, we're going to have to stop out and then we can re-enter to get short, and it's like, how can you sit through a trade where 100 points gets ran back on you? That's not good decision making. If you're up 100 points and it's running back on you 100 points. So it's like those different scenarios is where it can be tough, because if I had a couple more contracts on, as we sell off down to this level, I would just take a contract off and I'd be fine with getting stopped out on the next one to potentially catch another leg down. So sometimes you get in those unique positions, and it's just about using that logic and reason to come to certain conclusions. But that's kind of where we're at, and that's most of the price action that we got for today.
Yeah, Anthony and George in chat, to your point, I see what you're saying now. I still would have lost on the $5 call. So honestly, that just makes me feel a hell of a lot better. I appreciate the clarification on that from you guys. I called Schwab, and they didn't even know the details. The Wolf deal just said TBD. Schwab told me one share before 926 is like 0.008 of these new shares. Yeah. I'm
what company is that for?
That's for Wolfspeed. Oh. The ticker is Wolf. And Ryan says, how do I get a volume chart like that? Errol, show the man.
All right, let's get it. Let me clean this up a little bit again. I hate messy charts. I hate a messy desk. Yo, shout out to Sahil. He brought me I noticed Sahil's computer is literally spotless all of the time. And then I look at my grubby computer and I'm like, yo, what is he doing? And then I seen him whip out the special spray and microfiber cloth, and I'm like, yo, bro, you still got that in your bag? Because I need it.
I don't know what it is, but man, I am terrible about cleaning my laptop screens and my windshield. Like, I don't know.
Your windshield on your car?
Yeah, on my car. Like, things like that, like anything like that, I look through it. It's like I don't see it at all. Like, I don't understand. But yeah, like every time my personal laptop at home, especially, like Chase is always giving me a hard time because the screen is like, I mean, it's not gross, but it's just like got some like finger smudges and shit on there, and yeah, and it's I get a hard time about it. But yeah, I don't know why I am so bad at just looking through dirtiness on things like that.
I didn't even realize.
I'm a clean guy. My whole everything. I keep everything very clean, but it's just glass like that. It doesn't process.
Don't let Gus take your picture. Don't let Gus take your pictures. You're gonna come back. It's gonna be just a fog. I didn't even see it.
Yeah, right. No, I do. When I take pictures, I like always am careful to like kind of wipe the thing off real quick. Michael, yes, Vecchio's still here. He is on paternity leave. He will be back before too long.
Chris had a baby.
Is value area same as Wyckoff accumulation/distribution? Do you know the answer to that
Is
question?
value area same as Wyckoff? Yes, 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 and yes. Yes, and if you hear that rebranded, if you hear ICT, whatever future strategy, everything for the most part is built off of that, yes.
Great question, Premium Decay.
Yes.
Premium Decay, not to be confused with Theta Trader, to two different people.
Seeing that word Wyckoff just got me a little excited.
Yeah, Wyckoff, I suppose.
Yeah.
Yeah, I don't even know how to pronounce it.
I think Wyckoff is, yeah, we'll get back into that another time. And then, yeah, again, once again, the value area is just derived from the volume profile, which the volume profile is just a distribution of volume. And then we can visually see where value is. And we don't have to wrestle with our opinion on what value is. We can just let the market determine where did the market find the most interest, and that's where the market found, quote unquote value, because auction market theory lets us know the market is constantly seeking fair value. That's the market's job all the time. So whenever we're trading within a value area, which is a balanced range, a balanced market, it's just because buyers and sellers right now at the time being agree on price. So one side of the market is not being more aggressive than the other, but whenever the buyers start to get more aggressive or the sellers start to get more aggressive, that's where we shift out of balance and into the state of imbalance, which if you're a more seasoned trader, you might hear the term imbalance as price discovery. That's all imbalance is. It's just price discovery. There's so many terms, so many acronyms to go with a lot of the same concepts that we see nowadays, but it's not to be confused. Not to be confused. We're looking to get out of this trade here. I know I'm going to punch myself if this trade reverses without me thinking about taking profit. And also, I know that's good habits. I want to hold it for more downside because I believe the market has more potential downside to put in, because I think eventually we're going to come down here and take out these lows eventually. But I would be an idiot to not start thinking about covering this trade, so... The thing is to sometimes it could just be tough to just trade your process, trade the mechanics, forget about the dollar, forget about the money. Like if the dollar amount wasn't there, what would be the correct choice to make, right now without any of the dollar?
And that's always the correct way to think about it, because ultimately the only reason we get emotional about trading is because there are dollars involved. I mean, that's really, it's just a different way to kind of say.
I'm colorblind.
Take the skin out of the game.
I don't see the dollars. I'm colorblind.
Yeah, I mean, when I was first learning how to trade, one of my original mentors, I suppose, the best piece of advice he ever gave me, perhaps, was just put the money in your account. Never expect to see it in your bank account ever again. And the second it hits your account, it just becomes a game with points. And you want to get as many green points per day as you can. And you had a bad game if you have a bunch of red points in a day, and you just better play a better game tomorrow.
Yeah.
And that's the way to think about it. And that is something that I apply all the time. If I'm for instance, if I'm deeply long and we have 2 days of sell off in a row, like what just happened last Thursday and Friday, I'm just thinking, okay, we played a bad game. We're just gonna have to play a better game tomorrow.
Right.
And that's all there is to it.
Sometimes dang bummer.
Yeah.
I wish I would have came out that gets a little bit more level-minded. I just made a couple mistakes to where I don't want to deepen the mistakes there now and make it worse. But let me come back level-headed, because I thought that's how it was going to be in this situation too. After I took a couple losses, because
if you pick
stupid trade too.
If you pick anybody who does anything at the highest level, they probably just have the fewest bad days. But it does not mean that they do not have bad days at what they do.
That's a good point.
Whatever it may be.
That's true. That is a good point. And I mean, I'm not gonna lie. Even before earlier today, before noon, I was getting pretty frustrated. And I know. Oh, right. Even going back to the topic of today, it was becoming rule governed. And one thing that I told myself is, you can see where it says NTZ. Sometimes I think what's important is knowing when and when not to trade. That can make the biggest of differences. And I have a rule: whenever a level starts to get a little bit disrespected, after 2 or 3 trades, stop trading it. And one thing that I'll put in to remind myself is I'll just put in the acronym NTZ, and that's just the no trade zone. So I put that in right here. So I told myself already, don't take any more trades, because you already saw the market was acting really funky in this area. And it was hard to sit in that, because I felt like there was an opportunity I didn't get to take advantage of to the best of my abilities. And sitting there having to wait 24 hours for our next day, for there not to even be a guaranteed opportunity tomorrow, or maybe eventually have to wait 2 more, 3, 4 more days, or even a week for another opportunity. It's hard to sit in that sometimes, especially when you've been patient and made a couple mistakes. Now I got to be patient after I just made some mistakes to redeem it, so it can be tough.
Yeah.
You can see it can be tough on the psychology sometimes.
Yeah, absolutely. I mean, yeah, you want a sports analogy? It's like, it's like basketball. Like, imagine every trade that you make as taking a shot, and there are good shots and there are bad shots, and what you cannot do is miss a shot and then be annoyed and you go running back down the court the next time and take a bad shot. You want to take good shots, and you'll still miss some, but as long as they're all good in aggregate, you're going to make more shots than you miss.
You know what? One thing I learned from basketball too, from my basketball coach, Mr. Mileto. Shout out to him. His daughter was hooping at Wyoming. She was cold, like she was pulling up Steph Curry from me. Shout out to them. But he had told me, a double negative. That was like a huge no-no, right? So it's like if you get in the game, if you're gonna get your cookies ripped as a point guard, they're gonna steal your cookies and go down on a fast break and make a basket. Don't foul him too. That's a double negative. Like, you just got ripped for the team. And it's not just you, it's not an individual sport. You just got ripped and then you're gonna foul the man. Yeah. So it's like, that's a double negative and you get ripped out of the game immediately if you do something like that. So it's also like, don't put fuel on the fire to the mistakes that you're making right now.
Yeah, absolutely. Yeah, things will compound if you let them. You have to have a very, very short memory. And it's just about the next one.
Yeah.
All right, shifting gears here a little bit. I want to shout something else out that's kind of weird this morning that I got involved on is Capital One, COF.
Capital One, COF.
Yeah, this thing, and if anybody can tell me why, please do. It sold off this morning for no reason. I
know.
What is it?
Somebody sold.
Well, yeah, somebody sold. I mean, I was reading that there's gigantic, like 200 to 210 level put volume into Friday this week, which, I don't know. I try not to buy into, like, I should say sweeps, I guess, is what people would like to say there. I try not to read into sweeps too heavily because, as I just said, even the biggest people lose with relative regularity. And also, the thing about sweeps is you only ever see buys. You rarely will hear about people closing their giant multi-million-dollar option sweeps. And so, for all we know, it could be an algo that just really loved that spot. It moved down 30 cents, and then they're out of every single one of those sweeps. So, sort of a sidebar on sweeps there. But Capital One, obviously, government shutdown tomorrow is very likely, and I think that is somewhat playing into this. I mean, obviously, I think the financial sector would be hit harder than most. But I dug, and there's just no news on this thing today. I dug, and then I burned a ChatGPT deep research credit to dig, and neither of us could find anything. So there's no reason. This move is unsubstantiated. I don't get it, and I am long against it. It's a crock. It's fugazi. This thing isn't real. So anyway, I'm long two short put verticals there. Bought the 205, sold the 210. Into October 17th, 17 DTE, pretty much right at the money, expecting just any semblance of a bounce at all. I need $1 up after this sell-off that does not seem substantiated for any reason. Classic rotation, the classic rotation from financials to weed stocks. Nancy probably sold, needs the funds with the shutdown coming. Yeah, I think these are both plausible options, guys. I appreciate having such smart individuals as y'all in my corner here. But yeah, no, this is a really strange, seemingly unsubstantiated move to me. So I did get long against this move in Capital One.
No, I like that.
Speaking of weed stocks, actually, if we're talking about rotation to weed stocks, Tilray is flying on me today.
Our boy TLRY, what's he doing?
I've been short this for some time, but we've had a nice move up.
Wow.
As of late.
What's popping in the weed stocks right now? What kind of headlines?
I'm not sure. I mean, are the ETFs up or is Tilray just up?
I don't know. Maybe that's Jared. He's
oh yeah, like MJ, the ETF has a giant gap today.
Jared was.
Wolf, do you know what's going on with the weed stocks? Is that why you said weed stocks?
Oh, I'm sorry. I meant Wolf. Wolf is probly the first one rotating. He's just letting us know the rotation.
Yeah. He's just letting us know. Yeah.
He's letting us know it started.
The oracle of rotations, Wolf. Unless no fouls, send into the line to prevent an easy layup. Exception. That's true. If it's a good hard foul and you prevent the layup, that's sort of a different situation.
Context does matter.
Yeah. It can't be a tick-tack and you give them an and one. Yeah. But if you get a good hard foul in there.
It's like, are we in the first quarter, second quarter, third quarter, fourth quarter? How much time do we have left? What are the fouls? So context does matter.
Yes. Situation.
It is situational.
Jamal talked me into leaps on Tilray yesterday. Oh man, well, that was a good freaking call. What was the thesis? He was talking weed yesterday. Yeah, what's happening? How did he see this coming? What's going on? Yeah, I've been short Tilray for a little while, but it's mostly a meme short. I think I've detailed this trade before, but I bought 25 December 50-cent strike puts on Tilray at 2 cents each. So $50 notional as basically a lottery ticket in case this thing regressed to its former lows.
Speaking of lottery ticket, Kim, we didn't forget. Let us know.
Bought weed stocks with my credit card. Degenerate greater than diversification. Trump announced they were reclassifying cannabis. Interesting. Well, I mean, that's going to be good for my long-term portfolio where I am rife with cannabis stuff, but I'm upset that I wasn't long any of it in the short term here. I mean, it's been my thesis with weed the entire time. It's just that at some point it's going to get nationally or federally legalized or whatever it may be, and that would do great things for all these companies. How about DraftKings, SoFi, pullbacks or start of a trend? Show me DKNG.
Yeet.
Woof. Man.
It's been taking a hit there. It's IV on IVR.
If I can type 33.
All right, it's not bad. Earnings coming up soon?
You have them on your trading view there. What's the date on that?
We got earnings.
Halloween? Spooky
season.
earnings.
We got some earnings soon. 30 days from now.
Yeah, what the heck? What is going on with this? Click the little news thing. The little lightning bolt. Yeah.
Latest updates. DraftKings has partnered with NBC Universal for multi-year visibility during their key events like the Super Bowl, NBA All-Star Weekend, and the 2026 FIFA Men's World Cup on
That's just good
Telemundo.
Interesting. SoFi, the SoFi pullback, let me verify before I make this claim, but I mean, are banks just getting hit today? JPM is down. Doesn't look the way that Capital One does, but it's down. BOA? What is it? Is it BOA? BA? Not BA, that's Boeing. The heck is the Bank of America ticker? Am I stupid?
Thanks for the reminder. You need to buy the lotto ticket. Maybe tomorrow I'll be able to order my yacht. Let us know, Grumpy Mike. We're all hopping on there.
Wells Fargo's down. Yeah, banks are just getting hit today. I think I'm not particularly concerned about SoFi. I mean, I think the banks are just getting hit on the government shutdown possibility. I think that'll hurt financials pretty bad. Thanks for the reminder. I need to buy the lotto ticket. Maybe tomorrow. Tomorrow I'll be able to order my yacht. BAC, thank you. Man, I don't know why that was escaping me so bad. BAC, yeah, hurting. We're hurting. The banks are hurting. BAC, what a goober. I can't remember. I can't believe I didn't have that off the home. So yeah, financials just getting hit. Not unexpected. Is the Powerball or Mega Millions or whatever we were talking about still climbing? Is that what it is? Because it might be high time.
No, Kim's not in the chat, so I think that's our sign. There will be signs.
Kim did say it. She did say there would be signs. You're right.
She might be out there already.
Yeah, I'm not sure. Maybe I don't know. But yeah, we established that over 500 million is EV, right? Somebody in chat told me that, and I took it at face value. I don't cross-reference the guys the things you guys say to me in chat, by the way. I just believe you.
Hood is somehow up. Yeah, we can get Hood out of here.
Get him out of here.
Get him out of here.
What's going on with them?
They're up on the day. RC was looking at Hood, taking a look there. Looks like we had some updates. Robinhood shares rose 9% to $132, fueled by a 98% jump in crypto revenue to $160 million and 2.3 million new accounts. Analysts raised by price target significantly. Interesting numbers, Hood. Interesting numbers. I can't say those are half bad, actually.
No, they're bad.
Yeah, Hood, you could do better. Cool.
Yeah, these guys, look at them lacking. Anyway, what else did I add today?
Anybody been getting in some gold? I did see Dr. Jim say, yo, this drop in metals is going to be biblical. So is he going to be a false prophet or not? Because I didn't see that in the Bible. But gold has been popping off. Been a really difficult one to trade and get involved in.
Yeah. I mean, yeah. Should I just short it, man? Should I just do it? You think I can bring it down?
I hope so. We sold off. In the middle of the night, we'd pretty much been bought back up. So that's a really difficult one. We tried using our volume profile, right? It's a market that's a little bit more foreign to myself, at least, in terms of what opportunity might look like here.
Mike, I was going to say the same thing, but I think Emmett said it for me. I don't know. $2 million is a boat, I think. I don't know what the specifics are that are required for something to become a yacht. I can't say I'm much of a sailor's not the word I'm looking for. What's like the water equivalent of the word aviator? Like a nauta. Maybe just sailor. No, there's got to be. I want like a pretentious word here. I want something that makes me sound rich when I say it. If anybody knows the word that's in my brain right now, like something that Andy Bernard would say that he is in The Office, like that's the type of word I'm looking for here. Nautical flag signaling. You can't keep gold down. I guess with tariffs it would be 3 mil. Is your lot? Well, I mean the taxes are going to come into play. Captain, that could work. I could take captain. Seaman. Perhaps I am a seaman. I was once a seaman. I am no longer.
Throwback Thursday.
Throwback Thursday. A mariner. Thank you. Mariner is the word that I was looking for. Organic farming. Voyager. A yachtsman. How have you guys all said different things? Nobody has said the same thing. There's seaman. Yes, mariner is the word that I was looking for. Thank you guys. Appreciate it. What's the aquatic word of aviator? Mariner.
Yeah, this gold is gonna be one of those difficult ones to get involved at. Another all-time high.
Okay, Omaha on the seaman comment. We were all once seamen, guys. I'm of course talking about people who sail the ocean blue.
I did not know that's what we were actually talking about. That's funny.
Here, I'll throw something out at the risk of looking stupid. Are there really 7 seas? Like, what are the 6th and 7th seas? Because it's kind of like Atlantic, Pacific, Indian, Arctic. I mean, like, what seas am I missing here? You know? I mean, feels like those are oceans. Like, why do people say that?
I don't know. That's a good question.
I'm Googling it.
I have no idea.
Origin of 7 seas.
What's it saying over there?
Ancient literature first appeared in a Sumerian hymn in 2300 BC. In many ancient cultures, 7 was a symbolic number meaning many. Therefore, 7 seas was a figure of speech for all of the seas of the world, not a literal count. There you go. Bet you guys didn't expect to learn that bit of information watching Tasty Live today. You're welcome.
I learned a lot here, actually. We're looking at.
See, I know that those are oceans when I'm naming them, but like I know that that's what they were referring to was all of the oceans of the world. When you say you sailed the 7 seas, like Magellan sailed the 7 seas, he went on all the big oceans. I know that there are seas, Adriatic, Baltic, Mediterranean. You throw them out, but like that's not what they were talking about. What's next? Lake Michigan?
Yeah, Lake Michigan is the biggest ocean I've ever seen.
Bothers me when people think the Great Lakes aren't like big.
Bro, they're scary.
Yeah, you would never know that you're not on the
They're
ocean if someone just dropped you on a beach in a Great Lake.
Have you ever looked up what the depths of the lake is?
I haven't. No. Are they deep?
I don't know. I was actually curious about that because
Edmund Fitzgerald's. I don't think we ever found the Edmund Fitzgerald, so that's down there somewhere in the depths. Deepest Great Lake. All right, any guesses for deepest Great Lake, everybody, before I throw it out? All right, back to finance here. Submit your guesses. I will tell in a moment. How about this? Win. My Win shorts. This thing has finally decided to breathe a little bit. The second that I got short, this thing flew.
What's the ticker on that?
Win. WYNN. Yeah, there's a long way to go on these shorts for me, but we are finally at least taking some kind of move to the downside. This is maybe the first day since I put this position on that I've seen it green. But yeah, coming down a little bit. I need it under 100, so we're still a ways off. I have 108 DTE, but this thing takes big swings, so I'm hoping that Win is picking up the momentum here to push. Superior, you guys are correct. You guys are correct with Lake Superior. Good guesses. Edmund Fitzgerald has been found and recorded. Good shout. I didn't know. I've only ever seen the like mysteries on it. It's not as fun when they found it. You know, you need the mystique. My ignorance bliss is gone. But yes, Superior is the correct answer. Deepest Great Lake at only 1,300 feet. Not bad.
1,300 feet.
Yeah, that's not too bad.
Can we get a reference point? You know the 1,300.
I mean, like I think the Empire State Building is like roughly that. All right.
Is it? That's pretty deep.
Yeah, it's 1250 official or 1450 to the very tip.
That's actually a pretty good benchmark.
Yeah.
And I was looking at win right now too.
I know building heights, guys, not ocean depths. I don't really know many building heights either. Nobody quiz me. Largest salt mine is beneath 2 of the Great Lakes. That's a good shout.
Tesla.
Edmund Fitzgerald Porter by Great Lakes Brewing, A+.
Tesla's breakout has indeed been failing.
Yeah, I mean, this one... yeah, let's see. Let's play the game where I look at Tesla a day apart and somehow it's moved $50. No, this isn't too bad from yesterday. But yeah, it does seem like we're losing a little bit of the momentum here. I really thought that Tesla would move up and test this like 480, 490 level, which would be like high of year before it ran out of steam, and it still very well could. I mean, if you zoom out like on a one day, these are very, very small drops in the bucket.
Oh yeah.
We still haven't even overcame Friday's gains yet.
I mean, but good Lord, how does this stock move like that? It makes no sense. How does a stock like Tesla move like this?
Elon, man.
Like, good Lord.
I mean, it's just all the other stuff going on. Oh, here's what I wanted to talk about is that Elon space rockets made me think of this. Firefly Aerospace. The ticker is Fly. This thing sold off today, and I'm looking for opinions from the crowd. I feel like I should get long. All right, it sold off today because, drumroll please, they had a rocket blow up in a test launch. It exploded. They're an aerospace company. Not great when you can't get the arrow into the space. However, they're not gonna. I don't think they're gonna go bankrupt. And I mean, there's gonna be more launches. I feel like as soon as they have a successful launch, this thing goes flying. So I've been eyeing year-long leaps on this all day, and just give them a full year to have a successful launch and bump this thing back up above 35 or whatever that would look like. I mean, it's been as high as 75 before, and I mean, it was in this range, this 41 to 55 range for months and months here. So yeah, this one is tempting / enticing to me, and I haven't pulled the trigger yet, but I think I might have to. That's the thing though, is if I decide to do the leaps, I don't know how I want to do it, because I would love to be naked. I would love to just do one naked call way out, but I mean, to get like the 40s or 45s or something reasonable like that, it would be a fair amount of capital, $500-600 of capital you got to tie up for an entire year. And I don't know if I want to do that. But I will be so upset if I go defined risk and then this thing goes to 100.
Right.
So, yeah, looks like a falling knife to me. You just have to catch it by the handle.
That's it.
That's the key. That's the key to catching a falling knife. Is just catch it by the handle. Don't get caught. Or don't get cut.
So you're saying it's a skill issue.
Yeah, I mean, yeah, just grab the falling. I mean, often you're gonna hurt yourself, but one of these times you're bound to just catch it right on the handle, and it won't cut you at all, right? Oh. Is the knife spinning? Like, I mean,
even if it was,
what kind of falling knife are we talking about?
Oh,
because if it's falling vertically, blade down, just grab that thing. It's not too hard.
Timing.
Anyway, but yeah, when building your portfolio, do you try to be as uncorrelated as possible, or do you typically have trades in very similar stocks to one another? I think that's a fantastic question. I try to be uncorrelated, broadly speaking. If I have a conviction about a sector that is not necessarily company specific, sometimes I will double up in that sector, but generally I just try to find the one spot in that sector that I think is going to bear the most fruit for me and go heavier there, as opposed to like trying to diversify into 2 different assets that will bring me up. But yeah, I obviously assume you're talking about an options trading portfolio. I have no problems with correlation in my like long-term / retirement type portfolio. Catch after the first bounce. See, now we're talking, Tommy Ray. That's perfect. You just got to let the knife bounce once, and then it's falling way slower. It's actually rising for a moment. There's a moment at the peak where it's not moving at all. Just grab it. I nabbed $116 profit on a 0DTE and NDX based on that price bottom you were showing with the basketball hoop. There you go. Hell yeah. The freaking basketball emoji made Greg $116.
Let's go, Greg.
Let's go.
No.
This is why emojis on your charts are so vital to successful trading. Not sure if there's any news. Meta is down a little bit today. Meta. Let me have a look at Meta while I continue to kick rocks around on Firefly Aerospace and decide if I want to catch the knife.
Are you talking Meta?
Yeah, Meta. Yeah, selling off a little bit. I hadn't seen any news about this.
Let's see, what do we got lately?
Oh, there's a red dot exclamation point.
All right, we got Meta Platforms has signed a long-term deal with CoreWeave worth up to $14.2 billion.
I did see this.
AI cloud infrastructure lasting until December 14, 2031, with a possible 1-year extension.
Yeah, and I think that this is so interesting because CoreWeave has flown on this news. Right. CoreWeave is up big today, and Meta is selling off, which is interesting. I mean, usually, partnerships are by nature mutually beneficial, which by nature makes both companies go up.
The way that I think about it is it might seem right off the bat it's more of a hit for Meta and more of a leverage point for CoreWeave.
Sure.
Maybe
I mean, I definitely understand why CoreWeave is going up. There is no thesis. There's no thesis I have here that both of these should be going down. I think that CoreWeave absolutely won. I just think that I don't think it's a bad idea for Meta. I think that it makes sense. I'm surprised that this isn't something that would prop Meta up a little bit more.
CoreWeave having a pizza party all week.
Oh yeah. Let me tell you this too. If Palantir did this exact same thing that Meta has done, they would fly on it.
They would fly up.
I guarantee it. If Palantir can do no wrong in the market, if Palantir made this investment, everybody would be like, "Oh, this is great.
This is the best thing."
Yeah. So it's funny how those things work out. But yeah, I think that's strange that Meta would be moving down on that news. That sounds like bullish at best or neutral at worst news to me. So yeah, I don't know. Is Meta a buy? That's the thing is, I'm just trying to be careful today because there are lots of these little good tiny dips that I could get involved with. And Meta, I mean, this is a pretty good one. I mean, we're down off highs of 795 as early as early August. But I just don't know how long I want to get into this government shutdown tomorrow because I feel like the spots are just going to be better tomorrow. Unless, of course, we go up on the government shutdown for some reason, which I would not put past this market. But that's sort of been my thesis. All right, I'm doing the Firefly thing, man. I'm just going to go, I'll just go gamma play. Let me just go naked, 353 DTE, 65s, 60s.
Which underlying again?
Fly is the Tigger.
Fly. Let it fly.
I'm wide open. I'm going to let this fly.
Let's go to the hourly here.
If I can get a fill. I'm not chasing this thing. I'm not that convicted about it in the first place.
Okay. I like it. Cheaper underlying too. Thing's been beaten down.
Yeah.
A couple days.
Well, yeah, I mean, it's just if a rocket blows up, how much worse could things possibly get for an aerospace company? I think it might be their first one, too.
Those phrases just kill me every time. How much possibly worse could it?
I mean, but it's true. I mean, what's the worst that can happen? I mean, if they blow up, I guess they could blow up another rocket. Yeah. But I hope that they would have some pretty good diagnostic information, and I know they have a team of a lot of people that are a hell of a lot smarter than me building these things. So, yeah, I'll put my faith in that. All right, I lied. I moved up $5.
Let's see. It looks like NASDAQ's moving a little bit on us, guys.
Yeah, we're pretty much out of time here. Of course, things are going to rip right out of lunch as soon as we get off here, I'm sure.
I know. We retested this level. That's actually a good sign so far. So we never covered our position yet. We got our stops in pretty much at break even. Hold on. Stops in at break even. So if this somehow reverses, we will risk the profit that we're in right now, potentially to see another leg down because that's our current trade thesis. But other than that, I like it. We got fly on, right?
Yes.
Fly. We got fly.
Just went through.
Cheaper underlying too. I like it.
I was sitting there hovering over, debating to go another $5 on it, and then it filled for me, which is always nice.
That's the best feeling when you're adjusting it, and then you
get the fill. Yeah, and I see Mike said he went 143 DTE, $20 calls. So yeah, I think that's another attractive angle. The premium on that was. Yep. Also, I want to make sure they have a lot of time to get a rocket into space. that's sort of my main thesis here, is that sometime they will launch a rocket. So anyway.
Might take some time.
Yeah, you can take us out.
Cool. We'll see where Meta lands, Fly, these NASDAQ positions, potential government shutdown tomorrow. So we'll see how that affects the overall market.
The floor has a basement, says Scott.
Floor has a basement.
The floor has a basement. Sometimes it does.
Oil would like to speak with Fly right now because
UNH proved that the floor has a basement. It does. Sometimes the floor has a basement.
Well, Honda's flying. It's like, why didn't you choose Honda over Fly? Honda's flying right now. No, that's going to do it for today's segment. Thanks for taking the time to hang out with us. We appreciate you. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Tuesday edition of what it is that we are trying to do. And apparently, this is going to be the final Tuesday edition of what it is that we are trying to do. Because, guys, I was checking out Kalshi, or whatever they call it these days. The probability of the government shutdown, the apocalypse, tonight, 84%. Guys, that's crazy. That's crazy. When you sell a put that's an 84% pop, what do? You bank that cash. What do? You basically treat that as a sure thing, which means that 1 time out of 7, you're going to get your underoos soiled up pretty good. But still, that's a pretty solid trade. So, man, maybe this is it. Maybe this is the end. But hey, at least we are together. So thank you guys so much for being here and being a part of what it is that we do. So thank you guys. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show for it looks like the final time. So, John, bring us into the market. Let's take a look at how things are going. Yeah, I mean, the market, it's telling you everything you need to know, right? You got EMI S&Ps down 11. Not good, guys. That's almost 25 basis points off of all-time highs. You got the risk-free instrument, also known as the NASDAQ futures, extremely high-risk product, down 70 on the day, also not very good. Even the boomers have mailed it in. I mean, they mailed it in around 1996 or 1997, but they're doing it again here today. Down 135. Then you've got the Russell 2000 Futures Index down 17 on the day. You got bonds down a few ticks, I should say. Notes are actually up. You got oils down. You got obviously the shifties, man. They're going to celebrate all the way to the end with gold up another 13 points. And where's silver at? Where are my Hunt brothers at? I think they're up today too, right? Or are they? No, they're down today. Yeah, down 52 cents. Wow, man. That's now that is apocalyptic. Now, everything I said before about this, about that, about whatever is like, all right, that's all fun and games. Like, that's all obviously meant to be humorous. But silver down 51 cents, man, that is not humorous. Like, this is no longer a joke. It's here, guys. It is indeed over. Because now silver is almost a full percent, maybe 2% off of all-time highs. And so it's not good, guys. This is just not good at all. You got volatility. Let's see, what's volatility doing? Volatility's probably up today, I would imagine. Volatility futures down today. Wow, so it's so scary out there. Like, it's so frightening that you got even volatility futures down. You got the VIX is up 15 cents, but still Pretty interesting stuff. All right. So if you have a question for me, I would get it in the chat box because the earlier you get your question in, the higher the delta that I will get to your question. I usually get to the Q&A right around the halfway mark of the show. Speaking of delta, by the way, don't forget tomorrow we have a deep dive into delta. We're going to do a little 3-part series on Wednesday, Thursday, and Friday. Essentially, the 3 different ways that you can interpret delta, which I think is a pretty useful piece of content. I mean, I'm a little bit biased since I'm the one coming up with the idea, but I do think that it's useful if you're a brand new trader. If you are indeed a beginner, my hope is that it can be valuable for you as you kind of learn the world of derivatives and navigate the option space and all those kinds of things. So that's going to be tomorrow at the beginning of the show. You know, it'll be like 2, 3, maybe 16 minutes on Wednesday, Thursday, and Friday, and then I'll have you guys out the door, and that'll be that. It's gonna be weird tomorrow too, by the way, having a Wednesday show. Like that's gonna feel a little. It's not gonna feel feng shui, I'll tell you that. Like it's gonna feel like we're squaring a circle a little bit, but you know, if we put in enough reps, it'll be old hat. So all right, let's go ahead and let's take a look at a couple things going on in the portfolio, and then I do want to trade the shutdown tonight. Again, guys, we're not coming back from this. Like it's over, man. Like first you got the creator walking off the set. Now you've got government shutdowns. It's over. Like it's done. It's done. But in the off chance that we make it, in the off chance that we see the other side, man, do I have a trade for you guys? Man, get ready because this guy is a doozy. All right, so let's take a look though. You've got Best Buy getting crushed. That makes sense. You got Chipotle getting crushed. That makes sense. And so the it's amazing, man. It's amazing. Like it's, you know, it's 1 step forward, 9 steps back. Like that's basically the you know, the procedure, the process that we're following here with Best Buy and Chipotle. At a certain point, we're just gonna cut it and just tip our cap to the P&L Open bros and just say, you know, you beat us. I mean, what do you want me to do, man? Look at that. P&L Open on Best Buy, crushed. P&L Open on Chipotle, crushed. And so at a certain point, we're going to go ahead and we're going to have to wave the white flag. But I'm not quite there yet. I do have some hopes that, you know, maybe between, you know, the shutdown being averted tonight, which again, that's not the expected move. Like that is the outlier move at this point. But let's say it happens. Maybe you get some really nicely cooked up imaginary NFP print on Friday, which the markets can, you know, kind of rocket ship off of, which they've done many, many times before. Maybe like the previous 29 in a row at this point. And so that would be good for Best Buy and Chipotle. But for right now, let's sit tight. Let's go ahead and do nothing. So that is Best Buy. That is Chipotle. But man, look at Costco. Man, let's go. Costco. Look at this thing. We are so close now to being right back to where we need it. We've got the stock up to 926. Tom tried to get us, man, on his way out the door. My man, well, he doesn't even drive a Tesla anymore. Doesn't he drive like a Lucid or something like that? I don't even know. But anyway, he had the engine revved up. Or do they even have engines? It's all that electrical stuff. I think, okay, so he had it plugged in. Like he had that guy plugged in and it was ready to go. And he still tried to take us down, but it looks like we might get him. We might get him in the end here with Costco. So we still have 3 days to go. We got a little bit of work left on this guy. You got the stock at 926. We need it up over 935, and then we'll kind of see what's what. So that is Costco. And let's go ahead and let's see. There's not really anything else that requires our attention. I do want to talk about GDX though for a couple of minutes, and then I want to put on this new trade for the shutdown. So GDX, this is a really interesting situation. Because obviously gold has been ripping, like all the gold, you know, I mean, gold bullion, gold miners, you know, anybody that's kind of just gold, you know, related in any capacity is going to do pretty well. But what's really fascinating about this position is if you take a look at, you know, we have a strangle on, right? 62.70. The stock is up to 75.80. So it's almost up to 76. It is nearly $6 in the money on the call side. And so when you think about it, you're like, all right, I've built up $6 of intrinsic value on the call side, nearly $6 of intrinsic value on the call side, that you're going to be on the hook for that. Like you're going to have to pay that up. Like that's obviously going to be one of the things that's going to contribute to whatever losses that you might have on the position. But here's what's fascinating. If you actually look at our overall trade price, which we have things grouped by the order chains, I should say. Wait, what am I doing? We have things grouped by the Allison chains. They call it order chains, but that's a mistake. The devs are on it though. They're going to change it. Don't worry. We have it grouped by the Allison chains. And because we have that, When you make a roll, when you make an adjustment, it is going to show up in your trade price. Like if you only have that grouped by, I guess it's grouped by what, symbol? Like, yeah, if I have that grouped by symbol, then it's not going to necessarily be accurate in terms of the adjustments that you've made and the rolls that you've made in the position. But if you group it by the chains here, that is going to be accurate. You can always double check it by going over to the chains here, kind of digging into the playlist and being like, all right, that's September 8th. There's your rooster right there for 288. There's September 25th. Right, there's your man in the box, obviously, for 216. Right, that's a classic. And there you go. That gets you to 504. And so we're only down. The reason why I'm going over all this, we're only down $3.50. So you might be wondering, how is it even possible that you could only be down $3.50 when you're already having to absorb nearly $6 of intrinsic value on the call side? Well, the answer is A, we don't just have the call side on this position. Like, this is the beauty of a strangle. Like, you guys know, if you've seen the show, been following the show, like, my favorite strategy is a short put. There's so many things you can do with a short put. It's more versatile than just about any other strategy, in my opinion. And there's a lot of really versatile strategies, like a short strangle. But the short put, it kind of stands alone, man. It stands alone in versatility. It stands alone in its simplicity. Like, it just stands alone in all the different things that it can potentially offer to you. But a short strangle has a benefit, a gimme, if you will, that the short put does not have. You are selling both sides of the market. And so in a market that is random, in a market that is unpredictable, we don't exactly know what's going to happen next, it can make a lot of sense to say, hey, let me sell a call above, let me sell a put below, and then deal with it as the market moves around. Like, I've got my set of adjustment protocols, like I'm ready to go. I'm looking at the mechanics, like I know what I want to do, kind of, dependent on what the market does, but also sort of regardless of what the market does. Like, if the market does X, I know I'm going to do A. If the market does Y, I know I'm going to do B, and so on and so forth, right? It's a really, really nice kind of reference list. Well, when you have a short strangle, like we have here in GDX, and you're getting hurt on the call side, like is what's happening to us here in GDX, you need to remember that the short put is going to be helping you soften the blow. It's going to be contributing to shielding the overall losses on the position. And so this obviously would work the other way too. I mean, if the market was down a lot, you would be picking up some profits from the call side that would help to shield what's happening on the put side. And so they very much work together. They work in unison. And it's just, it's pretty amazing, man. It really is pretty amazing. I mean, if you look at the put side, you can see it's only worth 42 cents now. So you can make the case that maybe I should buy that back or do whatever. I think I'm going to roll it up today, actually, and probably roll it into a straddle. But I just wanted to point out that we're doing much better than you might anticipate you would be doing. And this is a product of making the money on the put side. This is a product of, picking up more extrinsic value when you roll out in time. This is a product of essentially the power of short premium, and especially, like, specifically short premium on both sides of the market. Like, when you're only on one side of the market, you're going to be kind of pigeonholed into, making money a certain type of way. Whereas when you do have premium on both sides of the market, this would be the case with a short strangle. This could even potentially be the case with an iron condor, although it's a lot different because it's defined risk and you're not going to have quite the freedom that you would have with a short strangle, but it still could at least theoretically work out that way. It can be really beneficial to have both sides of the market working so that if one side gets hurt, the other side picks up the slack, so to speak, and it puts you in a better position to do what? To ultimately make money. But how are you going to get there? By being able to stay in the trade longer, by being able to adjust the trade the way that you would normally want to adjust the trade without having to abandon the project completely, without having to just jump ship earlier than you would have otherwise, kind of needed to do if you didn't have that other side of the trade. So anyway, hopefully that's at least a little bit helpful for you guys. There's a few random thoughts around GDX, but let's roll up. Let's see here. Let's roll up the put side. So I'm going to go into the trade page for GDX. Let's stay in November. 52 days to go. It's still a really, really, really long time. But let's go ahead and let's buy back 62 and let's sell out a 70. So now we'll have the 70 straddle on. We'll pick up another $1.39. And so this is helping to improve our break-even point on the upside. It's improving the break-even point. Well, actually, yeah, it's improving our break-even point on the upside. This is so interesting. This is actually reducing or deteriorating our break-even point on the downside. Because keep in mind, this is really, really important. If I scroll back up on the screen, you can see right now we have a 62 put So my break-even point is going to naturally be below 62. So I'm going to take whatever credits I've collected to this point, which are about $5. We saw them in the change a few minutes ago. I'm going to take my $5 and I'm going to subtract that from 62, and that's going to give me my break-even point on the downside of approximately 57. Hopefully you guys can see that. Okay, when you roll up into a straddle, right? Like let's do a little gimme gotcha breakdown. Like let's go ahead and work through the gimmies and the gotchas. What's a gimme? You're bringing in more credit. What's another great? Another gimme. You're reducing your directional bias. What's another gimme? You're improving your break-even point on the top side, the side that you're getting hurt, the more relevant break-even point. Okay, what are some of the gotchas? Well, number one, you no longer have distance between the two short strikes that would otherwise be there to allow you to quote unquote win on both sides of the strategy. That's going to be gone. But also, number two, notice my break even point on the downside is not going to be as favorable as it was because I'm moving my short put strike up from 62 to 70. So now, yes, I'm picking up another $1.40 in credit. So my total credits collected are going to be what, $5 plus $1.40, about $6.40, about $6.25, whatever. So I'm going to take that $6.40, $6.25, and I'm going to subtract that from my short put strike. But my short put strike is not 62 anymore. My short put strike is going to be 70. So my break-even point on the downside is going to be around 64, a little under 64. And so understand that, to improve the break-even point on the upside, you are giving up you're giving up a better break-even point on the downside, but you are willing to absorb a less favorable break-even point on the downside. Is kind of the way that I wanted to say it, to make it kind of neat and tidy and a little bit more feng shui and balanced. And so I like it though, because right now I'm not so worried about the break-even point on the downside. Although I do think that there's a pending boom coming. Well, I shouldn't say boom. I should say doom. There's a pending doom coming in the metals. Now, I don't know if it's going to be today. It might be today. It might be tomorrow. It might be 18 months from now. But man, this thing it's going to be biblical. This thing is going to be like straight out of Genesis, man. This is going to be something. I mean, it could even be gold down like $30 in a day. In just a day, it might be down almost 1%. I mean, it's really going to be something. But let's go ahead. Let's roll this 62. Let's roll this 62. Oh, wait. Yeah, let's buy back the 62. I've already got it set up. Sell out the 70, $1.40. There's another little soapbox diatribe on break-even points on the downside. So let's see here. If I go in here though, and let's try like $1.39. That should get filled, I would think. Okay, so we got filled at $1.39. And all right, so there you go. So now what I want to do, and I want to get to you guys, man. I want to see where you guys are at. I see you guys in the chat, man. I see you guys. You guys look like you're trolling me, and I like it. I like it. Just from quickly glancing, it looks like the trolls are right around that B- level. So you guys are on point today, man. Like you guys are ready for the shutdown. Like you've all had your pre-workouts, obviously. You've all had your electrolytes, obviously. Like you guys are ready to go, and so I'm impressed. I'm impressed at the consistency, right? The consistency with which you're able to display B- troll after B- troll. It's impressive. Like it takes a lot of training. It takes a lot of effort. So you guys should pat yourselves on the back. I mean, I see David Martinez, Ash Finn in the house, RC's in the house, or Denu's in the house, Miko's in the house, man. Look at you guys. All right, let's go ahead. What I want to do, we're going to play, let's play the shutdown. I'm going to play the shutdown to the downside, but I'm going to do it in the metals. I'm not going to do it in the market because I don't know what's going to happen to the market. Nobody knows what's going to happen to the market. I mean, it may be here. It may not be here. I mean, nobody really knows. But man, this move in the metals has been so crazy. This move in the metals has just been so, I mean, we got a little bit of something earlier this morning with actually, I mean, gold was down into was it down into the 30s? Hang on. I'm not sure if it made it to the 30s. I'm pretty sure it was in the 40s though. Let me look at a 5-minute chart. Just do like a 2-day. Yeah, so this morning, oh yeah, oh man, look at that. Gold was all the way down. Was that the 20s? Yeah, gold was down to 20. Gold was 50 points lower at one point this morning. So I feel like that's a little chink in the armor. That's a little chink in the old, shifty chainmail there. And so I don't know, man. I'm kind of thinking, let's play gold to the downside and let's do it with the patented expect to move butterfly because, man, this is so amazing, right? Like, let's just think about what's happening in the next, 48 hours. Obviously, the government's shutting down. The apocalypse is here, and we have indeed reached the end. But let's just say, hypothetically, we make it to the other side. Man, we've got from theory to practice tomorrow. Like normally I do a trade on Tuesday and I kind of have to think, all right, I'm not going to be able to manage this guy until Thursday if I want to continue to manage things live on air, which is incredibly valuable to me. It's incredibly important to me because I want to give you guys something that you really can't find anywhere else. And so now it's going to be so much easier for me to maintain that continuity from one day to the next. And so that is super, super awesome. And I mean, if gold drops tonight, on the shutdown aversion or whatever, then we could manage this guy tomorrow for a smaller winner. Like we don't need the home run. Like I know it's Red Sox wild card day. I know you guys are excited, and I know you're feeling really good about Garrett Crochet taking the mound. I am too, but we don't need a home run. We can get the job done with singles and doubles. Like we can get the job done with some Jaron Duran triples. That should be enough to kind of do what needs to be done. So let's go into GC here. I'm thinking let's go 3-day cycle. Like, let's not be crazy about this. Let's not just do like the overnight cycle. Let's do a 3-day cycle to give us a couple of chances to potentially cash this guy in. And I don't know, man. I'm thinking maybe a 38.55, 38.20, maybe a 35 pointer might be good. And then what, a 37.85? Let's double up on our 38.20. Yeah, that's only $4.90. $5. So $5 on the GC butterfly. Now you could do this with GLD too if you wanted to, but from a position sizing standpoint, it's a little bit easier for me to use GC. The commissions are a little bit higher, and so GLD is going to be a bit more favorable for someone that maybe has a smaller account or maybe wants to size this trade smaller. I should probably be doing that myself actually, but I'm excited. I'm excited about our Wednesday show. We haven't had that in so long, and so I'm thinking, man, let's give it a go. Let's give it a shot. And just kind of see what happens. So 38.55, 38.20, 37.85 for my audio only crowd that might be accessing the show today. I appreciate you guys. I appreciate you guys more than the audio plus video crowd because they've got it easy. Like you've got to use your imagination. Like you've got to kind of dig into the old mind there and be like, I wonder what that looks like. I wonder what a downside butterfly in gold looks like. Does it look like the way it's always looked the last, 19 and a half years? Yeah, it actually does. It doesn't look any different, but still, you get to use your imagination to kind of conjure up some, some different things about it. So anyway, we're completely off the rails and it's only Tuesday. That's not good, man. That's not good at all. 38.55, 38.20, 37.85 and a $5 debit, $5.10, man. Let's go for it. Let's do it. $5 can't get filled at $5. Let's see here. If I do, let's do 520. Oh, we got filled at $5. Look at that. They gave it to us at the end there. Nice. All right. So there's your downside play for the shutdown. I know it's crazy because you're probably thinking, Jim, that's a crazy play. If it gets shut down, if it gets whatever, gold is going to skyrocket. Gold is going to be 5,000 tomorrow, bro. Like, what are you doing? Man, I'm here for you. I'm here for you. Because again, if you remember, what should you do? And if you're brand new, what should you do? If I take a directional play, you should do the exact opposite of any directional play that I make. That is going to be the easiest pathway for you to trim 6 to 9 months off of your road to financial independence. And so I'm here for you, man. Never forget that. Never forget that I'm a man of the people. And so there you go. There's our goal play. And all right, let's go to you guys though, man. Where are you guys at? Man, look at this. Look at this. Man, oh, I see somebody. Look at you guys, man. I'm going to surprise and delight somebody near the end. People trolling me. Man, I see you, Eddie P. Look at Eddie P. Yeah, Eddie P's been waiting to say this. Dr. Jim, are you still holding the Wolf shares that were put to you from the option play earlier this summer? Eddie P, I know that's a troll. Eddie P, it's a rather good troll, actually. You've kind of overperformed that B- expectation. That's a solid B. But Eddie P, no, I'm not holding Wolf anymore. If we go back to Wolf, what is Wolf doing today? $29. No. Is this thing really $29? I mean, this thing was in the recycle bin outside my house that they pick up every other Friday just the other day. I was waiting for my man to come by and scoop it up and repurpose it into something worthwhile, like something useful. And here it is, $30 stock, right? It's just like, I mean, look, what's Bank of America? About the same, right? Oh, 50. Okay, hold on. Let's go to our watch list here. Let me find another $30 stock. This is unbelievable. EWZ. So this is perfect. EWZ, the Brazilian index, the Brazilian ETF, EWZ. So you're telling me, obviously there's shares outstanding, there's floats, there's whatever, but no, forget all that. You're telling me that Wolf WOLF has the same value as Brazil. That's what you're telling me. That's what you're communicating to me right here, right now. I can't believe it. I cannot believe it. And it's up another $7 today. That's crazy, man. Look at this thing. Look at this thing. Let me look at a chart of Wolf. It's going to make me want to vomit. Look at that. Look at that. Man, look at Wolf in the pre-market. It was up to what? 35? 36? Yeah, it was up to 35. That's crazy. But Eddie P, if I go to my activity page and I put in Wolf, no, you're going to see that we got rid of Wolf right before it skyrocketed. So, so basically, you know, we did. Here's our transaction in Wolf, right? So we sold the 3 put for 89 cents. And then we were put the shares, we got out of the shares for 60 cents. And so it ended up being a pretty big loss for us because we ended up buying the shares at 3, selling them for 60 cents. So we lost 240, but we picked up 89 cents. We ended up losing about $1.50 on the trade. So it wasn't that big of a deal. But man, if we would have just been long-term investors in Wolf, right? If we would have just been reinvesting our dividends in Wolf, like dollar cost averaging in Wolf, like Dan and Shelly doing an amazing job with like dollar cost averaging with crypto and like different ways to kind of build up your, you know, your bags, as the kids say. Man, we should have been building up some Wolf bags. Forget about Bitcoin and Ethereum. No offense to Dan and Shelly, of course. But man, we're talking about Wolf, man. Look at this thing. Look at this thing. It went from 3 to 30 in about a week. That's crazy, man. That's crazy stuff. So thank you, Eddie P, for reminding me of what could have been. So thank you, my friend. You are now blocked. And so let's see if we go to no, I appreciate you, Eddie P. I hope that you know that. Let's go back to the beginning. So we surprised and delighted Eddie P there in the middle. So thank you for being here, my friend. David Gallimore is in the house. What's going on there, David? During a government shutdown at the National Zoo. Oh, here we go. Do the lions get fed their normal food, or do the lions have to eat the giraffes? Man, I don't know. But I think normally, I mean, it depends on where your zoo is at. Like if you're at just like a regular zoo, then they're probably just feeding them regular lion food. But if you're at like a bougie zoo, like I don't even know where a bougie zoo would be, but maybe like the San Diego Zoo would be kind of on the bougie side of things. They're probably getting some gluten-free stuff. Like they're probably getting some dairy-free stuff. Like it's all organic. Like it's never been touched by human hands. Like it's the good stuff, man. And so I don't know, with the government shutdown, you know, those funds are going to dry up. And so they may just have to, you know, just start munching on the giraffes. I could definitely see it happening. Ordenu's in the house. What's going on there, Ordenu? Ordenu says, hold on. Greetings from Italy, Dr. Jim. I have embraced the whole contrarian trading mentality. However, after seeing gold, how can you tell when to trade the trend? Man, that's a great question. This is a very, very good question. And so welcome aboard, by the way. We've got plenty of seats available. It's not exactly a crowded room. So welcome aboard. There's plenty of food left. Like, you know, there's all kinds of space. You can just make yourself at home. This is a very good question though, because I don't know the answer. And so, like, you know, when you get into like trend following or you get into like whatever, I mean, and I'm kind of speaking from a state of ignorance here, so bear with me because I'm not a trend follower. I'm not a technical trader. Like I know the basics of it, but I don't want to say I'll never. I don't want to be so pig-headed that it could never happen. But right now, I am not in a state where I could give you the subtleties and the nuances of kind of understanding like the gimmies and the gotchas, like I might be able to do with like a ratio spread, or like I might be able to do with even like a butterfly and gold to the downside or whatever. But generally speaking, you know, like if the like gold, for example, you know, you've got higher highs and you've got higher lows, right? And now which highs are important, which highs don't matter, I don't know the answer to those questions. But generally speaking, that makes up an uptrend, right? And then obviously lower highs and lower lows is going to make up a downtrend. Well, one of the things that is nice about that type of trading strategy and that type of trading style is you have a more clearly identifiable kind of, all right, this is when I should be in and this is when I should be out. Like as long as this low is intact, you know, maybe the uptrend is still intact and I want to keep playing the bullish side. Okay, that's fine. You know, maybe this high is intact. I want to keep playing the downside, whatever. That makes sense. The underlying assumption there that I don't necessarily agree with, and I think is a really tough trade, is you are assuming that that trend is going to continue. Like you are assuming that the markets are not necessarily random, that the markets are not necessarily unpredictable, and they are going to kind of follow this pattern, not that pattern specifically, but they're going to follow what you're wanting them to follow probabilistically out into the indefinite future. And hey, maybe it works, maybe it doesn't work. I'm not sure. But generally speaking, looking at the markets, I mean, Ordenu, with the first thing you said, that's the side that I'm on. When something is high, I'm looking to sell it. When something is low, I'm looking to buy it, right? And so I naturally have that short-term contrarian trader in me. Okay, gold, silver have been trending significantly, right, to the upside. So how do you know when the trend is quote unquote over and maybe it's time to, take some contrarian plays? I don't know the answer to that question, but I will say this. Just because something is trending significantly in one direction doesn't mean you can't trade the other side of that. It doesn't mean that you can't make some money on the short side with gold. Now, you may be like, Jim, that's crazy. Like, Jim, that's totally crazy. Like, I don't want to lose, a whole bunch of money. I don't want to do this. I don't want to do that. Of course not. Well, then size down appropriately, like scale down the unit size. But I mean, even if you look at gold, and again, I really hate doing this because this is what I really, really don't like about technical traders is a lot of times it's cherry picking. A lot of times, it's just looking back and saying, oh yeah, it would have been so easy. It would have been this, it would have been that. I'm like, yeah, in the moment, it's just never that easy. In the moment, it's just never that obvious. But to make my point though, even in a super strong trend for gold, you can see this morning, big drop in gold. Like you had a big drop here, from 10:30 to 11:30. And then even earlier this morning, there was another big drop. Let me see if I can find it. Yeah, so like right here, you can see, I mean, there's your downtrend, right? Baked inside of an uptrend. And so again, my ignorance is shining through. I mean, I don't even know if all of this is right, but I am making the point that even in a big uptrend, you still have pockets where you can make money on the other side of the market. And it's not necessarily about trying to pick tops and pick bottoms, but I just think that I think prices might mean revert a little bit. I think they might. And now that Tom is gone, we all know that that's true. We all know that that's true. Do they do it every single time? Of course not. Do they do it to a static mean? Not necessarily. But is there kind of a magnetic pull of where the price is for a given asset, a given instrument? I think there is. And I think that it, is supported by the leptokurtic distribution. And so anyway, I digress. But Ordenu, thank you for the question. I hope that helps you a little bit. It's a tough trade though. It is definitely a tough trade. Not that any trades are easy trades. But Sam L says, Happy Tuesday, Doc, aka earnings leg day. Oh, yeah, isn't it? Is Nike today? I think they are. Pains guaranteed, gains optional. That's correct. And always finish off with a side of B- humor. That's correct. It's never the main dish. It's always just going to be a little side. We got some Nike earnings, right? Hold on. I think that's right. Let me double check that. 9:30 after the bell. All right. Okay, so we do have some Nike earnings. Wow. Okay. I mean, I just got done talking about, selling things when they're up and buying things when they're down. And so just looking at, the price action as of late, I don't know how you could possibly be bearish on that. Sure, you may see a higher high and a slightly higher low and a higher high. And you're like, well, you got to play to the upside. I'm going to take the other side of that. I think it's a lot more random than that. So I think what we're going to do, I'm just going to do something just real simple. What if we just do an at the money vertical spread? Let's just buy, let me see here. If I buy a 70, let me buy a 71 and sell a 67. Yeah, for about $2. This is a very simple way to take a directional shot for earnings, for a binary event, whatever. If you're wrong, like the losses are capped, it is a defined risk strategy. So that's really good and beneficial when it comes to just overall risk management, right? And so I'm thinking here, we buy the 71, we sell the 67, and this is a decent looking trade for earnings. I kind of want to, let's get some warm-up sets under our belt. With this new schedule, we've got Wednesdays and things like that. I don't want to just go hog wild with expect to move butterflies like out the wazoo on day number one. Like, don't worry, they're coming on down the chutes for sure. And so 71.67, I think I like it. And so, all right, so we got to fill that 213. So there's your Nike earnings play. And so again, you should be on the opposite side of that trade. Stefan says, happy shutdown, Dr. Jim. What's going on there, Stefan? The apocalypse is coming. Let's buy a put butterfly for the down move by Friday. I'm right there with you. But you're saying SPY, right? October 3rd. Buy 4 645 puts, sell 8 650s, and buy 4 655s. Man, look at you. Defined risk with a lot of upside potential. Man, I'm right there with you, 100%. I'm just choosing a different product. I'm just going to go in it with gold. You go in with SPY. One of us should come out okay. Like one of us should be able to, to live to see another day. And so good luck to you there, Stefan. And I'm going to do the gold trade though. And we're just going to kind of, I think, leave it at that. James Bond number 4. Happy pre-hump day, Dr. Jim. What's going on? How did the Oscar trade work? We made some money. Was that your trade, James Bond? Did you bring the Oscar trade to my doorstep? If so, thank you so much, my friend. Like that ended up working out really, really well. We took it off just, I think it was yesterday. Was it not? Yeah, we did Oscar. Yeah, there it is right there. So there's your Oscar trade right there. So we did this guy. Yeah, it was yesterday. We filled it on the show. So I picked up almost 50% of max profit. So nice little trade. So thank you there, James Bond. I really appreciate that. And then you go on to say, do you have any thoughts on Tesla? What would you do in this market? Well, let's take a look at it. I don't know. I haven't looked at Tesla in a while. 443. Wow, man. Tesla's doing pretty good for itself. Yeah, earnings on October 22nd. Yeah, I think maybe we looked at this recently. I'm going to pass right now because it's too close to earnings. Like earnings are in just a few weeks. And so I don't really want to, I don't want to do something like, there's no binary events on the horizon, do something in the front week. I mean, I don't know. That's a little crazy for my liking, but I don't know. It's a new day with new challenges and a new era. Maybe we'll start doing this pretty soon. I don't really want to do it today though, because I'd really have to think through how I would want to play that specifically. But I am going to pass there, James Bond, for now because Tesla has earnings in a few weeks. But of course, when earnings get closer, we will certainly be playing that stock. And that's another good thing about having the Wednesday shows going out into the future is that we've missed so many Wednesday earnings. Like I think like Nvidia is always on Wednesday. And if you're new to the show, by the way, it's not Nvidia, it's Nvidia. Nvidia is always on Wednesday, and there's a bunch of other stocks that are like usually on Wednesdays. And so it's gonna be nice to be able to play those with you all here on the show, and then light the stacks of cash on fire in real time. Like a lot of times you get them in the archives, it's not the same effect. I understand. Like I totally understand. And so, thank you for the question, though, James Bond. So let's see. We've got Sam L. Says, oh, Wolf hit 35 today. Yeah, there you go. If you held it from $1, that's almost a 3,000% gains. The Penal Open Bros won't be coming at you anymore. They'll be asking you for coaching tips instead. No, I don't think they're ever going to swallow their pride like that. Like that would be quite a swallowing of pride if the Penal Open Bros ever said, "Hey, can you help us out here? Like, do you take on any like mentorships or anything like that?" I don't think that's ever going to happen. And so, but yeah, we should have held Wolf. That would have really been something. And so let's see. Wolf's in the house. Says, hey, happy Tuesday, Dr. Jim. Can we eventually get a man bun? We can get something. We can get something. You know what's funny is the other day, so like my sideburns, right? They get like super bushy. And so I'll have Autumn like help me like kind of like clean them up like every like 3 weeks or whatever. But the other day she was helping me and my regular hair was so long. We had to clip it all back. So like we clipped it all back, right? Like using like women's clips, right? And so I clipped it all back and so she could help me clean up my sideburns because I don't trust myself to do it. My wife is way better at stuff like that. And so, but my kids walked in and they saw me and they were dying laughing. They were just dying laughing. And so it was really, really funny. And so I may not be able to get you a man bun, but I might be able to bring out some clippies and some barrettes here onto the show here pretty soon. But my wife laughs at me for how I say barrette, but that's how you say it. And so let's see. Joe says, RC says it's time to fade some plays on the shutdown. Yes, there you go. I gave you a couple, my friend. Joe, yeah, Dr. Jimtown, what are we going to do in Nike? Playing into the downside, my friend. Just doing a little something to the downside, nothing crazy, but hey, it could be a little something to grease the wheels. And so there you go. Let's see. Emmett Morrison. Hey, it's Dr. Jimtown. What's going on there, Emmett? I appreciate you, my friend. Thank you so much for being here. Jared Kramer. Man, look at this. Jared Kramer, man. Jared, I'm going to send you that cash that we talked about for you putting this comment in the stream at this very time. Jared Kramer says, time for the best show on the network. Time to take cover tonight, Dr. J. Yes, that's right. I mean, I'll be watching the Red Sox game, so I don't even care if the apocalypse comes. It's not going to make a difference to me. But yes, tonight I believe is the night. And so thank you so much there, Jared. I appreciate you, my friend. Ash Finn says, well, there has to be a gotcha, though. I think, Ash, you might be talking about the commercial that runs oftentimes before my show, where it says something to the effect of all of the gimmies and none of the gotchas. And that was not approved by me. I want to be very clear that that was not approved by me because that is misinformation. Like that is fake news. If I've ever seen fake news, like you always have a gimme and a gotcha. You're never just going to get the gimmies without the gotchas. You're going to get them both. Right. And so, for example, right? in Detroit in a couple of weeks. Hopefully I get to see so many of you guys there. If you come to the show, are you going to learn some things? I hope so. Are you going to get to meet a bunch of other traders that will also be there? Yes. Like these are some huge gimmies. But what's the gotcha? The gotcha is the lettuce. It's way more chaotic in person than it is here in two-dimensional space. And so that is not going to be good. That's not going to be a pleasant experience for you. I can promise you that. And so there you go. There's your gotcha. But Joel James, Dr. Jim, it was nice knowing you. Yes. You got me there. I wasn't ready for that. That's pretty good. We may as well get Mega Longsome Wolf before the government shuts down. I'm not buying the tippity top, man. I mean, I'm a Johnny, but I'm not that much of a Johnny. I'm not buying Wolf at 30 to watch it go back down to 3. Oh, wouldn't that be a trade? Wouldn't that be something? We were long at 3. Yeah, we were short to put it, so we weren't going to make that much money anyway. But we were long at 3, right? We puked it out at 60 cents, right? It runs up to 30. We get long, just like Johnny Pools 47 in the subreddits, and then we watch it crash, boom, bang down to 3. Yeah, I'm not doing that. I am 100% not doing that. I'll light some stacks of cash on fire, but I want there to be some strategy behind it, or at least some like semblance of a strategy behind it. And so that is none of those things. And so Colonel says, Dr. Jim's favorite team, the Tigers, are up 1-0. No, I don't give a rip about the Tigers. Could not care less. Today is Boston Red Sox day, 100%. Emmett Morrison says, did you send Tom his money for your Cubs Red Sox bet? No, I did not. But I did collect from Tom before he left. So Tom still owed me $20 from the Eagles Super Bowl last year, so I got that. But then we had two baseball bets. We had Cubs Red Sox, which the Cubs won by a couple games or whatever. But we also had Red Sox over under 84.5. And of course I had the over. So we scratched those two trades. And so those were a wash. But then I got 20 from Tom, which I proceeded to give to John McGloin because I lost 20 to John because we took the over under on the Chicago White Sox 50 games. And I took the under and he took the over. And so that 20, it kind of made its way from me to John McGloin. I was just the middleman. And so let's see. Samuel, Doc, Nova Gold, earnings tomorrow, Nova Gold. Who cares what they actually do? Yeah, so you got to draw the line somewhere, man. I think it might be right before Nova Gold. It's all about the gold in the name. That's true. Straight to the moon. I'm going to pass on Nova Gold, my friend, but I appreciate you. Look at the market unch now. Man, is the government going to avert the shutdown? I don't know, man. It might rally on the shutdown. Who knows? Nobody knows. JM's in the house. What's going on there, JM? Sergio's in the house. What's up, Sergio? Brian Dowdy in the house. Padres are about to play in an hour to see how we do. Well, good luck to your Padres, my friend. Could be a little Red Sox Padres World Series. Like, I could see it happening for sure. Let's see. Tom says, man, I've been getting killed the past few days. Man, I'm sorry to hear that. You know, I mean, whenever I'm struggling, you know, one thing that is always very helpful is to get back to the basics. Like think back to like the couple of things that I do really, really well, which there aren't that many. So it's pretty easy to figure that out. But find the one or two things that you do well, whether it be a given stock, a given strategy, maybe a given time of the day. You know, all of those things can be in play when you're kind of struggling and trying to find some rhythm. And so I would 100%, encourage you to kind of go back to those things. And it might allow you to maybe right the ship a little bit. And so hopefully that helps a little bit there, Tom. Let's see. Brian Dowdy says having a Wednesday show feels right. Yeah, we'll see, man. We will see. John Taylor, though, as we're about to close the show, what's going on there, John? I see Edgar. What's going on there, Edgar? I appreciate you. I see Bowser's in the house. What's going on there, Bowser? But let's see. John Taylor says, Dr. Jim, I met you at the Toronto show. Oh, that's awesome. I have recovered call on GE at 220. Expiration in December. What is your go-to move when you have a stock below past the strike, now deep in the money? Okay, so I can't answer this in 30 seconds, which is all I have left. So here's a couple of quick thoughts to get you started. Number one, always remember that this is a good situation for you. This is a positive outcome for you. Sure, you maybe didn't make as much money as you could have, but that's easy to say now. This is a good outcome for you. That's number one. Number two, don't feel like, especially with an expiration in December, you don't have to do anything right now. Like, yes, you can roll the strike up, you can close the whole position, you can roll it out in time. Like, there's a few different things you can think about, but there's no urgency. You don't need to do anything right now. So I would just remember, A, this is a good outcome for you, and B, you don't have to do anything right away. So just kind of slow it down and think through like what different rolls up would look like in terms of the debits that you would have to pay, or if you roll out in time too, like, where can you collect the credit and things like that. But just slow it down, and I think it can really help you make a good decision in the end. But guys, I got got to run. I got to go. I appreciate you guys. I appreciate you guys so much. If I can help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
What's going on, everybody? Another day, another Core Weave deal. They got more money coming in. I swear, man. I mean, they just, they can't. People love giving them money. What can you say? But it is a core part of what's going on with this AI movement. So we'll talk about that. Jobs report. This might be the last jobs data we get. We got the JOLTS today. If the government shuts down, we're not going to get jobs data. But we got the JOLTS today. They told us a little bit something about the economy. We'll talk about that. And then DraftKings is fearing some competition from areas that they never really thought they would have to worry about, but yet and still it's here. So we'll talk about those three things and more. We got Nike earnings tonight. I'm curious to know what you guys think. Put up a poll in the chat, the YouTube chat. Answer that, please. Let me know what you're thinking here. And we're going to navigate our way through markets on a very quiet day here. Welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler. Now, as you guys know, there have been changes here recently, and different people have moved to different shows, which is it's fun. Change is good. Change is even more fun when you beat your new co-host in fantasy football. That's right. I beat Mikey B this weekend in fantasy. I beat him by 1.5 points. He hasn't talked about it. Thank you. Thank you. Thank you. Thank you very much. Thank you. Thank you very much. Yeah. Yeah, that's right. Yeah, that's right. That's right. It was a close game heading into it last night. I think I was up by like maybe 10 points. I was forecasted to maybe win by 10, and then things got hairy. I had Justin Fields, and he had Bo Nix, and that was literally all we had going. And that was a back and forth game. By the way, I don't know, for those of you who watch sports, tough one for Tyreek Hill. It's been a really tough week in football. Tyreek Hill goes down with a knee injury. Malik Neighbors goes down with a knee injury. Josh Fabian is down with an injury from football. It's been a tough week, man. It's been a tough week. I'm telling you, let the record show, let history show that Malik Neighbors and Tyreek Hill and Josh Fabian all went down in the same week for football injuries. Our Warriors on these gridirons, man. We got to protect them. Let's move to slides. Josh is going to hate me for that. He's going to be so mad. Let's move to slides and talk about what's going on today. Kind of a quiet week, man. There's not a whole lot happening here outside of, everybody seems to be writing and talking about the government shutdown. It's content. Look, I've been there before, okay? I've had that happen. I refuse to make up bullshit content, though, about things that I know is not necessarily really going to move the market. It does not really affect the market. Only a few handful of stocks. If you get a lot of money in your revenue from the government, then you might be in trouble if the government shuts down, right? But even still, having been through one of the long ones before in 2018, and we all went through it, but I was actually trading. I was into it. I was paying attention to trading day in and day out, much like I do now. We talked about it a lot at the time, too, and I thought for sure the market was going to tank 5-10% because the economy, or I should say because the government shut down, and it just doesn't work that way. Life goes on for Apple and, most of these other names that we look for. It's just really the ones that get a lot of government funding because, again, and even then, it's not like the company is going to cease to exist. Just when they sign the deal, they'll just get all their money back at the way it's supposed to be. So, what are we really talking about here? I guess I didn't plan to go on this rant at the top of the show, but the most important thing I would say probably from government shutdown is not getting data. And right now we are paying attention to data. We are paying attention to jobs reports. We're paying attention to the ADP report. And I'll talk about JOLTS in a second. But anyway, CoreWeave just inked another deal, man. And they just seem, every time you turn around, they seem to be getting money from one place or another. It's a $4.2 billion crowd infrastructure deal with Meta. And again, they just had a deal recently where they work with NVIDIA closely. They just had a deal with Oracle, I think, recently, and OpenAI. They had a $6.5 billion deal to OpenAI more recently. And they basically generate revenue from renting out data centers that have NVIDIA chips in it. So they're a core sort of interconnection, right, with this whole AI field. And I tell you just keep throwing out these astronomical numbers out there with these AI companies. I don't know much about CoreWeave. I don't typically lean into a name, but I find it fascinating. If you feel like the AI thing is going to continue and it's going to continue to be a big thing, then it seems to me that CoreWeave is probably one of the cheaper, newer ways to do it. Between CoreWeave and NVIDIA, NVIDIA is not really that expensive anymore, truth be told. Some of these other names have gotten up there. AVGO is a pretty expensive name at this point, I would say. Meta is a pretty expensive name at this point, I would say. Microsoft is a pretty expensive name, I would say. So even Oracle is pretty much up there, and that's been more recent. Palantir and NVIDIA and CoreWeave are around the same price point. So those are probably the three names that you could play. And again, be aware of concentration risk, though. Right? Like if you're going to be long those three, you probably want to be long fairly longer term, not something, in a 45-day window. Like that's not what we talk about. Again, always remember, when we talk about selling vol, we sell in a 45-day window because we hope it ceases to exist within 24 of those days. So it's I tell you, that CoreWeave, man, it is it's either going to be $20 a year from now or it's going to be $250 a year from now. Who knows? August JOLTS report showed was a little bit higher than July. So again, this is one of the things where you're looking at the amount of job openings, right, that are available. And when there's job openings available, that means there's not a tight labor market. Now again, it was barely above what was expected. So if anything, they would have wanted to see that this thing is tightening big time. I think the expected was about 7.2 million. It was a little bit above that. Imagine if it was 6 million, the market would have gone nuts. Market would have been up no matter what, regardless of what other overhangs we got. The market would have been up because that means we have a clear runway for more rate cuts. And the number today basically didn't give us that. ADP has become less important. I think that's coming out tomorrow. Now it's just up to the non-farm payroll report. assuming that we get it. I mean, if we're the government shut down, we're not going to get it. It is what it is. But kind of a nothing burger on this JOLTS report today, and I think you're kind of seeing that permeating through markets here as we wait for the deadline. DraftKings is weaker today. Stock's down pretty decent, and it all stems from another stock that's really been benefiting recently. Robinhood has been taking off recently for some of their initiatives on prediction markets, and DraftKings is taking it on the head because, well, I guess a lot of people feel that if people aren't betting, they're going to do prediction markets. I'm curious about you guys. Again, I've been a trader for 20 years. I really didn't bet, sports bet much. And then I got into it I really got into it about 2021 when these apps made it a whole lot easier to do. And I've been, the last couple of years, I went through different phases. I was super into it for a while. Started off doing a lot of NCAA basketball, and that somehow parlayed into NBA playoffs. And before I knew it, I was betting on baseball and tennis and overnight cricket. Okay, I'm kidding about the last one, but I mean I was betting on a bunch of different things, and I've calmed down a whole lot, and I realize what I'm good at, and I think I behoove anybody to figure that out, whether it's betting or whether it's trading. Figure out which ones you're good at. I realize I'm good at tournaments. And I'm really good at NCAA tournament. That's really kind of what I've stuck to more nowadays. I don't really do these one-off other different things. Maybe sometimes a big bet on the Super Bowl or the actual Game 7 of the NBA Finals. NBA is like the worst. So is baseball. Seriously. You can get roped into so many individual playoff games, but you got to realize that their strategy in Game 1 of a playoff game is not the same as Game 7 of a playoff game where they have to and trying to win. So always keep that in mind. Anyway. DraftKings is down and a little bit weaker today because prediction markets are becoming more of a thing again. And I think I can't remember if it's the guy from Polymarket. I think for the longest he was overseas. He wasn't even in the U.S. because of whatever different reasons. But now I think eventually that's going to come back here, and so therein lies sort of this fear that DraftKings and Flutter and all the type, but. It's short-lived. I mean, I've never been a huge DraftKings proponent, but I would think this is one where you probably buy the dip, and maybe we look to do that. Maybe we look to sell a little put or something like that. Remind me when we get to the platform. Leftovers. Wanted, the most in-demand jobs of the next decade. Let's move to the next slide. This is a chart of the occupations with the highest projected increase of employment in the U.S. between 2024 and 2034. Home health. I suppose. I mean, baby boomers are already 80. The early ones are 80, right? The ones who were born in the 60s, they're going to be 80 in 20 years. Yeah, in the next 10 years. I mean, home health is expected to be one of those big things. So if there's any way you can invest in home health, you should do it, I guess. Software developers, 267,700. Home health by a wide margin, by the way. Let's just talk about that. Almost 500K. Software developers, 267,000. Those number two. Stockers and order fillers. This is definitely something that those of you who are in logistics already understand. People are just getting more and more lazy. I'm laughing because last night, this was a deep cut, and I don't remember what we were doing, what we were watching. Actually, I do remember we were watching. It didn't come from this, but we were watching. My wife and I were watching Pretty in Pink last night. I know. Don't ask any questions. A really good movie. I mean, great movie, by the way. I mean, the late great John Hughes. He did not do that one. He actually wrote that one. A different guy did it. Actually, Howard Deutsch did it. I'm about to go down the rabbit hole on you guys. There's certain information that goes in my head that just can't get out, and it happens. Howard Deutsch, I think, is the one who did it. He's the one who's married to, I think he's married to, I'm blanking on her name. I should know her name. But the mom from Back to the Future, Leah Thompson, he's married to her. This guy, Howard Deutsch, also did Some Kind of Wonderful, if you've ever seen it. I'm really going down a real rabbit hole right now in 80s movies. You guys didn't know I had it in there, right? Yeah, bold move. And so, did you see those games last night, Mikos? They weren't really that good, man. And I don't really care about either one of those teams. I just wanted to beat Mikey, and mission accomplished. So I accomplished my mission, and I was watching Pretty in Pink. Anyway, I bring this up because as we were watching this movie, back to this chart here, my wife starts talking about a real deep cut about where people are headed in the future. And she was like, you remember WALL-E? If you've ever seen the movie WALL-E with the little robot and computerized, it's a, I think it's a Pixar movie. And there's this thing in the movie where they're all in chairs and they have iPads in front of their face all the time. And this is literally how they move around in life. And their food is right here. And they're humongous. And like, that's going to be us. This is what everything is going to do with us sooner or later. That's going to be our life. Stockers and fillers are number 3. Fast food counter workers. I don't know. I'm surprised about this. From what I've seen, and I think I showed, for those who are longtime watchers of the show, I put a video once up on Twitter about this conference that I went to, and I saw robots that are doing the menial tasks that people have done for years in fast food counters. So I feel like if there's one, I don't think there's any one person that's going to work a fast food counter. I think there's going to be people who are basically repairing the robots and fixing them. I don't see how fast food counter workers are going to be $233K, but okay. Restaurant cooks, now that's something that I don't think goes away. 217,000. Registered nurses, 166,000. RNs have come up a whole lot in the past 25 years. RNs didn't make what they make now. They actually do really well. They didn't do that a long time ago. Operations managers, 164,000. I feel like an operations manager is the same as somebody who's going to be managing the robots that run behind the counters. And then medical service managers coming in last here. So these are the occupations with the highest projected increase of employment in the U.S. over the next 10 years. Let's move to the next slide. Haven't pulled up this one in a while. Volatility risk premium. If you remember, this is basically implied versus, implied minus historical. In this case, we do VIX minus historical. That's the difference here. Right about now, it's about 10 points. And the reason is because implied vol, although while low, if we're getting implied, we'll just go to VIX. VIX itself is actually, is it 16? It's 16, and yeah, historical vol right now is around 6. That's fairly low. Look, the kindling is real dry for a huge flare-up in the market. I mean, it is potentially. There just isn't a catalyst, right? There just isn't a catalyst. And everybody's been looking for the catalyst. Some people are assuming it's going to be the government shutdown, but that's just not the catalyst right now. It isn't. Let's move to the next slide. But it's funny to see a 10-point difference between implied and historical. You usually don't see that big of a difference unless it's, volatility is really high and VIX is like 25 and, Good one from the SIBO. Again, single stock versus SPX index volatility spread right now. So VIX EQ is essentially showing you single stock vol versus SPX vol in terms of the VIX. VIX EQ is a little bit high right now. The reason why? Earnings. Earnings are on the way here, and so single stock vol is getting a little bit elevated. I think it's about time for me to start cleaning up a couple positions that I'm noticing. There's a lot of earnings vol starting to get in play. I'm noticing one position. I'm actually confused about it, and I'll talk about it when I get to the platform. I don't understand, but it might be a result of this. This single stock vol is starting to rise a little bit as we head towards earnings. I think JP Morgan, Goldman Sachs has earnings. I don't know. Let's move to the next slide. It's right here. So this is the forward curve. Today, obviously, you see where we are. Tomorrow, the shutdown deadline is coming upon us. Will we get ADP? I don't know, but it's supposed to come out that day. Will we get non-farm payrolls? I don't know, but it's supposed to come out then. I assume we'll get FOMC minutes next week, Wednesday. Powell's supposed to speak on Thursday morning after that. The week after, earnings kick off. You got JP Morgan and Goldman Sachs that come out on Tuesday. You got CPI and PPI, and then you got options expiration, and there's a few other earnings incorporated there, so that kicks off a really busy week. The following week, I'm sure we'll be just as busy. We don't have all the macro stuff that are going to be in play. that following week, but we know Netflix and Tesla has earnings. I just put the major ones. You know there's going to be others. I got the Mag 6 up here along with JP Morgan and Goldman Sachs. NVIDIA's earnings are way out in November, but I also forgot to add PCE in here, but I'm pretty sure PCE will be that last week around the same week as Apple earnings and Meta and Microsoft and Amazon. So that's what things are looking like going forward. But yeah, I mean, theoretically, you wonder what happens with the non-farm payrolls if, for whatever reason, they shut down the government. Well, I can tell you what happens. They're not going to put out the data, but does that mean that markets are just like, okay, blah, it was nothing, not a big deal that day? Don't know. Let's move to the last slide. So we got Nike earnings, and I got to check you guys' poll here in a second. AYI, ConAgra, Calm, RPM. We have the ADP report coming out tomorrow. We got the non-farm payroll report on Friday. Number of S&P 500 stocks above the 50-day moving average is 52%. To the platform, please. Whit, what's going on, man? How you doing? Andrew Cortado, you know, I think that's the first order. It's really should be my second order of business, but let's make it the first. Let's see where the stock is. Oh, we're the lows of the day. Let's do it. Yeah, November. God, there's not a whole ton of premium to this, but this is a pretty easy trade. 175s, give me a fill. Let's go. No 175, so I'm standing on business on that. Standing on business, okay? You guys know what standing on business means? You guys know that, right? So we were at this wedding. My brother-in-law got married. My wife's from Wisconsin, so we were at this wedding, and we went and hung out after in downtown Appleton. If you've never been to Appleton, Wisconsin, it is a riot. It's a great time. And the funniest thing was these ladies were talking. They were walking by and they were talking about something, I don't know. And the one lady goes, "You did not stand on business." And my wife was like, "What does standing on business mean?" I'm like, "Really? You don't know?" It's like, first of all, the way she just said it is hilarious. Absolutely hilarious. Yeah, I'm trying to sell this one right now. 175 is moving away from me. Hopefully this down ticks a little bit. I got to clean up a couple of things, I think. I mean, you know, we're starting to get earnings now, or earnings are starting to flow into the system. I've made some money on this Baidu strangle. Time to close it. 695. We're closing this thing. It's a nice little gainer, but time to go. Replace. Come on, man. Don't make me pay up too much. Jeez. Close that one. Publish the follow feed. Yes. That's right. Karnal is right. Houdini's Museum in Appleton. Houdini is from Appleton, actually, I think, right? Houdini's from Appleton. Those are like their two main people, Houdini and Willem Dafoe. Those are their two main people. You know what I mean? Oh, Cubs game starting now. Yeah, thanks, Mikos. Appreciate you, man. Oh, Cubs game. Cubs game just started. Yeah, 2:08. Let's go Cubs. We got to beat the Padres. What else do I need to close? I'm going to close this IonQ. In my mind, a name with this type of volatility, the actual, look, this is how I rationalize it, okay? It's still a 35 IVR, but a name with this type of volatility, I would say 35 IVR when it's already still 100, it's come in some to me, if that makes any sense. So I'm closing this thing. It's time to go. It's been fun. See ya. Wouldn't want to be ya. Come on. Is this in pennies? Yes, it trades in pennies, so I don't need to go all the way to 80. You see that, right? Like, it trades in pennies. So sometimes when you don't get filled right away, it's because it doesn't trade in pennies. This one actually did trade in pennies, so instead of having to go all the way to 780, I was able to get filled at 778. Host that to follow feed. Getting a little capital back. Hopefully I'm just closing things at the right time. Getting a little capital back, and then... Now, this one actually annoys me because I could have sworn I was up money in here earlier today, and I don't know if the market got wide or what happened, but I'm not up nearly as much money as I thought I was in this Oklo. However, you know, when I see something like this, right, this BE, this thing literally just took off on me a little earlier. I don't know what happened. I didn't even see if there's any news. There really wasn't in the last little bit of time. And I was short of strangle in here and just literally just took off a few minutes ago. And see, that's exactly the kind, like around almost 2 hours ago. Slowly though, right? Slowly. It wasn't like a rocket straight up, but slowly it started doing that. And that's how these names can operate. The Oklos, the BEs of the world. I mean, the IVR in here earlier this morning was like 70 and now it jumped up to 100. And it has earnings coming up. I don't need to be in this thing now. I was in here. It was working fairly okay, but I'm just going to stay away now. This thing is wild. I just closed it. I think I closed it for a loss. It's whatever. I got to move on. This Oklo, again, now it's in the mid-30s. And I think for these names like this, the vol breathes in these things really well, and so I just don't want this to be another name that, again, turns around on me all of a sudden and it's back up to 140, and I'm the wrong way in it. It's worked, it's semi-worked out. I've rolled a couple of times to try to fix position, but this has taken up a massive amount of capital. It's time to go. Sometimes there's nothing more important than knowing when it's time to leave the party. You know what I'm saying? Like, you just got to know. So, and if not, you're going to end up being the last one there. You got to help clean up, put the chairs away, all that shit. No, it's time to go. It's time to go. All right, so we closed 3 different strangles. We still got on the IBM strangle. We still got on the Accenture strangle. Oracle. If I told you 5 years ago that I'd have strangles in Oracle and Accenture and IBM because the implied vol was high, you'd ask me what I was smoking. I mean, that was legit. But these things have had high implied vol recently, right? And all of them have higher RVR. So, yeah, we're going to hold on to these for a little bit. We've clawed back some capital here. This is, these are calendar call spreads. A couple of minutes left here in the show. I'm trying to see who is, hopefully the Cubs stand on business today. You know what I mean? NVO, you guys talking about NVO? I haven't heard about NVO in a minute. I can't believe the haircut that this stock has taken. So I'm still working this put in DraftKings. I'm not budging off of 175. Either kiss me or you don't. Let's see. Nike. Before we go, we got to talk about Nike earnings here. Almost a 10% expected move in here. 6.25. Oh, geez. It's hard to envision them moving to the upside because they just still have this big overhang of the tariffs. Any positive news about tariffs being unconstitutional obviously works well for them, but that's not what they're talking about here. We're talking about earnings. For that reason, gosh, I mean, I should stay out, but because it is below, it is just below. It's right around the low. I mean, it's either going to completely collapse back down to 60 and fill this gap, or it could maybe possibly move back towards up. Look, we always play to the upside. We always do it cheap for a reason. Let's do it again, I suppose. I don't feel good about this one, though. I got to be honest with you. I really don't. I'm trying to think if I want to give it more time here. Does it matter to actual October? Maybe. I'm going to go with, here's what I'm going to do. I'm going to go with the 75s here. 75s, no, I'm going to go regular October. Going with the 75s on that. Bam. And then I'm going to go with the 80s, I suppose, but I'm going to use that expiration. I really don't anticipate this thing doing much. Those are kind of cheap. I typically don't do 2, but we're going to do 2 of those. That's the way we're going to play it. Not a whole lot of conviction here in Nike going up. And I'll tell you what, if it does, it has plenty of room to go. You can really catch it no matter what. So that's the way I'm doing it. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, trade them often. See ya.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Hello everybody, Tim Knight here. If you didn't watch yesterday's show, please do, with some important updates and explanations. I have my white shirt on, fresh, clean start. It's an interesting day, of course, because in about 11 hours and 40 minutes, the government should shut down. Actually, I guess I'm in the Pacific time zone, so I'm adding 3 hours to that. I guess it's a lot less than more, I guess 8 hours and 40 minutes. But glancing at the Polymarket betting site, 91% chance of a shutdown, which is the highest it's been all year. And that will have implications on us as traders because, first of all, a lot of data just goes away or is delayed until they're back up and running again. So like this Friday, the jobs report before the market opened, that was going to be the kind of the event of the week. That won't happen if they're shut down. And, you know, sometimes shutdowns last for months. Could make for an interesting market. Company data will still come out, of course. That's from private companies, not the government. But yeah, it could make for some weird environmental shifts and a mushing of data into the future. But anyway, we're still here. The markets are still open. And I have assembled some symbols. I have started to reassemble some of the augmentation of the charts. As I said yesterday, they'll be a lot simpler than you're used to. And this is a very different platform than my own. For one thing, you'll see a lot of kind of zooming in and out because what we typically did was I would show the whole chart and I would swipe in and zoom in. This is kind of the opposite, where every chart begins zoomed in to recent history, and then you'll see me zoom out from there. As I mentioned yesterday, it's going to be a bit of a learning process, but we've already made good progress, I'd say. So let's jump in and wish me luck. Let's see how this goes. Here is NVIDIA, and the reason I'm highlighting this is it is now it's typically the most valuable company in the world. Now it's really the most valuable company in the world. We have broken above its prior high, And it is the first company in history to be worth $4.5 trillion plus. What can you say? I will say this, though. If you follow me on Twitter, which is now x.com, I just sent out a really cool image that a gentleman created to sort of show the very circular nature of this AI economy we're in. It's about 9 companies, Oracle, OpenAI, NVIDIA, a small handful back and forth hundreds of billions of dollars with deals and agreements and rental obligations and so forth. It's like a virtuous cycle, but it does show how precarious it is, because if any of those starts to break down, it could have the same negative effects as it has to date had positive effects. NVIDIA is not feeling that pain, though. They are just sailing along tremendously well. And I don't go near the thing myself, but yeah, this is a record for the company. Now, the spider, I really want to emphasize because of this wedge. This is a broken wedge pattern, and this goes back to early this year, in particular, the April 7 Liberation Day bottom. Now, Liberation Day itself is, of course, on April 2nd, but the Liberation Day bottom was when basically the market realized that everything that was announced was pretty much nothing to worry about. And so it crashed hard that weekend, and it's hardly looked back since. Last week, Wednesday, I think it was, we sneaked below that line for the first time. And what's really interesting is we've been below it ever since, which for me affirms the shift in role from support to resistance. So it had been support from April 7 all the way through last Wednesday. And intraday Wednesday, it cracked below that, and it stayed below it Thursday, Friday, Monday, Tuesday. Now today is an up day. It had been red for about the first 4 hours of the trading session. It was down, and then we're roaring higher, as is kind of typical. But let's keep an eye on this, because that line should hold prices back. And keep in mind, this is a sharply ascending line. We could have lifetime highs tomorrow and still be below this line and still have that line serve as resistance. But it's an important subtle break. And what's interesting for me personally is I have presently 21 short positions, and the ES is up, the NQ is up, and of those 21 positions, looks like 17 are down. Some of them quite nicely, and 4 of them are up like 0.7%, et cetera, like fractionally. So that's why I'm on the hunt for, the best opportunities on the short side in this, in my opinion, very richly valued market of ours. Here's the diamonds, same deal. We've got a trend line here that goes back to the April 7 bottom. And I didn't, and we're going to do this together. I didn't draw, you know what? I'm not going to spend your time on that. Well, I'll monkey around with that later. I noticed I didn't have the upper line for the wedge here, but what's key is this line. But we broke it last Wednesday, just like the spider, and we've stayed below it ever since. Also, I would point out that the larger pattern is defined by this horizontal line. And you'll see this just about everywhere. There's a lot of similarities across all the markets, but this line constituted resistance for this enormous inverted head and shoulders pattern. The point being that if we do start falling in earnest, fall and fall and fall, it won't matter that much until and unless we break below this line as well. Because this failure has changed, is basically broken this uptrend's cleanness and has changed the line to resistance. But if we break this line here, which will take a little doing, that negates that much more significant bullish pattern. As far as the small caps go, and I am short this, I'm short the IWM with a stop just above this level like so. This one hasn't broken the trend line yet. What's a little interesting about this one is this horizontal that you see that goes way back here to 2021. because in November 2021, that was the lifetime high for the small caps and sort of the crescendo of the COVID bounce. And as I've mentioned before, we had a nominal new high here. Nominal is a nice way of saying by like a few pennies, barely new high. So like so. We had our plunge, our tariff plunge, our Liberation Day bounce back, so this giant V. And then most recently, we made another slightly lifetime high. The key is what's going to happen here. There's that line break, because what I would contend is that just as the brief tag of that lifetime high was nothing more than kind of a last gasp before this began, let's see what's going to happen here. Is this a triple top, or is this the beginning of a breakout? Some may argue this is a very large cup with handle pattern. I think this is far too deep to call it that myself. Semiconductors, SMH, looks like a lifetime high close coming up there, which is not exactly a shock considering NVIDIA, the biggest component of that, is itself at a lifetime high. And as I mentioned, the first $4.5 trillion company. Some of you may have heard the rumblings about this beast, Wolf. I don't know all the particulars, but I believe what's been going on here is that this has been, as you can see, they had a horrible slide here, negative 99 point something % loss. And then just in recent days, an explosion higher, particularly with an announcement last night about a restructuring of the company. You've got to wonder if anybody was short this beast, because it's up quadruple digits today, percentage-wise, I believe. So as a chartist, for me, it's a little bit interesting to see that this incredible move higher is doing a beautiful job getting right underneath that massive supply. So that's probably about all it's got. But I fear for any fellow bears out there who had the misfortune of being short this creature. In sharp contrast to that, here is a pretty recent offering, Fly, which is at a lifetime low today because, well, the rocket blew up on the pad. So there's a lot of these IPOs, recent IPOs. Klarna is another one, not doing well. And it kind of makes sense because, if you went public in, say, 1983, it's a very loamy, fertile ground to be planted in. As it is now, if you're IPOing at these valuations, yeah, it's dicey. Most IPOs I'm looking at just kind of wither away. I don't know if it's I'm just too chatty today or what, because we've got only a couple minutes left and I've got a bunch more symbols left. So I'm wondering if I should just leap around a little bit. We'll just keep going. And I'll say goodbye when the time's up. A few odds and ends from Shortland here. Continue to be short AMD. I'd mentioned not going near NVIDIA, but I have no problem being short AMD. It's very richly valued itself. And as I said yesterday, stocks have personalities like people do. And the personality of AMD, in my estimation, is it does tend to top and drop quite nicely. And I think we're going through that right now. I also continue to be short Abercrombie & Fitch, ANF, which has a couple of cool things going on. We had this beautiful symmetric triangle failure way back when. And then more recently, we've had this top, which is busting lower. And sometimes I say that it's important to remember that tops don't necessarily have to be the top of anything. It can be a continuation pattern like this. It looks toppy, and it's deep, deep down. The stock's already much lower than it had been. But I still call it a top because my view is that it's going to be pushing lower. And another old favorite is the Key Morse company, CC, which as we dial this back, you can see this amazing distribution top right here, which we blasted higher toward late last year and seem to be working our way lower on this. So this is one of my, it's kind of thinly traded, but this is one of my more favorite charts. Executive decision time. Let's see, maybe one last one before we say goodbye. You know what? Let's just look at OUNZ. Even though it's pretty thin, I think it's a nice illustration of just how relentless precious metals have been. This is kind of an amalgamation, probably literally and figuratively, of silver and gold. And the chart speaks for itself. You can see here that this long consolidation period which back here, early in 2024, burst forth and started to release all that pent-up energy. And this is kind of a peewee version of that right there. And it's no shock. I think precious metals long-term are going to continue, as I've said repeatedly, have an amazing time. And there's going to be some backing and filling from time to time. But over a period of months or even years, I think that these precious metals will continue to do great. We made it. Good. All right. Well, I'll say farewell, and I'll see you tomorrow. And whether or not the federal government is open, I'll be here. So, good night.
When the market moves,
they'll probably ramp
traders
this
need to
stuff.
move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient, and tastylive does it. Again, they teach it in a way that is fun, it's easy to understand, and you're learning from people that have done it for 40 years.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Ring the alarm, boys! Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, we are back, my friend, and as foretold, as always, as every day ends, the E-minis are up 18 here.
Yeah.
We're back.
It's, like I said before, this is the new This is the new up 7 every day. It's just up 18 because the product is three times
the size is what we're used to here.
But yeah, really low volatility. Government shutdown pending. Market
Who cares?
care. Expected move for tomorrow is 28 points, which is not much at all. 50 points for the rest of the week. So yeah, it's kind of a strap in and watch the paint dry scenario.
Yes, incredible. E-mini's up 18 or just under 18 here. NASDAQ up 30. You got the Dow up 24 and the Russell down 5. The Russell actually bucking the trend today. Bonds actually just turned lower. Oil down 90 cents. It was much lower this morning, 62 and change. You have volatility futures down 10 ticks, basically unchanged here on the session. Bonds down 8 ticks. You got gold up 27. It has just been a moonshot for the metals here. Silver kind of staying flat for the day, down 26 cents. Bitcoin has also started to move higher. Futures only down 200, spot up 500. On the news that Kazakhstan is starting a Bitcoin reserve. Did you see that one?
Perfect. Everybody should have it, right? You get one. You get one. But yeah, nice little rally into the close here, like the rest of the market. Costco up 12. That's nice. I've got a 1,000 strike calendar spread.
There you go. That should help a little bit.
We bought the dip in silver today. We had Thomas on.
Beautiful.
OTC Live.
Oh.
And he explained that.
You make me jealous.
Yeah. Well, you could always pop in if you want. But yeah, gold and silver. Gold, silver, and the S&P tend to do well during government shutdowns.
What'd you do in silver?
Just a short put spread. The 45 and a quarter and the 45.
Oh, and the silver futures.
Silver
much
futures,
bigger.
yeah.
SI. Okay.
Silver futures, yes.
Yeah, because it's hard. Silver SLV is hard.
Yeah.
Got to kind of be directional zebra type trades because there's just not enough juice to sell in a
right
$40-ish stock.
Yeah, so I sold that for like almost $485. Risk is like $600-700. So it's up. It's reversing today. It was down 1% earlier. It's up, or it's only down 0.5% now. So we'll see if the prophecy holds.
Yes, and by prophecy you mean SPX guess the market, right?
Yeah.
50 or 66.50 maybe if we get a little tiny bit of a down move. If we get that one.
Yeah, I'm excited to see who wins it.
Yes.
Who takes home the crown?
We got a couple things that we'll get to first, and then we'll get to SPX. First of all, if you want to see Tom and Tony, they will be in Los Angeles coming up this Friday. So you can sign up for that, tastylive.com/events. You can sign up and see Mike and I and Katie out in Dallas coming up here soon as well. A couple other shows throughout the rest of the year here. So if you want to see us or Tom and Tony live, you can sign up for those and get those. We also have Cherry Picks today. It's Cherry Picks Tuesday. So we've got some good stuff from Dr. Data and Co. So we're looking at just selling puts in the S&P 500. So you can look at the SPX put right index and kind of see where that is at. The ticker is just put. And so you can aptly named, of course. It's not a tradable index. It's just like basically if you sold puts, I think it's a 30-day look back. But you could also use the look back feature in the platform to do your own back testing there. So it's just kind of a look at some of the returns there if you were wondering. Of course, you can just do this yourself via SPY, SPX, depending on your account size. Also took a look at gold and silver. So you got some returns there and just like a look at just how incredible the move has been in both the metals. And then two trade ideas, Uber and CCJ, putting on a little bit of risk in both those trades here, naked positions. So something new for you. Which also brings me to a third thing that I forgot about, which is what's your assumption, which is tomorrow. So if you have assumptions, you want to put your trades on with my dad and I in the morning, tastylive.com/assumptions. Get those trades in.
Yeah.
We're putting the slides together now.
It's always a fun time.
Yes.
And the people do be submitting good trades.
Yes.
A lot of our nice trades come from what's your assumption in fast market?
Yes.
Is it brings us out of our own brains, you know, for the most part.
Yeah.
But yeah, seeing lots of interesting movements in some futures products, but definitely sign up for the Cherry Picks newsletter. Get that data, totally free, always informative. But yeah.
Nike earnings after the close too.
Yeah.
That's our one earnings. I have two positions on in there. So I did a call diagonal spread a couple days back, maybe a week back. So I'm long the 70 out in November, short the 75 in the weekly. I did that at 301. It's marked at 309 right now. So it's a little bit higher, vol getting pumped in there a little bit. I also sold the 62.5 puts in November. So I have a double long position here, or at least long/neutral short volatility in the short term here. Ivy rank at 56, so relatively decent considering the rest of the vol landscape in the market.
I put on a downside put diagonal in Nike.
Wow.
Yeah.
Wow.
Yeah.
What has changed?
I just don't.
But it was until proven otherwise.
Well, until proven otherwise, unless you're Nike and all of your products are tariffed up the wazoo. But yeah, I think it's interesting. We'll see if they can recover, but a lot of red days, and then there's a huge gap up that happened in the early July, where if there's any bad news, I think you just go right back down to 60. So.
Well, that'd be fine for my 62.5 puts.
Yeah.
I mean, it would be
fine.
A little paper cut.
Yeah.
Position there.
But yeah, I bought the 70 in December because IV in there it's relatively high in the near term, but out in December it's bottom of the barrel still, 44%. So I went out and bought the December 70 strike for $500, and then I sold the 3-day against it, the 63 strike for 60 cents. Say that 10 times fast. So yeah, that's the trade.
Some of the biggest movers of the day, you got a lot of the healthcare stocks moving today. I saw some Pfizer news. I will have to add that to the Trump basket, the government portfolio basket. I saw they had some deal on some drug manufacturing over the next couple of years. So you got Pfizer up, MRK is up, Eli Lilly up 38, Thermo Bravo is up 22. You got BMY in there, GE, NVIDIA, of course, having a big move to the upside, basically putting in new highs today. On the downside, you have Intel, PayPal, CRM, just some of the dogs here. Nothing super crazy here. I did sell a wide put spread in Meta. If you haven't looked at Meta, Meta has had about a $50 or $60 down move from its high. So if you're looking to buy a dip, maybe that's something. You don't fade Zuck anymore, right?
I don't. Yeah, I can't do it anymore. It was fun while it lasted, but can't do it anymore.
Yes. The other thing we did, we had Glenn on this morning for our trades from the trade desk, all three trade desks. So we had Glenn on. He put us in Aussie dollar, or at least pointed us towards Aussie dollar. I did an iron condor there. Might be interesting for you, or maybe even a short position there. If you wanted to be short, you could get long the New Zealand dollar against the Aussie dollar. So you'd be short the Aussie-New Zealand pair, which if you want a price extreme, that is at a price extreme.
I'll have to check it out. You did this in the TastyFX?
Yeah.
Platform? Cool. Aussie, New Zealand?
Yeah, so if you pull up Aussie, New Zealand, you can see we are having quite the move to the upside here.
Near the upper Bollinger.
Yeah, that's Glenn's move. This is it.
So, if we sell this thing, okay, yeah, we can bite on this.
Yeah, there you go. A little something. Looking for a price extreme.
Perfect. I'm in.
Very nice.
I'm in. 15 minutes left.
Yeah, you want to pull up the slide, see who's bouncing around here? Very sad that our very own Miss Katie McGarrigle is about 100 points off, but she was in the running here. Fun little chart of the distribution of all the guesses. So I broke this down into Q1, Q2, Q3, Q4. So you'll see this moving forward. Got the Wall Street median S&P 500 target way up there. Couple of the guesses here. Katie gets the gold star as the closest here. I give Mikey kind of the forward-looking gold star as he's pretty much you and Katie.
Yeah.
And then Tony's up there too, 68.05. If we continue this moonshot higher, you three are going to be competing for the $1,000, but you can't get any of it. Sorry.
It's all right. I feel really good about my chances for Q4, given the landscape where we're at now. But yes, let's bring in the people.
Yeah. So who do we got here? So 66.75 is kind of where we're at right now. SPX at 66.76 and change here. So currently we're sitting around. So we got Tony in Ireland, which is fun. We got Florida just above that. Can we go to the slide before this one? Because this will be on the upside here. Because we just sold off about 5 or 6 handles. They're bouncing back now. You got 66.78. So we got a handful of people that are in the running here. Ontario, Calgary.
Hopefully, all these people bought butterflies at their short strikes with their gas too.
But that would require remembering what your quarter guess was, which was 9 months ago.
That's
almost 10 months ago.
That is true. But yeah, handful of people in the running within, let's say, 10 points. Which you'd love to see. But yeah, maybe we'll get some crazy volatility into the close, and it will bring us the quarterly winner.
E-minis up 18. You got the NASDAQ up 26. They did just tick red just shortly before we pulled up those slides. A little bit of a chop fest here. I'm sure we get a little bit more action in a couple minutes once all the rebalancing and market imbalances coming in on the close here. We'll see some choppiness into the close. You got Santa Claus coming up soon. Is that coming into play here soon? Yes. Yeah.
It always does.
7,000.
I'm telling you, so if we don't hit 7,000,
is your 69.69 too conservative?
Yeah.
It's too conservative?
Yeah.
Oh my God.
No, I mean, I think we're going to 7,000 this year. The probabilities aren't that far off. It's a 50-50 shot whether we touch 7,000 in SPX by December 31st. You can just look at the delta of the 7,000 strike in that December 31st quarterly expiration. It's a 27 delta, which is a 50 probability of touch, 50% probability of touch. So, yeah, I mean, why shouldn't we go there? That's
true.
That's the question.
Dad,
volatility's near lows. The curve of volatility futures is in contango, pretty steep contango. Interest rate cuts are essentially priced in for the next decision in October and then the next one in December. I mean,
all systems go.
Yeah.
Money printer go burr.
Yeah. I think unfortunately we might be in for a low volatility end of the year after being blessed with such volatility in the early parts of the year.
Okay.
But things can change on a dime. But if they don't change, if we stay in this low vol environment, I just don't see how we don't go to 7,000.
So then what do you do? Is it just like a sell SPX put spreads every morning and then go to lunch? Is it like that kind of thing?
Or you just do a calendar spread in SPX. You buy Fab, you sell D's 31. That's really expensive though. That's a $6,000 calendar spread.
We did a SPX Iron Condor this morning, closed it out. We put a GTC in for a $100 profit. It was actually a good close with the market rallying here. We would be slightly in the money on that position now, so that was a good close. But I imagine if you were trading zero-day SPX stuff, with most of the session today being much of a chop fest, you probably have been out of your position for quite some time. It was probably a good day for the zero-day traders.
Yeah, I actually just put on a new one right before this show. So I have the 1 day for tomorrow.
Did you had one for today that you
I had one for today, yes. That was a $100 winner.
Nice.
And I did the same exact setup today. So I got the 6640, 6700 short options for tomorrow, and then I defined risk 5 points wide, collected $190. So I'll be looking for the same thing, just an inside chop day. close it in the morning sometime for 90-cent winner, something like that. Right. And if not, I'll just hold it until the end of the day. Let it ride.
All right, here, 10 minutes to go into the close. We are at highs, 66.84 on SPX. E-minis at 67.34. I will do a PSA, and we talked about it this morning. TLT has a dividend coming up, which will go ex-dividend today? Is it tomorrow?
TLT?
Yes. I believe it's today. It should be somewhere around 25 to 30-ish cents. So if you have in-the-money short calls, just watch those positions or at least close, roll them as soon as possible.
I think it's tomorrow.
Tomorrow is the X date?
The dividend is listed as the 2nd. Or sorry, I'm looking at the wrong month.
Yeah, that's
So,
September.
yeah.
So it should be the 1st.
Yeah.
So I think it goes X as of today.
Okay.
So you gotta close your positions, roll them today. E-minis trading 1.17 million contracts, got over the million mark today after a slow day yesterday. E-minis up 24 and change. They're squeezing them, goosing them higher into the close here.
Goosing indeed.
SPX 66.86. Let's take a look at those slides and see where we're at here.
66.86.
Should be the first slide here. If we go one more, yeah. One more, yeah, there we go. 66.86. That puts us, so you got two people at 87, Daniel and Michael.
Sarasota, shout out. CSP
yeah.
Oyster Bar. Great spot.
Yeah?
Yeah. Well, we got two people at 66.87.
Yeah. I really hope we don't get this squeeze to 6,700. That would be real bad. I don't want that. I don't want that for anyone.
No, we won't.
Can't get that.
We're not going to get that. But yeah, we've got a handful of people within striking distance.
Mm-hmm.
And we are getting closer and closer to the final answer. But yes, can't wait to see who it is.
Yes.
A lot of California people here. Interesting.
It's a big state. A lot of people.
True.
There. So
fair.
Law of large numbers kind of thing.
Yeah. When you put it that way.
E-minis up 26 here, squeezing higher. NASDAQ up 55. A little bit of a chop between the big name tech stocks. You got Tesla basically unchanged today. Apple has been kind of weak throughout the session. It's now ticked into the green. Amazon, despite all the upgrades that it had in the overnight session, it's down $2 and change. NVIDIA has been kind of leading the way here, 186.43, up $4 and change. E-minis up 28 now. NASDAQ up 60.
Yeah.
Gotta have them.
Yeah.
Gotta have them. Can't
if you
go
couldn't
home.
have had it all day earlier.
Can't go
gotta
home
have
without
it
them.
before the market closes.
Got it.
But yeah, interesting
Finally taking
move
some
here.
volatility out too.
Interesting move considering the expected move when I got off the show at noon was only like 10 points.
Mm-hmm.
And we've basically tripled that range to the upside. So yeah.
Was there ever a doubt?
I guess
the good doctor
not.
would say.
Yeah. We are in peak complacency.
Is this putting us near new highs, or we're still like 10 or 15 points off of all-time highs?
Yeah, we're getting close.
Yeah.
We gotta get basically half a point below 7,000.
Mm-hmm.
Or sorry, 6,700. 7,000.
E-minis up 29. They're squeezing them.
Yeah.
Gotta have them.
Yeah, the shorts are going bye-bye.
Shorts are dead. They've been dead for about 400 points.
Who is this good for? Because now we're in a whole nother realm of
Yeah,
SPX
we're moving up the pages here. I hope I put enough on there.
You can't discount the fact that the 230 buy buttons.
I mean, I was looking at the expected move 10 minutes before we got on the show, and it was like 15 points or less. And we've rallied 15 points in the last 5 minutes. So, yeah, I was a little caught off guard there, but we have some people there. We've got, so SPX sitting at 66.90 right now. That would put, we got 66.91 Davion in Alabama and Sarveshwaran in Houston at 66.91. Ron, Las Vegas, 66.91. Of course, you got the gambler coming into play here on a tail event to the upside. Love it. 66.89 here. E-mini's up 27. NASDAQ up 68. What are they moving here? What's the...
Yeah, like what is actually moving?
Like what are they buying right now that's moving the market 10, 15 points? Just everything.
Yeah, some weird names at the top. Merck, Pfizer, Eli Lilly. Did something just like get approved that we
it was I told you it's the US government stock portfolio. Pfizer like agreed to have some sort of
it's the syringe portfolio. AbbVie, Pfizer, Lilly.
Yes. No tariffs if they agree to this and that and whatnot. So
Nvidia,
all the same.
Nvidia continuing its rally, busting through new highs. 186.5 now.
Yes.
Near the top of the list of the S&P 100. But yeah, it's an interesting portfolio of pharma companies at the top of the S&P 100.
Pfizer's been dead though. I mean, it's having a big move today, 6.5%.
Yeah,
$1.50. But it's we're still near the lows.
Yeah,
I mean we're just off the lows here.
All these are up 5-6%. It's kind of crazy.
E-mini's up 29. Keep them going. 67.43, the high of the session.
3.5 minutes left.
What do you think? 67.50. You get 7 more points. You pin SPX at 6,700. You're just under it.
Yeah, I mean, I think we stop at 66.90.
Isn't it funny? We're just like speculating on 7 points to the upside in 3 minutes.
Yeah,
just squeezing to round numbers.
Yeah.
And the SPX volume is off the charts. If you look at, all the call side from 66.60 to 66.90 is 100,000 contracts. That's a massive gamma right there. Just buy them.
Yeah.
Just buy them.
Basically, all of the Mag 7 stocks are now up on the day. Some were struggling. Apple was struggling. It's ticked green. Amazon's down. That's unfortunate.
Yeah.
But yeah, seeing some big moves in Nvidia, Microsoft.
Mm-hmm. Oh yeah, they're buying Microsoft. There you go, into the close here. Microsoft was down most of the day.
Yeah. In the last 15 minutes or so, it's ripped up almost
$3 to $2.50 here.
Yep.
E-mini's up 29. We are heading into the close here. What do we got? 2 minutes. A little under 2 minutes here. SPX 66.88. There is a runoff, so we will stay on for a minute just to make sure nothing crazy happens. SPX into the close. There's a runoff of the settlement of all the stock shares. So we will give it time to settle in and see what happens here. But 66.88 is the number right now. We've definitely got some people that are within a skosh, as Mr. Tim Knight would say.
Michael from Tampa is the only one with 66.88 on the dot. Could be a record. Could be a record breaker.
Yes.
But yeah, that's looking really, really nice right now. 1 minute to go. 1 minute to go.
What do they do tomorrow after we close the third quarter? All-time highs are just basically off all-time highs.
I think it's the same.
More
as
of the same.
Today, yeah.
Just buy the dip.
I think we open flat and then we just drift higher throughout the day.
Mm-hmm. Taking vol out a little bit here. Vol coming in 20 cents.
Yeah, I'm just.
Bitcoin's back up. I mean, it's telling you risk is on.
Yeah, and the government shutdown is basically a non-event based on SPX implied volatility.
Mm-hmm.
The market isn't pricing in really any volatility for this week related to that. So, yeah, we need something. If we are to expect big moves in the market, specifically to the downside, we need some kind of catalyst.
Let's get to the slide here. We got 66.88 chopping around between 66.87. Ooh, there we go. There's our bell. So E-minis are up 24 and change. They're selling off a little bit here into the close. 66.88.42 is what we have on the dot right now. That puts us currently right at Michael in Tampa, Florida. I mean, I think he's pretty much got it locked up unless they mark this up another point, which that would be quite a surprise here. He's going to be right on the dot by 43 cents. What do you think the chance of that is?
0. That's why you got to buy.
You can't say 0 because he just did it.
If you're going to do this, you got to buy a butterfly wrapping around your guess.
Big wide butterfly, as wide as you can go.
Yeah, because it'll cost you when you put this in at the beginning.
But he's
going to
win $1,000. That's pretty good.
No, I know it's amazing, but I'm saying you could have paid $5 for a $20,000 wide SPX. Like it's got to be so cheap.
At the beginning of the year.
Yeah, beginning of the year, out in time. However many 100 points higher. It's got to be less than $100 for like a 20-point wide butterfly. I would guess. I mean, we could look at it.
So, yeah. Or you play it just on the day, like today. But yeah, that requires that you remember your guesses, as we said.
Correct.
E-minis up 20, NASDAQ up 44. They sold off a little bit into the close here. You got SPX. It looks like we're going to be right around this number, 66.88.44. I don't even think the runoff really matters much because you're probably not getting a full point to the upside to bring Ron into the picture here. So I think we can declare Michael in Tampa, Florida, our Q3 winner. Congrats to Michael, $1,000 in your pocket coming your way soon. There you go. We got the sound effects for it.
Hey, Michael's a great name. We'll take a win for the Michaels.
And a ding and a bell for you. Perfect.
Congrats to Michael, Tampa, Florida.
I will follow up with you shortly.
What a guess.
Maybe tomorrow morning.
What a guess.
Yes, an amazing guess.
66.88. I want the narrative. And it's 66.88.44. Maybe he was just going double digit, even numbers. Crazy. But yeah.
A good job out of you, Michael. An amazing guess.
Indeed.
Beautiful. Well, that's it for us. We ended the quarter basically at all-time highs and more to come tomorrow, right?
Indeed.
All right, we're going to take a quick little 90-second break and come back with the Overtime Boys. You're listening to Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
It was a great show, very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon. Every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
And we are back. This is Overtime. I'm Ilya Spivak here in San Francisco. That's Glenn and Thomas in Chicago. Gentlemen, you're sitting opposite each other in the studio. How does it feel?
Feels amazing. I mean, I feel the synergy already. So
I know this is my first time being on with Thomas. It's exciting.
We're in the big boy chairs, so feels great.
Well, now yours is kind of a bigger boy chair than mine. Now it's just Nick sitting here. It was a lot cooler when it was Tom sitting here, sitting in Tom's chair, but Nick's doing a pretty good job.
Absorb the energy. The chair surely can exude those strong vibes.
Absolutely. How are you?
Good. Watching these markets, I think, and waiting for something to happen, much as everyone today, which I suppose is the segue of segues here. It's kind of a day here today. Obviously, we might get a government shutdown in the U.S. We might not. S&P doesn't seem to mind very much. A little bit higher on the day here. What are your thoughts? Is this complacency, or do we just not care?
I think it's complacency. I mean, government shutdowns, they really don't affect the calculus for equity markets when there is government shutdowns. I mean, I know we looked at that chart last week.
We did,
the last government shutdown, the 35 days, that was the longest in history. So, I mean, it's kind of different from most shutdowns, being that they're usually 1, 2, 3, 4 days. You know, they're usually a very quick event. But if we're going off, recent history, the 2018, 2019 shutdown, we might expect a longer shutdown this time, but what happened last time is the market rallied about 9% over that time. So, I mean, equity traders, largely don't seem to care about a shutdown that much.
And much like finishing a 5K or a 10K, we needed to boost the numbers for the quarterly numbers that just closed here, rallying into the close as we end September. So, yeah, I agree. If you look at this wonderful chart we pulled, I think you guys covered it before. Yeah, if we're talking about government shutdown, equity is not where you want to look, because we have enough action going on in commodities and FX markets if you want to play some of those stories.
Oh, we've got the crew to talk FX markets here. I mean, I think, I'm an old FX hand, so is Thomas. Glenn, you're in the game as we speak. So this is going to be an FX heavy discussion. Get ready, everyone. We've taken over and we're going off the books. This is the chart that Thomas was referencing here. He put this together for us last week. We can see the performance of the S&P 500 here relative to the duration of the shutdown. And obviously, the upward slope of this line tells you that the duration of the shutdown and that there are shutdowns is not necessarily a bad thing for equity markets. Historically, obviously, this is not the world's biggest data set, so take it with a grain of salt. The sample space here is a little small, but that is also the sample space as it presents itself, and the market is looking at it collectively. So that we look at this and what the markets are looking at, the same thing. And so the presumption likely that we are not going to have anything too crazy come of this, especially since most of these things, even the longest one last go around, they tend to either get resolved at the 11th hour or they tend to resolve before you can directly view any of the impact in the data. I mean, you'd have to shut the government down for quite a while in order to see the data catch up and essentially have that show up as meaningful for employment, for growth, for earnings, beyond, let's say, a blip in a month here or there, where it's clear that there was an anomaly and things will come back. So it's probably not anything the market is terribly concerned about, but I do wonder if it is complacency, because something that I'm always focused on is this idea that if there's cheap money, then all things are okay, because you can digest a lot of bad news if you think the money is going to be cheap downwind, and cheaper is probably the key here. That if you think that losing money now is okay because borrowing that money in the future is going to be cheaper than now, well, then you're not so worried that you're going to make a mistake or that the markets are going to give you a weird outturn. And what's interesting in this context, this is the SR3Z6 contract, so this is December of next year. What we've seen really since the Fed meeting, which is right here, is this steady march in a more hawkish direction. So this is, of course, the quote for this 3-month interest rate future. So the implied rate, much as would be bonds and yields, is upside down. So this going down is yields going up. In other words, this is the shaving away of rate cut expectations for next year. And we've lost about a cut out of here. So when we look at this, one kind of thing that has me thinking, yeah, okay, but is the market being complacent, is this increasingly, at least as far as sort of since the Fed is concerned, is a market that thinks that the defenses from cheaper money are being weakened, not strengthened. And so if ever there was a time for the markets to go, oh man, we would have digested this thing without a hiccup, if only there wasn't simultaneously this idea that our ability to digest any which thing is being undermined because the Fed won't give us what we want. So that's really the only kind of lens for me, is I don't think this shutdown is going to be a big deal. I don't think the markets think it's going to be a big deal. But in an environment where the market might be less inclined to digest any deal of any kind, I think that could be saucy. Maybe. Though I think that's unlikely.
And the thing with the shutdown, we won't get the NFP. We won't get other government-funded or published economic data. So, it really works in two ways. You have less clarity on what the economy is doing, but at the same time, those headline risks, you say, we get a bad NFP number or something, that doesn't exist. So in a way, there's pros and cons to look at it. But also, it depends how long it goes on. So, on OTCL today, we were looking at gold and silver, how they perform during shutdowns. Gold generally performs pretty well. It doesn't do crazy things, but, averages about 1.5% higher during shutdowns over the 18 or something that we looked at. Silver, actually, although we had a smaller sample size for measuring it, silver also performs even better than gold through the past 4 shutdowns. So these assets that hedge uncertainty, they still work well during government shutdowns. So I'm long gold and silver, planning to hold them through at least until we get some clarity on this shutdown.
Because you're right.
I got shaken out of gold right here. Essentially, I ran it up and right around here, I thought, oh, maybe we're finally getting a little soggy. And so I got out, but I stayed in silver. And that has continued to work. That hasn't given the same kind of idea of a turn. And so I'm still holding it. I'm with you. I think there is more in the metals here, it seems, about sort of general freak out concern. Be it the shutdown, be it the possibility that the Supreme Court overrules the IEEPA tariffs, which is most of the way that the Trump administration has justified their tariffs. And that's just a messy thing. Like, all of these things just become messy and confusing. And I think that's why, sort of reflexively, the metals are doing as well as they are, even when you've had yields come in. Obviously, it should be kryptonite for metals when yields come higher, which is what this has been since the Fed, lining up, by the way, with the shaving off of that one cut out of next year's outlook. And of course, the dollar. And I know, Glenn, you're excited to talk about this. The dollar has been rebounding since the Fed. So higher dollar, higher yields should be terrible for precious metals, and yet here they are. So it seems exactly as you're saying, Thomas. This is more like, oh no, weird things may happen, sort of generally, and upend what the markets have been attempting to bake into the cake basically since April, give or take.
Yeah, and Glenn, you probably have noticed this too. Currencies, in gold, they're not behaving in the typical way to what yields are doing, or yields between countries. So they're being driven right now or recently by other factors for sure.
Yeah, if you're a dollar bull, this is the last little wrinkle you want in the mix, because like you've called out with all these charts, there has been a since the Fed storyline that's been clear on all of these charts. And when you fold in this government shutdown, that really changes the picture fundamentally, bolsters gold in the same research I did for Bat and Bat. What we've seen under the past government shutdowns, we see the moving gold primarily, and we see a slightly softer dollar, not to the tune of anything ridiculous, but it's not in a theoretical sense, it's never good for the U.S. dollar prospects in terms of choosing a flight to quality assets. That money isn't necessarily going to dollar, not going to bonds, and it's going to these precious metals that are already, top of their historic price ranges. So not good for dollar momentum thus far, but we'll see. What I'm really curious to see about is, because we're coming off of the longest government shutdown in recent history, what kind of a duration is priced in? It sounds funny to say, that this is all priced in, but there's got to be some sort of expectation around how long is currently priced in, and what would surprise markets in terms of how short or how long. So I think there is, if the how short narrative plays through, there's absolutely a case for dollar popping and metals falling again. But like Thomas brought up, an interesting perspective is, what does a data dependent Fed do without data? The whole month of October, 35 days would put us past the next Fed meeting scheduled for end of October. You mentioned that a cut is already kind of shaken out, but nobody's really saying where, if it's going to be October or December. So yeah, and I think the last point that I hadn't thought of at all was your point to the equity market, Thomas, about the lack of data is only a good thing for stocks, it appears like, because there's only risk to the downside for things like employment and all these other inflation measures, because people are still buying the dip. It's that easy.
Yeah.
Well, so if we to that point, I think if we take a look at two things. The first is that notice where the dollar starts to bottom here and kind of starts to maybe not fully kind of engage, but clearly whatever slope of decline was this, and this is the DXY index here, and maybe we can even go to a weekly chart to really see it clearly. This right here is April, and obviously we went into this with very aggressive selling that stopped right around here. And then we had a little kind of follow on, but it ultimately didn't really go anywhere, and we're essentially back to where that is. If you consider what this is essentially where stocks bottomed as well. They bottomed right in here. This is also the spot where gold started to sort of change its behavior. So if we go back here to that same spot, that this is it. That this is where gold goes into that long, sleepy range, where from April until, let's call it August, late August going into September, gold is basically just drifting sideways. In my mind, what this suggests is that whatever the markets got from Liberation Day and the administration's ultimate backing up off that, so they came out, they lifted up the phone board, markets freaked out, sold dollars and bonds and equities at the same time. And then the administration said, hey, whoa, take it easy. Okay. Let's not do all that. Here's a 90-day pause on everything. Let's walk this slowly. And so, and of course, in the meantime, things got diluted, and what the rates were on the phone board are not the rates for the big trading partners. So the can with China continues to get kicked down the road. So what we've learned is that the administration is amenable to market discipline. That essentially, if the markets freak out, they do listen. And so with that, you get then a pause in gold for a while. You get a pause in the bonds for a while. Let's see if we can get the continuous contract here to see this better. There we go. There's the bonds. Again, mid to late April right here. They stall and anchor. And, of course, the dollar. So I'm actually inclined to think that whatever sort of concern about the dollar there was in losing its kind of reflexive haven status, that's over. That actually the dollar is back to being a haven asset, because whatever that freak out in April was, we got the response from the administration, I think, that the markets wanted, which is to say they got scared and backed off. And so the markets are off, I think, this idea that the U.S. is going to cut off its nose to spite its face, come what may, on these tariffs. So that seems to be, I think, a recipe where the dollar is certainly responsive to yields as it usually is, and of course it's attempting to explore higher here now that we have rate cuts falling away out of the outlook as we saw. But it's been trying to bottom since July. And I think that's really more about this kind of idea that whatever the freak out about the structural integrity of a U.S.-based global financial order that there was in April, that's basically off the table now, at least as far as the markets are concerned. At least for the time being. And so I would think that's dollar supportive. As far as those rate cuts go, Glenn, you were talking October versus December. Let's see if I can share this screen with you. There we go. This is where we are on the CME FedWatch tool, which is just Fed funds futures implied. For October, we're at 96.7% chance that we're getting a cut. So hide your kids, hide your wife. The easing continues. Nobody is surprised here. The interesting thing, arguably, is December, because this has come in a little. So if we compare the way that this has looked, I mean, it's back to where it was for the most part a week ago. So in the immediate aftermath of the Fed. But last week, it got down a little. And yesterday, it got down a little. So it's not quite as done deal feeling as certainly October. I mean, October hasn't even budged. I mean, we've been sitting comfortably above 80% for a week now. So that doesn't seem like it's going anywhere. December might be debatable, but it's really the end of next year that I'm kind of the most focused on. This is the chart I keep using for my show, for Macro Money, where you can see for this year, we're discounted 36 basis points. So one cut is definitely in, and we're about 11 basis points in the direction of a second, which puts that second at basically a 50-50 shot, give or take. The big disconnect is next year, because the Fed told us they're only doing 25 basis points next year, and the markets have priced in 61.
Yeah.
Yeah, I think the big risk for markets is next year, when after we get a couple cuts, 2 or 3 cuts, you restoke demand in the economy, and then you start seeing upward price pressure, and then the focus shifts, is the Fed going to have to hike rates? I think next year is when the big market break happens on that narrative.
Mm-hmm. Yeah, because then you start to focus or price in, time into that equation, because there's been a lot of, headlines around what the neutral rate is when we get down there. But now we see that the Fed is going to take its time long enough to maybe get into a hike or cut scenario, instead of just a cut, and solely focus on cuts. So, yeah, I agree.
I don't know if we can hold out hope for a rate hike of any kind, but of course, in the current environment, who knows? It is certainly very choppy, and the news is coming fast and furious. do you guys have any ideas here on what you want to do exposure wise as we wait for the news to hit? Thomas, are you changing anything? Are you buying or selling anything? And Glenn, are you?
I kind of took a cue off Mikey today. I'm selling a one-day iron condor in the ES, so S&P 500 between 66.90, 67.30. We've been kind of moving sideways a bit, gentle upward lift, but I think, you know, by tomorrow I just see the prices staying the same. You know, I don't think the government shutdown. I think most people already know it's happening. I don't think it's going to generate a big down move or anything like that. So that's where I am with equities. Besides for being a little long Tesla, I mean, otherwise I'm long gold and silver more on the shutdown news.
Yeah, it's hard to have conviction in equities here, but it's one of those things where how long can you say that for? When you're pressing against all-time highs, and you have been all year. So, yeah, I mean, I'm waiting to see, but also challenging myself, you know, how long are you going to wait before taking a direction or taking a direction neutral strategy like you?
Yeah, and I mean, the S&P 500 today was carried a lot by a big move in healthcare stocks. XLV, the biggest daily gain since May today. So I think it was 2.45% or something, but you know,
2.42%.
Okay, yeah. So,
but yeah, I mean, to your point,
pretty big
massive move.
Without that, the S&P 500, I think from the weightings I looked, it would be down a little bit today if it wasn't for that. And that was a news-driven headline, you know, with this government-funded pharmacy, that direct-to-order.
Interesting. What are you looking at,
Ilya? I mean, if we take a look at the sector breakdown today, that's a perfect segue, Thomas. The sort of usual suspects that we'd be looking at, kind of soggy. Consumer staples up, but not by much. Discretionary down, but not by much. Energy down by 1%. I mean, obviously, technology is the big sort of heavy weight. That's up about 0.5%. Everything else is kind of meanderish, but for healthcare, where 2.4% is obviously a big thing. Financials down a little bit, about 0.5%, but not really running away from their levels here. Here's financials. I mean, you can roughly surmise this is a range. Here's communications, sort of the overlap for tech, not really going anywhere. Here's tech itself, not really going anywhere. The big thing, as you were saying, Thomas, XLV, and that this is episodic rather than kind of a big, broader market story. I'm looking at, so I'm pretty long the dollar here. I am also long the bonds a little. So when I was looking at this pullback here in the bonds from this level down to here, I thought this might be attractive risk reward to look for a bounce. So I have a little call vertical against this level here. It's maybe starting to work a little, but so far we're just finding this support and choosing to hold it. It's not like we've mounted any kind of a meaningful rally. In fact, we can see that these levels are kind of running up against where the former support has now become resistance, and we're essentially digesting. So we'll see what this does. And then I still have long side on this on silver, and I'm a little bit short stocks here only because I think the risk reward is better. So if you look at what's going on in S&P here, you've had a 3-day sell-off and you're back up into this range top. So either this is a top or it isn't. If it isn't, and the same thing that's been happening occurs, then you're wrong fast and you get out. And if this is a top and all of a sudden, finally, the straw that needed to break the camel's back, that is to say, a Fed that was insufficiently dovish to give everybody the cheap money they needed to forget that there's risk in the world, if that kind of basic underlying thing is getting unwound because the Fed isn't coming through, then maybe this is the real deal. And if it is, then you have a lot more room on the downside than you do before you're proven wrong. So that's really the only logic here. I'm not seeing anything necessarily that says, oh my God, the world is ending tomorrow. This is a pure kind of risk reward. We started a sell-off. We seem to take out what was the prior move higher. So if you kind of guesstimate that, okay, here's the last kind of base right here, and off that there was a trend higher, higher highs, higher lows. You made that break last week where this at least leg of the move higher, you could say, is over. And if that's over, then either this is a pullback that's already ended and we'll find out right here, or this really is a top of some kind. And if it is, then it's cheap to find out. Vol is only 15.
Yeah, and I mean, like Glenn talked about, we're at the end of the quarter here, so you're seeing rebalancing. You know, if you're a fund manager and you have an outperforming sector in your portfolio, you're going to trim that. If you're underperforming ones, you might add to that to get your balancing right. You know, this is typical, but it doesn't always happen. A lot of pension funds are heavy investors in the equity market. Pension funds, you know, they get their distributions of capital quarterly. So, you know, they get that at the end of the quarter, and then they deploy that capital in the coming days after the quarter ends. So sometimes that provides a tailwind, so to say, to kind of some of these large ETFs and things that pension funds like to put their money in.
Interesting. Totally. And this is actually a very big deal because market structure in this sense is something that makes equities a unique thing. Equity markets are notoriously difficult to short in large part because the biggest holders of equity, like pension funds and endowments and things like this, they're never short, and they hold for a long period of time, and they bias the market. It's not a truly two-way market. It prefers going higher because of these structural forces. So very important consideration here. I mean, these are the names to really look at as far as who makes the equity market do this thing or that. Russell was a little bit soggier in its positioning. It's made a, let's call it a less impressive attempt at rebounding. Any interest on the short side here, where it looks like we had a break, we've retested it, and now we're getting kind of obviously stuck? Any interest in exploring the underside of this?
Yeah, I mean, this looks like something where you explain momentum has come out and now it's meandering sideways. You know, we had the nice run up from August and the Russell, but it's had periods over the, you know, since the start of the year where it hasn't matched the NASDAQ. So, you know, if I'm playing a long strategy in equities and trading, I'm probably still going to stick with what works or what has been working versus
probably a good idea to stick with what works as opposed to what doesn't, which is what I've been doing.
Yeah, but I mean, I don't really like the chart this much on the long side. I think this is showing signs of exhaustion, maybe a bigger pullback to come if it doesn't quickly reclaim this trend.
It also shows, I mean, it's mirroring a lot of these other charts we've pulled up around the rate cut narrative. I mean, that's the popular fundamental analysis behind this right now.
Yeah, I mean, there's the Fed right there.
Exactly. And I can't say that I'm have done enough research into Russell specific, tickers that would command any sort of confidence in this having a unique characteristic aside from other vehicles to play kind of the interest rate game.
I mean, if you want to just look at it intuitively and say, where are you going to have the most sensitivity to higher rates? I mean, you could say that from a speculative perspective, it's the NASDAQ only because that's where most market cap is. That's where you've seen the most explosive gains. So if the market is unhappy with the Fed in a kind of global sense, then NASDAQ would be the place that's that has the rubber band stretched the furthest, as it were. But if you wanted to look at it from a purely fundamental perspective, a lot of those Mag 7 names, I mean, they're so cash rich, they're not terribly concerned if borrowing is a little bit higher. In fact, that probably helps them because it helps to put up a moat around their first mover advantage, especially in the AI space, which is still young, still ample room for upstarts to say, no, you're Friendster and I'm Facebook. And so there's a sort of situation here probably for the big Max 7 names where higher rates, do they really care? Economically, probably no. Sentiment-wise, probably yes. But for that, the market has to care sentiment-wise. And at the company level, I don't think the CEOs of OpenAI and NVIDIA and Apple are losing any sleep about this 25 basis point move or that. But when you look at Russell, where you have small cap names that are much more sensitive to the business cycle, I think there it makes sense that you'd have a more rate sensitivity, especially given how many regional banks are in here. If we look at the regional bank ETF, it is, I wouldn't say it's selling off with any kind of vigor, but it is kind of trying to round the top here. So that might help to explain a bit. I mean, not surprisingly, I mean, that's the Fed.
Yeah,
right there.
If your view is that we only get 2 or 3 rate cuts and then it stops, is that enough for regional banks to really, increase their profit margins, things like that? Probably,
and avoid becoming another casualty.
Yeah. Mm-hmm. So, regional banks, rolling over a little bit, that's not encouraging if you're trying to get into the Russell. The Russell also, a good chunk of them are energy, smaller capitalized energy companies, which if you're seeing crude oil go down, if you're seeing crude go under 60, that's going to drag. So I'm just really not liking the Russell. If I'm going to stay long anything, it's a technology stock, it's the NASDAQ, things like that.
Yeah, that makes sense.
I'm curious, Ilya, going back to your S&P analysis, you're saying that you'll know pretty quickly if you're bearish a little bit. You'll know pretty quickly when you're going to get out. If you're constructing this trade, putting this thesis to use, what kind of time horizon are you looking at? Are you looking just purely directional using futures? Or are you trying to attach some option strategies like Thomas is doing? And
I'm definitely doing an options strategy. I'm keeping it simple and directional, but in order to bring down the cost of having this exposure, because I am fighting a market that wants to go higher, as silly as that is from a trading perspective, I think you have to think in risk reward terms. I mean, we've talked heaps here about no amount of episodic tactical short is meant to suggest that, for example, I don't think the promise of AI is what it is, or that the trend isn't up, or that it hasn't been up for a long time. Those are just different ideas. trading and investing are not the same sort of time horizon. They're not the same sort
100%.
of discipline. And so when I'm thinking about sort of the long arc of the equity market, there's no reason to think that it isn't what it has been for ages. The question really is, are you getting to a place where you're kind of getting a little hot relative, and that gives you some sort of tactical, opportunistic thinking. So when you see a kind of attempt at, let's say, a near-term breakdown here, you go, ooh, is there maybe a 10, 20% pullback in this thing? Is it maybe the kind of thing where in previous kind of hype cycles around new technology, you're sort of through the picks and shovels hype, and now things need to show some ROI, and there's usually a shakeout there. I mean, obviously the .com bust was about that, but history abounds, from railroads to really the United States itself, and warrants on the colonies and things like this. So this has existed since the beginning of time, this dynamic, or at least as far back as we know from economic history and the history of markets. So that's really where I'm looking for shorts. It's tactical and opportunistic, not necessarily kind of structural and long term. I think betting on Armageddon is almost always a bad idea.
No, I hear you. I was just curious, since this price level, this current level, is so close to what you've defined as, a top
well,
or
and so
a
this
breakout.
is exactly.
And so I was just curious if you were, at this level, you can think of time as your friend or your enemy. As you start to get into option strategies,
absolutely,
you would have to construct this so you're not also trying to bet on the timing of this move. And so I was just curious if we're close enough to that price level where a pure directional futures play is the easiest to get in and out of, to know when you're
in
wrong.
my mind, it's more dangerous than is worthwhile. So what I'm doing here is I'm saying, you know what? For me, the time consideration isn't so much, I think this will turn by day X or Y. It's more, I'm shorting a market that doesn't like going down, so I want to have lots of duration,
right,
to dilute my delta exposure. I don't want my underlying position to be 1-for-1 underlying delta. So I want to be basically mitigating my exposure, and yes, of course, that also means I'm mitigating it if it goes my way. But that's fine. I can always add.
Right.
The market is biased against my view, though, structurally, or rather, my view is running counter to what the bias is. So you got to be careful. So 2 things I'm doing, 3 things. The first thing I'm doing is the instrument I'm using is not the futures, it's SPY. And the reason I'm using SPY is because you can get smaller and it's cheaper than even the MES contract, the micro futures. And what I'm doing here is I'm doing a call or a put vertical. The reason I'm doing a put vertical is, number one, I can lock in my risk reward. And number 2, that makes this a less capital intensive position. It makes it risk defined. And I already have mine on, but if I was putting it on fresh here, I'd go maybe 59 days out and see what this looks like. Looks like there's, if we just did it at the money right here, and we were looking for sort of the next big pocket of liquidity, maybe we'd be looking at something like this. And you can see you have about a 2-to-1 risk reward here that you've locked in. Now, obviously, this is after hours pricing, so take it with a grain of salt, but this looks fine.
Yeah.
Where, I mean, you put this on, and because vol is so cheap, you go, well, okay, so it's 48% probability of profit, but it's 2-to-1 risk reward. So 50-50 coin toss, but if I lose 50 cents, and if I win, I make $1. So, okay, that's a bet I'll take.
Yeah, and I really like the, if you're standing to make more than losing, having the extra duration on is okay, because
Exactly.
otherwise, if you had longer duration and you miss those trades, you're just keeping more capital tied up to lose more. So I really like structuring it that way when you're letting it be 45 to 60 days out, and you can have a few weeks where you wait for a big move, and you could get out of that trade. Whereas if you waited, time runs out, then it's just a big loser. And you do that over and over again, it probably isn't the best way to trade on that.
Yeah, exactly. I mean, I think when vol is this cheap, and you're adding duration, not necessarily because you want to sit there that long, but because you want to dilute how much it's going to hurt you if the event risk pops it, and then you get 2-to-1 risk reward your way. I mean, worst case scenario, this thing runs away on you, but your loss is defined, and as long as you've set it up to be, let's say, 1 to 2-ish% of equity for the overall account, okay, sometimes you lose money. But this allows you to plan all of that ahead and basically say, I can build something here to take a shot without it breaking me in the worst of cases. So why not?
So for this week, I think, assuming this government shutdown happens, ADP data is going to be the big headline event, because the shutdown doesn't stop ADP from reporting the numbers. So the market doesn't get NFP. Now we got to go off ADP. How's that going to impact the rate cut bets? I know the correlation between NFP and ADP, it's been wonky for, I think, at least a couple of years now.
It's been wonky for a while. The ADP is a really, really poor predictor of NFP.
But when that's all we have, it's
that's
all we have.
What makes it kind of funny.
Yeah.
ADP is to some extent the butt of many jokes of market watchers, because it comes out and it'll be some wild number, and then momentarily the markets go, wait, what? And then the next day NFP comes out and they go, oh yeah, ADP had no idea what they were talking about. But again, who knows? Because I have certainly not gone back and said, well, with the benefit of a 911,000 NFP revision for the 12 months through March of this year, how accurate was ADP really going back? Were they much more accurate because the BLS numbers have been wacky?
That would be funny.
I don't know.
They announced an annual revision of 0. We nailed it.
Well, turns out that actually ADP had it right the entire time. But this is where I think things get into kind of the philosophical for why we care about economic data. We're traders. We don't care about the academics of the data. ADP matters not because it might be a more accurate view of the labor market normally. It only matters because it comes a day before the report that everybody does care about, and that moves markets. And by itself, I mean, the markets don't really care what job creation is. They care about what job creation is in the sense that it informs what policy is going to do, how assets will get allocated in a near-term sense. I mean, of course, markets care about what job creation is going to be structurally over a period of quarters and years. But from a trading perspective, from an event risk perspective, jobs data doesn't matter because it's jobs data. It matters because it has policy implications for the cost of money over the near term. So it's kind of funny that ADP might be more accurate for all I know once you take the BLS revisions into the calculus, but there's no question that the market mover is the BLS number, even if it's wrong.
Right. Well, then looks like this will be an interesting exercise of...
It'll be a very interesting exercise to Thomas's point, because if we don't get a BLS number and all we get is the ADP number, that's going to be a very interesting thing indeed. Anything you guys are doing going into this overnight? Anything you're watching to do? I know I'm going to probably get 90,000 eye rolls here, but I took myself into the world of spot here today, and as I'm liable to do, and I was looking at USD SGD.
There you go.
And
sling in Singapore.
Yeah, and it's an interesting setup, I thought. Let's see if I can find it here.
Should be on
somewhere.
Emerging USD.
Let's see if we can find it here. There we go. So if we look at what's going on here, you kind of get the sense that there is something of a range that's been broken. And maybe you're starting to bottom here, and maybe if then you break about 130 here, then maybe you've got room to run all the way into something like 133. Can I tempt you guys into a little Singapore dollar action?
Yeah, I mean, that doesn't look bad to me. I haven't looked at the Singapore dollar since I was on the desk with you, Ilya, working the overnight hours. But yeah, I might take a little stab. The nice thing is with spot, you can go as small as you want. So you want to get in something, the size is up to you, which that's what I love about spot.
Well, yeah. So what I'm doing here is I'm putting 0.1 here for a 10K lot, which is essentially equivalent to a micro future. So the same relationship as you might have between 6E and M6E. 6E is the full 100K lot. M6E is 10K. So this is 0.1 of a standard lot. And hell, let's do it.
Man, they've got it margined at 5%. What the heck?
Yeah. Not unusual, by the way. But that seems about standard for US-based brokers at this point. But so there we are. I've got it on. Let's see if all of this goes terribly, and if I'm way too overdone being long dollars. That's where I am, though. I'm looking at the euro here today just by way of reference. This was the break. Obviously, the Fed is right here. So with the Fed, we start to get a turn off this high in the euro. We came to retest the underside and held. So I am unrepentant in my dollar bullishness for now.
I was a little...
I'm short the euro, short the Aussie, short the pound, short the yen. You name it. If it's a counter currency to the dollar, short the CAD. I'm short that as well, and apparently now short Singapore dollars. So that's my big bet here, is that come what may, the dollar is bottoming.
I'm short the euro, short the Canadian dollar. I want to get short the pound. So, I mean, I'm also in the long dollar camp with you.
Nice.
The market that's sputtered the most, that's behooved me, is Swiss franc. I mean, Swiss franc getting so much demand now, moving very similar to the euro these days, but
as it does, yeah.
Yeah, hasn't been able to from a dollar standpoint. I agree with you that the tape action is looking more and more promising for the dollar, but the magnitude of positive dollar moves being so little has been a bit of a deterrent just because you can't help but take into the context of we're down 10% year to date. And, the best news we've gotten all year only moves us 0.5%, maybe 1%
It's frustrating.
that's cut into. So we'll see. It's looking like if you're a dollar bull, it'll be a bit of a long game. But in terms of, entry prices, you're getting pretty cheap ones across the board and a lot of opportunities to do so.
And finally, because we were just talking about real currencies, let's talk about fake ones. Ha 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 ha. Here's Bitcoin giving a little bit of help to the dollar positively minded out here. Still stuck and still suggesting that we don't have a strong kind of anti-dollar, anti-fiat thrust outside of whatever gold is doing, and obviously whatever precious metals are doing don't seem to be a dollar story because it's not carrying over here. It seems to be its own thing. So if nothing else, crypto is idling, but that it's idling and not surging is, in my mind, kind of encouraging for a long dollar view. And with that, overtime is out of time. Thank you, gentlemen. They will no doubt never let us onto the program together again because the whole thing is FX and then more FX. So this was nice. Well, let's see if they let us try this ever. Don't go anywhere, folks. I'll be back in just a couple moments here with Macro Money, where we'll talk about the ISM data coming up tomorrow and later this week, which we didn't even touch on today. So sit back, relax. We'll be right back. Thank you, gentlemen.
Thank you.
Thanks.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table.
If you had to swap jobs with anybody in this office, who would it be and why?
I would like to swap roles with Vanetta for a day, just so I can, talk smack about Tony and Tom for like a full hour in the morning. That would feel kind of nice. Just like a roast to start my day off.
Oh, God. That's a good question, actually. For a day? Forever?
Ever.
Forever?
Ever.
Oh, no. I mean, Tom has a hard job. He's got to wake up really early, but he gets the privilege that he gets. He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table. He can pretty much yell at anybody. He gets first dibs at the lunch line. I think I would, maybe Tom, but I probably wouldn't last very long, yeah.
Probably Dylan Radigan, because he lives in Italy, and I live here in Chicago, so yeah.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not, just trust us and do this, which is a very dangerous thing in the financial world. But, learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
And we are back. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live, and we are going to gear up for the first piece of weighty U.S. economic data this week. Obviously, we have a looming government shutdown. Maybe we'll see what happens here, but the markets don't seem terribly perturbed. Nevertheless, this makes this economic data that much more interesting because it comes not from the U.S. government. And so even if there were to be a government shutdown, this data will be coming out and may be giving us a more significant view than normal because we might have this government shutdown and because this might be what we have as far as data goes. So let's consider first how these markets did, and do keep in mind I take these screenshots a little bit before the show, so there is a little bit of difference in the sort of after hours processing here. That this, of course, was taken after the close, but with the benefit of after hours processing, things can be a little bit different. But certainly the thrust of what's there at the close is before your eyes. The S&P up a little bit, 0.38%, mainly driven by a sharp pop in healthcare. Everything else was kind of anemic, and the healthcare story was kind of a one-off. It was sort of a headline narrative. So not really anything materially thematic there. And of course, the NASDAQ soggier for it because that's a smaller component in that index, only 0.22% up for the NASDAQ. Yields kind of a hodgepodge, 10-year yields up a touch, front-end yields down a little bit, crude oil down, but still basically marching to the beat of its own drum and hovering near familiar range levels, not really going anywhere. Gold was down quite a bit earlier in the day, but managed to rebound and squeeze gains into the end of the day. The dollar, kind of a mixed bag here, a little bit lower against most currencies, flat against the euro for the most part. It was down a lot more and erased most of those losses. Still meaningfully down about 0.5% against the yen, but again, less so than was there earlier in the day. The dollar kind of fighting back into the close. Bitcoin steady. Now, if we take a look at what all of this has amounted to, kind of looking at markets as a whole and looking at where we've been so far this week, I think we get the sense that for the most part, we're following a script that has not deviated terribly from what we saw last week and is instead a kind of digestion thing. So here's where we are on the week so far. We can see stocks a little bit higher, about 0.5% or thereabouts, a little bit less for the major indexes. Yields a little bit lower after, of course, rising last week, so somewhat corrective there. The situation in crude, again, looking somewhat corrective. Bounce last week, pullback of almost equivalent magnitude, at least percentage terms wise. This week, gold and the dollar really stand out. Looking at gold, we can see compared with last week, sort of this relentless climb continues. The dollar last week had a little bit of a convincing pop, and now it's pulling back just a bit. But for the most part, the dollar's strength since the middle of the month, since the Fed meeting, that continues to be the sort of near-term default. The trend has been broadly higher since that Fed policy announcement. And what we see in the context of this week so far is a kind of pullback within that dynamic. As far as macro risk overnight, a couple of things hitting the tape to update. Data out of China. This is Purchasing Manager Index data. So as ever, the center line is 50. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. We can see here for both the private sector estimate, this Rating Dog PMI. Rating Dog is the new sponsor of S&P Global's PMI data, but it's still the same S&P Global data. Before it was sponsored by Caixin, now it's sponsored by Rating Dog, just a different Chinese sponsor to publish the numbers. Same series, though, ultimately put together by S&P Global. And then the NBS number is the official government PMI data. We can see for the official ones, we basically are still hugging the neutral line, so not really going very far on the composite index at 50.6. The Rating Dog numbers, S&P Global numbers, they're a little bit more chipper. They're showing a more spirited sort of pace of growth at 52.5. But if we look at the way these things have generally played out, we can see in the gray is the S&P Global one, and it is a little bit higher, but it's also a little bit more volatile, and so it swings around the core kind of numbers out of the government itself, the national business the National Bureau of Statistics, rather, and CFLP, the China Federation for Logistics and Purchasing. They put this together. That one is telling you we're basically hugging the 50 line, and the S&P Global numbers, they're overshooting, but that isn't anything they haven't done before, and they tend to re-anchor back on the government numbers thereafter. So it seems like the story for China's economy still is of deflationary drift, and not really anything going on there where if the U.S. economy were to stumble, one could turn and say, well, not to worry, we have a backup in China. We do not. The other piece of news here, the Reserve Bank of Australia had rates unchanged as expected at 3.6%. The Aussie dollar rallied on this a little bit because the language coming out of the RBA was ever so slightly hawkish flavored. The RBA saying that the decline in underlying inflation has slowed, and that inflation in the September quarter may be higher than earlier expected, though they don't seem to be terribly worried about tariffs. They seem to think that extreme outcomes are likely to be avoided, though uncertainty is still elevated, and they'll be data dependent. So not really a major news there. But the interesting bit is that they seem to be saying that because inflation, because disinflation, the decline in inflation, has slowed, and because the September quarter is likely to give us inflation that's hotter than anticipated, there might be less scope for RBA easing. And not surprisingly, the Aussie is the best performing currency against the dollar today, whereas the euro is flat, the pound is only up about 0.1%. The Canadian dollar is flat. The franc is down a little, about 0.25%. It is the Aussie with a gain of 0.6% that's easily outperforming. The yen is not far behind. It's up about 0.5%. But the Aussie clearly out in front here, and that's largely thanks to a little bit of an extra push from the RBA. Now, U.S. economic data. The next piece of evidence that we're going to get here in these markets that are still seeming to be obsessed with what the disconnect is between the Fed and markets about rates, and obsessed with it not because they think that the Fed is going to do this or that to change the economic trajectory, but more so seemingly on sentiment grounds, because the markets want cheaper money as a bulwark against the gathering risks, which of course are clearly on display in surging gold and silver, and surging gold and silver outside of the normal channels. Gold and silver aren't surging because the markets think the Fed is dovish. Note the dollar has been recovering since the last Fed meeting. Yields are up since the last Fed meeting. These should be kryptonite for gold and silver. Metals that are naturally anti-fiat and don't yield anything. And yet, gold and silver are surging even as yields go up, even as the dollar attempts to rebound. And that seems to be mainly about uncertainty. and the idea that all manner of things like the Supreme Court perhaps ruling against IEEPA justified tariffs, which is the bulk of tariffs that have been taken and put forward by the administration. Maybe the Supreme Court ruling against the administration on firing Fed Governor Lisa Cook and telling the president he can't do that. Maybe there being government shutdown, let's say. All of these things throw an established view of what's going on into flux. And when money is going to be cheaper down road, any amount of flux is that much more digestible. Because if something goes wrong and you lose some money, well, then it's cheaper to borrow back and go again. But if the Fed is not going to make money as cheap as the markets want them to make it, well, then the bulwark isn't as strong as the markets hope. And that can be a sentiment blocker, as it were. And so with that, we look at this ISM data because this disconnect between the Fed and markets is going to get informed by this. The expectation, of course, is that the service sector is going to continue to power ahead. Positive growth expected there at 52. That would be the same as what we got last month. And, of course, that in turn was a 6-month high. So relatively chipper here on the expectations for the service sector. We get another contraction on the manufacturing side expected, but the pace is seen easing. So we're kind of inching back in the direction of 50. 49.2 would be the most kind of narrow contraction since February, where we saw a tiny sliver of growth, since here, essentially. And so what we then have on the menu here, considering services are a much bigger part of the economy than is manufacturing, basically a composite index implied near 50, so near standstill. When you consider that there's more weight behind that 52, give or take, than there is behind the 49. So we're probably hovering somewhere in the low 50s for a kind of scaled composite index. Now, the most interesting thing, of course, for markets is going to be the interplay between employment and inflation that's baked into these numbers. And when we look at the employment sub-indexes, we can see employment has been shrinking really since the beginning of the year for both manufacturing and for services. Both of these readings are below 50. Meanwhile, on the prices side of things still look very elevated, especially for services, which is the biggest part of the economy. We're still looking at reference points that are more than 3 years back as far as how long it's been since we've seen inflation like this, even though on manufacturing we've pulled back a little. And so this is really the essence of the Fed's conundrum. There is inflation, and the labor markets clearly are weakening. The Fed has, of course, come around to this idea now, but the ISM numbers have been showing us this for quite a while. And this is where the disconnect between the markets and the Fed is so important. Because if we look at what the markets have baked in going into these numbers, we can see that they are of the view that we don't need to worry about inflation. Because if we look at what's priced in for next year, we can see the markets have 61 basis points. That's at least 2 rate cuts. That's 50 basis points. And 11 basis points in the direction of a third, which essentially gives us about a 44% chance that we're going to get that third cut. So, needless to say that even with this recent unwinding of dovish Fed policy expectations in excess of just the 25 basis point cut that we just saw this month. Obviously, we can see that there's an impact on this from rates having shifted against that baseline. But also, if we take a look at where this has moved from 140 basis points being baked in at the on the eve of the Fed policy announcement, let's say, and now 97 basis points being there, that's a difference of 43 basis points, clearly in excess of just the 25 basis point cut. So we've adjusted by about 18 basis points toward a less dovish view in markets. Nevertheless, this is still a significant skew. 61 basis points is a far cry from what the Fed was projecting just about 2 weeks ago, which is a single rate cut. From 3.6 to 3.4 is one cut next year. And so obviously there is a big disconnect there. And if the markets are weighing kind of what the Fed is looking at here and saying, we're going to prioritize this side of the equation now because this side of the equation seems to be contained, the Fed is saying, yeah, well, not so fast. We're not quite ready to jettison this side of it with the same abandon that you all are. And so what the market is seemingly set up for here is an interesting sort of thing where it's almost hoping for weak data, because that would validate what's still there in Fed funds futures relative to what the Fed itself is seeing. And that's going to be very, very important, especially if we don't get other key pieces of U.S. economic data this week, especially the BLS jobs report, because of some government shutdown shenanigans. So leading into this, the S&P global version of the data has given us 3 months of slowdown, mainly following a cooling off in the service sector, but still relatively well-anchored growth, well within the range that's emerged since kind of the post-COVID normalization in growth rates. There was obviously a massive catch-up in 2020 going into 2021. By mid-year, we topped out at these very aggressive readings because the economy was racing so fast to rebuild from those lockdowns. Since then, we've had a kind of moderation. We found a new baseline, and we're very much within that baseline here. However, if we get some sort of data that tells the markets, oh, well, actually, this is going to be something that tells the Fed they are in a position to do fewer cuts, not more of them, if the numbers give us more inflation, if the overall headline for ISM surprise is higher with faster growth, well, then that might actually be bad news for markets. And interestingly, looking at this city economic surprise index, at the very least, that suggests we may in fact be going that way. We may get hotter data here. And if we do, then what the Fed is saying here in upgrading its growth expectations and inflation expectations and downgrading its unemployment expectations and only giving us very modest rate cuts, that the Fed is going to exert a kind of magnetism on markets to adjust. And we can see that as we've had this move to a less dovish setting, stocks have stalled. And as we have had it, we've also found a bottom seemingly on the US dollar, which had been selling off amid dovish speculation since the beginning of the year. So if we do in fact get ISM data that follows this dynamic, ends up looking hotter, and ends up diluting Fed rate cut bets, then perhaps it is weaker stocks and a stronger dollar that result. Positioning-wise, that's sort of what I am aiming for here. I'm long the dollar still against a basket of currencies, Aussie, pound, euro, and the Canadian dollar. On the spot side of things, I'm also short the yen and short the Singapore dollar to boot. I am also a little bit short stocks here in a very kind of modest, risk-defined way, and I'm still long silver, which is the train that keeps on rolling, and I'm going to be holding on for dear life for as long as I can. Still long the bonds a little bit as well with a little call vertical. That's starting to maybe work a little, but it's early days yet, so we'll see how that plays out. My sense is that if rate cuts get delayed now, they'll get pushed deeper along the maturity curve and end up in the long end, which is how you might start to see the curve twist and end up with higher bonds and lower rates at the long end, even though the Fed is keeping the front end of the yield spectrum elevated if they don't cut by as much as the markets think. And that is Macro Money for today. As ever, we are here right after overtime, Monday through Thursday. That's a show I co-host with Dylan Radigan and Chris Vecchio, usually, looking at the Wall Street close and where things may go therefrom. I'm also writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace. And with me today, of course, fellow cave members, Dan Cecilia and Shelly Van. Though it's a little lonely here in the cave, in the studio. We got you guys both dialing in remote here. How are you?
Doing well. Dad, new father in the house.
Yeah, I'm back.
In the cave.
I'm back. Thank you. Thank you for that. And thank you for the very sweet gifts that you guys both gave me yesterday. We got some baby swag, specifically some crypto swag. I don't know if everybody saw that on the Tasty Crypto Instagram, but get over there, follow us on Instagram. And yeah, it was very nice of you guys to give me a gift. So thank you.
Oh, you're very welcome.
I really like the dad beard. I think the dad beard is a interesting and very fitting
new look.
Interesting is a good word, Dan. Fitting, I'm not quite sure.
It's a playoff beard. It's a playoff beard.
Yeah, that's a good way to think about it. I took a break, as everybody knows, I think, if they've watched the Tasty Crypto Show, for a few weeks here. And just really let myself go, as you can see. We'll see how long this all lasts. But it's good to be back here, guys. It's Crypto Week. We've got a lot to talk about. There have been a ton of updates to the Tasty Trade crypto product offering, to the platform, some new features. We even have some new tokens that were literally just added. I think like Saul just hit us up on Slack like a couple of minutes ago. So we're going to test the trades live. They should go through. We're going to do it live, right? But a lot to talk about here. Before we jump into it, what else is going on with you guys? What are you seeing in the market? How are you thinking about things? And shout out to the chat too. Gary, the gray hair is already here. But if you're not streaming on YouTube, get over there and type some crazy shit into the chat. Join us.
We do have a few of the Tasty Crypto members over here. TC token members. What's up, Mike? What's up, Gary? What's up, Dave? Dave Martinez is here.
Talk to me for a second about the Tasty Crypto token. I've been away for a while. I know you guys did this live, as we do, well over a month ago or so, through the Bags app, just kind of randomly, spontaneously launched a Tasty Crypto show related, I don't know, what is this, a party token? What do we call this? How do we think about it?
Content token.
Yeah.
Okay, that's the word I was looking for. Yeah.
It could be a party token.
I do like party token. You can redeem
like the
it for
idea
party
of party
favors.
token.
Yeah.
But you can, we've just been using it as sort of our content token. People in the community can hold it. We've been showing people how to deploy in DeFi. So we were doing some liquidity pools with it. It's verified across all major dexes on Solana, and we have a few other things in the pipeline that we're working on, but we're going to keep it on the down low.
How does one, if they're not familiar, how do they find out more about this? I think you guys launched it on Beans. Is that the best place to go to learn more?
Yeah, we're a lot of information is in our Tasty Crypto community on X, and the contract address is in our profile. It is a Solana token. And jump in the Discord.
I could drop the link to the Jupiter aggregator too, if anybody wants to take a look and just watch, see the chart of it as well.
Yeah, pop it in the chat, Dan. Full disclosure, I do own a little bit of this because when you guys first did this, I of course had to ape in. I just haven't looked at it in a while.
While you were gone, it did reach 170,000 market cap.
No way.
It did. Yeah, it's right now. It's at 75,000 market cap.
Okay.
75,000 fully diluted value, but we need to get some more. We're working on a few things. Let's just leave it at that. Yeah.
Wow. Okay. Yeah. I think when I first was joining you in this endeavor, it was like a $40,000 market cap. So, well, nice job. Good work, guys.
We'll see where it ends up.
Awesome. If you want to check that out, Dan's gonna pop the link into the chat, and make sure to tune into Beans every Friday. Let's do this, guys. It's the Crypto Week special. So if you have been watching Tasty Live, you've seen Dan, and hopefully you see Shelly soon here, myself, on a handful of different shows, as I mentioned earlier, talking about some of the new updates to the platform, to the crypto product offering. We've got some slides that we'll throw up just kind of as a background, and then we'll jump into the platform. We're going to do a bit of a live demo and test product in real time as well. Where do you guys want to start? We've got 4 topics that I want to just hit on and kick it over to you to speak to as well. We've got some new tokens that we've added to the platform. If anybody has a request for others that they'd like to see, they'd like to trade, let us know. We'll do what we can to get those listed. We've got an update to our stablecoin funding mechanism. You can now withdraw stablecoins. Recurring crypto purchases have launched recently. And we've got transfer functionality for a couple more tokens, a couple more assets, which I'm really excited about. Where do you guys want to start?
I vote for the new tokens.
All right, let's do it. We're going to test these live. So 3 new tokens have, as I said minutes ago, been added to the platform. I don't think they're on the crypto watch list just yet. We'll take a look. I think we might manually have to update that. But we've added the basic attention token, which is BAT. We've added Uniswap, which I'm really excited about. And we've added Arbitrum, which is an Ethereum Layer 2 scaling solution, or Ethereum L2 network. ARB, ARB is the symbol. So 3 new tokens. Over to you guys. Any preference when you think about these, whether it's from like an investment or trading perspective? What stands out to you?
I mean, I personally think Uniswap is a really compelling token. I'm really happy we added it. If people aren't familiar, it's a decentralized finance exchange on basically ETH and all the major ETH layer 2s, right? And if you look into it, people always ask, is there fundamentals? How do I value this? It's crypto. Like, this is an application that does billions of dollars of volume each day and generates revenue for token holders. Although there's a nuance there because it's not being passed on currently to token holders. So you can you're kind of betting for that fee switch, as they call it, to be turned on. So the protocol, the exchange makes money. It generates revenue. It's one of the most successful apps launched in crypto. But right now, the money's not flowing back to the token. So people are kind of playing for that fee switch. So, I think that one has a lot of upside. Definitely one I would be paying attention to. So that's kind of my 2 cents on the one that I'm excited about. I don't know, Shelly, you got anything?
I also love trading Uniswap because I just like trading the volatility. Like, if you can pull 1% a day, it's a fun trade. And I'm fairly confident it's not going to zero. So if I have to wait more than a day, I'm all good. But yeah, Uniswap is awesome.
Yeah, I'm with both of you guys here. I own a little bit of Arbitrum. I own some Uniswap as well. We'll add that to my Tasty Trade portfolio of crypto. I don't own any BAT. I did a long time ago, and that's a utility token that's associated with the Brave browser and what they're doing, which is kind of unique from an advertising perspective, if anyone's familiar. We'll cover these in more detail on future shows, maybe do a little bit more of a deep dive. But yeah, I'm with you guys. I mean, I think, just offering Uniswap, you look at that from the investment perspective, you've got possibly a tailwind from a regulatory standpoint, right? If we get some clear rules and regulations that these DeFi protocols can abide by, especially these US-based companies like Uniswap, which, as you mentioned, Dan, one of the biggest, if not the biggest, decentralized exchanges. It's been around, I think, since it launched in 2018 or so, and generates billions of dollars annually in fee revenue, which is passed on to those that are providing liquidity for the decentralized exchange. We've done a ton on this. We have covered how to use it, how to create liquidity pools. We've talked about it previously here on the show, and we've used the Tasty Crypto wallet to access it. So if anybody's interested in this, go check that out on the Tasty Crypto YouTube channel, but we'll definitely cover it in more detail going forward. But I'm excited about it as well. Guys, let's jump into the platform, and we're going to test whether or not the order routing, which I'm fairly confident is working. But let's just jump in here. And for anybody that's not familiar with this, you do need to search for a crypto symbol by typing in the symbol and then just /USD as it's denominated in dollars. It's just how our system is set up. But I previously searched for Uniswap. You can see the little unicorn logo there on the screen. If I click on this, I'm going to get a chart. Current price of about a little bit under $8, almost $7.50. And as everybody knows, a couple different ways that you can place orders in here. You can do a limit order, you can do a dollar market order, or just a straight market order. But let's just let's just buy a little bit of this. I'm gonna buy $25 to start with because I do like this. Let's see if this works. Hopefully it works. If not, we'll let our development team know before they leave for the day. So boom, filled. We own a little bit of Uniswap. Good to see that that's working, and we will get this on the watch list. So just to show everybody where that is really quickly, crypto watch list. This is where I go to every day, and you'll see some of these on the live from the trade desk on Tasty Live. But you can easily just kind of filter this or sort this to see what's up the most, what's down the most. If you're looking to buy the dip, that sort of thing, and we'll get these on here as well. But a couple others, let's just pump them in really quickly. We'll buy some Arbitrum. That's ARB/USD. There you go. Go back over to our trade tab, and we're going to
Just a note when searching, Ryan, if you, in the search bar, if you click on the little crypto button within that bar and you search, it'll pull it up. You don't have to do the /USD that way.
Oh, I learn something new every day. Thank you, Shelly, for that. That's a pro tip right there.
Shelly's the most experienced on the platform, so she uses it every day, and it trades options pretty regularly. So
yeah, you know what, Dan, I do to that point. I walk and, obviously I'm going to the kitchen to get some sweet treats. It is, I did overhear somebody say it's sweet treat season, which hell yeah, it's sweet treat season. But at Tasty Trade, there's always candy in the kitchen. So I always go to get some candy. And yeah, Shelly's got like the best setup. Like
I know
all the charts, multi-chart view, just trading nonstop. I love it. I love to see it.
She is a multi-chart wizard.
I love that multi-chart feature. It's my favorite.
Let me,
for sure.
You know what? In just a second, let me jump over there. We're going to buy $25 worth of BAT. So we just spent all the money that I have here on BAT. Okay, this one is not going through yet. So we'll have to let the team know. I don't know if I did something wrong there, but yeah, Uniswap Arbitrum, real time testing out the product here, and we'll just double check on what's going on with BAT. Let me see. Maybe we'll go one more time and just see here. No. Okay. We'll let them know. Anyways, let's jump over to the charts really quickly and show everybody how you can get this to look, I guess, like a professional's does when Shelly's got it up on the screen. Multi-chart. And this is the setup that I quite often see you with, I think, Shelly, where you've got them all over the place. And you can go in here and you can set up different symbols. You can use the same symbol in different time frames. And this is probably not the best view or monitor for this look. But you can change this so that you can see, 4 at a time. You can see 1 at a time, whatever you want to do. It's really nice to be able to customize this and set this up. All that said, how do I get out of this?
You can just change it back to 1.
Yeah, how do I do that?
So let's see. Click on I can't see your screen.
Click on the multi-chart tab, and then you just go back to chart layout.
Oh yeah, it's over there on the left, isn't it?
Well,
or maybe not.
You can do it on any. So just click. Oh.
Yeah, I broke the system. We'll fix this later on. Let's keep it going though, guys. So 3 new tokens, 2 new tokens. We'll get BAT worked out here in just a second. But Arbitrum, Uniswap again, which we're excited about. But keeping it moving for Crypto Week, another new addition has been the ability to withdraw stablecoins. So if you're not familiar, about 2 months ago or so, we launched stablecoin funding, which has been a smashing success here at the brokerage. I think we're one of the few brokerages out there that allow you to fund your account with stablecoins. If you have stablecoins, whether it's through DeFi or you've accessed them through Binance, Coinbase, another exchange, et cetera, and you want to fund your account with stablecoins, you can do this. It's immediately, instantly available 24/7, which I love. So you need to meet a margin call. Hopefully you don't, but instantly available. You want to trade crypto over the weekend. You don't have any cash in your account. You want to take advantage of volatility when the futures market opens on Sunday night. You can deposit money, and that buying power, if you deposit via stablecoin, is going to be available instantly. And that's through the USDC stablecoin, US dollar Tether from Tether, USDT, the Ripple Ledger, US dollar, as well as PayPal stablecoin, PYUSD. I'm guessing you guys use, like I do, USDC mostly.
Yep.
I use USDT and USDC. It depends on what I'm doing. USDT usually has deeper markets if you're trading on different exchanges.
Yeah, I knew Dan was a Tether guy. Shelly, I just had a feeling.
I mean, it's the most liquid. It's the most liquid. It's the most accepted. Come on.
He gives Tether vibes.
Hey, not that that's a bad thing. You know what else I've also seen is a lot of headlines recently around just an increase in in the market cap of PYUSD, the usage, the adoption of PYUSD. So not surprised to see, a massive platform like PayPal starting to have some success now with their PYUSD stablecoin as well. And I'm sure at some point too, you'll see increased adoption of Ripple Ledger. But I think from like the retail perspective, there's probably less usage of that. Maybe just speaking from my own perspective. So you can fund with stablecoin. You can now withdraw stablecoin too if you want to stay on chain. You can just move your money out and keep it in stablecoins. There is an associated conversion fee with that of 30 basis points. But let's show everybody how to do it. What do you think?
Let's do it.
Mm-hmm.
All right, back to the platform, I guess staying in the platform here. I'm going to jump over to the Manage tab, and you can do this on both the web app or the web trading platform, which is what you're seeing here on the screen, or you can do this on mobile. We've got a completely redesigned mobile crypto interface that came out, I think, back in March. We're making some additional changes to that platform and to the order ticket in there too. So you should see that come out this week as well. We'll talk about it on air when it does. But if you want to fund with stablecoin, just click on Manage here on the web platform, click on My Money, and then you've got both deposits and withdrawals. So if you want to deposit, you'll see stablecoin as one of your choices. You'll see the same thing for withdrawals. Click on deposit, and this will let you start that deposit. So when you do that, you're going to get a little modal that pops up. It's going to have a little bit of information about stablecoin transfers here and depositing stablecoins. Then once you click continue, you'll select the stablecoin that you want to deposit. So make sure that when you select the stablecoin, you're also selecting, the one that you have, first of all. And then second of all, make sure that you're selecting the network that it's on. So if you have USDC on Base, for example, you want to make sure that you're transferring it on Base. We can help to recover it, but there's just some technical friction that's associated with sending it to the wrong network on Ethereum. If you try to do this on a different network, in some cases it could be irrecoverable. So just again, as always, make sure whether you're transferring any asset that you're transferring it to the right address and you're doing it on the correct network. But as soon as you do this, you confirm what I just said, and then you go through the process, enter in the address, or you scan the wallet code here, and it's as easy as that. Then I think within seconds, it's pretty much available and you can trade.
Yeah, it's a great feature. It's probably one of our more popular, successful feature launches that we've been together releasing. A lot of people will contact me and say like, "Oh, Tasty has stablecoins now." So, easy way to transfer it, especially if you're trying to trade over the weekend or get your account funded before the market opens. Monday. So, yeah.
Or if you're in a different country, super easy.
I think we've seen the most international clients, really.
Mm-hmm.
Yeah, that's a great point, Shelly. This is super useful, efficient for anybody that's outside the United States. If, again, you have to have stablecoins, but let's say you have an account with Binance or you're with another crypto exchange, you have access to stablecoins. It's becoming, more and more common by the day. Obviously, we've had recent legislation passed here in the U.S. that just further accelerates all of this adoption. But you don't have to deal with the currency conversion. There is a stablecoin conversion fee. I think you're going to see those fees come down over time. But you don't have to deal with the process of waiting for this to settle, even with a wire, right? It's going to have an associated fee. It's not immediate. A lot of people think like wire is like instantaneous. It's not. It could be a day. It could be 5 days. And there's nothing wrong with some of the instant payments that do exist. You get instant buying power up to a certain amount if you have a linked bank account, if you're a U.S. user. But for anybody that's outside the U.S., this is probably one of the easiest and most convenient ways, again, assuming you have access to stablecoins, to just deposit. And to your point, we've certainly seen quite an uptake there. I'm honestly surprised at how popular this has been since it's launched. I'm excited about it, but pleasantly surprised at the same time. So we've covered new tokens. We've talked about stablecoin funding and more recently the ability to withdraw stablecoins here in the platform. Like I said, just click on withdrawals and you'll see the same stablecoin button and you go through the same process with the modal. Let's talk about recurring purchases, dollar cost averaging. Do you guys have any recurring purchases set up?
Oh yeah.
Yes. That's the
I knew
feature
you
I
did,
use
Shelley.
the most.
What when you guys how do you think about this? Is it something where it's just convenient, or do you really use it from kind of that angle of I want to eliminate some of the volatility of my purchase price over time, or is it just convenient?
A little bit of both. Yeah. And especially for an asset like Bitcoin where I'm long-term bullish, I just want to make sure that I'm accumulating it regularly.
Yeah, that's the way that I've set this up as well. I probably should set it up for a couple more tokens, but right now I think I'm buying like $50 of Bitcoin every week or every month. I'll have to double check what it is. But yeah, it's kind of nice. Like it just happens in the background. It's a good way to passively, in my opinion, it's a good way to passively just invest if this is what you want to do. I'm with you guys. I think we're higher at some point over time. And you look at it after a couple of months, like, oh, okay, I've got a couple $100 more of Bitcoin in there that, kind of just runs automatically, which is nice.
Yeah, I definitely think the majors, Bitcoin, ETH, Solana, I think it's useful for that, right? Like my narrative or my thesis is Bitcoin is digital gold, trades as a form of digital gold. Like I'll just accumulate it weekly, monthly, whatever. Don't really need to look at it too much. I have been using it for other tokens though. Personally, Aave and Link are two that I'm trying to accumulate just because I know those are two tokens that again are pretty well known, pretty well used, have revenue, have a ton of integrations, both in TradFi and DeFi, crypto specific. So I have no problem kind of automating those purchases as well. So that's the most used feature I have personally on the platform is recurring purchases.
Well, let's take a look really quickly at how to set this up before we wrap things up. I know we're kind of running up against the clock here. But if you're interested in setting up a recurring purchase like Dan, Shelley, and I all have, you can go in here to the web-based trading platform. I don't believe that this is on the mobile app just yet, but it will be coming soon to the other platforms. And here on the web, if you click on Invest, which you can see is over here on the left-hand side, just underneath that watch list button, click on Invest. And man, I wish I could figure out how to change my charts. I'm sure there's a button I'm just overlooking here, or it's like I've got to widen out the screen or something. But that said, once you go over here, you'll see that you've got the ability on the right-hand side of the screen to create a recurring investment. And so you can search for any crypto token. It's limited to crypto right now, but the team is hard at work on opening this up to all equities, or the majority of equities, I should say. But if I want to just put on that recurring investment for Bitcoin, I can go in here, I can set a dollar amount, I can set the frequency. So you have the ability right now to do this weekly, bi-weekly, or on a monthly basis. Set your start date, choose the account that you want to make this recurring purchase in, and then you can choose your funding method. And so what this allows you to do is either just tap into your buying power, which for anybody that's not in a margin call, has available buying power, this is probably the way that you're going to want to do it. But if you don't have any buying power, or you just want to ensure that this doesn't get paused, just set it up so that's your bank account. And then what this will do is it'll just draw or make a deposit from your bank if you have a linked bank account to make the purchase. So it just ensures that you can keep this thing running smoothly if you want to make those recurring purchases, read the disclaimer, and then hit review recurring investment. And just route this in the same exact way that you would, a traditional trade or an order. And then once you have that set up, you'll see your recurring investments down here. You can manage these as well. So you can edit them, you can change the frequency, you can change the amount, you can pause them if you want to take a break from investing in a particular token, or if you want to just cancel it outright, you can do that right there. You just click on that little menu button. But again, on the Invest tab, very easy to do this. You'll see this over here, search for the symbol, and then you can set this up, set up the frequency and the amount of that token you want to buy on a recurring basis. So that's how you guys do that. That's how we do that as well. One last thing that I want to talk about before we wrap things up, guys. This has been a really heavily requested feature from a lot of people, and that's the ability to transfer XRP. So finally, I know XRP is a very popular token. When we look at trading volumes at Tasty Trade, it's top 3 for the most part on a monthly basis, just behind Bitcoin and ETH. We haven't been able to support transfers. So if you own XRP, you haven't been able to move it to Tasty Trade. If you've bought it here, you haven't been able to move it out if you want to. Now you can. So this should be live this afternoon. Like I said, we've got to check with our development team here. If it's not live already, when you go to cryptocurrency transfers on that manage tab here in the web-based platform, it will be this week. But we're launching XRP transfers, also launching XLM, Stellar Lumens transfers. But I think what most people are probably excited about here is the ability to transfer XRP. So just wanted to hit on that before we wrap things up. I know we've run over. Apologies to the production team here. But XRP transfers are here, my friends.
Mm-hmm.
That's a big one. That is a massive one. The Ripple army is pretty strong.
Big army.
Big army. Yeah. I don't know how they're going to react to Swift announcing that they're doing their own chain, but we'll see. But we'll see. We'll see how that goes.
A little competition from the traditional financial system, I suppose.
Yeah.
Awesome. Well, guys, thanks for joining me here on the show. This is a special edition of the Tasty Crypto Show because it's a Tuesday. Normally the show is just on a Monday and Wednesday. We will be back again tomorrow. And then also Shelly and I will do another special edition of the show on Thursday. I think Dan is off. You're going to go get married or something, right?
I am going to get married for sure.
Congratulations to you, my friend.
Thank you. Thank you.
So we've got more Tasty Crypto coming at you all week. Tune in tomorrow, same time, same place. But until then, I'm Ryan.
I'm Shelly.
Dan.
Peace.